एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव से स्टार्ट करते हैं आज का सेशन। फिलहाल देखोगे क्रूड ऑयल फ्लैट ओपन है, नेचुरल गैस भी फ्लैट ओपन है। कल अच्छा मूव आया था नेचुरल गैस में। क्रूड ऑयल साइडवेज था कल। देखना पड़ेगा आज थोड़ा बहुत मूव करता है या फिर नहीं, नीड टू सी। फिलहाल अभी कुछ और ट्रेड नहीं। इंडियन मार्केट ओपन होने में टाइम है, कल एक्सपायरी रहेगी सेंसेक्स की। विल सी किस तरह से मूव करता है अभी। फिलहाल अगर चेक करें इंडियन मार्केट भी थोड़ा सा मुझे लग रहा है गैप डाउन ही होगा मोस्ट प्रोबेबली। कल यूएस मार्केट भी थोड़ा सा नेगेटिव ही क्लोज हुए थे। अर्ली मॉर्निंग एशियन सेशन भी थोड़ा सा नेगेटिव है। लेट्स सी, फ्लैट ओपन है, गैप अप गैप डाउन, विल सी। निफ्टी अराउंड 280 पॉइंट गैप डाउन दिखा रहा है। निफ्टी ऑलमोस्ट 1.1% नेगेटिव। सेंसेक्स लेट्स सी एक बार सेटल हो जाने देते हैं। करंटली 40 पॉइंट डाउन दिखा रहा है। निफ्टी तो ऑलमोस्ट स्पॉट चार्ट 200 पॉइंट से भी नीचे दिखा रहा है ओपनिंग। ओके, सेंसेक्स भी ऑलमोस्ट 400 पॉइंट मोस्ट प्रोबेबली गैप डाउन ही ओपन होने वाला है। तो दोनों ही गैप डाउन ओपनिंग है, निफ्टी बैंक निफ्टी एंड सेंसेक्स। निफ्टी काफ़ी टाइम से एक रेंज के अंदर फंसा हुआ है, देखना पड़ेगा रेंज ब्रेक करके जाता है नहीं जाता। नेचुरल गैस देखो थोड़ा सा ऊपर जाता है तो इसको थोड़ा सा लेवल अब रिफ्रेश कर देते हैं। बीच में एंटर मत करना है, यहाँ पर अब कुछ बाइंग का ट्रेड नहीं है फ्रेश। सीधा अब रेजिस्टेंस पे ही आने वाला है तो यहाँ पर सेलिंग ही प्लान करेंगे इफ इट हिट द रेजिस्टेंस जोन। बाकी मुझे क्रूड में कुछ खास लग नहीं रहा आज होगा। ये काफ़ी स्ट्रॉन्ग रेजिस्टेंस है, एक्सपेक्ट करेंगे यहाँ से सेलिंग ही आएगी वापस। कल भी रेंज थी क्रूड की, अभी भी लग रहा है रेंज ही है, कुछ खास बना नहीं है, स्मॉलर टाइम फ्रेम पे भी कुछ नहीं दिख रहा। ओपन हुआ, नीचे गया वापस, रिकवर कर गया थोड़ा सा, कल एग्जैक्ट लेवल पे भी नहीं आया था, तो देखते हैं आज कुछ लेवल की ओर आता है तो। स्मॉलर टाइम फ्रेम पे भी कोई रेजिस्टेंस सपोर्ट नहीं है। फिर भी एक रेजिस्टेंस है, तो देखते हैं सेलिंग पे आता है या फिर क्या नहीं। नेचुरल गैस 94 पॉइंट का गैप डाउन सेंसेक्स में। निफ्टी एज आई सेड 160 पॉइंट का गैप डाउन। निफ्टी ऐसे देखोगे डेली टाइम फ्रेम पे काफ़ी दिनों से कंसोलिडेशन में ही फंसा हुआ है। आज भी लग रहा है मुझे कंसोलिडेशन में ही रहने वाला है, अनटिल अनलेस नीचे कहीं ब्रेकडाउन साइड पे नहीं चला जाता। 23,340 के नीचे स्पॉट चार्ट में क्लोजिंग अगर आ गई तब एक रेंज ब्रेक होगी, अदरवाइज काफ़ी टाइम से रेंज बनी हुई है, स्टिल मे बी होल्ड। तो पहुंचने ही वाला है नेचुरल गैस। का वीकली टारगेट तो कल का लो ही रखेंगे, बीच में कोई नया सपोर्ट क्रिएट हो जाएगा तो वी विल चेंज द टारगेट अकॉर्डिंगली। बाकी क्रूड ऑयल में कुछ नहीं है, मार्केट अभी भी रेंज के अंदर ही चल रहा है, ना कल सपोर्ट पे आया ना रेजिस्टेंस पे, तो अब तक लेवल पे आएगा नहीं, वी कांट डू एनीथिंग। स्मॉलर टाइम फ्रेम पे कुछ बनेगा तो विल सी हियर एज वेल। President Trump, we are going to end the war very quickly. They want to make a deal so badly. They have tried of this and we are going to be finished with that very quickly. Hopefully, we are going to get it done in a very nice manner. निफ्टी देखोगे गिरा जरूर फ्यूचर में भी बट इट विल रिकवर फ्रॉम डाउन साइड 15 मिनट की कैंडल की क्लोजिंग का वेट है फ्यूचर में देखोगे गैप डाउन हुआ था नीचे गया डाउन साइड पे completely recovered from the bottom बैंक निफ्टी still struggling बैंक निफ्टी अभी भी स्ट्रगल कर रहा है सेंसेक्स इस यहाँ भी देखोगे ओपन इक्वल टू हाई है स्पॉट चार्ट में लोअर एंड से बाइंग की कोशिश जरूर है बट मोस्टली निफ्टी रिकवर कर पाया अभी तक ये देखो निफ्टी अगर कल ऊपर आता है तो हो सकता है कल का जो लो बना है 23,570 फ्यूचर में इट में एक्ट लाइक एज रेजिस्टेंस।
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Renewed warnings. President Trump threatens the U.S. may hit Iran with military strikes within days if a deal is not reached. Asian stocks fall as mounting inflation concerns extend a global bond sell-off, with 30-year treasuries steadying after yields hit their highest since 2007. And Samsung's largest union says it will go on strike tomorrow after talks with the world's largest memory chip maker break down. Well, good morning, everybody. It's just gone 8 a.m. across the Emirates, 5 a.m. over here in the UK. I'm Joanna Bersecci in London this week. Well, it is the fourth day in the row that we're seeing Asian equities falter, and of course, keeping a close eye not only on geopolitical developments with President Trump's renewed threats on Iran, but also rising bond yields. Luckily, we have Abir Abu Omar in the Dubai studio to break it all down for us. Abir, walk us through the markets this morning.
Good morning, Joanna. Yeah, look, I mean, on the equities front, things are down this morning. You mentioned a 3-day decline in Asian stocks. That carries on to the fourth day. Asian equities now 0.9% down. U.S. futures are carrying that trend as well, looking like the open at the S&P is going to be negative for a fourth straight day. And that stems from multiple things that we've been talking about over the past couple of weeks. One is the inflation concerns that are also driving bond yields higher. But two is the concerns stemming out of the Middle East. Now, stemming out of the Middle East is the word we mentioned when we talk about Brent prices, about it. $110 a barrel, down just slightly this morning. And this is perhaps due to a couple of reasons. One is some comments we saw from Vice President J.D. Vance saying that despite the comments we heard from President Trump earlier about possibly restarting escalations, he said that Iran wants to make a deal, so some positive signs there. But also, Bloomberg understands from sources that NATO may get involved in the Strait of Hormuz to help ships pass through. Now, that is not guaranteed, but that is something that we have reported. Now, the big story, Jumana, over the past few days has been global bonds, and this is reflective in the 30-year yields. This was a fascinating size and scope yesterday. The 30-year yields in the United States were at the highest since 2007, the eve before the financial crash, touching at 5.2% this morning, pairing some of the gains that we saw. But speaking of the yields, the chart that we're looking at today, if we flip the board, is on global bonds. And look, it's not just the U.S., right? Look at those yields. We're seeing the yields in Japan, Germany, and the U.K. The U.K. is close to touching 6% on the longer term yields. And our colleagues point out that, yes, this is inflationary risks coming out of the Middle East, but it's also loose fiscal policy that we could see in countries like the UK, Japan, Germany, and certainly the US, and also the lack of monetary tightening. So, look, Kevin Warsh has his job cut out for him when he comes to the Fed chair position. Yeah, most definitely, Abir. And one other thing we're watching out for today, also a big one, NVIDIA earnings. So we'll talk about that later in the show too. Abir Abu Omar in Dubai. Now, President Trump is threatening to resume strikes on Iran in the coming days as part of a push for a deal to end the war. The latest threat came after Trump said he had called off a planned attack after an appeal by Gulf allies. This comes as NATO is discussing the possibility of helping ships pass through the blocked Strait of Hormuz if the waterway isn't reopened by early July.
I had made the decision. So they called up, they had heard I made the decision. They said, sir, could you give us a couple of more days because we think they're being reasonable.
How long is the days for Iran to come to?
Well, I mean, I'm saying 2 or 3 days, maybe Friday, Saturday, Sunday, something, maybe early next week, a limited period of time.
Join me now from Dubai, Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Stuart, quite simply, how should we read President Trump's latest comments?
So, look, it's fair to say that he makes these sort of threats pretty frequently, and I think we've lost count of how many times that you've had these escalatory sort of comments from the president. On the other hand, I think it would be unwise to discount it entirely, which is largely what the market seems to be doing today. a reminder that there's a lot of firepower still in the region, that there's a great deal of pressure building to get some sort of resolution. There doesn't seem to be much headway on the diplomatic path, despite some positive comments from the Vice President. And so all of those things combined, again, just be very cautious in discounting this notion that you may get escalation again.
Yeah, and Stuart, one thing that you and I have been discussing the last couple of weeks or so is, from the U.S. perspective, it isn't just the possibility of, kinetic military action, but also a lot of economic pressures being applied on Iran. I thought it was interesting yesterday that we heard from the U.S. Treasury Secretary Scott Bessent at the G7 finance minister meeting, and there he specifically talked about Iran's sprawling shadow banking network and called on other countries to help crack down on this, on specifically the network that Iran has. How significant could that be, do you think?
I mean, two things. Number one, he's absolutely right that Iran has got incredibly skilled, not only at having a shadow tanker fleet, which gets the oil and the products around, but also, as you say, a shadow banking network that is able to move money around the world. And, they've had a couple of decades to perfect that system. And it is also true to say they operate in many jurisdictions which, probably should be doing more to crack down on it. However, it is a very, very complex network. It's very hard to identify. Names and individuals change rapidly. It's not going to be an easy task. But, again, he's making a very reasonable point that, as well as military pressure, there has to be economic pressure if they're going to get results.
Yeah. And of course, the Strait, still a focus, one of the main stumbling points when it comes to progress on negotiations. NATO now saying that they will help introduce a plan to help, allow vessels to transit through July. What do we know about what the NATO have in mind?
So it still seems to be at the discussion phase, and they will need unanimity to get it through. And I would caution too much optimism around a plan like that, which is not to discount it, but you look at history, we've been here before with the tanker wars in the 1980s, where you had US military escorts for tankers coming down from Kuwait. Just look at the numbers, in those examples, you had to have a multiple of warships relative to the tankers to get it done. You've got something like 1,500 or so ships stuck inside the Persian Gulf. The amount of firepower that would be needed to make it happen is extraordinary. It would be very, very slow. On top of that, the military landscape has changed significantly with the advent of asymmetrical warfare. That is something they didn't really have to contend with in the 1980s. So, again, not to discount it, but it's going to be a very, very difficult operation if they can get that unanimity and if they can get it going ahead.
Yeah, and of course, NATO has been criticized by President Trump for not doing enough. So we'll see whether they follow through on this. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Thank you. Well, mounting inflation concerns have driven global bond yields higher, prompting investors to reassess valuations after a record-breaking rally in stocks. The Bloomberg Dollar Spot Index is at its highest level in 6 weeks, while Brent crude near $111 a barrel, with no signs of easing in the Iran conflict. Joining us now is Mahjabeen Zaman, head of FX research at ANZ. Mahjabeen, really good to have you with us. Abir was just walking us through the markets, and a lot of focus these days on rising bond yields. How much of an impact is that having on the FX side of things?
Yeah, look, of course, we have seen the dollar strengthen on the back of those higher yields, especially with Fed hike expectations now moving higher, given the CPI, PPI data we saw last week. But, we are a little bit cautious with the dollar rally. Sure, in the short term, you could see it. But, at the end of the day, from those rising Fed hiking expectations, we do still think that it's probably quite difficult for the Fed to out-hawk other G10 central banks. And as a result, we think that the strength will be constrained, and longer term, we still see the dollar weaker.
But at the same time, what we've seen in the last couple of days is equities have started to react, perhaps to rising bond yields, to concerns about the geopolitical situation, maybe even the fact that the run-up has been so robust as of late. We're due for a bit of a correction and a pullback. How is that likely to impact the USD? Will we see a support come through for the dollar in light of this risk-off sentiment, or will it continue to come under selling pressure in light of the broader questioning of the dollar trade?
Look, I think in the near term, it all depends on the US data. Now, in the US, it really does feel like we are entering an environment where good news feels like is going to be bad news. And what that really means that, in a normal backdrop, when you get stronger growth data, that tends to be good news, and you see stocks and yields move together. But given that these inflationary concerns are now picking up, stronger growth data will become bad news because that can points to tighter policy, which means, of course, not if the US is holding up okay, it doesn't get in the way of Fed hiking, and that's what the market is pricing in. So, of course, our expectations of Fed easing, lending that support to downside moves in the dollar has diminished for the time being. But, again, we are a headline-driven market. Should we see any positive news out of, the Strait of Hormuz reopening, surely we'll see the dollar come off again.
Yeah. Which would you say out of the currency pairs that you monitor at least have the most sensitivity to energy shocks and, the continual rise in oil prices that we're seeing emanating from the Middle East region?
Yeah, look, I think as we speak, it's probably the Japanese yen and the sterling, which is really front and center of moves this week on the downside. Again, both are energy importers, so largely exposed to higher oil prices. But at the same time, both of them have different challenges as well. Of course, in the UK, we've got the political risks coming up again. In Japan, we've got a little bit of that fiscal uncertainty coming in because we saw recently that the PM suggested that there might be more another budget announced and more funding out of the debt side to pay for that cost of living support that she might come through with. Again, that's not helping the yen, and is obviously lending support to higher Japanese long-end yields as well.
Yeah. The other currency pair I want to ask you about is sterling. Obviously, politics front and center there. And one of the things that we observed over the course of the last few weeks is even though gilt yields were rising, the currency was largely immune up until a couple of days ago. How much political premium should be factored into the pound here?
Look, I think with the UK, this, political headlines, unfortunately is not new. Now we've been seeing it for the last couple of years on and off. And I think that political risk premium is already embedded in the sterling and has been for quite some time. Now, obviously, to add to that, the fiscal uncertainty, if there's another change in the future in the government, then of course that will add on more downside. But even if we take the political instability and the fiscal worries away, the economy is not, again, looking as amazing. I mean, this week we have seen labor market data coming out, unemployment rate moving higher, again, wages coming off. So, we think actually there's more room for the BOE to remain on hold for now and possibly look at easing towards the end of the year after all this noise is through.
Yeah, when people talk about the pound, they tend to think of cable, pound versus USD. But I'm curious to hear your thoughts on euro sterling, mostly because euro obviously facing a lot of headwinds because of the higher oil prices and the potential growth shock. UK, on the other hand, you've got political premiums. So which one of those wins out?
Yeah, look, I think euro sterling is usually the proxy to play UK political risk. And I think, with, Europe, of course, also being an energy importer, but I think they're a little bit more positive impulses relative to the sterling. We do know that last year we saw a huge fiscal program rolled out in the European zone. And I think over at the margin that should play out. I think net, I think, Europe is still in a little bit of a better state. Also, they have lower rates. So if they are looking to hike, they have more scope to do so. Whereas the sterling, we're still at pretty high levels on the rate side.
Mahjabeen, a pleasure to chat to you. Thank you so much. Mahjabeen Zaman, Head of FX Research at ANZ. The European Union has finalized the text of its U.S. trade deal after months of negotiations. The move now clears a major hurdle to ratifying the pact before President Donald Trump's threatened deadline. The deal would see the EU erase levies on U.S. industrial goods in exchange for a 15% tariff ceiling on the bloc's exports. The European Parliament and EU countries will now vote to ratify the finished text. Still ahead, as emerging market assets fall as the war drags on, we'll talk to Alan Chow, a co-head of emerging market corporate debt at 91. But up next, the Russian president arrives in China for talks to boost ties and strike a gas deal. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in London. Russian President Vladimir Putin has arrived in Beijing to meet with Chinese leader Xi Jinping to strengthen their alliance. They are expected to hold talks on securing a long-stalled deal for the Power of Siberia 2 gas pipeline. For more, we are joined by Rebecca Chun-Wilkins, our Asia government and politics correspondent. I guess we're getting used to those scenes of President Xi greeting leaders from around the world. Second big summit in the space of a week. But of course, that pipeline is of great focus. How important is it to both of those nations?
Yeah, absolutely. It does feel a bit like deja vu. Here we are again. I mean, the pipeline itself is hugely important to Russia, economically, strategically, politically. Before the Ukraine war, Russia was exporting most of that gas into Europe. That has all dried up, of course. So this is a crucial part of redirecting those exports eastwards into China. Now, of course, that would deepen Russia's dependency on China, not just when it comes to sort of commodities, but also that broader trade reliance that has really relied on China to support the economy through those trade links, through exports since the outbreak, since Russia's invasion of Ukraine and all of those Western sanctions that have been imposed on Russia. China, to some extent, it is an important topic. The war in Iran has, of course, only heightened China's awareness and of the need to shore up those stable supplies of oil and gas. However, Beijing has also been very, very hesitant to become over-reliant on any one supplier. That diversity element and diversification is absolutely critical to the Chinese, and hence this anxiety perhaps of overloading or placing too much importance on another choke point that could potentially hold China or other nations ransom. So I think there is some of that sort of reluctance that we're seeing on the Beijing side, certainly.
Yeah, and it was interesting that in opening remarks before the talks, Putin told Xi that Russian-Chinese relations are at an unprecedented high level and a model of partnership. That is very interesting timing, particularly because, of course, President Trump was there last week. How should we read this from a geopolitical perspective, Rebecca, and the strengthening of the respective ties between the two nations?
It's really fascinating. Look, I think the timing of this was incidental. That Russia trip was planned before we had Trump postponing his trip. But because of that close timing, it's inevitable that we start to read these very close comparisons. So far, the treatment of these two look very, very similar. We both had that military honor guard, the flag-bearing, waving children, greeting Putin and Trump into the Great Hall of the People. So lots of similarities so far. But as you say, a lot of warm words spoken by Putin so far. And it does underscore the very personal nature of the relationship. This is Putin's 25th visit to China, according to the Beijing side. And the two leaders have this long-standing relationship, although they don't share a common language. They've even celebrated birthdays together. So I think on the docket is going to be a much broader topic of conversations, well beyond just that pipeline. We're going to be talking about geopolitics, Ukraine, the Middle East, as well as trade and economic cooperation. And there's plenty of forums for that. It does look like they are having both these broader discussions with delegations as well as these smaller meetings between Xi and Putin. There are a couple of different things in terms of optics that we're looking for, really to the level of what entrances and what gates Putin's sedan goes through when it comes to navigating Beijing. So I think in terms of that scrutiny for sort of political analysts and nerds like me out there, there's a lot of fodder to be really closely watching to see how Beijing navigates these two different trips.
Yeah, well, the height of geopolitics and the power dynamics is celebrating birthdays together, as you mentioned. Rebecca Chun-Wilkins, thank you so much. Well, coming up, investors watch for earnings from the world's most valuable company and any plans to ramp up production. We'll talk NVIDIA numbers next. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersecci in London. NVIDIA will give a much-anticipated update on the state of the AI economy when it reports first quarter results later today. As Bloomberg Tech co-anchor Ed Ludlow reports, the Chinese market continues to cloud the outlook for the world's most valuable company.
There's massive beat and raise expectations for NVIDIA. The market really believes the momentum continues. Top line growth 80%, bottom line growth 84%, but China is still the overhang for Jensen Huang and his company. Post the trip to China with the president, there wasn't really a net conclusion. Jensen Huang projected confidence when I was able to ask him about it just before earnings, but the reality is it's still up to China.
The Chinese government has to decide how much of their local market do they want to protect and how much of their local market do they want to expand with more AI capacity. My sense is that the demand in China is so incredible. Just like it is here, agentic AI is also making enormous progress there. My sense is that over time, the market will open.
The environment is really clear. Demand is outpacing supply, and that manifests itself still in memory chips. Jensen Huang talking about the idea that the supply chain is doubling, maybe even quadrupling per annum. But it's over the next decade that we're still going to see that mismatch. And so that is the question that markets will pose. Where is the continued growth momentum coming from in the face of supply constraints? And also, what is really going on with China? Because right now, the base case assumption is that China is zero revenues. It's definitely a market that Jensen Huang and NVIDIA want to be in. Ed Ludlow for Bloomberg News in San Francisco.
That was on NVIDIA. Well, Bloomberg has learned Goldman Sachs and Morgan Stanley have secured the top lead positions for SpaceX's upcoming initial public offering. Billionaire Elon Musk's rocket, satellite, and artificial intelligence firm is targeting a $2 trillion valuation. The listing is expected to raise up to $75 billion, making it potentially the largest IPO in history. And a quick look at equity boards. We are leaning towards red today, down moderately. S&P down about 0.1%. The Dow down 0.2%. Take a look at European markets. Once again, trading in negative territory. All eyes later today will be on those set of NVIDIA earnings. Will be key for where the market is directed from here. Coming up, conflict-driven inflation fears sends global yields surging to levels last seen in 2007. We'll discuss that next with Alan Xiao, co-head of Emerging Market Corporate Debt at 91. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football. And you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Renewed warnings. President Trump threatens the U.S. may hit Iran with military strikes within days if a deal is not reached. Asian stocks fall as mounting inflation concerns extend a global bond sell-off, with 30-year treasuries steadying after yields hit their highest since 2007. And Samsung's largest union says it will go on strike tomorrow after talks with the world's largest memory chip maker break down. We are live in Seoul with the latest. It has just gone 8:30 a.m. across the Emirates, 5:30 a.m. over here in the UK. I'm Joanna Bersecci in London this week. Let's check in on how global markets are faring, leaning towards red, a bit of a risk-off sentiment. Abir Abu Omar is in Dubai for us. Abir, run us through it.
Good morning, Jumana. So look, U.S. futures are trending a little bit lower today now. It's the same story you've been talking about for about a week, which is inflationary concerns coming out of the Middle East war, but also the AI story returns front and center. We mentioned earlier on the show, NVIDIA earnings are expected later today. And look, the rest of the Max 7 cohort that have reported, what we know is that AI investments are going to be close to $800 billion this year. And so we await NVIDIA and what its earnings essentially say about AI investments. Asian equities down about 1%, pairing some of those losses from earlier, led by the Kospi in South Korea. You mentioned the story about Samsung, which is one of its biggest constituents, and what the Samsung employees, the union, said that they're going on strike. Now, officials in South Korea had said that that would cost the country millions of dollars per day. So we await to see what happens in that case. But Asian equities trending lower, same concerns about inflation and higher oil prices out of the Middle East war. Oil edging lower, 0.6% lower this morning, Jumana, as we await to see what happens. A truce, no truce. President Trump said attacks could be possible Friday, Saturday, Sunday, or sometime early next week. So that is something that we're keeping an eye on. Big story for the day, big story over the past few days. Treasuries in the United States, 30-year yields, the highest since 2007, the eve of the financial crisis, Germana. We're seeing similar moves in Japan, the UK, Germany, and those are moves that are, again, because of loose fiscal policy, rather, and the concerns that are coming out of inflation risks in the Middle East, and also what are central bank going to do about this? The hawkish tilt that we've seen out of the Fed is something we're keeping a very close eye on, and what upcoming Fed Chair Kevin Warsh is set to do, but certainly what is also happening around Europe.
Yeah, his swearing-in ceremony on Friday, something to watch out for. Abir Abu Omar in Dubai, thank you so much. Well, talks between South Korea's Samsung Electronics and its largest labor union have broken down, raising the prospect of a workers' strike disrupting operations at the world's largest memory chip maker. A general work stoppage is now planned for Thursday. Let's get to Seoul and senior tech reporter Yulim Lee. I mean, the fact that this is having an impact on broader Asian equity markets tells you a lot about the significance of Samsung. Do we know if this strike is actually going to go ahead, and what exactly are the sticking points between the two sides here?
Sure. The union just a few hours ago came out and said they are going to go ahead with the planned strike tomorrow. This was after a series of negotiations that had been going on with the management and mediated by the government. And so they came out and said, there was a proposal, but the management basically did not accept that. So they have no choice but to go on a strike. In the meantime, Samsung came out and said they have made a lot of compromises. The sticking point was really around few things, but the most important was over the bonus. The union has been demanding 15% of operating profit allocated as a pool of bonuses for the employees this year. They wanted the management to remove the cap on bonus, which is currently 50% of their annual income, and also they wanted all these things to be formalized, institutionalized, so they don't have to negotiate every year. So Samsung said they have accepted really the majority of what they were asking for, but they were demanding certain things that are too excessive. So they couldn't really accept all these things, given the the company's the policies. So that's where we are right now.
Okay.
But I think they still have they are still open to negotiations. I think there are still some rooms for breakthrough.
Yulim, let's see. Okay, thank you so much, Yulim Lee in Seoul. Now, emerging market currencies and stocks waver as mounting inflation concerns fueled a rise in global bond yields, prompting investors to reassess valuations after a record-breaking rally. Joining us now to discuss is Alan Xiao, co-head of emerging market corporate debt at 91. As a fixed income investor, are you seeing the rise in global bond yields as a good entry point, as a potential buying opportunity?
Good morning, Jemima. Great to be with you again. I think as we revisit some of the volatility we saw in late February, early March, I think it's useful just to remember what happened over that period, which is the remarkable resilience of markets after acknowledging and wading through this wall of worry. I think we're in a similar position now. I think the clear risk that markets are trying to price is this inflationary impulse and what that means for markets. We remain constructive. I think it's useful to see Treasury stabilizing here at just over 5% at the 30-year mark. We seem to have priced most, I guess, of the immediate shock. It's hard to look beyond the current uncertainty, but I think there's room for some cautious optimism.
Yeah. At the same time, there's a bit of a wedge between how local bond debt has performed, local currency versus hard currency, the bonds that are denominated in USD. Would you say that because of that, EM local currency debt presents a better opportunity, or do you stay clear out of various concerns, be they growth or inflation at this point?
I think one of the advantages of local currency EM fixed income at the moment is the diversification proposition. For many of our global clients that are not funded directly out of dollars, so where their home currency is another currency, I think what is reflected in the markets now is that dollar weakness, the fact that dollar is not acting always universally as a safe haven, means that clients need to look maybe beyond the traditional G3 construct, and that's really where the value of local currency is really shone through. Now, obviously, we're still arguably early days here, but it is a useful alternative.
What are the criteria you're looking for when you're picking the winners in this environment?
So look, on the EM corporate side, and we are fundamental value-based investors. So the first thing we do is we revisit and re-underwrite all the credit cases for the investments we undertake. In the midst of all of this noise, there's a lot of disruption to supply chains and to business cases, but there are winners as well as losers. And when you're lucky enough to be able to choose from such a big patch as emerging markets, it's easier perhaps to find them. And although there's been a lot of focus on the disruption to oil and the downstream products of oil, there are definitely players in the market that are benefiting because they have access to advantaged supply, or they have production facilities that are not affected, or they can address markets that, again, do not rely on some of the affected supply chains that we're seeing right now.
Alan, there's been a lot of focus on the sort of shocks emanating from the Middle East region, U.S. as well. But I also want to ask you about China, because there has been an interesting development in China, and that it is no longer in a state of deflation. What we are seeing is inflation for the first time in years is actually starting to pick up. And I wonder what that does to the EM complex insofar as China's gone from a net exporter of deflation to potentially a net exporter of inflation.
Look, that is definitely a fundamental change. We'd like to stress it's still early days. We've come from a regime where deflation, particularly within services and the consumption sector, has been very prevalent. China has been actively taking steps to address that through the anti-involution and more sort of, I guess, policies that spread throughout the economy to prevent excessive, if you like, corporate competition. Again, we're at the foothills, but if China enters a more orthodox sort of economic environment, arguably it makes the world slightly more synchronized. Now, while that may mean that certainly for the rates and inflation outlook, it requires a rethink, it may change China's posture in terms of geopolitics, because through this recent round of crisis, they have not really been affected as some of the other larger economies have been. And so they've been able to make different choices. And that may change if we move out of deflation into inflation in China.
Alan, always good to chat to you. Thank you so much for coming on. Alan Xiao, co-head of Emerging Market Corporate Debt at 91. Well, coming up, President Trump says he called off strikes on Iran after appeals from Gulf nations. We'll take a look at the role GCC countries are playing in diplomacy next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in London. Qatar Foreign Ministry says President Trump's decision to call off strikes on Iran came as a response to communications from Gulf leaders aimed at ensuring diplomacy is given another opportunity. Joining us now is Sam Dahed, our senior Middle East reporter. Sam, I think many of us in the region were taken aback by that Truth Social post that President Trump put up. And he said specifically at the request of Saudi Arabia, Qatar and the UAE, he held back on imminent strikes against Iran. First of all, how much sway do these Gulf countries actually have in persuading the president? And second of all, people forget that the GCC isn't acting as a monolith group here. Each one of those countries has different prerogatives. So just walk us through the angle of the Gulf and how it may have swayed Trump here.
Absolutely. Good to be with you, Jumana, and your viewers. So basically, I mean, we know that President Trump has a strong personal relationship with all of the leaders of the Gulf, particularly the three main ones, the Emir of Qatar, Tamim, the Crown Prince of Saudi Arabia, Mohammed bin Salman, and the President of the UAE, Sheikh Mohammed bin Zayed. My knowledge through multiple sources that he actually speaks to them quite often on the phone, and since the start of the war, and including recently. So I wouldn't be surprised that they, spoke to him on the phone. Maybe they represented, I mean, again, I don't have all the details of the conversation, but they probably explained to him perhaps the consequences or of resuming the war, and how that would lead to escalation, and how they would be again left to bear the brunt of Iran's retaliation. Having said that, I think it's important to while Trump had put them all together, to understand that there are nuances and differences in their positions. For instance, take Saudi Arabia, the largest country here in the region. Yes, Saudi Arabia, I mean, a person close to the Saudi leadership told me, and I'm reading, "We highly value President Trump's decision to give diplomacy a chance." And this person told me that they support Pakistan's mediation. I mean, that's obvious. In fact, Pakistan was brought into all of this with the help of Saudi Arabia. And this person told me that Saudi Arabia's contacts with the U.S., the regional partners, and Iran, remember, so because the foreign minister of Saudi Arabia is having conversations with his counterpart, his Iranian counterparts, this person said these contacts are mainly to support the ongoing negotiations. On the other hand, another person close to the leadership said, yes, we don't want the war to resume. We want the war to end. We want no further escalation. But at the same time, Saudi Arabia supports the pressure that the U.S. is exerting on Iran through the blockade of Iranian ports, right? And they feel that's very important for Saudi Arabia. They can't allow Iran to have control over the Strait of Hormuz. And then we come to the UAE first. Oh, go ahead. Sorry.
Well, I was actually going to ask you specifically about the UAE, because you and our other colleague, Fiona McDonald, reported about a week ago that UAE did actually participate in the war militarily. They struck Iran not once but twice throughout the course of military conflict. So, the fact that Trump referenced the UAE as one of the countries that's exerting diplomatic influence, how should we read that from the UAE perspective?
Absolutely. Good question. I mean, first of all, just very quickly, I mean, the UAE does support diplomacy. It's important to say that. The UAE does support escalation. But what the UAE doesn't support, and it's made that very clear, is a rush to make a deal with Iran at any cost that would leave Iran more emboldened, more dangerous. That the UAE is against, and has made it clear a number of times, particularly at a time when the UAE continues to come under attack from Iran, and I mean, potentially from Iran, this last strike, but we know this, the previous one, the previous strike last week was from Iran. But this week, we're being told that, I mean, this was a statement from the Ministry of Defense here, that they've intercepted they've tracked 6 UAVs. 3 of them originated from Iraq. 1 of them struck, an electrical generator in the perimeter of the nuclear plant, Al-Baraka. This was over the weekend. This is most likely the work, potentially, I mean, we don't have confirmation yet, of Iran's proxies in Iraq, one of the militias that report directly to the Islamic Revolutionary Guard Corps. So this is where the UAE stands. I mean, it continues to come under attack, and it's saying, yes, I want the war to end, but I don't want it to end in a way that leaves Iran more dangerous. I think that's really kind of the gist of the UAE position. In terms of the story, we reported last week, I mean, this was during the war when, after 10 days of being pummeled by Iran, the UAE, and you have to remember the UAE fired at the UAE, during the 2 months of the war, and the UAE said to its Gulf partners, we have to come together, we have to deter Iran from doing this, and in the end, they said, that would be an escalation, that would be inserting ourselves into a war that they believe, I mean, they, meaning Saudi Arabia and Qatar, believe that Israel and the U.S., provoked and started.
Sam, great to have you with us. Thank you for bringing us the perspectives from the Gulf region. Sam Dahed, our senior Middle East reporter. Well, coming up, the WHO calls for coordinated global response to the Ebola outbreak in Congo and Uganda. That's next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Shevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
The World Health Organization is stepping up its response to the Ebola outbreak spreading across Congo and Uganda as officials race to find vaccines and treatments for the rare strain. WHO Director General said the outbreak underscores the need for a coordinated global response.
The outbreaks of Ebola and hantavirus in the past 2 weeks show why international threats need an international response. They show why the world needs the international health regulations and why it needs WHO.
Our Chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. So just walk us through the latest. What is happening on the ground, Jen?
Yeah, Jumana, what we know right now is that there are more confirmed suspected cases and also deaths right now. Just about 500 suspected cases and just over 131 deaths linked to this Ebola strain in the DRC. What we just heard there from Director General Tedros just speaks to some of the concern for health agencies with this new strain just because it's so understudied. What we did learn on Tuesday, though, is that the CDC is working to move more people who are classified as higher risk to Germany, and potentially Czech Republic is also going to be added to one of those countries that will host some of these individuals. But again, what's really complicated health authorities is that this Bundibugyo strain is quite different from some of the other Ebola strains we've seen in the past years. Some of the symptoms early on sort of mimic what we've seen with malaria and flu, potentially why many of these cases could have gone underreported or unsuspected for so many weeks.
Yeah, and how are we seeing the international community respond, particularly from a financial perspective?
Yeah, what was interesting to hear from the Director General there is that he is calling for international coordinated response. We're seeing that really coming together and mobilizing, especially from the U.S., which I should point out, the U.S. did leave the WHO in early 2026. But on Tuesday, we did hear that the U.S. announced a funding commitment to accelerate, among other things, frontline care. They say that this will help fund up to 50 treatment clinics in the DRC and Uganda. And the U.S. reiterating that this shows their commitment to global health and humanitarian partners. Again, the U.S. did leave the WHO in 2026, but we did hear the WHO also saying that they are working to mobilize about $3.4 million from their emergency contingency fund. Africa's CDC also working to mobilize more funds, but quite critical to all of this is what we heard from Director General Tedros, and he's saying that this is showing just the financial strain that not just the organization is under, but really the financial pressures that a lot of health agencies are facing, given that over the past few years we have seen a declining of aid. So potentially this will affect the ultimate response, but we are seeing a bit of mobilization as far as this current outbreak is concerned.
Jen, thank you so much. Jennifer Zabazaj, our Chief Africa Correspondent in Johannesburg. Well, we're going to round up the show with some football news. Arsenal Football Club has won the English Premier League title for the first time in 22 years. Thousands of fans celebrated in the streets of North London as Manchester City's challenge ended with a draw in their game at Bournemouth. Arsenal had finished runners-up in the past 3 seasons. They now face PSG in the final of the European Champions League on May the 30th for the chance to secure a rare double. And a look at equity markets as we head into the European Open. Things are dipping slightly. We've been keeping a close eye on rising bond yields, the impact that that's having on equity markets. S&P futures down 0.2%. European markets, take a look there. We are seeing opening much lower, down 0.8%. And there, once again, keeping a close eye on the impact on oil, higher oil prices, geopolitical risks, rising yields, and of course, Nvidia earnings coming up later today. But I'm also going to round up the show with a little bit of housekeeping, just to let you know, for regular viewers of Horizons. This is actually my last Horizons show for now. I'm going to be back at the end of the year. In case you haven't noticed, there's a little girl kicking me in my stomach. So I'm going to be off. As of next week, I'll be broadcasting out of London for another week or so. But until I see you, you will be left in the very capable hands of the lovely Abir Abu Hamad. That is it for Horizons Middle East and Africa.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Global stocks head for their longest losing streak in more than 2 months as inflation fears grip investors. The bond sell-off sending long-end Treasury yields to their highest since 2007. Traders now await earnings from Nvidia. The Chinese president says a ceasefire in the Middle East is imperative as he welcomes Vladimir Putin to Beijing, just days after his summit with President Trump. Plus, backing down, the EU finally agrees on the wording of a trade deal with the US, taking out amendments that were criticised by the US president. Well, a very good morning. Welcome to the programme. 6 a.m. here in London. And take a look at the market impact of President Trump's threat to resume Iran strikes in a push to end the war. Yes, oil is a touch weaker, but Brent's still trading above that $110 a barrel level on Brent. That's stoking inflation concerns. And as I say, we've seen the Treasury yield on 30s climbing to levels last seen in 2007. That on bets that the Fed is going to have to hike before it can cut. Citi saying that 5.5% is the new round number bond traders are focused on. You also have the Bloomberg Dollar Spot Index edging higher at its highest in 6 weeks. The haven of choice, of course, throughout the Middle East conflict, so now just flat to the upside. And if we flip over to the equity picture, you can see that inflation angst weighing on stocks this morning. Asian stocks down 1.1%, down for a fourth straight day on the MSCI Asia Pacific Index, and Samsung shares dropping after its labour union said it would go on strike. That weighing in particular on Korea's Kospi, which could have global ripple effects. Also, European stocks 50 futures down 0.7%. And as we brace for those Nvidia earnings later, Nasdaq futures flat to the downside too. S&P E-minis are also down 8 basis points. Now, speaking of the risk events on the docket for today, at the top of the hour, we're going to get the latest UK April CPI numbers. That hot on the heels of those weaker than expected jobs numbers yesterday. So is this going to lead traders to trim bets on BOE hikes even more? 57 basis points of tightening currently priced. Then at 7 p.m. London time, we'll get the latest Fed minutes. This is from Jay Powell's last meeting as chair, expected to be hawkish and reinforcing the message that officials are not ready to cut rates. Then at 9:20 p.m. London time, perhaps the highlight of the week, Nvidia earnings. These expected to either ease or reinforce concerns about an AI bubble as the chipmaker marches towards a $6 trillion valuation. Let's set you up for the day ahead. We begin with stocks in Asia falling for a fourth day with Korea's Kospi whipsawing on the news that Samsung workers plan to go on strike. Let's get an update now from Anthony Stevens in Hong Kong. Anthony, what's happening where you are?
Hey. It's been a choppy day, right? We had the Nikkei trade in a 2% range. It's down for the fifth consecutive day. That's the longest losing streak since Jan. The Kospi is traded almost in a 6% range, low to high, and that's a lot to do with Samsung, but it's been choppy all this time. We are getting a little bit of pressure from these bond yields. Bond yields aren't doing very much today, but it's just the absolute level these yields are trading at and the absolute level of Brent oil as well at 110 as this conflict drags on. So the bar to kind of positive positive surprise has come up very high. At the moment, we're looking at Nvidia. There's a rational risk-taking in front of that earnings. People are taking down some risk, just like you saw in the US, and that's driving some rotation as well. You see Chinese equities are actually kind of resilient. The Chinese chip ecosystem in particular is doing quite well as Alibaba releases some new chips. So you're seeing this rotation within tech, but net it works out to another down day in Asia as we await Nvidia and the Fed minutes.
Anthony, thanks for the update. That's Anthony Stevens out of Hong Kong. Well, talks between Samsung and its largest union have broken down, with the union saying that a strike is now planned for tomorrow. The two sides have not been able to come to an agreement in this dispute over bonus payments, and a strike could now risk production delays. Let's bring in Bloomberg's Yumlin Lee for an update. So, Yumlin, what's the state of the talks between Samsung and the union as things stand?
Sure. So the union said it's going to go ahead with a planned strike tomorrow because the management rejected the proposal mediated by the government in the last 3 days. So one of the sticking points of the talks have been over the performance bonuses. Samsung has come out and said the negotiations has failed because the union's excessive demands, even though the company has accepted but the majority of what they were asking for, some of the areas where they were asking was just too much to accept. For example, they said the union demanded sort of performance bonuses over on operating units that are loss-making, and they said they directly goes against their principle, and that would set very dangerous precedent for the company, not only the company, but for the entire country. So, but both sides have left some doors open. So, last minute agreement is potential, but I think the, government mediated talks are just collapsed. So as of now.
Okay, so let's say the strike goes ahead. Just walk us through the scale of the global disruption this could cause.
Sure. A lot of analysts that I've spoken with, they're not really expecting full shutdown of any sort. There have been already measures in place. For example, Samsung has asked for injunction on very illegal workers' movement that would restrict the production. For example, earlier this week, the court has said you need to have a certain number of workers maintaining the production lines and safety measures, and the workers are not allowed to occupy the operation facilities. So this really was the biggest problem and the risk that Samsung was facing. So now the workers have legal restrictions that they are not allowed to do illegal, activities as such, so that, the operations are maintained. Also, there's another way to restrict the, kind of worst case scenario. Basically, the government has come out and hinted that they could lean on this very rarely used labor law that would essentially stop the government to intervene and stop the strike for 30 days. It's very rarely used, 4 times so far in the Korean history, and last time it was used was 2002. So but they have already hinted that they will go ahead. So this is another possibility that we can expect.
Okay, Yulim, thanks for staying across it for us. Bloomberg's Yulim Lee in Seoul. Thank you. Well, turning to broader markets now, bond yields holding at elevated levels, piling pressure on global equities, with the 30-year Treasury yield touching its highest level since the eve of the global financial crisis back in 2007. Let's bring in Ben Ram now, our cross-asset strategist over at Bloomberg MLive. Ben, we've got strategists at Barclays and Citi saying that yields could breach 5.5%. Just walk us through the risks for global investors.
I think that, if yields go anywhere near as high, I think that equities will start shuddering. So far, they have been overlooking all the risks coming from inflation and from the surging bond yields. If you look at the equity risk premium built into the S&P. It's negative because the S&P's earnings yield is less than the Treasury yield and the long-dated yields, definitely. So therefore, I think that the markets have been complacent for too long. The equity markets have been complacent for too long. Valuations, particularly on the S&P 500, as opposed to the Nasdaq 100, are kind of frothy, and I think they are unsustainable. So I think that fair value on the S&P is more like 5,700. And therefore, I think that the equity markets will begin to shudder the longer these yields stay on the boil.
Okay, and we also heard from the Philadelphia Fed President Anna Paulson weighing in on the policy outlook overnight. Then let's just take a listen to that.
Policy is mildly restrictive, and that restrictiveness is helping to keep inflation pressures in check while the labor market remains stable. Keeping rates steady allows us to assess how the economy is evolving and the risks to both price stability and the labor market.
So we'll get more insight from the Fed minutes later today, but how could the latest bond moves complicate the path ahead for the Fed?
Well, the bond markets are suggesting that it would be a terrible policy mistake for the Fed to be even entertaining the idea of a rate cut at this point. As Paulson was saying, I mean, she's saying that the rate is mildly restrictive, but if you run the Taylor rule rate, Lizzie, what you see is that the rate is just neutral, not restrictive at all in any sense of the word. And given the inflationary pressures that we have got from the war, I think that there is a need to take policy into restrictive territory, considering that especially that the US economy has been pretty resilient through all this. So I think that in the coming months and in the coming weeks, the markets will realize that the natural way for the natural direction is higher for the Fed funds rate, not lower, and that will put pressure on the two-year yields. I've been saying for a long time that, the two-year yield, as the two-year maturity has been glossing over this reality, and now we have seen the sell-off, and I think that it's got further to go, really.
You have indeed. Ben, thank you for your insights again. That's Ben Ram, cross-asset strategist at Bloomberg MLive. Well, going back to the geopolitics now, Russian President Vladimir Putin's meeting Chinese leader Xi Jinping in Beijing to strengthen their alliance just days after US President Donald Trump's visit to Beijing. Now, state news agency Xinhua reports that Xi told Putin a ceasefire in the Middle East is imperative. Let's go now to Bloomberg's chief Asia correspondent, Rosalind Matheson. Ros, just bring us the latest from this summit.
Well, you've seen a lot of fanfare so far today, a lot of pomp, really on a par to a more recent visitor, of course, US President Donald Trump to China. So sending a clear message there that both China and Russia see this relationship as important and useful, even if China probably doesn't see it as equal. They see themselves as the more senior partner in this equation. So certainly a lot of pomp there. You see the Russian president quoting Chinese proverbs, calling Xi Jinping his dear friend, saying Russia can be a reliable partner, particularly when it comes to energy, which is the crucial thing in this relationship. Interestingly, you have Xi Jinping making a couple of other comments so far. One was he said that Russia and China need to work together towards a more just and reasonable global order, which is a bit of a ding at Donald Trump in the US potentially. And also saying very clearly he thinks that the war in the Middle East needs to come to an end ASAP. So a message also to the US in that potentially to hurry up and wrap up that conflict. Of course, Russia may disagree because for them the conflict in the Middle East is potentially useful given it's bumping up energy prices and making their energy in higher demand. But certainly we've seen lots of warm words so far, lots of warm symbols, very much sending a message that this relationship is important.
So beyond the symbolism, Ros, what else is on the agenda?
Well, obviously a lot of conversation behind the scenes about this planned pipeline from Russia, this gas pipeline from Russia to China, because Russia is wanting to speed China up and the commitments about it, and certainly maybe behind the scenes get more of a commitment around the contract price for gas to maybe a better price than might be on the table already. And China's been moving fairly slowly on that, so they want to really speed that up. So that's one tangible that may come from this. But also some of the conversation is going to move much more behind the scenes as we go on. The Russians making much of this idea of the two leaders taking tea together and having a much more private conversation. So then we're going to get the really meaty stuff happening, potentially around the pipeline. But also, does Vladimir Putin try and get a better sense of Xi Jinping about his recent meeting with Donald Trump, for example? Does the Chinese president use that moment to press him a bit in turn on his war in Ukraine? So that's where we're going to see some of those deeper conversations happening. And that's certainly where Russia is hoping to get some kind of agreement potentially on this pipeline.
Okay, Bloomberg's chief Asia correspondent Rosalind Matheson, thank you for the update. The state broadcaster CCTV saying that a document signing ceremony is going to take place soon between the two nations' officials. So do keep an eye on that. We've got a fantastic T-Live blog running at the moment with all of the latest developments. But still ahead here on Daybreak Europe, UK inflation data might give Prime Minister Keir Starmer a much-needed boost, but could it be short-lived? We'll dive into the details. First, though, President Trump warns there's limited time for a peace deal, and we'll get you the latest from the region next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:17 a.m. here in London. And we turn now to the Middle East. President Trump threatening to resume strikes on Iran in the coming days as part of a push for a deal to end the war. The latest threat came after Trump said that he'd called off a planned attack after an appeal by Gulf allies. And this comes as NATO is discussing the possibility of helping ships pass through the blocked Strait of Hormuz if the waterway isn't reopened by early July.
I had made the decision. So they called up, they had heard I made the decision. They said, sir, could you give us a couple of more days because we think they're being reasonable.
How long is the days for Iran to come to?
Well, I mean, I'm saying 2 or 3 days, maybe Friday, Saturday, Sunday, something, maybe early next week, a limited period of time.
Let's get analysis now with Jumana Basetchi, Bloomberg's Horizons Middle East and Africa anchor, who joins me in studio. So, Jumana, how seriously should markets be taking Trump's threats there on Iran when you've got the Republican-led Senate signalling opposition to continuing the war?
Yeah, well, look, we've been here before. Trump has made threats to Iran many times in the past throughout the course of this, well, it's almost been going on for 3 months now, the Iran war. This time he's saying that at the request of Gulf allies, and we spoke about this yesterday, they held off of an attack. They were ready. He says we were ready to go within a matter of hours, days. And then he was asked by reporters if they do go down the military track, when could it happen, or how much time does Iran have to come to the negotiating table? He said a matter of days. So again, it's not completely out of the picture, but what he is suggesting is that there could be room for a breakthrough in the coming 48 hours or so. And that was echoed by the Vice President, J.D. Vance, too, who struck a more constructive tone. And he said that Plan B is military action. Plan A, for the time being, is to continue with those negotiations with the hope that we get either a resolution or, at least as I spoke about yesterday, a framework towards a resolution. Now, at the same time, what's becoming apparent is neither the Gulf allies have a huge desire to go back to intense kinetic military action, as we saw before the ceasefire. And even President Trump back home, there's a lot of public backlash from the public, rising gasoline prices. And as you mentioned, the Senate yesterday passed a procedural vote that indicated that really the tide is turning even within the Republican Party insofar as this war is concerned, that the support is waning.
And you just wonder, therefore, whether there's enough pressure on Iran to make a deal that includes the nuclear file, which, as you keep telling us, is what the US wants. Now, I mentioned that NATO is considering this Hormuz mission to protect ships. How big of a strategy shift would that represent if they can get the necessary unanimous support, which they don't have yet?
No, they don't have unanimous support. And remember, NATO has been subject to a lot of criticism by President Trump for not being actively involved in this conflict. And remember, NATO is a defensive alliance. They're not going to get involved voluntarily in a war that they didn't start. But again, President Trump has been appealing to them, not formally, but through his True Social posts. And our latest reporting, having spoken to various sources within NATO, suggests that they are perhaps thinking about a mechanism to help get vessels through the Strait if the Strait continues to be effectively shut in July. Now, it doesn't have unanimous support yet. There's a motion that's building. There's discussions that are taking place. And remember, there's also a separate motion being put forward by the UK and by France. They're trying to build a coalition of nations, not necessarily just NATO allies, but also European, Asian, even Gulf allies as well, to help transport and escort even some of those ships through the Strait. But it does mark a different strategy to NATO. And I think, Lizzie, it also underscores that nobody had expected 3 months on for the Strait to still be effectively shut, and people's patience are running thin. There has to be a solution, and if it's not military, then there needs to be some other form of a diplomatic solution in order to help get some of these stranded vessels, and there are thought to be about 800 of them, 20,000 seafarers still trapped in the Persian Gulf.
And perhaps that diplomacy could help bring down the oil price and remove some of Iran's leverage. Jemana, great to have you with us, as ever. Bloomberg's Jemana Basechi. Well, coming up, the Pentagon pushes ahead with plans to pull US troops out of Europe. We'll get to that next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe. Now to some of the top stories we're following for you around the world this morning. The US Defense Department says that it will permanently cut around 4,000 soldiers from Europe as part of a broader review of forces. A Pentagon spokesman says that the move is meant to push NATO allies to take primary responsibility for Europe's conventional defence. The cut will bring the number of US Army Brigade combat teams stationed in Europe from 4 to 3. Meanwhile, Republican congressman and vocal Trump critic Thomas Massie has conceded defeat in his primary election to a candidate backed by the president. Massie used his concession speech to hit out at President Trump for focusing on the construction of a White House ballroom while prices remain high. This after an election race which has seen nearly $33 million spent, making it one of the most expensive primaries on record. And the Republican-led US Senate is showing growing opposition to the Iran war. 4 Republican senators joined Democrats in a procedural vote backing a measure to halt hostilities, the move signalling weakening support for further military action as President Trump weighs another strike on Iran. Now to one of our top interviews. The Bundesbank president, Joachim Nagel, says that the ECB may have to respond to the economic challenges arising from the conflict in the Middle East. He spoke to us alongside French Central Bank Chief François Villeroy de Gallo on the sidelines of the G7 meeting in Paris.
This whole conflict started more or less 3 months ago. Now we know that this energy supply shock is more persistent. So we are moving away from our baseline scenario.
We are in difficult circumstances. You mentioned them, but the discussion was lucid without any complacency. It was a free discussion at the highest possible level, and it was a confident discussion. And we shared the analysis on global economies. We shared the will to reduce global imbalances, to address the negative consequences of the conflict in the Middle East. And for us central bankers, we are fully determined to bring inflation back to target.
And our central bank conversations continue today. Pierre Wunsch, the governor of the Bank of Belgium, National Bank of Belgium, joins Francine Lacroix on the pulse for an exclusive conversation at 9:15 a.m. London time. Now, let's go to our corporate news this morning. Bloomberg learning that Goldman Sachs and Morgan Stanley have secured the lead positions for SpaceX's upcoming initial public offering. Billionaire Elon Musk's rocket, satellite and artificial intelligence firm is targeting a $2 trillion valuation. The listing expected to raise up to $75 billion, potentially making it the biggest IPO in history. Elsewhere in tech, Meta has begun notifying thousands of staff that they're being laid off, with the first alert sent out in Singapore at 4 a.m. local time. An internal memo says that affected European and US-based employees will also be notified early Wednesday in their own time zones. Meta is cutting around 8,000 positions globally in a restructuring aimed at improving efficiency and cutting costs. And Google has announced a redesign of its search box and plans to add new AI coding tools as the company looks to expand its AI offering. The company says that its changes to search will allow it to better handle the more complicated requests that people bring to chatbots. Well, that's some of our top corporate news this morning. Coming up, the EU finally agrees the wording of a trade deal with the US as it bows to President Trump's deadline demands. We'll get you the details next. This is Bloomberg.
bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Up to the minute geopolitical news whenever and wherever it's happening. I'm Anne Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Global stocks head for their longest losing streak in more than 2 months as inflation fears grip investors. The bond sell-off sending long-end Treasury yields to their highest since 2007. Traders now await earnings from Nvidia. The Chinese president says a ceasefire in the Middle East is imperative as he welcomes Vladimir Putin to Beijing just days after his summit with President Trump. Plus, backing down, the EU finally agrees on the wording of a trade deal with the US, taking out amendments that were criticised by Donald Trump. Well, a very good morning. Welcome to the programme if you're just joining us. 6:30 a.m. here in London. And this is the picture in markets this morning. Just take a look at the impact of President Trump's threat to resume those Iran strikes in a push to end the war, as we were discussing with Jemana Basecci. So oil a touch weaker, but Brent still trading above that $110 a barrel level on Brent. So that's stoking inflation concerns. The 30-year Treasury yield at levels last seen in 2007 on the bets that the Fed will have to hike before it can cut. And we're now at 5.17, but Citi saying look at 5.5%. That's the new round number that bond traders are focused on. Now, you've got the Bloomberg Dollar Spot Index flat to the upside, but of course this has been the haven of choice through the Middle East conflict. So it's at its highest in 6 weeks at this point. And if we turn over to the equity picture, you can see how all of that inflation angst is weighing on stocks as well. Asian stocks down 1.1%, down for a 4th straight day on the MSCI Asia Pacific Index, and Samsung shares dropping after its labour union said it would go on strike. So that particularly weighing on the Kospi in Korea, that index down 1.7% and helping to drag Asian stocks lower. Now, do we see a global effect of that? You've also got European futures lower 0.6%, and as we brace for Nvidia earnings later, US futures down a touch. For S&P E-minis, we're actually flat to the upside when it comes to Nasdaq futures. Now, time for our front page news this morning. Kicking off with the Financial Times, they say that EU governments are discussing whether the former German Chancellor Angela Merkel or former ECB President Mario Draghi could represent the bloc in potential negotiations with Vladimir Putin. This as momentum gathers to reopen formal channels with Russia. If we flip over to the Wall Street Journal this morning, they're leading on Thomas Massey's defeat in the congressional primary in Kentucky. The paper saying that the success of President Trump's hand-picked candidate underscores his iron grip on the Republican Party. And finally, if we turn over to Les Echos out of France, their headline reads, US debt has entered the danger zone as interest rates return to crisis levels. And we'll turn back to that later on in the programme. But for now, you can get a roundup of the stories you need to know to get your day going, as ever, in today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go. Now, after months of negotiations, the European Union finally has agreed the text of its long-awaited trade deal with the United States. Under the agreement, the EU will remove levies on US industrial goods in return for a 15% ceiling on tariffs. Oliver Crook's been across all of this for us, our chief Europe correspondent, of course. Ollie, just how much is this going to calm transatlantic trade tensions?
Well, they really should take some of the heat out for the moment in the short term, because, of course, this is a great objection of the Trump administration. This was a handshake deal between Ursula von der Leyen and Donald Trump about a year ago, back in Turnberry in July, and it has still not been fully put into effect by the Europeans. But as of 2:30 this morning, we saw the red headline cross as we understood that the negotiations had been concluded here on the side of the lawmakers and the member states of the final text of that deal, and can now move forward to try to meet that deadline that the President of the United States set, July the 4th, 250th birthday of the United States. They need to get it in there in place. Otherwise, the Trump administration will administer some additional tariffs, namely on the auto sector, to the tune of 25%. And we should just remind everybody, Lizzie, this is the same deal we've been talking about for the last year. This is the deal that would govern the $1 trillion trading relationship between the EU and the United States. There is, however, Lizzie, a little bit of fine print that was added into this deal, which I'll just go through very quickly. The trade deal will expire in 2029. The initial draft back in March had this expiring in March of 2028, which was before the Trump administration would actually end. So that changed. That is something that's sort of interesting. Also, it will suspend the deal can be suspended for a number of different reasons, particularly if they do not get a deal on steel and aluminum tariffs that are currently at 50%. The EU wants that to come down to the 15% of everything else by the end of this year. And of course, Lizzie, they say that if there are any violation to the commitments, the EU can suspend this deal. That would mean, presumably, additional threats of tariffs, as we saw Trump do when he wanted to take Greenland. So now the next steps, Lizzie, this will go to the European Parliament. It will go to the member states for the final ratification. But the big question, Lizzie, is will the U.S. have objections to some of these little things that the EU has added to this deal? We heard from Jameson Greer a couple of weeks ago saying that this is not the deal that the U.S. had signed up to. So we'll await. We'll probably hear about it on Truth Social at some point in the coming weeks.
OK, Ollie, thank you for the update. That's Bloomberg's Oliver Crook, Chief Europe Correspondent. Well, we're looking ahead to another key data print out of the UK today. Inflation figures due at the top of the hour. These are for April, due at 7 a.m. London time. And economists are forecasting CPI at 3% on the year. So that's an ease from the 3.3% print that we saw for March. Let's get analysis now with Matt Bunny from Bloomberg Economics. So, Matt, what should investors be looking out for in these numbers? And even if we do get a softer print, what are you expecting in terms of the future? How much worse could it get? How long could it last?
So we've penciled in a decline to 3.1% today. That might be surprising given all the discussion about the energy shock and how that's going to push up inflation. In April, effectively, we're expecting that previously announced government policies, this is from budgets in previous years, will soften the print. That is going to be offset by fuel prices. Anyone who has a car will know filling up at the petrol pump has increased dramatically in the past couple of months. The other thing we'll be looking at is if there are any signs that in the wider CPI basket, we're seeing inflation begin to heat up in relation to the energy shock. So we're expecting food and beverage inflation to pick up a little. Looking ahead, we think that inflation will peak around 3.5% early next year. Of course, this all depends on the path of the conflict in the Middle East. If it gets worse and energy prices get higher, we think inflation could even reach as high as 5%.
And we've talked a lot about gilt yields in the context of the political uncertainty at multi-decade highs. It's not just a US story, of course. Do you think that the bond market's pricing in more persistent inflation than the BOE is acknowledging?
So the bond market has priced in 3 hikes over the next year. We have penciled in 1 at this stage. I think with inflation set to head higher and the Strait of Hormuz not looking like it's reopening anytime soon, the BOE will be minded to hike in the coming months. The important distinction to make is the weakness in the labour market, which means that workers are not well placed to extract higher pay rises as they were in 2022. So our base case is that this will be a one and done move. And the BOE has been at pains to underscore that the uncertainty at the current juncture. So if we do see a re-escalation in this conflict, particularly if we see signs of second-round effects, that would necessitate a more forceful response.
And indeed, yesterday's jobs numbers brought market pricing a little more into line with your view. Right, Matt Bunny, thank you very much. We'll wait for those numbers at 7 a.m, but that's Matt Bunny from Bloomberg Economics. Now, EU defence spending, up more than 50% since Russia's invasion of Ukraine, is now starting to drive demand in the real estate sector. Bloomberg's Natasha Vos has that story and joins me now on set. So, Natasha, thanks for coming on the early show. How is the real estate market starting to see the impact of the EU's defence spending splurge? How are we seeing it show up in the numbers?
Yeah, so it's been pretty slow to come through since governments started to increase their spending. But we are now starting to see an increase in the proportion of leases taken by defence companies and their supply chain. So we got data from CoStar and Savills, which showed that the proportion of leases taken by those companies had more than tripled since a decade ago. And it's starting to come through in different areas. So there are some hubs emerging. You know, Swindon, for example, in the west of England, is starting to emerge as a bit of a drone hub.
Okay, and what kinds of real estate are getting the most demand?
Yeah, so for the moment, it's mostly industrials and logistics. That's warehouse space, manufacturing space, but also offices a little bit. As companies expand, they hire more people. They need more people in research, for example.
And do you think that investors are getting more comfortable investing in defence-related real estate?
Yes, this is a bit of an interesting one because about a decade ago, there wasn't that much demand from defence-related companies to take more real estate, whereas now there is. So it's a little bit chicken and egg trying to work out whether they are more comfortable or it's just that there are more companies looking for space. But there certainly is a sense that they're more vocal about the positives of taking defence-related companies. You know, one of the positives can be that the leases are sort of part government-backed because the money is coming from a government.
So what holds this back? Are there limitations on the impact rising defence spending could have on real estate?
Yeah, so it's probably not going to be quite as big as, say, the e-commerce boom in terms of the impact on real estate.
Yeah.
But one of the limitations is that a lot of defence companies, they do prefer to own and occupy their own space, or they might be in government-owned space. So the real estate companies are looking more to take parts of the supply chain, which are perhaps easier, particularly with security requirements, which can differ from country to country, and it depends also on what you're doing there. But those can also be a limitation.
Makes sense. Natasha, thanks for bringing that story to us. That's Bloomberg's Natasha Vose. Well, coming up on Daybreak Europe, it is, of course, NVIDIA Day, and we're going to preview the numbers for you. What to watch when the world's most valuable company reports after the bell. Stay with us. This is Bloomberg.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:43 a.m. in London. And this evening, UK time, NVIDIA will be giving us a much-anticipated update on the state of the AI economy when it reports its first quarter results later on. For more on what to expect, let's get the latest from our Bloomberg senior strategist, Neil Campling. So, Neil, this is like a macro event at this point. What should we be focused on in these numbers?
I think, Lizzie, the question now, with this company being so large, is not so much the short-term outlook. Analysts and investors have come to expect good numbers coming out from NVIDIA. It's more about the long-term guidance. Now, taking a step back, one thing we will expect tonight is an 80% growth rate for revenues year on year. I mean, quite astonishing numbers given it's such a large company. But it's more really about the long-term outlook for the ecosystem. in terms of what they're doing on the technology side, and also I think in terms of how they're sort of pitching in terms of the long-term growth opportunities for the industry. But we're clearly looking for a very high growth number, and we're also expecting that to feed into the ecosystem and getting a sense of where the demands are coming from, and maybe an update on China as well, because of course at the moment we've got no revenues expected in these Chinese AI chips, which could be incremental upside to where people are expecting it.
And of course, NVIDIA is really at the heart of this web of capex that feeds through all of tech. So how important are these results for the rest of the tech sector? I know you've been calculating the compared size of NVIDIA to our own stock exchanges.
I know, a bit depressing in some ways, but NVIDIA obviously is in some respects kind of like a global economy in itself. It's a $5.3 trillion company. To put that in context, the FTSE 100 is $3.5 trillion.
Wow.
The DAX is $2.3 trillion. So NVIDIA is twice the size more than the DAX. But it feeds into the European AI ecosystem in terms of the power consumption, data center build-out, etc., as it does for the $700 billion plus capex spend from the hyperscalers expected this year. So it's crucial that the growth is maintained and we get good updates. And also, some of the new chips have been talking about should require less memory chips, which actually, given the concerns we have over Samsung and the output of memory, that could actually be an incremental benefit to the entire complex that will require perhaps less memory going forward with these self-serving chips in the data centers.
OK, so we could see some massive market gyrations in the morning. We'll have to get you back after these results. Neil Campling, our Bloomberg senior strategist, thank you very much. And you can get up-to-date analysis on all things AI with Bloomberg's AI Today newsletter. Every day it breaks down AI's threats as well as the opportunities for business, finance and more. Do sign up at bloomberg.com/newsletters. Well, the energy crisis spiked by the war in Iran has provided a stark backdrop for Bloomberg NEF's 2026 edition of the New Energy Outlook. It's long-term energy and climate scenarios for a low-carbon transition. So what do the next few years hold for renewable power, EVs and next-generation technologies? We can find out now with David Hostert, BNEF's chief economist and lead author of that report. He joins me now on set. Good morning to you. I want to start with the key energy transition technologies. You've got solar power, wind turbines and EVs. How does their uptake differ around the world?
Yeah, good morning. So this has been another report, another kind of at the backdrop of a big crisis that we're sliding into. And what's been really interesting is that the outlook for key technologies that we're tracking for EVs, for batteries, for renewables is very strong. And indeed, we have upped our uptake for some of these markets. This is against a kind of very stark backdrop. We have also increased our nuclear uptake slightly. And this actually links into something that Neil said just earlier about the growth in data centers, because that's also something we're tracking.
OK, so the biggest challenges then facing the transition that you're identifying, we've talked about the geopolitics, what else is there?
The big challenge is, on the one hand, trying to meet that growth. So we're now again in an era with strong growth in electricity. We're seeing data centers as a major driver. We're seeing electric vehicles as a major driver, but also other things, cooling. So electricity as a fuel, as a final fuel, has been rising, and it started to overtake other fuels. And solar plays a huge role in this. So we're seeing by 2032, solar could be the largest generator of electricity worldwide, overtaking coal, overtaking gas. So that's a big kind of hinge moment that we're moving towards.
We know that energy security is dominating policy agendas around the world. What gives you confidence in your projections?
The current report that we published doesn't assume kind of a big oil spike yet, but what we modeled this is at $80 oil. But when you see what's going on and compare how the share of imports in GDP for energy imports changes over the outlook, you can see that actually the countries that have the most to gain from switching to renewables, from electrifying, are the countries that are the most affected by the current crisis. Think about Vietnam, India, countries in Asia. So these are the countries that actually can reduce their exposure the most and liberate themselves from kind of dependence on energy imports.
So let's say geopolitics gives that push and they follow through on it, those nations. When do we see the peak of fossil fuel use?
Our projections see fossil fuel peaking, for oil peaking in the late 2020s. It's a very flat peak, so it could be a little bit before, it could be a little bit after, but definitely what we're seeing is that oil is in structural decline, coal is in structural decline, but the swing fuel is gas. So gas demand is actually up, in part boosted by power demand in the US, again coming back to data centers where gas is just still a cheap fuel, and we see gas demand rising throughout the outlook, but for oil, and coal, there's this decoupling, and indeed a decoupling between oil and gas, which have historically moved in tandem.
Okay, really interesting. That report is available to read, and David Hoster, Chief Economist at Bloomberg NEF, lead author of the new Energy Outlook. Thank you very much. You can check out all of those charts in the report. Now to some other stories this morning. Live Golf is said to have started laying the groundwork for a potential US bankruptcy filing if it fails to raise new funds. Sources say that the league's currently looking for money after its main backer, the Saudi Public Investment Fund, pulled its funding. We're told Live Golf is preparing for its potential collapse when the season ends in late August. Staying with sport, Arsenal Football Club has won the English Premier League title for the first time in 22 years. Thousands of fans celebrated in the streets of North London as Manchester City's challenge ended with a draw in their game at Bournemouth. Arsenal had finished runners-up in the past 3 seasons. They now face PSG in the final of the European Champions League on May 30th for a chance to secure a rare double. Well, let's check in on these markets, shall we? Of course, we're factoring in the latest from the Middle East. President Trump saying that he could have new Iran strikes to try to end the war. That keeping Brent above that $110 a barrel level, even if it's down 0.4%. That stoking the inflation concerns, and just to pick out the 30-year Treasury yield, we're at 5.18 now. We've seen it at levels not seen since 2007, on the bets that the Fed's going to have to hike before it can cut. And as the war goes on, the haven of choice, of course, being the dollar, the Bloomberg Dollar Spot Index, holding on to its gains. It's at its highest in 6 weeks, just flat to the upside there. A brief scan of the equity picture this morning. As we have the inflation angst, it's weighing on stocks in Asia, down 1.1%, not helped by the threat that Samsung's biggest labour union would go on strike. But futures on both sides of the Atlantic in the red as well, down 0.7% for Euro Stoxx 50 futures and down 0.1% for S&P E-minis as we brace for those Nvidia earnings out later on today. Nasdaq futures ever so slightly in the green. Well, we've got plenty more coming up for you. We shall remind you of the risk events on the docket for today, and we'll set you up with some terminal charts. Stay with us. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every policymaker, macro forecaster, central banker, tech promoter is telling you right now there is no problem. Every commodity CEO, commodity trader, anybody who gets their hands dirty is telling you you have a problem.
Veteran strategist Jeff Curry, now co-chair of ABAX Markets, on those oil shortages. And let's take a look at the impact on long-end borrowing costs. You can see here yields have been up around the world, these showing the US, Japan and German and UK bonds here. But it's not just because of hardening inflation expectations, both from oil and AI capex. It's also about the idea that central banks might do nothing about it, particularly when you've got fiscally loose governments already in the US and Japan, potentially also in the UK. That thesis going to take some stopping. So let's take a look at the short end of the curve and the nightmare for incoming Fed Chair Kevin Warsh. You've got him caught between a job market that supports not cutting and the risk that he is bullied by this bond market. Do we see the Fed therefore on an extended hold? Well, then you might ask, what is the impact on the mortgage market? One more term chart to show you this morning. If you take a look at where US mortgage rates are, actually pretty resilient. And therefore, even if you've got yields back at 2007 levels on 30-year treasuries, maybe it isn't time to compare the stress to the GFC time quite yet. But to access, search and save all of these terminal charts used on the show and across Bloomberg TV across the hours, as ever, terminal subscribers can use the function CHRT TV Go. A reminder of the risk events on the agenda for today. In just a few minutes' time, we'll get the latest UK inflation data. At 7 p.m. London time, it's the latest Fed minutes. Of course, the last meeting with Jay Powell. How hawkish do they sound? And then 9:20 p.m. London time, the highlight of the week, perhaps, the Nvidia earnings. Is this going to ease or reinforce concerns about the AI bubble? So all of that coming up throughout the day. But up next, the Euronext CEO, Stefan Bujna, joining us to talk earnings at 7:15 a.m. London time. That on the opening trade. Anna, Guy and Tom will take you all the way to the market open. Good morning from London. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the trend, the technology trend in the investment is real.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's Wednesday the 20th. Good morning. OK, this is what's going on. UK inflation is dropping right now. Bond yields are basically stabilising. And Samsung workers say they are striking, possibly tomorrow. We'll see, Anna.
Yeah, absolutely. It's having an impact on the Kospi then, Guy. And this is the picture coming through to us from Asia. Weakness in the Kospi, down by 1.3%. We continue to, we worry about the job story there out of Samsung. We continue to think about AI. It's NVIDIA day, so we'll certainly keep technology front and centre. That has an awkward read across usually into the European session. But European stock futures are showing a weakness at the start of the European trading day. We're light on the earnings stories here in Europe. We don't have an oil price going higher. And the US didn't do much after, well, it went up and then down again after we closed. So interesting to see whether we get that futures picture come to pass. Brent crude then is down by 0.5%. Are we showing a reduced reaction function to what we hear from the White House with regards to threats in the Middle East? The countdown to the opening trade starts right now.
Let's bring you the breaking lines when it comes to the UK inflation story, and it is a more benign picture than maybe some had feared. 2.8%. That is the number for the month of April. Year-on-year CPI coming below the survey number of 3% and below the previous print of 3.3%. So inflation coming in a little lower than the expectations, 2.8% year-on-year. Core CPI also a little softer as well, 2.5% on a core level, just marginally softer than the surveys of 2.6%. In terms of services, we've seen that has been stickier. 3.2% was the number on services versus the print of 3.5%. Again, this is a slightly more benign picture in terms of the inflation print out of the UK for April. We'll see how the trading price is, because you've seen about a 20% chance that the BOE would go in June. We'll see if that adjusts on the back of this. The pound is a hike in June. The pound is a little softer on the back of this data.
Enjoy it while it lasts, I think probably is the take here.
That's the message from Bloomberg Economics, isn't it? They were suggesting that this would be driven by some of the things that we can foresee to do with controlled pricing around energy. But looking ahead, they expect inflation to accelerate in the coming months, peaking just shy of 3.5% around the turn of the year. So that's a different conversation. Yesterday, it's interesting, though, if we do have this slightly more benign picture on inflation, even if it's temporary, sitting alongside a weaker jobs market story from yesterday, does it start to materially reprice how many hikes the market is expecting from the Bank of England?
The government, the story this morning around the UK is not actually about what is happening with the inflation numbers, because, as Anna says, a lot of this is kind of mechanical. The story is the fact that the government wants to control grocery prices. It already controls energy prices in a big way. Does it now want to control grocery prices? This is the story. Maybe Rachel Reeves eases up on the packaging restrictions but says you have to keep egg prices under control.
So that seems to be the quid pro quo. This is voluntary, is what we're hearing. And Rachel Reeves has been in conversation with the supermarkets, with the grocers, about maybe capping food prices in exchange for some regulatory easing, to your point. But there has been a fierce reaction from the industry who've pointed to the 1970s
is this where we're
as an
at?
example.
Is this where we've got to?
Well, it's certainly leaving some people speechless. The ex-boss of the IFS, the Institute for Fiscal Studies, Paul Johnson, saying he's lost, this is on X this morning, saying he's lost for words. He never thought he'd see the government trying to control food prices. And pointing out something that the food retailers point out when these kinds of conversations come up, as they periodically do, not with this kind of level of threat of intervention or even voluntary intervention. this is a highly competitive industry where margins are actually, compared to lots of other industries, margins are pretty low. But
what are you talking? Margins are 6-7% for grocers. They are incredibly slim. And to your point, it's a highly competitive market here.
So what does this mean for farmers? What does this mean as you go down through the food chain? What happens? Like, farmers are already pretty stressed anyway. Like, as you work your way down through the food chain, what happens? Because they're already under pressure from a bunch of other factors. This could be the latest blow. To the 70s kind of analogue is really interesting. Are we getting to the point where basically the Bank of England, you could assume, if the government is having to do this, does this imply that the Bank of England has lost control of the inflation narrative? There is an argument that kind of points you in that direction.
And the government has been trying to do these quite direct interventions in pricing in areas where they can, like regulated energy prices. They've been trying to take the steps that they can, I suppose. And I guess that by the local election results increasingly put the focus on the cost of living. So that's the politics behind all of this. 50 years since 1976. We'll just say that. Is that the right maths? Let's talk about the bond markets. We have the JGB long end in focus, and it's been in focus for many months even, but particularly over the last few weeks it's been in focus. But actually we see the long end yield coming down today, and it does prompt the question, with all of this selling in bond markets, are we going to see some people coming in and deciding to buy? PIMCO talking about JGBs at the 30-year, saying the curve is too steep and that represents a buying opportunity. Will there be others who are similarly minded, or are we, or is that just a sort of outlying view? Interesting that there's quite a lot of evidence that foreigners who have been playing an increasingly large role in the JGB market have actually been selling recently, and that just underscores, I suppose, the fragility that this bond market now has, which is something we used to say about the UK and others.
Yeah, bond markets feel fragile pretty much everywhere. US is running a massive deficit. That's a significant problem. Do you buy now? Do you average in now? If you're going to buy, if this is a buying opportunity, are there better buying opportunities still to come? We were talking to guests yesterday who were saying on this show that they think the yields could go significantly higher from here, and there are plenty of people pointing out that could happen as well. How much further, how much higher could we go? What is interesting is that actually, if you look at corporate spreads, they're still very tight. If you look at private and corporate balance sheets, they're still very strong. You were pointing out an article. How much of a read across is there into stocks, but also from government bonds into the credit markets, into stock markets and other areas?
So we have a chart that shows financial conditions. It's the Bloomberg Financial Conditions Index, FCON, which actually shows that financial conditions are quite loose. It actually shows that the VIX is in its teens, not in the kind of 30s or 40s that you might expect at times of great volatility, or even 70s when you're thinking back to the great financial crisis, or, of course, the global financial crisis, or, of course, COVID. So financial conditions remain relatively loose still, despite the sell-off and despite the fact that the 30-year stateside is now at their highest level in terms of the yield since 2007.
And the Markets Live blog pointing out that the reason for this is that, yes, we've seen a lot of movement at the long end of these global bond markets, but a lot of it's been focused at that long end, and it hasn't necessarily, therefore, had the read across into other measures of volatility. And so maybe mortgage markets, maybe corporate balance sheets managed to brush this off, at least for now. But I mean,
I think for now is the kind of critical.
It counts, doesn't it, in the end? But maybe they brush it off.
Let's talk about tech. Samsung. So talks are broken down between unions and the company. This was a mediated set of talks. The company apparently walked away from the talks after the union had accepted the latest mediated offer. What happens now remains to be seen. Is this a bargaining chip by the unions? Will they actually deliver on this strike? This would be a huge hit to a global supply chain that is already being pushed fairly hard right now. Will the government step in? It did so with Korean pilots back in 2005 and has done in the past to force basically a strike not to happen or a strike to end. But this at a time when we're already worrying about the availability of chips and the inflation rate that comes within the chip sector, this would be a huge blow.
Whether or not this comes to pass, this is a reminder of the pressures and the tensions that we can imagine are going to percolate through the system into the future as well. And so, yes, come Thursday, it's possible they come to a resolution. But SK Hynix has raised the bonus pool, and Samsung employees are saying, we want a piece of this. We can imagine that as you see the profits accumulating to a smaller group of people and a smaller group of companies, these kind of fictions will come to bear, not just in South Korea. So there's a bigger takeaway from this, potentially. And, of course, the supply chain impacts from this, given that pricing is projected to run up even higher into 2027, particularly when it comes to high bandwidth memory.
Yeah, there's a few people pointing the finger or focusing on the fact that there are, if we're going to be in a world of fewer jobs, then those people who have them might have outsized leverage on what happens. So it's something to watch across the sector. Should we think about NVIDIA? We've got Claire Playdale-Bouverie coming up, who's big fan of NVIDIA, and I was just reading her notes earlier on. I mean, she's just... I lost track of the reasons she's positive. There are just so many reasons why she's positive. But also, our colleague Dan Curtis pointing out that actually, if you look at the PE multiples on NVIDIA going into the numbers, it's on 23 forward PE, which is actually quite low compared to other earnings days. So we don't often see it this cheap, quote unquote. Can't believe you say that word in this context, but it's not usually on that measure this cheap on earnings days.
Lots of competition coming. That's a huge issue. What's going to happen in terms of the build-out? That's a huge issue. There's are Samsung and TSMC and SK Hynix, are they better, cleaner plays on actually the deliverables of the AI build-out? Because maybe they're more of a reliable story, despite maybe what we're saying with the strike.
And that's a test of how well NVIDIA has locked down the supply chain as well. So that is another potential test. With sales expected, sales estimates have grown 80% in the first quarter. Again, those earnings dropping after the market later today.
Be interesting to see what the shares do. They haven't done well.
They've underperformed the sector.
Yeah, they continue. Amazing to see. Rufaro Cristieri, RBC Wealth Management fixed income head for UK and Europe, is going to be joining us very shortly. We'll talk about what is happening in this fixed income story. Very late, Latitude Investment Management managing partner joining us, I think at around 8 o'clock. Mark Gianni, Barclays chief US economist, and Claire Playdale-Bouverie, Lions Trust fund manager, joining us a little bit later on too.
OK, here's what else we are watching throughout this Wednesday. The nominee for Bank of France, Governor Emmanuel Moulin, appears before the Senate Finance Committee at 8 a.m. UK time, so we'll watch for any potential lines on that. The Italian Prime Minister, Giorgia Meloni, of course, will be meeting with her Indian counterpart, Narendra Modi, in Rome. And Russia's President Vladimir Putin is in Beijing. He's already met with Xi Jinping and has received some of the pomp surrounding that visit as well. 7 p.m. UK time, Fed minutes from the latest meeting, and at 9:20 p.m. UK time. So that's the marker for your calendar today. 9:20 p.m. is the NVIDIA earnings story and the details from that.
Probably quite cost effective if you're going to welcome one world leader.
Just dust off.
Just dust off the same carpet and everything.
A few days later.
I imagine the sort of turnaround costs are lower if you do it just days later. But interesting, some of our colleagues pointing to some of the lines coming from China's Xi, calling for a more just and reasonable governance system, and some suggesting that this is a kind of dig at the United States, I suppose. Do you feel with these summits that sometimes it takes a little bit of translation afterwards, and sometimes a bit of time, because some of the news lines come out on the day. Certainly the pomp and the ceremony is evident on the day, and the bonhomie is evident on the day. But what this really means for global geopolitics sometimes takes a little while to materialise.
I mean, particularly when you have two regimes that are less transparent in terms of their communication. So we'll see what comes of. For the Russians, it's really important to get the Chinese to sign off on this Siberian pipeline, power pipeline number 2. And they've wrestled. The Chinese have been driving a hard bargain on this. And so the view from Moscow may be that they're in a better position right now, given the energy challenges that China faces, to finally lock that deal in.
Yeah, I think that would be huge if that were to happen, and would again change the arithmetic for Russia and the way it looks at its economy, which is stressed at the moment. What else do you need to know this, Wednesday morning? The US military says it will permanently remove around 4,000 troops from European soil. A Pentagon spokesman says the move is aimed at pushing NATO allies to, quote, take primary responsibility for Europe's conventional defence. The number of US Army brigades, combat teams stationed on the continent will drop from 4 to 3. The Army brigades constitute a share of the 85,000 American troops that are currently stationed in Europe. And after months of negotiations, the European Union has finally agreed to the text of its long-awaited trade deal with the United States. Under the agreement, the EU will remove levies on US industrial goods in return for a 50% ceiling on tariffs. The European Parliament and the EU countries will have to vote to ratify the finished text. Trump has threatened, remember, to hike tariffs on European automobiles, cars, if the deal isn't in place by the 4th of July. So I'm going to stop now, because you're going to read this next one.
I think this is important. This should have been top of our agenda, really, arguably. We had that debate, didn't we, during the editorial meeting? Yes,
you've got to wear that and read. Winning, you've got to read it,
Arsenal
wear it.
Winning. You may notice the tie choice as well. I'll be careful of this, of course. 22 years we've waited for this.
Yeah.
Finally clinching the Premiership, of course.
Because Bournemouth.
Thank you to Bournemouth, of course, with that draw versus Man City last night.
I'm assuming you didn't stay up.
The trophy. I was getting a lot of alerts on my phone. I was very disciplined.
In the back of those pictures. Were you there, Tom? Is that you at the back
next to the Emirates, of course, in Islington. 22 years. I was there in Islington when, of course, Arsenal won in 2004.
I lived there as well. I lived in
Thierry Henry, Patrick Vieira, Arsene Wenger, of course.
Down Upper Street.
They did the parade on the bus. We'll see what Islington Council does for this time. And, of course, Crystal Palace is who they play at the weekend. And they'll be handed the trophy, whatever the result.
But you're not done yet, are you?
May the 30th, PSG. Paris Saint-Germain.
Are you going to wear the scarf until then?
That is, yes, that's the agreement, isn't it?
He's
got to wear it for the rest of the show now.
We'll warn the stylist. I can confirm that North London was noisy on the back of this yesterday. Coming up on the programme then, a crucial test for the AI boom today, with NVIDIA set to report its earnings. We will discuss what to expect from the $5.3 trillion company. Plus, we will look at the stocks to watch, including Marks & Spencer, the UK retailers putting out its its full-year results, and full-year adjusted profit beat estimates this morning. A lot to think about, though, when it comes to food pricing this morning. Up next, we will be joined by Stefan Bujner, who's the CEO of Euronext, for an exclusive conversation. If you want to get involved in any of these chats we're having around the desk, IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry-Yan in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning, welcome back. 42 minutes until the start of trading here in Europe. at the moment, you're looking at a picture that shows Europe is actually expected to open lower. But if you look on the other side of the Atlantic at what is happening in the States, US futures are a touch higher. The Nasdaq's a little higher than the S&P, but they are both in the green. The volatility basically continues, and that takes us on to our next conversation. Euronext, overnight, beating estimates in the first quarter. Volatility, boosting trading volumes. Joining us now for an exclusive conversation, Stéphane Bouchner, the CEO of Euronext. Stéphane, always a pleasure. Thank you for your time this morning. So the volatility helped. Does it continue? Is that what we should expect?
Well, the beginning of the year has been very dynamic. The volatility is very high. We are seeing, for the first part of Q2, a continuum momentum on volatility. But again, we are posting the 8th quarter of double-digit growth for Euronext. And when you post double-digit growth for the 8th times, i.e. for 2 years, it's not a phase, it's not a moment of volatility. There is much more than volatility behind those great numbers. There is a profound transformation of the business, which is now much more diversified than just capturing volatility. So we are very happy and fortunate to benefit, like all the market players, of the volatility of the beginning of the year. But in addition to that volatility, there's a profound transformation of the business, which is much more diversified than it has ever been.
And would survive a drop in that volatility, I guess, is the implication of what you're saying. Talking of diversification, at the beginning of the year, we were talking about a diversification trade into Europe, that people were looking to exit the United States. They were looking to widen their lens and add European stocks. Since then, though, Stéphane, we've seen US stocks taking off again. The tech trade has been a big part of that. And Asia has delivered some pretty substantial upside as well. Does Europe feel like it's being left behind?
I don't think so. I mean, what we see for real, in particular since the revived tensions in the Middle East, is a continuous but consistent and slow inflow of Asian money and US money into Europe. There is no debate about that through all sorts of pipes. So Europe is still perceived as a safe place in terms of risk-reward profile. Now, if the tension in the Middle East do continue, it's clear that the impact on the energy market is going to be much less painful for the European continent, which is less dependent of carbons, of hydrocarbons than Asia. So we are seeing in our conversations with asset managers revived flow of money from the rest of the world towards Europe.
Stéphane, good morning. Can I ask you about IPOs and the flow of IPOs coming to market? Are we seeing something of a step change, a gradual shift? How would you characterise the moves we're seeing now? And how resilient is the higher level of IPOs to the big IPOs we're going to see coming in the United States a little bit later on this year from the tech space, from the AI universe?
Yeah, we are seeing in Europe a significant momentum on aerospace and defense IPOs. We had the largest IPO ever in aerospace and defense with a Czech company listed on Euronext at the beginning of the year for around 30 billion euro market cap. And we are seeing a lot of aerospace and defense companies looking at market just because aerospace and defense is the current sweet spot of IPO. Those companies do need to raise equity to fund incremental capacities to manufacture more and more quickly and to deliver speed and scale. Those companies have great valuations, and those companies do need paper to consolidate the sector. So when you need paper to consolidate the sector, when you need own funds to finance incremental capacities, and when you have high valuations that are providing a good exit for existing shareholders, that's a sweet spot of IPO. And we are seeing an increasing momentum in this sector. We had Kongsberg Maritime being listed in the sector. We had Colt. We are going to have soon KNDS, the Franco-German land armored vehicles company. So the momentum is there, but mainly for the moment on aerospace and defense for the reasons I've just articulated.
OK, so not much overlap then with the AI listings in the States. Perhaps that's an advantage. Stéphane, thinking about AI, Mythos has attracted a lot of attention from Anthropic. Are you worried about it? Are you looking to get your hands on it, to test it, to see what it could do to your world?
Yeah, we are spending a lot of time and effort. We are not We are not born to be worried. We are born to take action, and we are taking action as much as we can. So the fundamental feature of this situation is that there is a sort of closed group caucus of U.S. companies only that are processing the fundamental underlying developments. So we need to adjust to a situation where a part of the problem is not known to us. So we take action through all sorts of work streams. One of them is to develop partnerships and alliances and dialogues with other people like us that could be affected by these type of developments but are not part of the privileged group of U.S. companies that are insiders to the situation. But we are definitely working on it. The more you work on it, the more you find out that the situation is evolving extremely quickly and that other players, more discreet in the planet, have developed or are developing solutions that could be fit for the future. So the specificity of AI is that you don't stay forever an incumbent, and the volatility in terms of release of new features, of new technologies is very dynamic, is very fast, and that's what we are trying to capture in our approach of the Mythos crisis.
Stefan, I just want to take it back to your comments around the IPO pipeline. You talked about KNDS. Can you confirm that IPO is on track? Can you give us more details in terms of the time frame for the KNDS IPO?
No, as a matter of principle, I just comment what the companies are making public themselves. So KNDS has made clear their intent to go public this year. They clearly have to complete some restructuring on the German side, but the plan is to go public this year, whenever they are ready on the German side, and everyone is preparing an IPO for this summer, unless things are postponed. But clearly there is an ambition of this company to go public, precisely to address the points I've made: high valuation in the sector, which provide a good opportunity for the shareholders, a need to increase capacities to deliver speed and scale as quickly as possible, and an ambition to consolidate the sector with paper.
Okay. Stefan, thank you very much indeed. Always appreciate your time. On the back of that earnings then, Stefan Boujna, Euronext CEO, talking about the pipeline around IPOs in the defense space when it comes to Europe. And then, of course, when we think about the US, SpaceX, potentially at $2 trillion IPO, we may get more details and an official marker on that later this week. But we're hearing that Goldman Sachs is leading the charge, according to the reporting at least, is named as one of the key underwriters of this IPO.
These are massive IPOs that are about to be delivered, and you wonder whether this is the kind of turning point for markets. They've been waiting for this, that it needs to be delivered upon. These IPOs have to get away. It's not just SpaceX, it's OpenAI, it's potentially Anthropic. Yeah. These are massive amounts of paper arriving into the market.
And it's quite soon, isn't it? So if we get, as soon as today, as you say, we'll hear a bit more, maybe, you know, about what is going on with Musk & Co. and SpaceX. They could list as early as June the 12th. So this is not very far off we're talking about here. And if we're going to see funds around the world having to adjust tech allocations, you know, do they want to take a step up in tech allocation on the back of this, or do they want to reduce other tech allocation to make space for this? That's going to be something we definitely need to watch.
On current reporting, OpenAI, Anthropic, SpaceX potentially combined $4 trillion going public.
What is interesting as well is that companies are not doing buybacks as much in this space as well. Yeah. So you've got both of these two factors coming into play at the moment.
Yes, higher yields is going to be a focus for us in our next conversation, as yields on the US Treasury's longest dated bond rise to the highest level in almost 2 decades. We will talk to Rufaro Kiriseri from RBC. This is Bloomberg.
Least tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Half an hour to go until the start of cash trading here in Europe. The futures picture is a negative one on our side of the Atlantic. It is, as you can see, a little soft, not by much, down by 0.3/4% pretty much across the piece this morning. We are, though, looking at a more positive picture stateside. Nasdaq minis are up by 0.3, S&P's up by 0.1, 0.2, if I'm being generous this morning. But basically, we're down a little bit here, we're up a bit there. That's my sophisticated take on the market this morning.
That's excellent. We are down a bit when it comes to yields across Europe, which is nice because it goes in the face of the dominant narrative recently, which has all been about higher yields, of course. But today we're down 1, 2, 3 basis points at the 10-year horizon across the European government bond space. And some of that coming through from Japan. So at the very longer end, we've seen some of those yields coming down in Japan. So maybe we're pausing for breath on the bond trade a little bit.
We'll get a take on whether or not we are pausing and where we go in this journey. But to your point, over the week, of course, the sell-off in longer maturity government bonds has pushed up yields to levels last seen during the global financial crisis. Let's bring in then, for further analysis, Rafara Kirisiri, Head of Fixed Income UK and Europe at RBC Wealth Management, joining us now. Rafara, thank you for your time this Wednesday morning. Where are we in this sell-off then? This reprieve that we're seeing in the markets, the bond markets this morning, is it going to be short-lived?
I think it's going to, it's not necessarily going to be sort of yields stay where they are for now. I think what we've seen in the past week is a bit of an unwind of some sort of crowded short positions that we've seen in the market. Then, of course, we've seen real yields also track higher. So it's starting to feed into that sort of fiscal story once again. And especially for the US, where that's largely been ignored sort of throughout 2025, that's now starting to come to the fore. And then when we look at other dynamics, say in the UK, for example, that political risk was starting to surface. That started to fade a little bit. But that inflation story continues to pretty much be feeding into what's happening in bond markets at the moment. It certainly does look a lot more interesting for bond investors to start to look at, especially at the US, where it's sort of been lagging other markets like the UK and Europe. But we're okay to be patient at the moment.
Okay. In terms of what you're interested in, is that the long end of the US Treasury curve? Is it the 30-year at 5.18, close to 5.2, that's starting to look Attractive. At what level do you want to be buying at the long end, if it is the long end that you're looking at?
So we've actually been underweight the long end for some time, and it's really due to the fact around some of these fiscal concerns, as we sort of felt that yields were still a bit too suppressed given some of the size of the deficit, as well as we've got the Fed that is essentially on hold, and we're starting to see that some of that was not really priced into the curve. So we're actually happy to be sort of on the shorter end. But at the same time, it starts to look a lot more interesting with 30-year real yields at levels that we haven't seen since the GFC. So certainly an area that we're continuing to watch out for.
Is the market overpricing the Bank of England when it comes to hikes?
We would say so.
Yep.
So our view is that given policies already in restrictive territory at 375, we also have a labour market that is weaker than it was in 2022. And even when we look at the decision maker panel sort of survey from April, we have businesses expecting that wages will be lower, a touch lower in a year's time. Also employment as well to be a touch lower. So we continue to see that weakness in the labour market feeding into the Bank of England, perhaps not hiking rates as aggressively as what's currently priced into the markets.
Is there a case to be made for the Bank of England stopping doing QE and actively selling bonds into the market, which is, it's hard to quantify, but lifting yields, it's pretty obvious that there is a yield lift effect of this?
So QT has been has sort of been running in the background for some time, and the Bank of England did acknowledge that it does lift yields a little bit. We necessarily haven't seen sort of a disorderly move in gilts because of that QT aspect. I think the big move at the moment is really that inflation picture, and then a little bit of politics on top of that.
Do you think it's happy with higher yields? Like in some ways, that does the work of raising rates in terms of its impact on the real economy. I guess we're saying this is a bug. Maybe it's a feature.
In terms of QT or just relative?
Just keeping yields up. So it's a way of slowing the economy down.
I think ultimately the Bank of England, there's really no reason for them to be any more dovish than what's currently priced into the market. And we did hear from Bailey sort of stating that where the market is sort of about right. And so they can continue to talk a bit more hawkishly, but they don't necessarily need to follow through with the policy. Financial conditions have already tightened, so the job's sort of partly done already.
Just one more on the BOE then. Traders cutting their bets on Bank of England rate hikes today. We've had the CPI data, of course, came in a little lighter, and the jobs data yesterday. They're now pricing 54 basis points through 2026. So that's gone from, 2.5 being priced in to 2 and a little bit. I mean, does that sound right to you now, or do you think the market is still expecting too much?
Our base case is actually for 1, and that's sort of to come through perhaps around July time. And also when we look at the BOE's own sort of scenarios that they sort of laid out in terms of that scenario B, where they see energy prices remaining somewhat elevated, they don't see second round effects being a big issue there, and that's through to Q2. So we were seeing that sort of 2.5, what seemed a bit excessive just for 2026 alone.
Can I talk about the United States? We talked at the top of the programme about how even despite the long end of the yield curve move, financial conditions in the US not necessarily looking all that disturbed by these developments. And part of that is, I guess, because inflation is being pushed higher by supply side concerns around the Strait of Hormuz, but also by quote unquote good things, by the fact that there's so much excitement and growth attached to the AI theme. How would you evaluate the things that are moving the long end of the curve and the things that are building that inflation dynamic in the States?
I think when we sort of look at, I suppose, the big reaction that we've seen in sort of the past week, I think firstly it was sort of some of that positioning where it was a bit of a crowded sort of short positioning. But then also when we look at it's that fiscal sort of element coming into play. Higher yields only worsens the deficit, so also that comes into play. Then when we look at funding for next year, likely that we have higher coupon issuance as well. So that's likely feeding into where yields are. But we think ultimately, a lot of these factors will continue to plague the long end of the curve. You have investors as well in terms of just the natural sort of less yield sensitive investors not necessarily wanting to hold that longer dated debt. So we think some of these dynamics are playing into the long end of the curve.
How are these dynamics playing into corporate credit? When does corporate credit potentially become vulnerable? There's been a lot of issuance. Spreads are obviously quite tight, historically tight. There's been a lot of issuance. When does the read across from the sell-off in the sovereign bond market potentially start to change the dynamics of corporate credit?
So as you rightly pointed out, we've had a lot of issuance this year. So far, in terms of the run-up, we're close to sort of levels that we last saw in 2020 in terms of issuance. But then more interestingly, within different sectors, the tech sector is now issuing debt at 4 times the pace of the average that they have in the past 4 years. So that's a big shift in terms of the index composition. But at the same time, within that sector, it's not all companies are the same. Some are coming from a base where they have a lot of cash on their balance sheets, and others, their fundamentals are not as good. And so the sort of competition for buyers in the market is that with credit, with a lot of issuance from credit, a lot of issuance from governments. And so effectively, we think the equilibrium needs to sit a bit higher. And we think credit spreads have tightened a bit too much, even though the tech sector spreads have widened a little bit just because of where issuance has been. But we think there's actually room for spreads to move a bit higher, just given the sort of the inflationary outlook, the real yields shifting higher, and of course, all of these factors coming into play. We think yields and spreads need to be a bit higher.
The spread's widening. Is that a small move? Or do they need to? Is there quite a big catch-up still with the govvie market?
We think there's still quite a bit of a move in credit spreads through the rest of the year. So we're happy to be somewhat underweight in credit. But we think there are still pockets where it is interesting. So we think this dynamic where you've got issuance, heavy issuance from some sectors and not others. We think financials will benefit from this dynamic just because of the issuance and the supply in that space. But then also, interestingly, we've seen a lot of US issuers issuing outside of the US, so in the European market and the sterling market.
Is that because the US market can't handle it? Or is the US market swamped now?
I think part of it is just because of where cross-currency, where it looked more attractive in terms of funding. So for some markets, UK, Swiss francs, euros, it looked a little bit more attractive for issuers to issue in those pockets. And for the sterling market, that was actually quite a significant uplift in terms of issuance coming outside of the US.
Rufaro, thank you very much indeed for coming onto the show. And with those insights, Rufaro Kiriseri, Head of Fixed Income UK and Europe, RBC Wealth Management. Let's get some lines right now because, of course, we've been talking about the fact that Vladimir Putin has been meeting his Chinese counterpart in Beijing. You can see there's a signing ceremony taking place right now. They appear to have signed a number of different agreements around energy. They have signed a declaration on a multipolar world. This is what both countries have been pushing for, both leaders have been pushing for. It's the energy piece that we've been focused on in particular, and Xi Jinping earlier calling for a resolution to the conflict in Iran. But some lines coming out on the back of this signing ceremony then in Beijing, guys.
Yes, and Xi and Putin witnessing the signing of documents on trade, on technology, on some railways. So there were 20 of them, as you say, Tom. So a lot of different. We saw all of these documents being wheeled in, signed by various individuals, and then taken out again. They came in quick succession. President Xi is now talking and saying that talk with Putin has been on a range of major issues. So we'll wait for the details to emerge.
You'd hope so, wouldn't you? Like, they don't just sort of come together to sort of chit-chat. Major issues.
Yes.
There's plenty of those to discuss right now. Talking of which, ECB policymakers say they may have to respond to the economic challenges arising from the Iran conflict.
This whole conflict started more or less 3 months ago. Now we know that this energy supply shock is more persistent. So we are moving away from our baseline scenario.
Moving away, Joachim Nagel, the ECB Governing Council member and, of course, Bundesbank president, speaking to Bloomberg at the G7 in Paris. We're going to have more on the growing global inflation concerns. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is the opening trade, Wednesday, the 20th of May, and the picture across European equity markets looks negative, down by around 0.4%. We're pairing those expected losses just a little bit. US futures actually flat to positive, so E-minis are flat. Nasdaq futures are positive, of course. Tech is a focus for us today, Guy. We have Nvidia earnings coming up later on today, and in the meantime, there's Samsung.
Yeah, I think Samsung's actually a more interesting story and could certainly have a much more devastating effect in terms of its impact on the global economy. Talks between the unions and Samsung have broken down. The union saying a strike or a work stoppage, I think as it's termed, is now planned for tomorrow. The two sides have not been able to come to an agreement over disputes over bonus payments, and the strike could now hit production, and therefore we get delays. What does this all mean? Neil Campling, Bloomberg's senior market strategist, joining us now. We live in a world where we're already short of these kinds of high bandwidth memory chips, and potentially this would really exacerbate that problem, which creates an even higher pricing regime that we could go into. The implications of this are what?
The implications are enormous if the production plants shut down.
Because they're quite hard to restart, aren't they?
This is the problem. The problem is to get a leading-edge fab back online can take up to 6 months.
OK, that's an issue.
So full production can take 6 months. These are really high-precision technologies, so you can't just, like, flick a switch.
Yeah.
So this is why you have backups and everything to allow for electrical supplies going down, those kind of things. So it's a big issue when, as you mentioned, there's a supply issue in the first instance because of the high demand. So this could exacerbate it. I suppose the question now is, do the government step in?
Yeah.
The answer to that is what?
The answer to that is I have no idea, but I did talk to some locals about 20 minutes ago, and they said, obviously, there is a potential, this is potentially bargaining tools, etc., but we are really at the 11th hour here now, and there is no sign yet of the government taking that step. So, it's a concern, and who knows? The knock-on effect could be in a few months' time that we get companies potentially warning they can't meet expectations because they can't get the chips. That is the risk.
Because that's the point. This is a potential global disruption story from this strike.
Well, Samsung is the biggest memory producer in the world. You know, there are three companies combined that own 90% market share. There's Samsung, Hynix, and Micron. So Hynix and Micron, you may think, well, they're already sold out capacity-wise. So they've got a problem as well. So it's not like they can go, oh, that's OK, more business for us, because they can't supply enough chips. Hynix have already told us they think that, they're sold out all of this year, all of next year. So it's not like you can swap one out for another. So it is, without doubt, a potential massive problem for the industry.
Thanks, Neil. Thanks for bringing us an update on Samsung. We'll keep watching those developments, of course, and we're running up to the NVIDIA earnings. That'll keep tech very much in focus. Neil Campling with us to talk about what's happening on the tech space. And let us turn our attention to what's happening in broader markets. Today's markets in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore. Mark, as we wait for NVIDIA then, what is catching your eye in the global narrative? Are we pausing for breath on the higher yield story? Is that the message out of Japan and, again, here in Europe as well?
I think that the yields move is getting to those levels where this is getting close to the end for the now. I'm not quite sure it's over yet. I think what is interesting is that bond markets are suddenly, over the last week, the last 9 sessions, or 7 trading sessions, I should say, have priced in the straight being closed for a substantial amount of time, but central banks being asleep at the wheel. And that's why we're seeing the long end in particular get hit. We're seeing that steepening. If they thought central banks were going to react to inflation, then we'd see more aggressive flattening. So that the bond markets are kind of pricing the straight closed almost in isolation. We're not seeing it in other asset classes. The other thing out there is, just as you guys have been discussing with Neil Campling, is I think the Samsung story is potentially, massive. We just outlined recently that Samsung and SK Hynix are 2 of the 5 most influential stocks on global portfolios at the moment, given their volatility and what that's having on other asset classes. Not 2 of the 5 largest in terms of market cap, 2 of the 5 largest in terms of impact on global portfolios. And I think because retail is driving the trade, they're kind of ignoring what's happening on this Samsung strike. And if the strike does go ahead, you've got a major problem on Korean stocks, which are really kind of the bellwether or the poster for AI retail enthusiasm. And I think that will have massive contagion effects. Never mind the secondary effects that Neil Campling was arguing about, the fact that we might have a shortage of memory chips later on. That's another problem. Just the immediate stock market impact will be quite large. So I think there's quite a bit going on at the moment, and I'm getting a little bit more nervous again.
What about what's happening in the Gulf? Getting nervous there?
Well, my base case assumption is that there must be material escalation to resolve it. Now, obviously, I have no geopolitical insight or kind of special kind of knowledge there what the US is going to do. But there doesn't seem to be an obvious resolution, and that needs to be resolved. If that is not resolved, we're going to get major asset price dislocations in the coming months. So even though material escalation perhaps this weekend would be negative in the short term and see dramatic headlines, that is actually the better outcome for risk assets. I'd be much more bearish if we are not getting the Strait resolved anytime soon.
Mark, can I just tie that back to your first answer on what we've seen in terms of the bond markets? If we start to hear more hawkish tone from central banks and action potentially, does that then put a cap on yields, particularly at the long end?
So that'll see front-end yields go higher again. It'll probably be more problematic for stocks just because we get a further kind of tightening at the front end. But ultimately, yes, we will see flattening. It'll get everyone kind of realizing, hey, we're going to have a growth impact here because the central banks are tightening financial conditions just as we're getting a stagflationary impulse. So we'll see a flattening of the curve. We'll see the long end come lower while front end goes higher. Either way, it wouldn't be great for stock markets, which is why I think the deterioration there is going to linger a bit longer.
OK, continued pressure, at least in the short term, across the global equity markets. Bloomberg Markets Live Executive Editor Mark Cudmore. Mark, thank you. Remember, you can get up-to-date analysis and insight from Mark and the rest of the team. Just go to MLive Go on your terminal. Let's bring in Charlie Wells right now for your stocks to watch this Wednesday. Charlie.
Good morning, Tom. So let's start with Marks & Spencer because they had a profit beat this morning on their earnings report. And this has been a really striking story of a company really trying to recover from that devastating cyber attack we saw last year when really online sales were nearly impossible at Marks & Spencer. And once upon a time, M&S in the market was beating Sainsbury and Tesco. But you can see over time how that has transpired. M&S really struggling. Let's flip and take a look at some analysis coming from Bloomberg Intelligence talking about how Marks & Spencer has really tried to move from this recovery story to one of expansion. This earnings report could help, but what Charles Allen talks about here is that valuation still appears unconvinced that this time will be different. So does this earnings report help boost the stock, help move beyond this recovery story? Now let's flip and talk about Lanxess. So this is that German chemicals company. We know that chemicals had been in a difficult spot since the start of the Iran war conflict. We've actually seen seen a bit of a recovery in a lot of these chemicals. Now, Jefferies downgraded Lanxess, and this is important. Basically, analysts talking about how investors could be getting ahead of themselves. We've seen upstream spreads at a lot of these chemical companies actually improve since the start of that conflict, but we're seeing maybe a little bit too much excitement in the market. So a little bit of a warning there coming on Lanxess in that chemical space. Let's end on chips because this is one that everyone is going to be watching today. There's been a lot of excitement ahead of these NVIDIA earnings, of course. We've seen traders get a little bit jumpy, right? So we've seen negativity. Semiconductor companies here in Europe had a bad day yesterday. If you think about the stocks in the United States, there was actually, a little bit of an improvement there, but a really jumpy day, sort of moving down and then up. How do traders start to respond here in Europe? I think that's a really interesting question as so much attention focuses on semiconductors today.
Charlie, absolutely. Thank you very much. Charlie Wells with those stocks and sectors to watch. And I'm pleased with this. Here's a joined up thought. I try and average at least one a morning. CSG and Euronext both called higher this morning. And what I like about this is the Euronext boss was telling us earlier on that they will see a buoyant IPO market because of the defence companies that need to come to market because they want to consolidate. CSG is also called higher this morning, and that's in the defence space. And they're saying they're monitoring multiple acquisition targets. They're not called higher on that. They're called higher because they've stuck to their full-year guidance. But that seems to bring together a couple of the things that we've been talking about this morning around defence and IPOs and volume in the markets.
I'm impressed. Joined up thinking.
Can I leave now?
That's it, you're done.
Yeah.
Thank you, perfect. I'm going to try a joined up thought now as well. We've been talking about chip costs and memory prices. I wonder how that affects devices. We think about data centers, obviously. That is primary. But in terms of devices and electronics as well, there's a cost impact there. Google says it's going to be coming out potentially. They may announce some smart glasses. They've got a big event that's taking place, their annual iOS event taking place in the US right now. So there's a potential read across to EssilorLuxottica. So look at that stock because they have that partnership with Meta and they've been selling very well, those Meta glasses. So now there's a bit more competition. But will they be more pricey as those components around chips, which also go into
If we wear
smart
those on
glasses?
TV, do we have more joined up thoughts? Is that what happens? Makes us more intelligent?
I hope so. Not that I'm saying you guys aren't. I'm just saying I could do with the help. I'm going to wrap it up on a boat. Inflation seems to be the theme that's running through everything, though, this morning. We will factor that into our thinking as we get towards this European market open this morning. European futures are called lower, though. In the States, they are a more positive picture. But here at the moment, this is what we are looking at here. Let's call it down by 0.75%. We'll see what happens in just a moment. 5 minutes to go. We'll bring you that opening trade next. This is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until the midterm election.
Hear it first on Bloomberg.
The
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anna-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning, Wednesday morning. Let's talk about where we are with the markets right now as we head towards the open here in Europe. A couple of minutes to go until we start trading cash. This was the picture yesterday in the United States. The yellow line is where Europe went out. We then rallied in the United States, but then we faded into the close. And actually, I don't think there's really much, therefore, for Europe to price in. Nevertheless, actually, despite the fact that we ticked a little bit higher, European futures are pointing a little bit lower, Tom.
Currently pointing low by 0.3%. Oil is lower, so we watch the energy stocks. We'll certainly watch the miners as well. Silver prices are up, at least in the session today. FTSE 100 futures pointing losses of around 45 points right now, pointing low by 0.4%. Over in Germany, the DAX looking potentially to lose around 81 points, pointing low by 0.3%. So yes, after 2 days of gains, a little bit more caution across the European equity space this morning, Anna.
Yeah, absolutely. Let's check in on some of the individual stocks that could be on the move then this morning. Charlie Wells giving us a bit of a heads up on some of these a little earlier. Let's start with Euronext. We spoke to the boss of Euronext, sounding pretty buoyant and bullish about the volumes going through right now in the trading business and the stock trading business. Interesting to see that investors seem to be impressed on the revenue side, but also on the cost side. So that's one that we'll be watching. Marks & Spencer, M&S also in focus as they continue to beat a path back to recovery after that cyber attack knocked them off course last year. So we'll watch to see what that does to the share price. They're expecting profits to bounce back to the growth seen before the attack. So that's of interest to investors. And also Lanxess, as Charlie was telling us, we are watching that one. Evonik, Brenntag upgraded, Lanxess downgraded at Jefferies. So that's an area of focus for the markets. The shares in Lanxess have rallied strongly. So we'll see what this one does this morning. Guy.
OK, let's talk about where we go with this market open, give you an idea of what is exactly happening. We're expecting a slight softening when it comes to European equities this morning at the get-go of trade. Let's show you some actual numbers. The FTSE 100 down by a touch, 0.1%. Basically, this is going to be the picture. I think it's kind of 0.2% across most of Europe this morning. The sector breakdown story could be quite interesting. It's taking a little while to get everything going. I've got the stock 600 down by 0.1%, the FTSE down by 0.1%. That's all I've got at the moment, to be honest. So I'm going to hand things over to Tom. What do you got?
Brilliant. Thanks, Guy. Yeah, top of the list right now. Tech. That sector is performing relatively well. So far, up 0.4%. It's now moved. It's Basic Resources that's top of the list. Tech is still in positive territory, but right now it's Basic Resources up 0.8%. That's your top gainer right now across your sectors. Just 4 sectors in positive territory right now. Basic Resources, Energy, Utilities and Tech. On the downside, the biggest losses coming through media. Interestingly, that sector's performed relatively well this week. Down 1.7% right now. So biggest losses for media, biggest gains right now for Basic Resources, currently up 0.9%. I mentioned the silver price. That is no doubt a factor, which is up about 2% on silver in the session today, Anna.
Yeah, just digging into the media sector and seeing what's on the move there. It's pretty broad, actually, so many of them in negative territory. ITV, WPP, Pearson, and I think there's an ex-div on 1 or 2 in that sector, so we'll leave that one. Gilts, let's have a look at where we are on the gilts market then. We have, of course, got the inflation data out this morning. And we saw that came in a little lower than had been anticipated. We saw the labour market data a little weaker than expected yesterday. So all of that added up to a reassessment of how many hikes we'll get from the Bank of England. And traders duly took down their expectation of hikes this morning. And so that feeds into the gilt market with a drop at the 10-year horizon of around 6 basis points. So actually fairly sizable. We are seeing that is in keeping with the rest of Europe. That is the direction of travel we're seeing for the rest of the European market, bond market space. But a little bit more pronounced than the move we see elsewhere, Guy.
OK. Let's talk a little bit about what is happening as a result of all of this. Joining us now, Freddie Lake, Managing Partner over at Latitude Investment Management. I'll just be reading through some of the details of what you've got in the portfolio right now. How's it doing?
It's doing all right.
Yeah?
I think the main things is we didn't have any software earlier in the year, so avoided
That's
that.
a good thing.
Yeah, exactly.
Did you
Don't have any
hardware?
tech hardware, so
Okay.
we've avoided that rally too.
Excellent, well
but
done.
we're sort of carving through as our clients hopefully expect us to.
So what are you doing? Are you changing the portfolio? How are you adapting? We seem to be moving into a world of higher yields. How does that change your outlook on what happens here? Do you feel the need to get involved in the tech hardware story? Do you think that's got legs? How are you thinking about what you do next?
So we've made very few changes this year. We bought Kroger shares in the US, which is hardly the most exciting thing to talk about. But other than that, nothing done in the portfolio in 6 months. In terms of the tech hardware, no. I mean, the music's playing at the moment. The few people are spending extraordinary amounts of money. It might work, but I think the prices are pricing in a very, very positive outcome for those sort of
They're
companies.
trading on decent multiples, aren't they? Aren't some of these stocks looking like
Decent
the earnings are good?
Decent multiples of current earnings. Yeah. Earnings estimates being 2, 3, 4 times higher than they were a year and a half ago. And the point is, do you want to capitalise that level? Are they going to earn 2, 3, 4 times more money forever? In which case their share price as the discounted sum of cash flows should be 4 times higher. Or is this a demand cyclical build? And I'm firmly in that camp.
You're firmly in the camp that this is cyclical, it will roll over. And so you keep a more defensive portfolio. And part of that is reflects, you mentioned Kroger, so there are retailers in there, aren't there, Freddie? And let's talk about, you've got Tesco as well.
Yep.
And I wonder, with that in mind, your exposure to the UK grocery space, I wonder what you think about the fact that we've seen Rachel Reeves, the Treasury, consulting with the industry, talking about whether there might be the appetite to bring in voluntary caps on certain basic products.
Yeah.
What do we think about this?
Well, I can imagine how those consultations went. I think it's ludicrous. I don't think it's a workable policy. These companies make very, very thin margins. It's one of the most competitive sectors in our whole economy, and it is one of the most competitive grocery markets in the whole world. So prices are as low as they can be physically delivered. So if you try to cap the price of any goods within that space, you're going to have unintended consequences, whether that's on the farmers and producers and suppliers, or whether that's on other prices elsewhere.
So these are not high-margin businesses, as you point out, but the political realities mean that this is the path the government is sort of looking at.
Yeah.
Is it deliverable? Might supermarkets have to give ground on something else?
Well, I don't think it's workable because, if you make a sort of 3% margin as a system and many make less than that, how much of that can you eat into before I have to take the money from somewhere else or fire people or do something else which is going to have negative consequences? So I think it's the wrong fight to pick.
Are you worried about the consumer right now?
Broadly so, yes. Particularly in the US, where it's gone from quite bullish consumer down over the last 3 or 4 years, and that's been really notable, and not just in the bottom sort of quartile, say, but going into the middle consumers as well. It's really weakening the consumption around discretionary goods in the US. In the UK and Europe, it never really got that good, so it's still quite bad, but the delta hasn't been changing so much. But it's one of the reasons we prefer things like, staple retailers, grocery retailers, which would be a net beneficiary of consumption weakness because people eating out go back to grocery, people getting delivery go back to grocery, things like that.
There's a bit of a reprieve in the bond markets today. Gilts are performing relatively well on the back of slightly softer inflation data. We'll see if that's short-lived or not. How close? When do higher yields become a problem for your equity holdings?
So we are very deliberately positioned in the more value end. Our portfolio is trading on 13.5 times earnings, and the less expensive your shares are, the less the share prices tend to be impacted by higher yields, just from a price perspective. Within the businesses, we buy very indebted by businesses, so they're not leveraged, so they don't have high interest payments in general. A couple do. And then we have some financial businesses that will be net beneficiaries of higher yields, like JP Morgan, things like that. So we think higher yields will actually be a positive overall for our portfolio. But we wait and see.
Despite the fact that you've got quite a lot in short-dated bond markets, it sounds like you're almost painting a sort of slightly deflationary picture. Is that what you're setting yourself up for here? You got lots of the portfolio in short at the front end of the curve.
Yeah.
Why?
The reason is, it's basically been a flat yield curve for quite a few years now.
Yep.
So you're not really getting paid any kind of premium to taking that duration risk.
Yep.
And when I look at the economy and think, what could be the next big issue? It is government debt. It is fiscal balances. It is, not being able to pay our bills. And when you pick on all the countries around the world who it might fall more on, I think the UK is quite squarely in the, high up that list. So taking on duration risk when the cause of the problem, as we've seen in the last few days, could be whipping higher bond yields, doesn't make any rational sense to me when you can get paid. I think we're getting 4.8 on average in our short-dated bonds. So,
is there a risk to the upside? Is there a risk that we get an inflationary surge and you get a crisis and that basically forces the Bank of England to hike?
Yes.
You're not positioned for that?
Well, if we were in the longer dated stuff, we'd lose money.
Even more, yeah.
Whereas we're in 6-month bonds.
Right.
So they won't move on a change in rates.
Okay.
They're very short dated.
It's
always cash-like.
Right. So that's almost cash. That's
exactly.
Not a 2 year.
No, we're not really in that sort of stuff. We're very, very short.
And you're also you're in US stocks quite a lot, not the tech names. So how are those performing when so much of the conversation is all around those big tech names? When you talked about Kroger, but what does the rest of the US portfolio look like, especially when you've got more big tech listings coming?
Yeah. I mean, if I'm honest, so far this year it's been relatively anemic. Some of the stocks are doing well. I mean, in terms of the businesses, the average of our portfolio is growing 15-16% a year over the last year through Q1 reported earnings. Estimates for the next few years look the same. So the operations of the business are exactly in line with the last 5 or 10 years. And we do expect share prices to perform in line with that over time. But everyone's ignoring it at the moment. I mean, the drumbeat of AI and hardware and chasing memory stocks and all the suppliers
and the big listings coming, does that mean that everyone's even more distracted and the oxygen gets sucked out of all of those conversations that you're talking about now?
Yeah, in the short term, and I think while the music's playing, that might continue. But it can't continue forever. And we're starting to see signs of life in the portfolio even in the last couple of days.
Freddie, I want to ask you about an idea that maybe seems pretty far-flung right now, which is that there is a resolution to Iran and that Strait of Hormuz reopens. Would you change? How would you position for that scenario?
So we probably wouldn't make any changes around that either. We feel we're relatively sort of neutral to that. We do own Shell, so that's been a marginal beneficiary. But as you've probably talked about, the energy stocks have hardly rallied. I mean, it's up 25% this year. Mm-hmm. Oil's up 100%. So it's not expecting oil prices to stay higher forever.
And is that because there's a short-term benefit? Don't expect it to stay there. I was wondering if it's, there's a short-term benefit, but actually there's demand destruction perhaps lies at the other end of this.
It could be. I mean, the way I've read it, and who knows what the market's thinking, but is that, people are expecting higher oil prices for 3 to 6 months, but then it will fade. So it's a sort of one-off bump, which it will be to the P&L, but not something you capitalise. So unlike higher earnings in AI, where you're capitalising 3 or 4 times in your PEs, in energy they're not. But other than that, I don't think we have huge exposure, positively or negatively.
Come back to the portfolio structure. Effectively, a large chunk of your portfolio is in cash.
In the Horizon Fund, yeah.
Yeah, in the Horizon Fund. Would you... Is that deliberate? Are you waiting for an opportunity? Is this the sort of the Warren Buffett in you, waiting for something to happen?
I hope there's a little bit of Warren Buffett in me. No, that fund is for lower risk clients, so it's kind of always got half in non-equities.
Are you positioned more broadly, though? Are you waiting for an opportunity?
No, within equities, we're seeing extraordinary opportunity. Already, yeah, right now. So, we are very keenly writing to our clients, talking to them about the Global Fund, which is 100% invested in stocks, saying this feels like as opportune a time to be investing in these sorts of businesses as we've seen in the last 10 years. So I'm quite bullish on large swathes of the stock market and broadly the market in general. But I think the dominance of the tech hardware story, the size, the scale and the overpricing, in my opinion, that's the risk to the market. But underneath it, it looks very healthy.
Okay. Nice to see you. Let's
Very
stop
good
by to see us. Always appreciate it. Very late, managing partner at Latitude Investment Management. Let's take a quick look at the Core 6 and see what is happening there, just to get an idea of what is going on. As you can see, fairly mixed picture. Defence stocks on the front foot. Actually, ASML is having a fairly good day. Nestle is a little softer. Keep an eye on Perrier and what's going on there. LVMH and Novo Nordisk, both softer as well. Let's deal with the details of what is happening. Charlie Wells is here.
Good morning, Guy. Let's kick it off with Marks & Spencer because they're in the green this morning, up some 2.5% this morning on the back of a strong earnings report with indication that they see growth ahead. Now, this was crucial for Marks & Spencer because they have spent the past year recovering from a devastating cyber attack, and they've really been trying to move from the story of recovery to one of growth. Now, analysts have been questioning this kind of flip in the narrative, but it's looking like the market, at least right now, is liking what it's seeing there. And this is really interesting too, because we've seen a number of UK and European consumer companies actually report stronger than expected numbers. And there's been a lot of concern about the economic uncertainty, a lot of this stemming from that conflict in the Middle East. But right now, a lot of these consumer companies looking strong and the market liking what it's seeing. But let's flip and take a look at an opposite narrative, because we have H&M down this morning, well over 1%. Now, again, this is a company that really has been struggling with margins. We saw some warnings from a number of analysts talking about the path for this company as they face intense competition and, again, that consumer story. So we're getting sort of conflicting stories from some of these consumer names that are performing well and then others like H&M that are really struggling. So the market trying to kind of parse through some of these numbers. Euronext, now they had a strong earnings report. They beat expectations. Volatility has really helped this company. They also saw a boost from the Greek market and ETFs. And the market this morning liking what it's seeing here for Euronext, really getting that boost from volatility as we've seen so much trading, up 6.5%. Experian, let's bring that up too, because they met expectations. They had something of a mixed earnings report. Market not liking that, right? Down in the red this morning. Experian, now again, a challenge there for this company because of that earnings report. They even announced a $1 billion share buyback, but in the red this morning. Let's end on chips, right? This is the story of the day. We've seen so much interest here. We're in the green, right? They had a bad day yesterday, but we're starting positive here. ASML up, Infineon up, and a number of the other major players up. But let's see how the day unfolds, right? Because we saw a lot of volatility yesterday. We saw a dip and then an increase in some of the indices. So again, chips are going to be in focus throughout the day this morning ahead of NVIDIA earnings.
Absolutely. Charlie Wells, thank you very much indeed on some of the individual stocks on the move this morning. Coming up, this is Guy Johnson's favourite story. Bloomberg understanding the UK Chancellor has privately proposed voluntary price freezes on some grocery prices. We'll have more on that story next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. the stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
Welcome back to the opening trade. 17 minutes into Wednesday, the 20th of May's trading session. And European equity markets, yes, they're a little weaker, but not at all as weak as the futures picture had been suggesting. Maybe the FTSE 100 is, but that's down around 0.4%. But elsewhere, we see a pretty flat performance coming through on the CAC and the DAX, and the AEX boosted by tech. So that one is actually in positive territory. Quite a focus then, Guy, on things happening in the UK today.
Yeah, so the FTSE is underperforming. We're also watching what is happening in the gilt market. Today's inflation data a little bit more benign, maybe the markets, or economists, I should probably say, were anticipating. And maybe that buys a little bit of time for the Bank of England to hold off. The two words you need to know about this morning's inflation effect are base effect. Sam Unstead is here, and he's all over that story. Good morning.
Good morning.
That's it, isn't it? Is this a reasonable reflection of the inflation picture in the UK?
I would say it's a reasonable reflection of where inflation was heading before the whole world was kind of upended by the war in the Middle East. So, okay. So as you just mentioned, inflation a little bit lower than expected on the headline, almost all mechanical, almost all of it. So water bills going up by less than they did the year before, vehicle excise duty, there was a timing thing about package holidays, like all these different things have all come in and have, if you like, artificially pulled their headline rate a little bit lower. Without all of that, may well have been that inflation actually got back to the 2% target without the effects then of petrol prices going up, of sort of the overall effects of oil coming through, a little bit in food prices, a little bit in various parts of the report. But yeah, the main reason that it's gone down is all mechanical.
Do you think a cap on food prices will bring us back down to that 2% target? So the Chancellor has suggested this is potentially a voluntary solution, and has been in conversation with the supermarkets about a potential voluntary price cap.
Yeah, so I think actually what making it or describing it as a voluntary price cap, that is effectively what already happens in the UK's grocery industry, because it's extremely competitive. Yeah. So if you live in this country and you see, say, adverts for Tesco or Aldi, most of those adverts are focused on we are matching the prices of our competitors. So very often when you get a little bit of a spike in food prices, there is an element of that that's capped anyway, because it's so competitive in the grocery market, and the companies within the sector want to get you through the door much more than that. They're willing to eat some margin to make sure customers keep coming through the door and then keep coming through the door for years to come. That likelihood is that this will have almost no effect at all on the actual inflation rate.
there's the politics. There's a lot of politics at play right now, isn't there? And maybe this camp competing with what could be other emergent camps to talk about the cost of living and the things they're trying to do to bring down the cost of living. What about within the retail space then, Sam? We've had numbers out from Marks and Spencer's. What's the story there?
Yeah, I mean, Marks
which is part food, but obviously.
Their numbers themselves are very heavily affected by the cyber attack that they had last year. So their profit fell almost entirely because of that. But food did very well. I would say for Marks and Spencer, who do enter this debate relatively often, but not quite so vociferously, the comments in there are very, very pointedly about pressures that they're facing from extra employment costs, extra taxes, regulation, and aiming that specifically at the government. So as we were kind of just mentioning, the atmosphere now between the retail sector and the government is getting more and more fraught.
Can you imagine a price cap on Percy Pigs?
Well,
I mean, that's what we're potentially talking about.
Well, that sounds good for consumers, doesn't it? But I'm not sure that Percy Pigs is supposed to be anybody's,
potentially very
basic
popular,
staple product.
They're clearly a staple if you go into M&S. You can't walk out of M&S without some Percy Pigs. Was that just me?
I think that,
there are alternatives.
No, I'm with you, Tom.
There are alternative Percy Pigs or pig-like
products.
Sweet products.
Simon Manstead, thank you very much indeed. Bloomberg Markets Today editor. Let's get back to another part of this inflation story, and that's what's happening with oil, of course. Right now, Brent is actually lower by 1%, but still around and just above that 110 per barrel level on Brent. This is traders weighing, of course, President Trump's latest threat to resume strikes on Iran. Joining us now is Jemana Pasechi, Bloomberg's Horizons Middle East and Africa anchor, of course. How seriously do you take the latest threats from President Trump? We've talked about the whipsaws. He's threatening again military action on Iran.
Yeah, well, it's customary for President Trump to make these types of threats. We've seen it many times throughout the course of this, by the way, almost 3 months war. It's been going on for almost 3 months now. Once again, yesterday, he said that they would strike Iran if they don't come to the table and agree to a peace deal. He was asked when that could happen. He said, well, we're giving them a window of 2 to 3 days. It could be Friday, Saturday, Sunday. I mean, the thing is, he's made these sort of threats before. He's given deadlines before and tends to extend them. So we can't take them perhaps too seriously or at his word. But I think what we can piece together from all of this is there has been a huge, once again, diplomatic push. Not least by Gulf states, and he specifically referenced the fact that Saudi Arabia, Qatar, and the UAE are pushing to get to a diplomatic solution. At the same time, the Vice President, J.D. Vance, also showing some more of a constructive tone and saying that military operations would only be their plan B. Plan A is still to somehow get to a negotiated framework. But, this comes back to what we've been discussing the last couple of days. They're still miles apart on some of those key issues, the main two being the Strait, obviously, which is still effectively shut, and the nuclear file. And that is not taking into consideration all of the other matters that hugely matter as well for the Gulf nations, including the proxies and the missiles and the drones that Iran are sitting on.
North Atlantic apparently does border the Gulf, because apparently NATO's talking about getting involved in...
I was wondering where you were going with that,
Why?
Yeah.
Why? What is the remit here that gets NATO involved?
Yeah, so you're talking about the plan that we reported overnight that NATO are considering assisting with the passage of vessels through the Strait in July if there isn't a full reopening by then, a full unconditional reopening by then. Look, President Trump has criticized NATO many times for not doing more to help them. And remember, NATO obviously is a defensive alliance. They don't have a pretext to get involved in this militarily. But our latest reporting suggests that if the Strait is not fully open by July, then they would look to activate a plan to help get the vessels passing through. Now, the problem here is the mechanism. Clearly, the U.S. are trying with their own version of the blockade. They tried for a couple of days with Project Freedom. It's not so easy to get ships through the Strait because it is unsafe, it's dangerous, there may be mines there, and there's still the real possibility that these ships get attacked. So it is unclear what type of technical support NATO would provide. And then on top of that, according to our own reporting, it's not unanimous. There are many within NATO that have their reservations about getting involved as well. And ultimately, if they do go down this route, it wouldn't just have to be NATO. It would be a coalition of multinationals. So it would be, beyond UK, France. It would be probably Gulf allies and some Asian countries as well.
Yeah, I think it's really interesting the way that this conversation is evolving, the role that NATO is thinking of playing, and interesting in our story that they talk about how the longer this goes on, the duration of the conflict is perhaps changing that view at NATO and having them
this
reassess.
becomes a security risk for Europe.
Yes.
It becomes a risk towards the North Atlantic basin.
Yeah, and here in Europe, we're very cognizant of the fact that the conversation around NATO in the United States has developed in such a way that President Trump is expecting a lot, and he wants support, doesn't he? And he's been threatening and in some places actually actioning, removing troops. So we had a story recently that the Pentagon is cutting army brigades in Europe from 4 to 3. It's not clear what that does to the overall troop levels in Europe, but this is also obviously weighing into those at NATO and what they're thinking about. Right?
But as Jemana says, it's meant, in theory, it's a defensive organisation. In theory, it doesn't have a global policeman role.
Correct.
Yeah, and that was the reason to not get involved in the first place.
Yeah, precisely. Yeah. Trump has certainly changed it, but in terms of energy security, does that now get folded in
one
to
thing
that
to be
narrative?
mindful of as well, July, right? And all the energy analysts out there, including Jeff Curry, who was on Bloomberg TV yesterday, is saying that June is going to be crunch time for energy markets. So you keep an eye out on physical supplies there. If things really tighten, as all the analysts and experts are expecting, then maybe we have to see some action in July.
Jemana, thank you very much. Jemana Basechi bringing us up to date on everything that's developing in the Middle East. Coming up on the programme, we'll get back to the US economy as Kevin Walsh takes the helm of the Fed. We'll talk to Mark Giannoni, who's chief US economist over at Barclays. What should we expect from the new regime? This is Bloomberg.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly. Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to the opening trade. We are 30 minutes into the Wednesday session, and actually this is a slightly brighter picture than the futures had suggested. Yes, very modest gains of 0.1%, but as things stand, we could be set for 3 straight days of gains for European stocks. Very modest, of course, on the benchmark. You're seeing losses here in the UK. FTSE 100 down 0.2%. Media, so some of the big advertising names are under pressure today. The DAX is gaining just 12 points so far, and the CAC count adding 10 points as well. Basic resources, some strength coming through for that sector. The miners on the back of stronger silver prices. Guy, what are you seeing?
A market that's being pulled in 2 different directions, and to your point, that is effectively balancing out to a kind of a headline index level that is going nowhere in a hurry. So we've got 273 up, 304 down. Let's call that 1 for 1, reasonably balanced. Volume's actually a little light, which is interesting. Let's turn our attention to what is happening with the leaders this morning. What is interesting, actually, given all the turbulence around the chip sector this morning, is we do have ASML up. There you go, 2.55% is what we are seeing. Elsewhere, Euronext, we talked to Stefan Buchner a little bit earlier on, the volatility that we are seeing in global equity markets at the moment, certainly feeding through very nicely into his business right now. That stock is up by nearly 7%. And Marks & Spencer on the back of its numbers as well on the UK high street, up by 2.14%, bouncing back from that big technical issue they had with the hack they had on their business. That's starting to maybe fade. Marks & Spencer up by 2% this morning. Downside, actually, a big focus there once again on the grocery sector. So we've gone from M&S to Tesco. It is down by 2.24%. We've already talked about what is happening in terms of the UK's view on what we could see with prices. Rachel Reeves talking about maybe fixing prices for groceries. That stock doesn't like that. Orkla's actually in a similar space. Its numbers don't look particularly good this morning. Up in the Nordics, down by 6.38, 6.4%. Similar story with Experian as well. Its numbers not being welcomed, down by 4.5. So there's a theme there between these 3 stocks as to what is happening with that narrative. Anna.
Let's get up to date with some of the other stories we're focused on this morning then, Guy. Chinese President Xi Jinping has warned against resuming military operations in the Middle East as he began talks with his Russian counterpart Vladimir Putin in Beijing today. The meeting between the two of the biggest backers of Iran comes a day after President Trump said he'd held off on a new bombardment of Iran at the request of Persian Gulf allies. Bloomberg has learned Goldman Sachs and Morgan Stanley have secured the lead positions for SpaceX's upcoming initial public offering. Billionaire Elon Musk's rocket, satellite and artificial intelligence firm is targeting a $2 trillion valuation. The listing is expected to raise up to $75 billion, making it potentially the largest IPO in history. And the European Union has agreed the text of its long-awaited trade deal with the US. Under the agreement, the EU will remove levies on US industrial goods in return for a 15% ceiling on tariffs. The European Parliament and EU countries will now vote to ratify the finished text. President Trump has threatened to hike tariffs on European cars if the deal is not in place by July 4th. Guy.
OK, let's turn attention to what is happening over at the Federal Reserve. Incoming Fed Chair Kevin Walsh taking office later this week under pressure, of course, from President Trump to cut interest rates. This comes just as we see a surge in inflation concerns, pushing bond yields, particularly in the kind of longer end space, to multi-year highs. Mark Giannone, Chief US Economist at Barclays, joining us around the table to discuss. Good morning.
Good morning, guys.
Is Walsh going to hike rates or cut rates?
I don't think he's going to do much in the near term.
OK.
I think
neither.
Neither in the near term. I mean, later next year, we anticipate the Fed is still going to cut. But clearly, market pricing has shifted now. Markets seem to be expecting now a rate hike from the Fed.
If the market continues to push and price in that hike, will the Federal Reserve have any choice but to follow the market's lead, do you think?
I don't think so. I think the Fed is going to be looking really at the macro factors. It's going to look at the inflation picture, at overall economic activity, and it's going to make a decision based on that.
So not behind the curve?
Not, well, you know, I think they're going to look through that oil price shock, we think.
What assumptions are you making about how long the oil pressure continues, how long the Straits of Hormuz continues to be closed, with that forecast that you still get a cut next year from the Fed?
Right. No, it's a great question because the WTI futures, for instance, or Brent futures show a pretty rapid decline in crude oil prices. We take the assumption that oil prices are going to stay slightly more elevated through the rest of this year. Actually, we follow our energy analyst forecast that thinks that Brent may end the year at around $100. with WTI slightly lower than that, and then gradually come down. So with this somewhat more extended price shock, if you want, or oil price shock, we think there's going to be some pass-through to core prices.
Okay, so some pass-through to core prices. There's an expectation, there seems to be a factor in terms of the bond sell-off they're saying that there's going to be additional spending coming through, not just from the US, but other nations as well. But predominantly, of course, they're going to have to fund the war, defence spending is going to go up, and other commitments from the US as they continue to absorb, of course, that tax bill that was put through. How concerned should we be about the US deficit, about how much borrowing is being pushed through by this US government right now? How to what extent is that top of mind for you as we think about the pressure at the long end?
Oh, that's very much top of mind. And I think we get to see this reflected now in bond yields. Now, the thing is, the fiscal outlook looked better a few months ago, right? With tariffs bringing in a lot of revenues, with no expectations of really rapid increase in defense spending. And now, with the war starting, the tariff revenue, some of the tariff revenue declared illegal, which means that the outlook for revenues on that front are going to be lower, and on the spending side, likely higher. So we expect deficits to actually increase substantially. We're not sure that this is going to provide a big fiscal stimulus, though, because offsetting that, we are going to have, we expect, like a significant slowing in consumer spending towards the second half of this year. In particular, with income having slowed for households pretty significantly over the past year, and then also the oil price shock that we are seeing now that forces households to cut back on other spending.
Okay, so that's where this becomes about growth then, and not just about the inflation dynamic, Mark.
Yeah, I think the Fed is very much balancing the two things. So now they are facing a very difficult shock, right? Inflation is moving to the upside. On growth, I think the prospect for that are that we are going to see some slowing on the consumer spending side later this year. And so the Fed has to balance these two things.
Yeah.
What they don't want is the inflation shock to translate into second and third round effects on the core.
So you see the consumer weakening for the reasons you've described, but inflation could go higher, is being driven higher by the oil dynamics. Is it also being driven by the AI capex build-out? What is the effect of that on the US economy?
Absolutely. We've seen AI capex last year in 2025 boosted GDP growth by about, or at least aggregate spending by about 80 basis points. So out of the 2% growth that we saw last year, 0.8 percentage point of that came from spending on AI-related activity, right? In data center to some extent, but more importantly, software, computers and equipments and peripherals. We expect some similar contribution this year in 2026. So very strong boost coming from that. And that also raises the stock market and provides some wealth to consumers.
The overall AI effect on the US economy is a separate conversation perhaps, but one that Kevin Walsh has shown some enthusiasm for, but he thinks it's deflationary. Is this just a timescale question?
I think
Does it become deflationary? Does it become deflationary in the time horizons that you're expecting rate cuts?
We don't think so. We think, to your point, this is it's really the time scale that's important, right? So in the near term, we see a very strong demand here in investment, in boosting activity overall related to the buildup, and also bottlenecks building up, right? We see a lot of prices moving up in that relates to chips and memory and so on. So that's also affecting the consumer to some extent. So the disinflationary part is going to be later on, when the productivity improvement that everybody seems to be expecting are finally realized, so that we can actually produce at lower cost. This is going to be down, several years from now, we would expect.
Okay, so it's jam much later tomorrow. Can I just talk about kind of where we are now? Nominal growth this year, strong in the United States.
Yeah.
How real is that growth? You've got a deficit that is epic by kind of historical standards. You've got an AI build-out that is substantial. If those two effects start to fade, where does it leave the US economy?
So I think that's the key point, is that consumers, we think, are the ones that are driving the economy for the most part, right? That consumer spending represents 70% of aggregate spending. So far, the consumer have been in great shape. They've earned a lot of income in recent years. They've seen asset value go up a lot, so they've been spending a lot. Now we think that with the price increase and with aggregate income actually slowing, they will have to slow their consumer spending. So we are looking at like 1% growth in consumer spending in the second half of this year on an annualized basis, maybe leveling off later on at around 1.5% growth, but no longer the 3%, 4% growth that we've seen in recent years.
Yeah, that's quite a markdown, isn't it? 3 to 4% to 1% in terms of consumer growth, consumption growth. What the jobs market was looking quite perilous. It may be perilous as a stretch, but it was concerning people towards the end of last year, and then the data seems to have suggested there's a bit more resilience in the jobs market of the US than maybe we had feared at the end of last year. How confident are you that the US jobs market holds up through the rest of 2026? What is the labour market looking like right now for you?
Right, the labour market is really interesting in the US. So we've seen, in recent years we saw like very strong job gains, right? That in 22, something like 500,000 job gains a month, then moving down towards like 300,000 job gains a month and so on. Over the past 3 months or so, we've seen only 50,000 job gains a month. So we think this is the result of two factors taking place. One is businesses are cutting back on the no longer growing their jobs at the same pace as before. The hiring rate has come down substantially over the past year. Businesses are basically going, the demand for workers is actually quite a bit softer than what we've seen in the past. But simultaneously, what we've seen is a very significant slowdown in the supply of labor. So workers coming from abroad, of course, immigration has been cut back very, very significantly. And at the same time, we are now at a phase where people are retiring in much greater numbers. So the domestic labor force participation is actually coming down as workers are exiting the labor market. So as a result, what we see is a much slower pace of job gains, month after month after month, but not really an increase in the unemployment rate. If anything, the unemployment rate is stabilizing, maybe drifting down. We expect actually the unemployment rate to continue to drift down this year, even though the pace of job gains would be at around, let's say, 50,000 jobs a month, and then drifting down to about 25 and closer to zero later on.
And so, I mean, is the AI effect, is that there? Is that in the numbers yet? I take on board the fact that you said you expect the unemployment rate to go downwards, but in terms of those jobs that are going, or the reduced demand for labour, is that an AI effect, or is it too early for that as well?
No, I think so far the AI, if anything, is helping on the demand for labor, right, in the build-up.
To build the data centers.
Exactly. So I think this is, for now, it's still a positive. I mean, the negative, we're not so convinced. I mean, I know there's a big narrative out there that eventually all the jobs are going to disappear because of AI. We are somewhat skeptical about that. We haven't seen this in the past, right, with the technological revolution that are sort of general-purpose technologies that would lead to an aggregate reduction in employment. We haven't seen this in the past. This time could be different, but this is like far down the future.
Yeah, it's your world of banking that's causing some concern.
Yes, lower value human capital
from one of your competitors. Mark, thank you very much indeed. Mark Giannone, Chief US Economist at Barclays there with a deep dive view and analysis, of course, on the current health of the US economy. And tying into that US economy, of course, is the AI story, as Mark was saying. Part of that will come down to NVIDIA, and those earnings are coming up, of course, after the market today. We're going to talk to Claire Plaidel-Bourry, fund manager at Liontrust, as the world's most valuable company reports after the bell. NVIDIA earnings in focus. Analysis next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome back to the opening trade. 8:46 here in London, and we do have it all looks red, but it's not red by very much. We're down by 0.1%, if that, on these major markets, so not really very into negative territory. US futures are actually pointing higher a little. It is a handover of negativity from Asia that we perhaps have in mind, and that was tech related. But actually, the tech sector is actually doing well in Europe today. It's up by 0.7%. So, Tom, we don't have necessarily that read across from the drama in the Kospi into the European session.
That's the drama has faded, hasn't it? At least for now. Let's think about what else we are watching throughout the day. Then the nominee for Bank of France Governor Emmanuel Moulin appears before the National Assembly at 10 a.m. UK time. Some lines have been dropping from him already. Italian Prime Minister Giorgia Meloni meets her Indian counterpart Narendra Modi in Rome, and Russia's President Vladimir Putin is in Beijing. And at 7 p.m. UK time, we get the Fed minutes. 9:20 p.m. UK time, Nvidia results. Let's take a closer look at what to expect from those Nvidia earnings then, and bring in Claire Pleda-Bouvry, fund manager at Lion Trust, joining us now. And of course, Nvidia sits in your funds. Claire, good morning. Thank you for joining us. So, as an owner of Nvidia, what are you going to be scrutinising from the earnings?
Probably the most important forward-looking indicator for us are purchase commitments, because this doubled quarter on quarter in the last print. We went from 50 billion in Q3 to 90 billion last quarter. And this is essentially Nvidia locking out the supply chain. It's no surprise to all of us that the supply chain is very tight. We all hear about there not being enough memory to go around. TSMC silicon is a meaningful bottleneck. Optics is the same. Well, Nvidia have got between 2/3 and 3/4 of the supply of these key components through 2026 and into 2027. So we're expecting a significant step up again.
So to be clear, this is Nvidia's purchase commitments for its suppliers, or purchase commitments from hyperscalers for Nvidia chips?
Purchase commitments to suppliers, precisely.
Suppliers. OK, so that for you is an indication that they have continued control over that supply chain?
Absolutely, because the risk going into this print and really throughout this year, we think, is not about demand. We do not think that is a risk anymore. This is solely a question about supply. 6 months ago, the market was focused on, are we overbuilding? The biggest risk now is, can we build fast enough to keep these earnings moving in line with the stock prices of the entire ecosystem?
Is Nvidia the way to play that, though? Or are some of the Asian memory suppliers the way to play it? Are they a cleaner, more monetizable kind of short-term play on how this AI build-out story is going to develop? Have we moved on from Nvidia to those kinds of companies?
Well, that's exactly what the market has done over the past 6 months. You look at the stock prices of SK Hynix, Micron versus Nvidia. And right now, we see more...
Is that the correct move?
Possibly in the short term. I mean, what the market has done, and we've all spent a lot of time doing, is following the bottlenecks. And over the past 6 months, those have been particularly in high bandwidth memory. Optics has been a key one emerging. But right now, the first derivative of the AI trade is now offering the most compelling valuation. And what we saw last quarter with Nvidia, and we're expecting to see continue throughout 2026, is a re-acceleration in their top line and on their bottom line. So Nvidia grew earnings about 50% last year, year on year. A very admirable achievement for a company of that scale. That's set to grow almost 100% this year. So right now, we will be trimming some of those Asian component suppliers because, yes, they are pure plays on some of these bottlenecks, but their stock price has also moved an incredible amount in the past couple of months.
Can I ask you about the life of some of the products that NVIDIA puts into these hyperscaler businesses and others? Because the life of them and the period over which you depreciate them was something of a topic of conversation for quite a while. And you've got some interesting stuff in your notes about how the installed base becomes more valuable, not less. Explain how that can be possible.
Absolutely. We do think that there has been a misunderstanding about this because with NVIDIA architectures, they've now got a 1 year release cadence, and you buy the latest and greatest for training your large language model at the frontier. So that's Blackwell Ultra right now, moving to Rubin next year. What happens to Hopper, which was the prior architecture, even Ampere, which was 6-7 years ago, is that those N-1, N-2 architectures move to inference. And inference is when customers actually monetize these assets. So the ROI on these architectures, they actually go up, not down. And what we've seen right now, because we're in such an acutely demand-supply constrained imbalance, is that the prices for Hopper, they've gone up 35% year to date in the cloud.
Yes.
And the reason these get so more valuable over time is because they're optimized by software.
Yes.
And that's the whole CUDA ecosystem moat.
And one of the reasons why the market's attention switched to Asia was because of the memory story. We've also seen a lot of businesses trying to follow NVIDIA and trying to grab some of that market share, and some of them arguably trying to, managing to deliver higher profits as a result. But does NVIDIA need to worry about that competition or not at all?
Competition from
others who are trying to do what NVIDIA does?
Well, it comes down to locking out the supply, and so these.
It's not about Rubin and what it can do versus the competition. Then.
Well, Rubin is definitely a massive leap forward versus competition, and what we saw from Google with the TPU last year, TPU version 7. This is very competitive with Blackwell. That does change with Rubin. Google moves to its next TPU architecture, and Rubin particularly moves to a more memory bandwidth intensive architecture, which is really, really crucial for inference. It's got about 2.4 times more memory bandwidth. And that's really, really important as we move into the agential era, which is highly more compute intensive.
Yeah.
It still does come down to capacity at TSMC and capacity with these memory players. And these ASICs players just do not have that same weight.
Everything costs a lot in this industry at the moment, and you're making that point very clearly. Are we as users, are corporates as users, paying the correct price for the AI that they are consuming at the moment? And if they did, would they use the same amount or would they use less? Are we being subsidized at the moment by the industry? And you look at the cash flow story for what we're using. And does that need to change?
So we expect the cost of AI to continue declining. And the cost of inference right now, it's about 1,000 times cheaper than it was last year.
Right.
And you achieve this through technological progress. Every time NVIDIA moves to a new architecture, this brings down cost per dollar, cost per watt.
The companies are still burning money.
The companies are burning money, but that's only because they're continuing to invest. The hyperscaler capex, if we look at this, is slated to be over $700 billion this year.
Yep.
If there's a sort of 12 to 24 month hiatus between standing up this infrastructure and then actually producing revenues from it.
Yeah.
Andy Jassy sort of painted this clearly in his shareholder letter last quarter. And because the hyperscalers are seeing ROI on the capacity laid 2-3 years ago, they continue to invest, but more than what the revenues are. So we think the right metric to be looking at is revenue inflection, cloud revenue inflection, not free cash flow. Okay. We're expecting free cash flow to actually be materially negative for all the hyperscaler players next year. But the crucial point is that revenues are now inflecting. We saw this from Google, 63% year on year.
Claire, thank you very much. Claire Playdale-Bouverie joining us from Lion Trust. Let's get a broader take on the markets. From the Markets Live team, Adam Linton joins us on set. So, Adam, the focus of your day, is it Nvidia or something else?
Well, it's definitely avoiding anything to do with Arsenal, but yeah, obviously, Nvidia is absolutely key. I mean,
meet Tom.
Exactly.
I don't know where he gets the scar.
One little celebratory lap, surely, of the studio.
Oh no, I mean, Instagram is not getting open today. It's been absolute turmoil. But in terms of what I'm watching, of course, Nvidia is the big one. I mean, it's essentially a macro data point at this point. And when you consider how narrow the leadership and the rally has been since late March, and tech's been at the centre of that, and Nvidia accounts for like 75% of AI infrastructure, then of course it's important. I think, if you park aside yields for the moment, the problem is the backdrop for Nvidia earnings is always just so difficult. I mean, we're expecting to see another kind of beat and raise quarter from Nvidia, but the problem is that we've seen that for the last 4 quarters, and the market reaction has been getting increasingly negative. And Nvidia last quarter, I think they're down 5.5%. The day after earnings last time, and when Nvidia goes, the US stock market will go. And so that's obviously a cause for concern, particularly in the current environment where people are questioning the impact of high yields. What does this mean for equities? So if you do get Nvidia coming in a little bit soft, yes, I know the price earnings multiple is a little bit lower than previously, but this could potentially be a little bit of an inflection point for the market.
OK, Adam, thank you very much indeed. Bloomberg M-Line strategist Adam Linton with that look ahead to Nvidia. European stocks currently across the benchmark a little softer by 0.2%, but you are seeing some reprieve in terms of the bond markets, at least for now.
I'm going to check in with Adam, make sure he's really OK. Sounds like he's had a tough day. European equity markets then on the back foot, but not by much. US futures flat to positive, in fact. So Nasdaq futures up 0.4%. That is it for the opening trade. The Pulse is next. Have a good day, everybody. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Supply shocks weigh on the global bond market after long-end Treasury yields hit their highest level since 2007. We discuss the outlook for European monetary policy with Pierre Wunsch, the National Bank of Belgian governor. That exclusive interview is live this hour. Plus, the Chinese President Xi Jinping warns against more military operations in the Middle East as he hosts the Russian President Vladimir Putin. So there is a lot going on, especially overlaying all of this is, of course, this uncertainty. Given where we are in geopolitics, the U.S. stocks are actually rising before NVIDIA earnings. So traders really waiting for a couple of earnings. NVIDIA probably the most anticipated update on the state of AI and its economy when it reports after the close today. What investors want to focus on when it comes to NVIDIA is what they have to say about ramping up production and fending off competitors. Look at sterling. Again, we're still in the middle of this leadership battle, 133.86, and Brent crude 109.84. This is a picture for the European markets map. There has been a very clear way, actually, of the U.S. ending up with some sell signals, followed by Asia, and then that's filtering through to Europe. So Europe a little bit tentative, I guess, again, waiting for what happens with the Strait of Hormuz and NVIDIA, seeing as what an AI economy also means for disinflationary pressures. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, in just a moment, we discuss the global bond sell-off and inflation fears with Banu Baweja, chief strategist at UBS Investment Bank. But first, it's also a major day for geopolitics and the AI trade. So let's go straight to Bloomberg's Charlie Wells. Charlie, we start, of course, with what's going on in China.
That's exactly right, Francine, because in China right now we have Russian President Vladimir Putin speaking with President Xi Jinping. You said geopolitics were front and center. That is right. You also mentioned that global bond sell-off and inflation shocks, and key to all of this is energy. Now, one of the main topics of discussion in China has been this Power of Siberia 2 pipeline from the Yamal Peninsula into that beating heart of the Chinese economy, northeast China. And now what we know from a spokesperson this morning from the Kremlin, the parameters of a deal for this pipeline have been agreed, but there are still nuances to come here. So this is really important to Russia. They need to diversify because their sales of natural gas to Europe have been cut off because of sanctions. China needs this too to diversify, to get more energy, not from the Middle East. Now, both of these partners need this as they navigate an increasingly tense geopolitical situation. Key to geopolitics, we know, is tech. Jensen Huang, NVIDIA CEO, was in China with Trump just a few days ago when he was making a similar trip to visit the president of China. Now, what we're hearing this morning is that talks between Samsung and its largest labor union have broken down. Let's flip and take a look at what's going on with these negotiations, which are key to that tech supply chain, because Samsung is the largest maker of memory chips in the world. We know that as that tech boom has really boosted South Korea, workers in Samsung have demanded more of those profits, but Samsung has said that their demands are excessive and they face a work stoppage from Thursday. So that could be a significant hampering to that tech supply chain, just as NVIDIA earnings are due to drop later today. Let's flip and take a look at what the smart money is thinking about with NVIDIA, because there are high expectations here. We know that there is a lot riding on this. This is potentially the major market catalyst. But what analysts are saying is be careful, brace yourself, because high expectations mean that actually we can see earnings slips in the market after these earnings drop. So what the smart money is saying this morning is brace yourself.
Charlie, brace yourself. Thank you so much for a terrific update. Charlie Walls there with some of our main stories. Now, bond yields holding at elevated levels, piling pressure on global equities, with the U.S. 30-year yield actually touching its highest level since the eve of the global financial crisis in 2007. Let's bring in Banu Baweja, Chief Strategist at UBS Investment Bank. Banu, always so good to speak to you. I'm looking at bond yields, and people are worried.
Yeah, and what's the interesting part of this is that, in fact, inflation is just a very small part of what is happening, because if you look at the backup in yields, a good chunk of this has been in real yields, especially if you look at the back end, right? At the front end, you've seen inflation expectations go up, as you would expect. But if you look at the 5-year, the 10-year, the 30-year, the vast majority of the increases in real yields, term premium has gone up. People have worried a little bit about the fiscal. But primarily, it's about nominal growth, especially in the U.S. And that's the infection spreading, the bond market sell-off spreading to the rest of the world. I think we make too much about idiosyncratic sell-offs in places like gilts because we worry about the local elections and so on. But frankly, it's coming from strong nominal growth in the U.S., and that's where the shock to the bond markets is percolating from. So the question is, are the markets right to, celebrate growth as much as they are? And we don't think so, right? Because we think the U.S. consumer will slow down. I mean, you're seeing real disposable income growth pretty much close to zero. You have fiscal checks in the mail right now, which is supporting real PCE spend. But with very low savings rates, with real disposable income growth flat, like growth is at zero, on top of that, you get, even if it's temporary, an inflation shock that's going to hurt their real disposable income even further, that slows down the consumer.
So, but I mean, we've been trying to understand this for quite some time, right? Does it mean that we're going to get an equity correction if you look at the bond market?
So I do think that the equity market, I think we've got to start with the energy market. What is the energy market saying, and what is the equity market then saying? The energy market itself, the financial market, is very benign. Right, the physical market has once again begun to perk up. So if you look at jet fuel, you look at naphtha, those prices have once again begun to go up. Whereas if you look at implied vol in the financial market, like if you look at not just in the equity market, not just VIX, if you look at implied vol of oil, that itself has halved. So I think the market completely believes that this conflict is very much in the rearview mirror. And I think that's a leap of faith. I think that's a bit too optimistic, because this could linger or this could worsen. That's a possibility. As a result, and that, I think, will matter for equities, right? I mean, the big issue for equities in the U.S., of course, is AI. But what about European equities, right? European equities have also followed U.S. equities up, except for the last week or so, they have followed U.S. equities up. Now we're looking for 16, the way the market is looking for 16% EPS growth in Europe. That's high in the face of what we're seeing in Hormuz.
So, Banu, if we go back actually to what your expectation is for the Middle East, does this drag on? Because there's no clear, to me, military solution or diplomatic solution in sight.
Look, it is pretty binary, but if to get off the fence, I think one would have to say that the possibility of the physical market being right and the financial market in energy being too low, so the financial prices of oil rising towards the physical, I think that should be the modal probability in the near term, right? Eventually that the curve is backwardated and you will see lower prices, we get that. But where will oil settle? I mean, I think even 6-month future could be too low, given the way these negotiations have been stalled again and again and again. It doesn't inspire confidence. The market doesn't want to know, because the market is so focused on the AI trade, legitimately, because, I mean, if you look at the earnings, they have been very strong. I mean, Q1 earnings are around 18%. The market in the US is now expecting about 21%. That's sort of almost a unidimensional focus on the AI hyperscaler CapEx spend, whereas I think this is a slow motion impact on, particularly in a few sectors like the consumer, like financials. These are sectors that have been hit the most in prior supply shocks. And even in these sectors, the market hasn't put pen to paper as yet in terms of the downgrade. So I think it's still early days, and I think consumer and financials in particular are in harm's way.
So what does it mean in terms of what you favor? I know there's a couple of banks that prefer, for example, Japan 30-year bond, saying the yield curve is a little bit too steep. Do you go there or do you go elsewhere?
So the yield curves have become quite steep in Japan, have become quite steep in the UK. So these are places where now value is beginning to emerge. But I think if I was to stick with fixed income first, I think the first thing that we've got to look at before we look at duration is what is being priced into the money markets and the front end of the bond markets. That you've depriced 2026 cuts, I get. That you have no cuts priced for 2027, I do not get, right? So if the market is worried about inflation today, it ought to be worried about growth tomorrow. This is a growth inflation hit. The is not just an inflation hit, growth will come lower. So I think 2027 pricing is incorrect. I think that's where we've got to be receiving rates in the very front end. In the equity market, the rotations that the market was engaging in prior to this crisis, which is Europe in favor of US, value in favor of growth, and I think those rotations, small cap in favor of large cap, I think those rotations are once again likely to reverse. So US, while in absolute terms, even the US could be in harm's way if this conflict continues, it certainly does outperform Europe in that situation. And I think large caps outperform small caps. And also, I think growth will likely outperform value in that world.
And the UK then has its own set of problems.
For sure. I mean, I think here we have to worry about sort of a quick pass-through of inflation. But then after that, you will see growth again being hit. So I think we're actually not looking for rate hikes from the BOE this year at all. We're looking for cuts starting 2027.
Yeah, so we're going to speak to the Belgian Central Bank governor in just a couple of minutes. What's your killer question to him? I think he's listening.
So the question really would be how much inertia do you think this inflation hit is going to have? And at what point do you start really worrying about growth more than you worry about inflation, especially the ECB, right? I mean, because the ECB is so squarely focused on inflation, but they still have to be cognizant about growth moving forward. At what point does that switch become more obvious?
Yeah, and for the moment they've been very careful in that. Banu, as always, thank you so much for joining us. Banu Baweja, UBS Chief Strategist. Now, coming up, we'll discuss the outlook for European monetary policy with Pierre Wunsch, the National Bank of Belgium governor. That exclusive conversation is up next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Technology is embedded in every aspect of our lives
and laying the foundation for the future.
From finance to defense, AI to entertainment,
and from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This whole conflict started more or less 3 months ago. Now we know that this energy supply shock is more persistent. So we are moving away from our baseline scenario.
Well, that was the Bundesbank president, Joachim Nagel, giving his take on the outlook for rates and saying the ECB may have to do something to respond to the energy supply shock. Now, the impacts, of course, of the Iran war are dominating the outlook for central banks here in Europe as they grapple with rising energy prices and sustained pressure on government bonds. For another perspective on the ECB's policy path, I'm delighted to be joined by Pierre Wunsch, governor of the National Bank of Belgium. Gouverneur, thank you so much for being with us. How does the bond sell-off actually influence your thinking, good morning, about the ECB's next step?
Well,
Honestly, it does not really impact the way we think about the problem. And it's, of course, a very difficult situation because the nature of the uncertainty is more geopolitical or political than it is coming from the economic activity. So we have to balance the value of waiting and having a better view of what's going on the ground in the Gulf. But at the same time, at some point, we will have to react because we are already at 3% inflation. I guess the fixing is at 3.5 now. And that's the focus we should have, is inflation development.
Yeah, so do you think it's more likely to get a rate hike in June? Again, if you only look at the bond sell-off, you either say, well, look, inflation really is a problem, look at what the markets are doing, but at the same time, it tightens financial conditions. Well,
we are in the beginning of an inflation problem, and of course the economy is not as strong as in 22, so the comparison with 22 is not a one-to-one. At the same time, I think we are at a stage, and actually in April I was already slightly in favor of hiking in April. I could agree with the decision, which was to wait, because again there is a value in waiting. But at some point, I think we have to be positioned to the risk that inflation would be, again, as it was after the increase in inflation in 22, that it would have some persistence. And I heard the question from the previous panel. It's very difficult to have at this stage a view on how persistent inflation will be. The impression we have is that if we look at B2B, that the pass-through will be quite fast. We hear signal that even the technology or governance of price change is not the same as in 22. In 22, people were surprised by the pickup in inflation. They are not this time, so they will maybe react faster in some segments of the economy where they can. On the other hand, and I have to be balanced in what I'm saying, we don't see anything on the wage front. I mean, the wage developments are very benign.
So, Governor, do you think, I mean, at this point, given what we know, do you support a move in June for the ECB unless there's a quick resolution to the war tomorrow?
Well, I've already said, I guess, even a number of weeks ago, that if the conflict is not resolved by June, that I think the likelihood of a hike is quite high. But we don't know. I mean, we don't know what could happen. I mean, if there is some form of agreement before a meeting in June, and we see oil forwards falling off a cliff, then we might decide otherwise. But as such, if the conflict is not solved by June, it is bad news, because it's always difficult to read into markets forwards. But I guess some of what we see in the pricing is based on the idea that this conflict is going to be solved sooner rather than later. And you hear a lot of noise or discussions about the fact that there is a disconnect, or there might be a disconnect between the prices we see for oil and the reality that there is a shortage and that we are drawing on the reserves in the West, but probably also in China.
Governor, I mean, what do the data since the March projection, but also since the April meeting, tell us in terms of where we are in the scenario? Baseline, adverse, or severe?
On oil, we are closer to adverse. Gas is lower. We had actually growth in Q1 was not too bad. It was 0.1, but if you correct for Ireland, which is very volatile, we're at 0.2. So at this stage, based on the forwards and I mean certainly the March projection, and if you compare to the adverse, we're in a slowdown. We're not in a recession. We have inflation going up, but not spiking. So it's still okay-ish. But again, the market projections are really, at some point it's binary. Either the conflict is solved and then it's going to be better than we have, maybe in the scenario, or it's not going to be solved and it's going to be worse. So I wouldn't infer too much from where we are today. We have the luxury to be able to wait until June. That's our next meeting, and then we'll see where we are. But if we are at the same stage in June, it's actually bad news, probably.
Yeah, I mean, given the pressures that you've seen both on inflation, as you were saying, on economic activity, do you worry that we're already in a stagflation environment?
I guess at the margin, directionally, we are moving in that direction. Are we in a stagflation, recession combined with high inflation? No. but we are moving into lower growth and higher inflation. So yeah, directionally we are moving in that direction. I'm not saying we are going to fall into a stagflation. Again, it depends very much on what's going on in the Gulf.
But so what's the appropriate monetary response to, I guess, stagflationary, soupçons, like indices? I mean, can you kind of cut rate? I mean, what can you do in terms of tweaking rates without giving too much of an impression that you're too aggressive?
Well, it's a fine balance. I mean, of course, it's much easier if the shock is a demand shock on the downside or upside. It's much easier to react. We know that the recommendation in the literature when we have a supply shock is not to respond too fast. Mm-hmm. At the same time, if you look at history, the episode of high inflation, inflation way above targets, were always episodes with basically, a negative supply shock. So that's where we need to find a balance. We were a little bit late in reacting last time. The situation is not the same, and it's a fine balance. And again, on that balance, I was already, in a way, I had a slight preference for hiking already in April.
So the market is betting on 3 rate hikes, actually, this year. Does that feel too much or about right?
Again, that seems, reasonable to me, but we are not in a world where we are going to a sort of middle scenario. Again, at some point it's more binary. You move to a better situation and oil prices start going down, or the conflict doesn't end fast enough, and then oil prices will go up again. So I see the market forwards more as an average of very different scenario, potentially very different scenario, another sort of base case which is likely to materialize. So I think we have to have that in mind when we consider what would be the appropriate reaction. Depending on where it goes, it might be more, it might be less. But it seems reasonable to me, considering the uncertainty where the market is.
Okay, so realistic scenario. Governor, you also recently argued in a paper that if Europe wants to, stay the kind of welfare-creating powerhouse that it has been, it needs to become a more flexible and agile union. What would your priorities be for Europe to stay that way?
Well, actually, in a way, the observation was that probably the fact that we are lagging behind on the innovation front, especially when innovation is of a disruptive kind, be it AI or EVs, that Europe is not the first mover. And that probably reflects deep societal preferences. And in a way, the question was, maybe we just want that. Maybe that's a reflection of our priorities, and then maybe it's fine. The question is, what will be the cost going forward of being late on those innovations? And it's not so obvious. You can of course copy, and there is diffusion of technology, but we're not the first mover. But then there is an argument that considering the combination of different structural challenges, population aging, climate and others, that we need to wake up and be better at these more disruptive innovations. And probably the world is moving in that direction, where technological progress is going to move ever more into the AI and robotics direction, which is more disruptive than the incremental progress we've seen in some industries where Europe is good. I mean, we have a current account surplus, so it's not that we lack competitiveness in all sectors. Yeah. But when it's becoming disruptive and you have to change fast, you don't have things under control, then we are not comfortable with that in Europe. And I think it's a deep societal problem, much more than something that you can solve by having these grand plans and even more European integration. I think more European integration would be welcome, but it's probably only at the margin that it would help on that front.
But Governor, very quickly, is this a misunderstanding of the new geopolitical realities for Europe?
I think Europe has to get used to the fact that we are not anymore in a world which is rules-based and where, politics is just about, or geopolitics or diplomacy is just about negotiating rules and then following rules. We are in a more transactional world, and we're going to have to learn to deal with, preserve what can be preserved of the old world with friends and people that still want to follow rules, but where we are confronted with more transactional powers, the US and China, then we have to be able to, collect our cards, because our cards are in different compartments. We have to collect them in a deck of cards and be able to play the game that we are requested to play with China and with the US. And that's much more than just following rules that have been negotiated in international fora.
So interesting. Governor, thank you for your time. We always really appreciate you giving a little bit of your busy schedule. Pierre Wunsch, Governor of the National Bank of Belgium. Now, after months of negotiations, the European Union has finally agreed the text of its long-awaited trade deal with the U.S. Under the agreement, the EU will remove levies on U.S. industrial goods in return for 15% ceiling on tariff. Let's get more from Oliver Crook, Bloomberg's chief Europe correspondent. Ollie, good morning. So what's the latest from Brussels? The chair of the European Parliament's International Trade Committee is speaking.
Yeah, we just heard from him, from Bernd Lang, and he was just talking about basically that he was quoting the Rolling Stones and starting his press conference saying that you can't always get what you want, but if you try sometimes you'll find you get what you need, and that they managed to get what they needed from this trade negotiation within the European nations to try to sort of present it back to the United States. And you'll remember Donald Trump has set the deadline of July the 4th, the 250th anniversary of the beginning of the United States, that the EU really needs to bring into power this trade deal that was a handshake between Ursula von der Leyen and Donald Trump July of last year, still not into effect. And so they've basically made the progress that is required. It will have to go back to the Parliament for a vote, back to the member states for a vote. But this has really sort of picked up the cadence about getting this trade deal over the line. What is interesting, Francine, is within this, they have added a couple of notes, and this is what he was referring to in this press conference, that within this deal now from the European side, there is a suspension clause. There's a clause that basically gives the Europeans an ability to suspend this trade deal in the event of any sort of additional tariffs from the United States, any other sort of unpredictable behavior from the United States. And the other point, Francine, that I think is very significant here is there is still a massive debate about derivative products from steel and aluminum. Those now fall under those 50% tariffs from the United States. The Europeans are very unhappy about that. They would like to see the derivatives moved out of that 50% column and into the 15% column that is governed by the rest of the deal. And they want to see that happen by the end of the year. And if it doesn't happen, Francine, you could have the trade negotiations again be reignited. So for the Europeans, this is the step forward towards that deadline from the Americans, from Donald Trump. So hopefully on track to get it over the line by July the 4th. We should say, Francine, that the last thing that the Europeans need right now in the sort of face of stagflation is another trade war with the United States. So really putting the pressure on and trying to get that over the line.
Ollie, thanks so much. Oliver Crook there, Bloomberg's chief Europe correspondent. Coming up, President Xi and Russia's Vladimir Putin meet in China. We'll talk geopolitics with Sebastian Mallaby from the Council on Foreign Relations. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacquet here in London, and these are your top stories. Supply shocks weigh on the global bond market after long-end Treasury yields hit their highest levels since 2007. Pierre Wunsch, the National Bank of Belgium governor, tells us the euro area is at the beginning of an inflation problem, but says the bloc is facing a slowdown, not a recession. Plus, Chinese President Xi Jinping warns against more military operations in the Middle East as he hosts the Russian President Vladimir Putin. So, as we were saying, the Russian President Putin meets the Chinese leader Xi Jinping in Beijing to strengthen their alliance just days after U.S. President Donald Trump's visit. Now, state news agency Xinhua reports that Xi told Putin that a ceasefire in the Middle East is imperative. Well, joining us now is Ross Matheson, Bloomberg's chief Asia correspondent, Jumana Bersetchi, Bloomberg's Horizon Middle East and Africa anchor is also here. So, Ross, if we start with you, good morning to you both, but why are there talks now in Beijing so soon after President Trump was there?
Well, actually, this trip was scheduled before Donald Trump's trip was planned to China. This was, in fact, to mark something specific, which is the 25th anniversary of a friendship agreement between Russia and China. So this was planned around that. And, of course, Donald Trump had delayed his initial timing of his trip to China because of the conflict in the Middle East. So they ended up being really close together. That's probably not a bad thing for Vladimir Putin. I mean, he gets to showcase today the extent of the Russia-China relationship so soon after Trump was there. He's been receiving really the same level of pomp and ceremony and fanfare that Donald Trump did from the Chinese. So kind of putting him, in his eyes, perhaps at that elevated level of importance. He gets to maybe listen to what Xi Jinping has to say, if anything, to reveal about his conversations with Donald Trump during their meetings, and hear especially again what Donald Trump may have had to say about the conflict in the Middle East. So the timing's not terrible for Vladimir Putin, but it is purely by coincidence.
Jumana, I mean, President Xi is saying that the Middle East ceasefire is imperative when meeting Putin. Does that actually make a difference?
Well, so far, China have had a pretty hands-off approach. And remember, in the run-up to that summit last week, there was expectation that maybe President Trump would be able to get China to exert some influence on Iran to get them to sign a deal. And of course, China remain and have been the largest buyer of Iranian oil. So the assumption was that maybe it might lead to some form of a diplomatic breakthrough. But China didn't commit to anything, even though President Trump attested afterwards that China committed to, number one, not supplying Iran with any military equipment, and two, their affirmation that they do want to see a full and unconditional opening of the Straits, and they agree with the U.S. that Iran should never go on to develop a nuclear weapon. Today, in the readout from that Putin summit, Xi has actually gone a little further, saying a comprehensive ceasefire is imperative, restarting the war is even more unacceptable, and adhering to negotiations is particularly important. Top of mind here, Francine, are these comments that President Trump has been making throughout the course of this week, once again threatening to go down the route of kinetic military action unless Iran go back to the negotiating table and agree to the terms that the U.S. are putting forward on a peace deal. So China clearly want to see a resolution. At the same time, the two main players here, that is the U.S. and Iran, still remain very far apart on their respective stances.
Yeah, and we'll get back to that, and also the Strait of Hormuz. But I mean, you were talking about the pomp and the parade that Vladimir Putin saw, which was not unlike what President Trump saw just last week. I mean, does it mean that Vladimir Putin is back as a global power player?
Well, to some extent, he already was, because he was in the deep freeze for several years with the US under the administration of Joe Biden, obviously over his invasion of Ukraine. But he's spoken multiple times with Donald Trump, quite frequently. And Donald Trump veers between warm words of praise and admiration, even for Vladimir Putin, and sounding quite frustrated with him for the fact that this war is still ongoing. So certainly that relationship has changed since Donald Trump came back into the White House. And he has, of course, maintained his relationship with China, numerous visits, in the intervening years, 2023, 2024 and onward. He and Xi Jinping have maintained that relationship because it's a relationship that mutually suits them both. So certainly he's had that access. Has he had some setbacks? Absolutely. You can see questions about Russia's leverage and influence with the collapse of the regime in Syria, for example. And again, in Iran, Russia's a strong ally of Iran, but hasn't really been visibly involved in this conflict in terms of supporting Iran. It benefits on higher energy for sure, but showing the limits as well of Russian power overseas. But certainly there seem to be plenty of leaders who are lining up and happy to talk to the Russian president.
And Jemana, NATO is considering a Hormuz mission to protect ships. I mean, this is something that the U.S. had also floated a couple of months ago, and we weren't sure how that would work. So what's the latest on that?
Yeah, absolutely, Francine. And this comes from our own reporting, Bloomberg reporting overnight, quoting sources close to NATO saying that they're thinking about going down this path of introducing a mechanism whereby NATO would get involved with the safe transit of vessels going through the strait if the strait is not fully reopened by the beginning of July, so still a couple of months away. And remember, NATO have come under a lot of criticism by the president, by President Trump, for not being more involved when it comes to their attempts to help to reopen the strait. But still, a lot of questions here, Francine. Number one, even in our own reporting, we say that this is not a unanimous decision. There's still many countries within NATO that have reservations about getting involved, particularly because they are, by definition, a defensive alliance. So their position has always been they would only help with these peacekeeping efforts once the war is over. The second point comes back to the actual technicalities of it all. The U.S. have attempted to reopen the strait. Remember, they tried with Project Freedom for a couple of days. That was aborted. And in reality, it is still very difficult to get the vessels through. It is safe. It is unsafe. It is dangerous. There's the real possibility of mines exploding. You would need extra equipment. You'd need surveillance tools and a whole bunch of other assets to be deployed in order for that system to be beneficial and actually successful. So as it stands, it's still a proposal from NATO. We don't know if it is going to go ahead, but it comes back to the baseline issues here. The strait is still effectively shut, and Iran and U.S. are still very far apart in terms of how each one of those are viewing Iran's nuclear capabilities and ambitions.
All right. Thank you both for joining us, Jemana Barsechi and Roz Matheson. Now, for more analysis on the geopolitical and, of course, how it plays into the wider AI race between the U.S. and China, let's bring in Sebastian Mallaby, Senior Fellow at the Council on Foreign Relations and author of The Infinity Machine, a biography on DeepMind co-founder Demis Hassabis that is also a bestseller in a number of countries. So congratulations, Sebastian.
Thank you.
Look, I don't know when, I mean, we're all looking at pictures together of President Xi with his Russian counterparts, praising the strength of their relationship, but talking about reinforcing bilateral ties. Like, what does that tell us about the state of geopolitics right now?
I think the central fact of geopolitics right now is that the US, and particularly President Trump, overestimates his power to shape the international system. So he thinks he can bully Europe and take Greenland. Well, there was a bit of a backlash. He thinks he can go to Iran and easily subjugate them, maybe bring about regime change. He finds himself with an oil crisis. He thinks he can go to China and get them to help with Iran. And the next thing we know is he's got Putin visiting. So across these different areas of geopolitics, there's this fake assumption that it's all as easy as Venezuela, where they just abducted the president. It's not that easy in the world, and America is overestimating its power.
But what does it mean for China? I mean, China is also going through big changes economically. And yet, I don't know whether President Xi is a real winner in all of this reshuffling.
Sure. So China is in this paradoxical position where its domestic economy is not good. If you set aside just the recent uptick in inflation, which is purely a product of oil prices and the war, they basically had, almost 4 years of deflation. They're not out of their real estate slump. they have a terrible demographic challenge. There's lots of things which are bad. Even their great tech companies are not very profitable. If you were a shareholder in BYD, great electric cars, but you didn't make any money in the last year, right? No. So there's lots of problems with China, but what they are optimizing for is not economic success or the happiness of their consumers, it's power. They want power, and they're good at power. And that's why, if you look at tech, they are very good at the cutting edge. They are very strong in, not only rare earths, but sort of, electric vehicles, pharmaceuticals, the materials are used to make the pharmaceuticals, the kind of precursors. All of that, China is like strategically encircling what it sees as a sort of, choke points that he can use to have leverage over the West or over other countries. And they're good at this. And, if America just says, oh, they have a demographic bust, we're fine. No, that's a mistake.
But Sebastian, power for what? So at the end of the day, is it because they want to win a race, be it on AI or other things with the U.S.? Or is it because they want to be the greatest superpower? Or is it because they want to be so powerful that they can take Taiwan and no one can say anything?
Yeah, I think there are sort of, outgrowths of the fact of having power, like being able to absorb Taiwan. I think they would like to do that through the threat of a blockade. They don't want to invade. Xi canned all his generals just a year or so ago. So he may not be in a position to do a military action in Taiwan, but he would like to absorb it. So there are those kind of goals. But actually, I think China fundamentally sees power as an end in itself. After, those long centuries of humiliation, it wants to regain its position as the most powerful and feared country in the world.
Does China need the U.S.? And actually, if we go on to this AI race, I keep on hearing they're only 3 months behind, 6 months behind, maybe LLM. This feels like it's around the corner.
Yeah, absolutely. So the best measures I've seen are, if you want to be precise, an 8-month gap between the frontier AI models in the U.S. and the best models in China. But 8 months is not very long, and China is faster and better in other respects. So it's better probably at productizing the AI model, turning that into a useful thing in industry. They serve their models much more cheaply than American models, which is positive for the diffusion of the tech. So they have advantages as well as this slight disadvantage in where their frontier models are. So I think net-net, China is kind of almost there, almost up to where America is. So again, the lesson here is we have near parity, and we shouldn't think of the US as able to push the Chinese around.
So what does this mean for the U.S.? Because I know, last week there was this delegation mainly of chief executives, and it seemed that President Trump's main objective was actually getting deals. It wasn't necessarily getting an agreement on Iran or trying to help with Ukraine. It was business deals for the financial companies, the tech companies. NVIDIA was one of the last chief executives to be added to the trip. Do they want a deal?
I think fundamentally America needs to have a sort of perspective shift on its AI policy and its competition on semiconductors and all that. Instead of saying, we will have the AI, the Chinese won't, and we'll dominate, which is kind of what the Biden administration decided back in 2022 when it first imposed these chip export controls. Give up that idea. There's going to be near parity. China is a technology superpower. The US is a technology superpower. What we should be talking to China about is not how do we get ahead of them, it's how we should do a joint deal where we prevent AI from proliferating to rogues. That could be criminals, it could be terrorists, it could be rogue states. And with models like Mythos coming, which can just completely destabilize global finance and do other horrible stuff. And this is not theoretical anymore, this is real. No. We have now AI that is super destabilizing. No. So just as with loose nukes in the Cold War, we need an equivalent of the IAEA and the Non-Proliferation Treaty to stop that from going viral.
Do you think anyone's really looking at it? I know, and you spent 3 years actually following, Demis Hassabis to try and understand what they're building. We hear from a lot of these chief executives that they worry about it, but actually because they're in this, race to build it very fast, they don't have really time to think about the ethics.
That's right. So Demis Hassabis would say, as the leader of DeepMind, he would love to make AI safe, but just making AI from one lab safe when there's 6 other labs and several of them are in China, that doesn't make the world safer. So what he's done behind the scenes in the past is, for example, he suggested to Rishi Sunak, the former UK Prime Minister, why don't we have a beginning of an AI global discussion? It's getting so scary. I think we will see something. Already the US government has done a 180 from saying, let's just accelerate AI, to suddenly saying, oh, we're worried about Mythos. They've effectively taken control of the rollout of Mythos away from Anthropic, the lab that created it. And they've said, you don't get to decide, Anthropic, who your customers are going to be. We are deciding who you're going to give this model to. So the US government has waded in. They're scared of this technology. They see the need to control it. They want to regulate it. And by the way, guess which government likes regulating the internet? China. So there is a shared interest there between the US and China, and we ought to be leveraging that joint interest.
Sebastian, thank you so much for joining us. As ever, Sebastian Mallaby there, author and senior fellow at the Council on Foreign Relations. Now, coming up, we discuss the concerns of shaking up the world of private markets. That's coming up next. And this is Bloomberg.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Now, Joachim Nagel, the Bundesbank president, says the ECB may have to respond to the economic challenges arising from the conflict in the Middle East. Well, he spoke to us alongside François Villeroy de Gallo, the French central bank chief, on the sidelines of the G7 meeting in Paris.
This whole conflict started more or less 3 months ago. Now we know that this energy supply shock is more persistent. So we are moving away from our baseline scenario. And so this is, I guess, I believe, a fair description of where we are at the moment.
But does that mean that we are now in the adverse and severe scenario? How are you thinking about it? Because that's the framework the ECB has put out for us to think about.
It is, as always, we will take our decision on data. We will come together in June, and then we will have our decision based on data. But I alluded to it. There is it's a higher probability now that we are now away from that baseline scenario. That means that maybe we have to do something.
And one of the big questions is about the secondary effects and whether or not this inflation is spreading from just the energy headline level to the broader core. What is your analysis of that?
Can I first insist on the fact that figures are very volatile if you look at financial markets. So we shouldn't focus on data points, but look at the trend. As Joachim just said, as this conflict is lasting for longer, we have to look at more structural, long-term consequences. To give 2 obvious examples, we discussed financial stability and the bonds market situation. We also have to accelerate our energy diversification and reducing the dependency of most of our countries, starting with Europe, from fossil energy. It's obvious, but let us not limit our response to an emergency answer. On the monetary answer, I think the data will matter more than a precise date. and this is focused on the second round effect.
But so for the market's expectations, so they say that there's going to be 2 to 3 rate hikes from the ECB this year, beginning in June. Are you comfortable with that analysis? Do you find that that is a correct interpretation of what we've seen so far?
I guess it's not helpful to speculate about maybe the numbers or when do we what. I think this is not helpful. I think this meeting-to-meeting approach based on the data that we have on that meeting, this is the right way to do it. So we showed our commitment over the last 4 years. We hiked 10 times, we lowered 8 times, and we will show the same commitment when we're coming together for our next meeting.
We think of the French...
Yeah. Can I add on markets 2 things? We are not market-driven, we are data-driven, obviously. That said, through markets there is a tightening of financial conditions, and it already plays a role in fighting inflation threats. So we will see, and I think that this is the most important commitment. We showed it in the last 4 years, but European households, European firms can trust us, ECB, Bundesbank, Banque de France, to bring inflation back to target. And this is, believe me, the most important commitment.
Okay, we'll come to you shortly. Well, that was the ECB Governing Council members, of course, Joachim Nagel and the outgoing French Governor François Villeroy de Galhau. Now let's finish the hour with private markets. Yes, it's going through something of a reckoning period at the moment. Joining us now is Jed Laskovitz, Global Head of Private Markets and Customized Solutions at JP Morgan Asset Management. Jed, thank you so much for coming to see us in London. Look, private markets have been building up quite a lot of dry powder. We're just talking about it in the break. Is that leading to difficult conversations between LPs and GPs about extending investment periods?
Yeah, private markets are now a large asset class, $21 trillion. And I think what we're finding is investors are thinking about really 2 ends of the risk spectrum. Mm-hmm. At one end, there's where can they place capital and asset classes that perform well in inflationary environments, provide a degree of protection, low volatility, yield, stable returns, areas like core infrastructure, essential services, massive demand for core infrastructure. We were just talking about the utility deal announced a couple days ago. Now the world's largest utility. Utilities are hot again after being kind of pretty quiet for a while. And then the other end of the spectrum, and while there are some challenges in the 21 to 23 vintages, and we were talking about unsold companies, there's still a lot of excitement about the opportunity in AI. And if you're ignoring private equity and private markets, you're ignoring a large part of the market.
But are you still expecting some kind of shakeout? If you look, for example, at zombie fund managers, how many will have to wind down?
Yeah, I mean, you bring up a great point. Manager selection is incredibly important, and understanding your manager's experience, what they've done, their track record, all of those things. And yeah, in a world where there are higher rates and it continues to put pressure, the IPO market and the M&A market, although it was a good first quarter, it was really dominated by mega deals. As this continues, it will put pressure, but at the same time, there are incredibly strong growth opportunities in private markets and private equity in particular.
So, Jed, I mean, going back to the data center deals, how are you structuring some of those deals given your size? How much is it on infrastructure? How much of it is on real estate and other funds?
Yeah. We're at the power end of the infrastructure side. Think about the lights in this room, essential services, heat, water, electric, and you bring up a great point. Energy demand is surging. After about 20 years of energy demand being flat in the U.S. and Europe and the U.K., it's growing at 2 to 5% a year. And people say, well, 2%, it's not that much. But when you compound that over 20 years, and also you've got electrical grids and utilities where it's been very hard for CapEx to keep up with depreciation. So the amount of investment required, McKinsey estimates that there's $100 trillion needed to enter this market in the next 20 years, out to kind of 2040. And at the same time, there's been $1 trillion raised in closed-end infrastructure funds over the last 5 years. So there's going to be a tremendous amount of capital needed to continue to fund this. And we haven't even talked about the energy transition, which is just essential for Europe and essential, to meet increased energy demand.
But Jed, we've also had this 10-year, backlog in P exits at this stage. So what does that mean? Are you concerned about P unable to sell their assets? Could the secondary, part of private markets exceed the size even of the primary market if they can't get out?
I think this relates a little bit back to the depth of private markets because companies are staying private for longer. Because there are benefits to doing that. I mean, we just co-led, and Bloomberg led the story. We co-led the Databricks Series L. We got to know Databricks, around the Series B as a client, and then first invested in the Series J. And the fact is that companies can stay private for longer, and the ecosystem to provide liquidity in the secondary market and in the form of continuation funds where you believe there are strong companies and good investments exists. So I think the fact that there is more liquidity in the private equity market within the ecosystem is a good thing. It doesn't mean there aren't challenges and companies that might have challenges as higher rates persist and the M&A market isn't quite there with the amount of breadth that it needs in order to unlock some of those earlier vintages.
And Jed, also, I mean, the conversation is really changing, around retail. And actually, do you think retail investors and retail capital will form a significant part of private credit's future expansion?
Yeah, I think broadly speaking, across the alternative asset classes, absolutely yes. Yeah. And I do think private credit will continue to play a really important role in individual investor portfolios. I do think any asset class that has taken on that significant amount of flow in a short period of time, will from time to time have its challenges. And there was the AI wobble, but by and large, it's been idiosyncratic. I do think when you think about a diversified alts allocation, real assets, private equity, private credit, over time, individual investors will need to build a more diversified allocation, and the opportunity for things like the LTIF and the LTAF, regime in Europe and the different structures in the U.S. provide opportunity to provide that level of diversification and advice. One of the questions that gets asked is how come that market hasn't grown faster? Well, it's the education gap, and I do think these things take time. I mean, look at the ETF market. Now it's kind of grown to trillions from zero. So these things take time, and I do think it's an important facet for individual investors.
So interesting, Jed. Thank you so much for joining us today. Jed Laskovitz, Global Head of Private Markets and Customized Solutions at JP Morgan Asset Management. So that's it for the Pulse. We'll have plenty more throughout the day. Up next, Bloomberg Brief, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Taking a breather, futures on the rise after a stock's three-day losing streak. Yields retreating from multi-year highs. Nvidia front and center today. Investors awaiting the chipmaker's report card and seeing about its growing competition. And state primaries test President Trump's grip on his Republican base ahead of the midterms. Let's get a check now on the last few hours of action around the world and markets. We'll start in Tokyo with Alice French for the latest from Asia. Alice.
Good morning. Yes, look, a down day for us here in Asia with the Nikkei seeing actually its fifth straight day of declines. That's the longest losing streak since January. I think a lot of people taking money off the table in the AI trend ahead of Nvidia's earnings. Kospi as well, another down day. Some news that the Samsung union is planning a strike, really hitting sentiment there, although Samsung stock itself did manage to pare some of those losses later in the session. And moving away from stocks into bonds, we had some relief for the bond market today from a stronger than average demand for the 20-year bond sale. The yield on the 20-year JGB actually dropping as much as 10 basis points at one point. But of course, those yields are still up there, close to multi-decade highs. There is still quite a lot of jitters around those kind of yields and the fiscal concern that's hitting the stock market as well, I think. But yeah, Nvidia's earnings are really going to determine where things go from here.
Yes, I have a feeling that's going to be a global story. Alice, thank you so much. That's Alice French. Now to London for a look at Europe. Here's Charlie Wells. Charlie.
Good morning, Vonnie. So yes, we are seeing some yield relief across the continent here in Europe as well, particularly in the UK, which has had such a tough time in the bond market recently. What we have seen is the softest inflation rate coming from the UK in about a year. So we're seeing a decline in that 10-year yield of some 9 basis points, kind of outcompeting on that decline today. But again, still, those rates are elevated given some of the uncertainty that we've seen here in the UK. Let's flip and talk about stocks, because it's been a really interesting story yesterday that Euro Stoxx 600 had a pretty strong day. They were buoyed on the back of some pretty significant earnings reports showing strength for some of these companies. But there's been a little bit less movement, at least so far today. So trying to see how a lot of these companies kind of return some of the earnings, and again, waiting for those Nvidia results, which have implications for semiconductor companies here in Europe.
Charlie, thank you so much. Charlie Wells there in London. A similar story here in the United States. A little relief on yields, if you like, but really we're so much more elevated than we were even just yesterday morning. Like, look at the 30-year yield. We're above 516, down almost 2 basis points, albeit. At the front end, 408.69, so much higher than we were at the end of last week even, but we are down 3 basis points today. Now, part of the reason is oil dropping, and dropping more precipitously in the last few minutes. You see New York crude, which has rolled over to the July contract. That's trading at 101.83, well below where we were yesterday. And Brent crude down more than 2%. It dropped, like I say, just another few cents in the last few minutes. We are seeing futures pointed higher today. NASDAQ futures in particular, possibly with some Nvidia optimism out there, but we are coming off the back of 2 days of declines just this week alone. All right, let's get to some individual movers. Here is Chloe Melly in London.
Good morning, Bonnie. Nvidia is, of course, the big story of the day ahead of the earnings later today. And investors are very keen to hear about efforts to ramp up production and to fend off competitors. And it seems that the market is overall quite optimistic, quite positive ahead of the earnings later. And we have got shares up about 1%. It's also, those earnings are also going to be about the general health and state of the AI economy. And so seeing the broader chip making sector move on the back of that, and Intel in particular actually up about 4% in pre-market trading. And finally, we have got cover also in focus this morning, the restaurant chain. It has beat analyst expectations, and this really pushes back against fears of a broader downturn in that restaurant business. And there's one item in particular that did really well, and that is the pomegranate glazed salmon. So it might be a little bit too early in the day to talk about fish, but that was a very big boost for that company, and we're up almost 7% in pre-market trading on the back of those results.
Sounds delicious. Chloe, thank you so much. Chloe Melly there in London. Coming up this hour, we're going to be speaking with RBC's Amy Wu Silverman. She'll join as she sees investors going from wait and see to full-on FOMO. Investors staying focused on Nvidia earnings today, though, scheduled for after the market close. Results from the world's most valuable company should give us an update on the state of the AI economy as we see record investment across many industries. Tom McKenzie, host of Bloomberg Tech Europe, joins us now. So, Tom, we are expecting particularly data center revenue to grow more than 85%, 88%, I think is the exact number. I mean, will that be considered a good quarter for Nvidia?
I mean, typically, in fact, in recent quarters, Nvidia's come through with earnings beats, and the markets and investors have reacted negatively to that. There's been this stretched expectation versus delivery in terms of how investors think about this company. That's up about 18%. The share's up about 18% year to date, and that has underperformed the broader semiconductor space. I think you're right. Look, the data center part of the business is absolutely front and center for Nvidia. That is essential in terms of thinking about GPUs and the move from Blackwell to Rubin. And so it's the demand picture out of the data centers, the forecast that's going to be really, really interesting. Yes, you're right. For the current quarter, first quarter, sales overall for the business expected to come in at about 80% increase for the first quarter. But it will be the guidance in terms of giving us an indication around demand. There's very few signs that demand is letting up for these AI accelerators that Nvidia produces. It may be more about whether or not they can actually supply that demand and whether or not they continue to have that hold on the supply chain to meet that demand. And that will also be in focus for investors with these earnings.
So we have a little bit of a problem with Samsung and its largest labor union. Talks broke down, and that's threatening a chip plant supply. It could actually, if it continues on, disrupt the whole global chip supply. Tom, what's the story?
Yeah, look, this is the world's largest supplier of chips, so this could have a major impact on global supply chains at a time, of course, when the markets and global economies and companies are wrestling with higher chip prices, and particularly high bandwidth memory, in which Samsung provides quantities, huge quantities to data centers. So this has significance to the AI story, but also more broadly as well. If indeed this strike goes and comes through, it could happen on Thursday. But we know that workers there are pushing for a cut of the profits. Samsung stock, again, up more than about 100% year to date. That has performed very strongly, particularly because the pricing around these chips has increased, the massive demand and the fact that there is a shortage of supply, and Samsung has benefited as a result of that. Workers now want a slice of those profits. So at this point, we're getting very close to the deadline, and negotiations remain very, very heated. They are saying, the workers' union saying, they are getting ready to strike. We'll see if it happens. Again, if it does, it will be significant for the supply chain around semiconductors.
Absolutely. Also significant for Silicon Valley workers, Meta has begun its cuts, 8,000 jobs globally, and we've already heard of Meta starting in Singapore.
Yes, and to be clear, we knew that this was coming. This had been flagged. Bloomberg has reported on it, but this is the day when it happens. So obviously, on a kind of personal level, very significant for those employees affected at Meta. And coming just a day, and we discussed this yesterday, after Meta was looking to shift roles, about 7,000 roles and 7,000 workers into additional and different roles. Now they are starting to implement those previously flagged 8,000 job cuts, as you say, starting in Singapore, and those memos will be dropping into the inboxes of other employees throughout the world of Meta today. And they started, as you say, in Singapore, 8,000 jobs. That's about 10%, almost 10% of Meta's overall workforce.
Massive, massive amount of jobs. Tom, thank you so much. Bloomberg's Tom McKenzie there. Over in Beijing, Chinese Premier Xi Jinping and his Russian counterpart reinforcing the two nations' ties on President Vladimir Putin's state visit. Discussions between the two included the conflict in the Middle East. Bloomberg's China economy and government editor Alan Wong joins us now from Hong Kong. So ostensibly and for most of the real reason for this visit was to talk about the Siberia 2 gas line, Alan, but apparently the two talked a lot about wars and not really the Russia-Ukraine war, but more about the Middle East. What did China tell Putin?
Yeah, that's right. They spent a lot of time talking about the conflict in the Middle East. And China made very clear that it wants peace back to the region as soon as possible. And the Chinese President Xi Jinping said that resuming the war is unacceptable. This coming just hours after U.S. President Trump said that he threatened a big hit to Iran if it doesn't agree to the terms for a ceasefire. So yeah, that's what Xi told Putin. And in addition to that, they did signed some agreements spanning trade, technology, and other areas of cooperation. But the overall takeaway is just that China and Russia's ties are ironclad, and then both leaders exchanged really warm words about one another, with Putin saying that one day apart is like 3 autumns, which is a Chinese saying that people used to use to describe how much one misses the other. So overall, the trajectory of that relationship is very clear, even if the situation in the Middle East is less so.
So then what kind of leverage does China have over Russia on the issue of the Middle East war? I mean, Premier Xi can say what he wants, but essentially Vladimir Putin can also do what he wants, and it's not going to affect the relationship, is it?
Yeah, given that they have repeatedly vowed to uphold their no-limits partnership, I think they will not be talking about such strong terms like leverage or bargaining chips. They'd be using a lot of rhetoric to signal that they're on the same page on many things while signing agreements to deepen their actual relationship. So it's unclear just whether China actually wants to put any pressure on Putin to help bring an end to that war. And I mean, China's role, even outside this relationship, has been quite not easily understood, because in public it has always called for a ceasefire, and it has helped mediate on the sidelines. But I mean, has it really put its thumb on the scale to end the war or do anything meaningful to help reopen the Strait of Hormuz? It's less clear. But there are plenty of reasons for China to accelerate that process, because we're seeing just how the economy slowed down. The economy's growth slowed down across the board based on data released just days earlier. And that's just one economic reason for China to do more on this front.
Amazing context, Alan. Thank you so much. Bloomberg's Alan Wong there in Hong Kong. On trade now, the EU officials gathering to finalize the long-delayed US trade deal before the July 4th deadline set up by President Trump are still talking. Bloomberg's Oliver Crook joins us now from Brussels. So what's the latest, Ollie?
Yeah, that's right. So until about 2:30 in the morning, you had deliberations on the EU side finalizing the text, the final law to bring in this trade agreement between the United States and the Europeans. Remember, this began as a handshake deal almost a year ago between Trump and Ursula von der Leyen. There have been a number of different delays, but now we have, hopefully from the European side, the finalized text of this law, and to basically bring into effect the trade deal that was agreed to about a year ago. Now the next steps is they'll have to go voted in Parliament at the European level, has to be sort of okayed by the member states. But Vani, interestingly, there were a couple of things that were added into the text here that I think are worth mentioning. For one thing, there is a suspension clause from the European side if the U.S. does anything that basically violates the trade agreement or does something completely unpredictable or threatens, for example, another set of tariffs. That's the sort of safety measure the Europeans have put in there, that they could suspend the trade deal. There is also a sunset clause. This is a trade deal that will expire theoretically from the European side, needs to be renegotiated, validated by the end of 2029. They changed that. Originally that was going to be in March of 2028. That means that was going to actually have to be renegotiated during the Trump presidency. They have now changed that. So those are a couple of the sticking points that have still been sort of put into this text. The real question now, Vani, will the United States react to that? Will these stipulations sort of be acceptable to the United States? When we spoke to Jameson Greer a couple of weeks ago, he said he wasn't too happy about it, but I guess we'll have to wait for Truth Social over the next couple of weeks to see if there's objection for the United States and if we can get this deal in place before July the 4th, which is, of course, President Trump's deadline.
Yeah, or his stated deadline at least. Oliver, thank you so much. Oliver Crook in Brussels. Now to other top stories trending on the terminal this morning. UK inflation falling to its lowest in more than a year. CPI rose 2.8% in April compared to 3.3% the previous month. However, the decline is expected to be short-lived. The BOE predicts inflation to accelerate for the rest of the year due to the energy shock from the Iran war. Standard Chartered CEO Bill Winters seeking to reassure staff following backlash from his remarks on using AI to replace, quote, lower value human capital. In a memo, he wrote, I know this may be unsettling when reduced to simple headlines or a quote out of context. Standard Chartered plans to eliminate close to 8,000 support roles over the next 4 years. Meantime, over at HSBC, CEO George El-Hedary warning that AI will destroy certain jobs and create others. El-Hedary saying on Bloomberg's Leaders with Francine Lacroix that he was urging employees to adapt rather than resist the technological shift. HSBC is weighing deeper job cuts that could impact around 20,000 roles. Coming up, a victory in Kentucky for President Trump's candidate, a strong signal of his tight grip on Republican voters still. More on that story next. This is Bloomberg.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The winner of the race tonight is not so much Ed Galrine. I'll come back to that. But it's the Republicans of Kentucky Congressional District 4 and their families who I will be a champion for in Washington. They're the winners.
Ed Galrine, President Trump's endorsed pick for a congressional seat in northern Kentucky, victorious, and defeated longtime House Republican Thomas Massie. It was a strong sign of the grip that the president has on Republican voters. Joining us now from Washington is Kate Ackley of Bloomberg Government. It's interesting, Kate, because the president's national polling figures and, favorables are really in the dump, right? I mean, at the worst ever, really, of his second term. But was this frustration in particular with Massie, who had been sort of the 14-year incumbent, or a vote for the MAGA movement?
Well, this was definitely the MAGA movement came in with full force, spending big money in this race against Thomas Massie. It's always difficult to defeat an incumbent. But this, so far this year, President Trump has a pretty good record of the people that he's, taking on losing. We saw it this past weekend, even with Senator Bill Cassidy in Louisiana losing his primary against a Trump-backed opponent. And so President Trump's record of who he's, the winners he's picking in the Republican Party and reshaping the Republican Party to the way that he wants it to be, the candidates that he wants to win, He's racking up a pretty strong record so far in this midterm election cycle.
Massive amount of money went into this particular election, though. Does that take something out of the coffers for November, or will they just raise more?
Well, there was also outside money from groups that are not necessarily specific to MAGA, if you will. We saw the APAC, the American Israel Public Affairs Committee, come in and also spend big against Thomas Massie, who has voted against funding for Israel issues on Capitol Hill before. So there was a real coalition here of outside groups, including President Trump and the MAGA outside groups coming in and spending against Massie. And I think some of what my sources are telling me, looking ahead to next week, a week from yesterday, on May 26th, there's a big primary coming, a primary runoff in the Texas Senate race. And that's one where a lot of my sources are saying Republicans are costing themselves a lot of extra money. They've got, of course, incumbent Senator John Cornyn in a runoff against Ken Paxton. And that already, I think we tracked as of yesterday, in that race, already $161 million, that includes the Democratic side as well, have been spent in advertising alone. And I mean, so it's 161 million and counting. So, Democrats are feeling pretty good about their chances, given that as of yesterday, President Trump came in and endorsed Ken Paxton against Cornyn. Political insiders in Washington think that Cornyn has a better shot of winning against the Democrat in the fall.
All right. Kate, just in terms of the Iran war, the Senate seemingly even more opposed than it has been now to the president's war in Iran. I mean, does that matter, even if it votes against the war?
Well, so here's the thing. It ties in with these primary races. Senator Bill Cassidy, who lost his primary over the weekend, again, to a Trump-backed opponent, he changed how he's been voting on that and has now voted with, some Republicans, but the Democrats on that. So, as more people lose their primaries, as, Senator Cornyn loses this runoff, how does he vote? And what a lot of people, Republicans and Democrats in Washington, are saying to us is that the Senate Republican majority is going to become more and more ungovernable, if you will. It's harder to corral them if you have people who are not running for re-election, those who've lost their primaries, those who don't feel as strong a bind to doing what President Trump wants them to do.
Kate, fascinating. Kate Ackley there of Bloomberg Government in Washington. Coming up, President Trump under fire after a clause in his IRS lawsuit settlement is unveiled. More on that and a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or
government. The deal involves a $1.8 billion fund to compensate targets of so-called weaponized justice. Now, addendum posted on the DOJ's website says the IRS would be forever barred and precluded from pursuing unpaid tax claims against Trump, members of his family, or his businesses that arose before the settlement was reached. Next up, the Financial Times reporting EU governments are discussing whether former ECB President Mario Draghi or ex-Chancellor Angela Merkel could represent the bloc in potential negotiations with Vladimir Putin as momentum gathers to reopen formal channels with Russia. Foreign ministers will discuss options next week in Cyprus. Washington and Kyiv express support for the idea. And the Wall Street Journal reporting officials are scouring records of trades made before Trump's social media post on March 23rd to look out for insider trading. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Taking a breather, futures on the rise after stock's three-day losing streak. Yields retreating slightly from multi-year highs. Nvidia front and center, investors awaiting the chipmaker's report card amid growing competition. And state primaries, testing President Trump's grip on his Republican base ahead of the midterms. Let's take a look at these markets then, starting with bonds. As you can see, a tiny bit of relief, but we're still higher, particularly at the long end, than where we were this time yesterday, with the 30-year yield at 516.58. Look, we got that repricing last Thursday, and we haven't really ever come back from that. We were at 402, 401 in the middle of last week on the 2-year yield. We're now firmly close to 410, and it hasn't changed that much in spite of this drop of 2 to 3 basis points. We're seeing that around the world, by the way, as well. A slight drop in Japan even, although the yen is above 159. Let's take a look at equity index futures and oil, because we're seeing this quite substantial drop off in oil, but it's important to note that the December contracts are still at records, both for Brent and WTI. Also notice that even though the spread was narrower yesterday, we have rolled over to the July contract on WTI. It is at 102.44 right now, and as you can see, equity index futures pointed higher. Let's get to some individual movers now. Over to London and Chloe Melly.
Good morning, Bonnie. Nvidia is in the green this morning ahead of its much anticipated earnings, and investors will be really keen to hear about efforts to ramp up productions and also efforts to push back against competitors. And it seems there's actually a fair bit of optimism in the market ahead of those earnings. And so we're seeing Nvidia stock up about 1.5% this morning. And of course, those results are really going to be make or break for the ongoing chip rally. And that's why we are keeping an eye on that broader chip sector as well this morning, where we can see as well a fair bit of optimism there as well, with Intel, Micron and AMD all in the green this morning. Of course, what Nvidia says about the health of the AI economy is going to be very important for those companies as well. And finally, let's end with a very different sector, with the restaurant chain operator Cava, which has reported results ahead of expectations. This pushes back against fears that there is this potential downturn in restaurant attendance because of weaker consumer spending. And so it seems that Cava is quite resilient in that market, and we're up almost 7% in pre-market trading for that company.
All right, nice move there for Cava. Chloe, thank you so much. Chloe Melly there. Stock futures bouncing ahead of Nvidia earnings. RBC's Amy Wu Silverman weighing in on what she calls a shopping spree for calls, especially in tech. She writes, in the past month, we've gone from wait and see to full-on FOMO right-tail chase. The stats we've seen on option call buying have been nothing short of historic. Amy is head of derivative strategy at RBC Capital Markets, and she joins us now. Amy, I feel like that's been the case the last few times we've spoken. Is this market not a little concerned? Shouldn't everybody be slightly hedged here?
It's a good question. I'm a little concerned, but, I think this comes down to positioning somewhat. If you've been under positioned, then your risk is unfortunately to that right tail. I can tell you from the last time we spoke, a lot more people have jumped in the pool, so that all key positioning indicator, I think that is going to start to trend more towards fears of the downside. I think we obviously have to wait for the big Nvidia print to go first, but you're really starting to see signs now that perhaps momentum on that FOMO chase is getting a little frothy.
Yeah, what is Nvidia positioning telling us, Nvidia in particular, and will we get that move that we're maybe anticipating? I mean, we have seen sell-offs after earnings, even though we've seen beats for the last several quarters. Could that change this time?
Yeah, it's exactly right. The last few quarters have been very different than the quarters before that, where there was a lot of exuberance. I can tell you right now that we're in skew inversion. So just to translate that, you are seeing so much call optimism that call implied volatility is outweighing the put implied volatility. That usually indicates, a lot more momentum. If things do work, be getting more momentum. We have gotten to the point where just the pure sheer scale of Nvidia makes that more and more difficult to do. I think that's why when you break down the last 8 quarters, this was happening more in the earlier quarters than they were in the next few. However, I would never count Nvidia out. I do think we have to get through this one or the other before we can determine whether momentum overall on the AI trade flags.
Amy, if we do get a SpaceX IPO this week, and obviously it's not a public company, but at what point will you be able to gauge market sentiment around that particular company? How long will it take for, positions to get put on and so forth?
Yeah, that's another great point. It's interesting. Every time we talk about where the inflection point could be, shouldn't we be worrying about geopolitics? Shouldn't we be worrying about the fact that the Strait of Hormuz is still closed? People bring up these fast-track IPOs, SpaceX for one, but also Anthropic and OpenAI, all being factors that can continue this momentum train. I do think, especially when you think about the retail bid that is in the market that essentially came back, acted as another leg of the stool after April, that certainly could be something that still gives a punch to this rally. And, that's not just going to be in the next month. That's obviously going to be towards the end of the year as well if we get that other two big IPOs happening sometime in 2026.
Amy, is the VIX broken, or is it telling us something different now that it didn't used to tell us? I mean, we're at 18 and change. We were at 17 most of last week. And this even with, bond markets going crazy around the world, or at least repricing somewhat.
Yeah, to some degree, you do have to be concerned about the mechanism. I'll give you one really simple point, which is that the VIX is just a weighing of S&P put options, but also call options. So when you have this phenomenon, which people in options like to call spot up, vol up, but all it means is there's much more of a bid to those call options, that's still influencing your volatility, even if it's coming from the right side. So you can see VIX move because of that. But if it's because of a chase and upside, does that necessarily mean fear? So I think that translation mechanism you do have to be wary about. The second aspect of this that I would say is you still have a lot of dispersion. You still have that duck quacking. You get semis zigging one way and software zigging the other way. So on the surface level of the index, it doesn't seem like a lot is happening, but I think we viscerally know that is a lot happening under the surface, Vonnie.
Yeah, it's an interesting, explanation. You tend to just think of the VIX as the so-called fear gauge, and it really has never been that. Stocks that have ripped, you say, Amy, have notably higher volatility than stocks that are down, which means that, we could be looking at an up crash faster than we might see a down crash.
Yeah, to some degree that's happened, but one study we did was we essentially took, since March 30th, essentially the low in the market, all the returns of the S&P 500 by bucket. So, you could be down 15% to X percent, or you could be up 50% to whatever percent. When you look at those buckets and you look at the realized volatility, there's higher volatility on the upside. So, one nuance that I think it's really important to make is this hasn't been a melt up. It's been more of a crash up, and crash ups tend to be less stable than melt ups. It's not a grind to the market.
It seems that this earnings season caught everybody off guard by how good it was, even though previous earnings seasons haven't been bad, right? We've had sort of good earnings seasons for a while now. It's just that investors were very much more receptive to this one, it feels like, and were a lot happier when companies met and beat. But we saw massive moves in certain companies. I mean, Intel, the memory chip makers, Cisco. Is that normal, Amy? Is this a normal environment?
No, I don't think so. You certainly have seen outsized realized moves relative to implied moves. But, you've also seen this commentary of everyone has managed to look through the bad for the good. To some degree, that's justified, yes. But, especially when we go back to where that bond volatility has been, when you look to history, that mechanism tends to bleed into equity volatility. I don't think we've seen that yet, but that doesn't mean it's not going to hit. There is a part of this market that's very nervous. You have not seen it hit equity volatility or equity skew to a high degree yet, but I actually do think that it's going to happen. It's just a question of when. Until that, quote unquote, when happens, the party still remains. You still have NVIDIA, you still have these fast track IPOs, but I do start to think you're going to see other metrics start to pick up like equity skew, simply because of the fact that that momentum factor is going to flag and people are going to start to scratch their heads and think about what's in the months ahead.
Cannot wait to speak to you at that point. Amy, thank you so much. Amy Wu Silverman of RBC Capital Markets. Now to other top stories trending on the terminal this morning. Goldman Sachs is said to have the lead role on SpaceX's IPO. Morgan Stanley is also listed as a lead bank. SpaceX could file for an IPO as soon as today, aiming to raise $75 billion at a valuation of more than $2 trillion. HSBC CEO George El-Hedary warning that AI will destroy certain jobs and create others. El-Hedary saying on Bloomberg's Leaders with Francine Lacroix that he is urging employees to adapt rather than resist the technological shift. HSBC is weighing deep job cuts that could impact around 20,000 roles. President Trump spares banks from an immigration crackdown. U.S. bank executives have been concerned that the president would force banks to verify the citizenship of new and existing customers. Instead, an executive order issued on Tuesday instructs regulators to advise banks on how to spot suspicious activity and determine customers' true identity. That's seen as a more limited measure. Coming up, President Trump's primary pick for Kentucky wins the race. His grip on Republican voters bolstered ahead of the midterms. We'll discuss next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The winner of the race tonight is not so much Ed Galrine. I'll come back to that. But it's the Republicans of Kentucky Congressional District 4 and their families who I will be a champion for in Washington. They're the winners.
Kentucky congressional candidate and winner of that race now, Ed Galrine, who was handpicked by President Trump. He defeated Thomas Massey in one of the most expensive primaries on record. Back with us is Kate Ackley of Bloomberg Government in Washington. How can President Trump have such bad ratings nationally and yet go into a district and basically defeat a 14-year incumbent, Kate?
Well, he definitely seems to be having this role this election cycle in Republican primaries as sort of a kingmaker. His endorsements, he's got a strong record of success now in Republican primary endorsements. We have another one that we'll be watching next week, of course, as well, where he has endorsed against sitting Senator John Cornyn. So he has another big test. He endorsed yesterday Ken Paxton against Senator Cornyn. But yeah, I mean, it's always a big deal. It's always very hard to topple an incumbent. And so obviously this was an extremely costly race. We saw a lot of outside money, including from sort of MAGA coffers, if you will, but also the American Israel Public Affairs Committee came in and spent against sitting Representative Massey, who has voted against funding for, Israel efforts in the past. President Trump had a real grudge against Massey, who had voted against his, the big, beautiful bill last year and other measures. So, this was kind of a deep simmering feud for a while, but obviously President Trump and his political operation put a lot of weight against Massey in this race and came out with a victory.
Yeah, absolutely. Kate, just in terms of the war in Iran, the Senate has been signaling even more opposition to the war as the weeks go by. What's next, and can the Senate do anything more but signal?
Well, this is an interesting situation, and it ties right in with these midterm primaries that we're talking about. On Sunday, or on last Saturday, over the weekend, Senator Bill Cassidy lost his primary in Louisiana to a Trump-backed, two people advanced to a runoff there, and Senator Cassidy was not one of them, and the Trump-backed candidate did advance. So now we're seeing sort of a new independence, if you will, for Senator Cassidy, who did vote for that resolution yesterday, which was a switch in his vote. What will Senator Cornyn do if he is to lose his primary runoff on Tuesday? Will his vote be sort of up for grabs, if you will, on this and other matters? And what Republicans and Democrats, in Washington are saying, that the Senate Republican majority will be difficult to govern, difficult to stick together if you have people who have lost their primaries. They don't feel beholden anymore to Trump and what Trump wants. And, they could be sort of wild cards, if you will, in how they vote on that, on Iran war issues, but across the board.
Kate, fascinating. Thank you so much. Kate Ackley of Bloomberg Government there. Turning to tech, NVIDIA is set to report its first quarter earnings after the market close. Analysts estimating sales to have grown 80%, the fastest in more than a year. Bloomberg's Neil Campling joins us now. Neil, what should we be looking out for if you were in mind to look for red flags or even just amber flags at this point?
Morning, Bonnie. I think the questions around the NVIDIA ecosystem for AI that people will be focused on tonight is, for NVIDIA themselves, is there any sort of guidance increase that takes into account China now, which has been discounted in previous numbers that the company reported? Is there any signs that alternative chipsets are being custom made by the likes of Google or the new ARM chips that were announced recently? Is that eating into any signs in terms of that demand appetite that's out there? The setup, as you say, the numbers themselves are huge in terms of $79 billion of revenue and 80% growth. That growth is expected, the growth rate expected to halve over the course of the next 2 years. Whether that transpires or not remains to be seen in terms of the longer term outlook, but clearly at the critical juncture of the hyperscale ecosystem. And traders are pricing in about a 5.5% move on the stock either way post results. Now that's potentially hundreds of billions of dollars. And to put it into context for you, NVIDIA's market cap is far larger than the entire market cap of the country indexes individually in Europe. So bigger than the FTSE 100, bigger than the DAX index, just NVIDIA's market cap alone.
Simply
So
gigantic.
just enormous numbers.
Yeah. Speaking of another giant, Samsung having problems with its labor union, how concerned should we be that we might be walking into a chip supply constraint?
It is a massive concern in terms of chip supply, the knock-on effects potentially as well in terms of the inflationary impacts that we're already worried about in terms of AI and the costs of some of these chips that have risen some 600% in some cases over the last 6 months. I think the main thing here is what happens to the fabrication plants? Do they go offline completely, or will we just be running, will they be able to run with fewer people in the factories? Because the key thing here, Ollie, is that if you take these fabs offline, it can take up to 6 months to come back under full production. And we've got demand that's so high out there right now, pricing so high as well, we just cannot afford to have these kind of supply disruption risks. So the next 24 hours for the whole AI trade are critical in terms of what Jensen says and what happens with Samsung and the unions and the Korean government.
Sounds like a Strait of Hormuz analog just for the chip world. Neil, thank you so much. That is Bloomberg's Neil Campling there. More earnings slated for today. 2 targets set to report before the bell. Let's bring in Bloomberg consumer reporter Maddie Parker. Maddie, what is Target going to tell us about the consumer?
Yeah, Bonnie, hi. It's a great question. I mean, Target, kind of all eyes really are going to be on that turnaround effort that they're trying to push for, and to see if that's still bearing fruits under their new CEO, Michael Fidelki. We know that they've been really pushing on their merchandise and on the tech in their stores as well. Analysts are expecting to see revenue increase, expect to see EPS up as well. But really, as you say, on the strength of the consumer, that is really what investors are going to be most interested in. Target, kind of their turnaround efforts have done well. Their share is up 25% so far this year, but they still have a very long way in terms of clawing back that stock price. And what investors are going to be keeping an eye out is kind of on their outlook for that own turnaround effort in terms of themselves and other big box retailers, considering the kind of business uncertainty and also that kind of subdued consumer demand that's come after obviously the outbreak of the conflict in the Middle East.
And I think Target is one of those big box retailers that's in a little bit more of a unique position because it sort of gets everybody across the income spectrum, right? I mean, of course, so does Walmart and so does some of these others, but Target is positioned to sort of appeal to everybody at its price point, not out of necessity, but just out of, interest. So there's something we can glean about perhaps every part of the US income spectrum here, isn't there?
Yeah, totally. I mean, as you say, their kind of customer base, it really kind of ranges across a whole spectrum of incomes. And obviously, big box retailers often say that at times to compress consumer demand, they're actually quite well placed, particularly in terms of that kind of value-driven proposition. We know that customers are prioritising value at the moment. But as you say, they also appeal to kind of the consumers that are at the higher end of the income spectrum. And they'll obviously be able to push forward in terms of discretionary spend, in terms of how much people are willing to spend on furniture, on electronics and apparel as well. And obviously, those people at the kind of higher end of that spectrum might be able to weather the storm that we're kind of experiencing across retail at the moment a bit better.
We get TJX today too, but we get Walmart tomorrow. Maddie, will we hear anything that we aren't expecting out of Walmart tomorrow?
Yeah, I mean, it's a good question. They kind of, I think people are expecting revenue to increase this quarter as well. Walmart have done decently, but again, as I say, they kind of, I guess people are kind of as interested as they are about how they're doing right now as what their outlook is going forward. We know that customers are kind of, they're reacting to the situation in the Middle East, as we say. But as we say, big box retailers, they do appeal kind of across that broad spectrum. So I think investors will be interested to see kind of how that kind of pans out across all their customer base.
The final piece of the puzzle on the US consumer this earnings season, at least. Maddie, thank you so much. Bloomberg's Maddie Parker. Coming up, those earnings and Fed minutes on deck in your day ahead. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Now a look at what's ahead today. First up, we get earnings from Target and TJX before the bell, and then the main event, NVIDIA reporting after market close. Plus, the U.S. Treasury is selling $16 billion worth of 20-year bonds at 1 p.m. New York time. And we get the FOMC meeting minutes at 2 p.m. New York time. That'll be a fascinating insight into the various strands of FOMC thinking. Some micro movers now before the bell. Cava up more than 7%. It had a beat and a raise, defying fears of a downturn in the restaurant industry. Toll Brothers is an interesting one, up another 2+% on earnings mover there. Now, obviously, Home Depot wasn't so great yesterday, but we did see those pending home sales come in better than expected. Orders, says Toll, hit the highest in 2 years. And Intel is up more than 4% now after the management team spoke at that JP Morgan conference. Analysts positive on the presentation on what's ahead for the company. This is your macro picture going into your Wednesday session. Crude a little lower. We've moved over to the July contract. S&P futures pointed higher. Tiny bit of relief in bond markets. That's it for Bloomberg Brief.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
This is not simply an AI-driven rally. It's a broad rally.
What we are seeing is the AI momentum continues to move forward.
Were it not for AI, this would be a very, very different story.
You asked me to pick a side right now, I would not own equities.
Just because you're not at 2000 bubble territory doesn't mean you're not in a bubble.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Wednesday, looking to snap a 3-day losing run. Equity markets bouncing back, heading into Nvidia's quarterly earnings report as Goldman is gearing up to take on a leading role in the biggest IPO of the year. One bank CEO is looking to reassure staff following some very clumsy comments on AI-related layoffs.
Here would be my advice. Know your audience before you go speak to them, whether they're students, whether you're employees, whether you're giving a speech. The Standard Chartered CEO is saying that his remarks were taken out of context. But if you listen to what he said, which we played yesterday, they weren't taken out of context. That is what he equated to in terms of AI. He's talking about, in some cases, lower value human capital will need to be replaced.
Yeah, I'm with you. The context wasn't lost here.
No.
It wasn't lost at all. In fact, he's not the only one that is struggling to really communicate what they're trying to achieve with AI. We've talked about this repeatedly since the start of the week. The pushback over the weekend to some of the commencement speeches across colleges across this nation, every time AI was mentioned, there is a real branding, PR, marketing problem around this push.
Unbelievable. The second AI was brought up at a number of commencement speeches. I know Eric Schmidt, the former Google CEO, got a lot of attention, but Jonathan, there was a number of them. One individual brought up AI and said, I know you guys don't like it. Booze, booze, booze. Deal with it. That's what he said to this graduating class, that they're seeing the future and saying, where do I have a place in all of this?
We're going to spend some time on this later in the program. We'll also spend some time on this. Check out the bond market. 2s, 10s, 30s. Yields coming in. Just a touch. That's a relief given the sell-off we've seen in the last 24 hours and the past few weeks. On a 10-year since last Monday, higher by some 25 basis points this morning, down 3 basis points. On 30s, the highest close we've seen on a 30-year yield going back to 2007. This morning, down a single basis point. It's difficult to put a lid on this because there are a lot of forces building outside of the United States.
Absolutely, a lot of forces. This is a global issue, and of course, a lot of this is being driven by inflation expectations and what is happening in the oil market. And the fact of the matter is, to this day, we still do not have an agreement when it comes to Iran. The president spoke about it yesterday, and he talked about the fact that basically he's going to give Iran 2 or 3 days, maybe Friday, Saturday, Sunday, something maybe early next week, a limited period of time to get to an agreement. I'm reading his quote here, or there's going to potentially be a resumption of strikes.
The headline event a little bit later after the closing bell. Of course, full coverage today of what's going to happen with Nvidia this morning in the pre-market, higher by 1.8%. It's had a great run off the lows from the end of March, up by more than 30%. But this has not been the blockbuster story of the last few months in the chip space. That's been Intel. That's been AMD. The gains elsewhere triple the gain we've seen on Nvidia since the March low.
There has been other names that have just done an amazing job. Intel, you have to think, how much money is the U.S. government actually making right now based off their 10% stake? When it comes to Nvidia, though, I think for this, and you lead a lot of the analyst research on this, it's either going to be a green light for the entire market to maybe rip and the AI trade to continue, or it's going to be a red light for those individuals that said, maybe we're just too overexposed, this trade is just overdone. and maybe potentially that's going to be a huge market signal to the downside.
That stock is up in the pre-market. Futures doing better this morning, higher by 0.4% on the S&P 500, following a 3-day losing run over that period, down about 2 percentage points on the S&P. Coming up this hour, we'll catch up with Keith Lerner of Truist as elevated yields weigh on equities, Catherine Thompson of the Cato Institute as President Trump threatens a big hit on Iran, and Angelo Zeno of CFRA with NVIDIA earnings on deck. We begin this hour with stocks finding a firmer footing following a 3-day losing streak. Keith Lerner of Truist writing rising oil prices and interest rates may finally be starting to stick to what has otherwise been a Teflon market. Keith joins us now for more. Keith, welcome back to the show. It's good to see you, buddy. This market run has been really quite powerful. The rally's been big off the March low. Just walk us through why you think this bull market is still intact.
Yeah, we certainly think the bull market still deserves the benefit of the doubt. That's been our mantra for the last few years. But, early in this month, we talked about this Teflon market. Nothing was bringing it down. We highlighted these risks that we all know about, oil prices and interest rates, which are obviously related, and they have moved up. And, underneath the surface, we've actually seen them bite. Look at retail. The equal-weighted discretionary sector is down about 10% from its highs. Retail sector is down about 10% of the highs. The lowest relative performance since the global financial crisis. So we are seeing things bite, but at the headline index level, it's still about AI. And, obviously we're all waiting for the print today. When you think about why markets have actually been somewhat more resilient relative to these headlines, AI is a common theme for large caps, for small caps, for emerging markets as well. And we think that theme is intact, but also probably likely due for a little bit of a rest here.
Well, Keith, let's build on that. The chip sector makes up about 18% of the S&P 500. We've seen a massive rally off the March low, even with the recent correction in names like Intel, in names like AMD. After the close, we hear from NVIDIA. Higher in the pre-market, had a nice rally itself, but nothing like the gain we've seen elsewhere. Keith, when you look at that sector at the moment, when I speak to the technical strategists, they say this is stretched, it's overdone. Jonathan Krinsky of BTIG is pointing out he thinks you'll get the equal and opposite correction, which means a lot of downside from here for the chip players. What's the more fundamental argument for these names?
Yeah, I'm encouraged by looking at the markets from both a technical and a fundamental perspective, and they're showing somewhat of divergence between the two, because on a 3-year rolling basis, the semiconductors have had the strongest performance since the bubble period. The main difference from the fundamental side is, overall valuations for the semiconductors is around the 25 multiple, about half of what it was in 2000. And then we looked at forward earning estimates since last October. If you recall, October was where the market, or at least the tech sector, had peaked before this recent run. So we've seen this big rise in semiconductors, up over 50, 60%, but the forward earning estimates are up 90%. So it's one of those things where I think if I put that together, I do think on a short-term basis, this area is stretched, due for a rest, but the underlying fundamentals are still there. And I think longer term, if we look out over the next, say, 12 to 24 months, I still think there's upside, but I actually think there will be more of a consolidation. And then lastly, John, just, not that I'm a stock picker per se, but you look at NVIDIA trading at a multiple in the low 20s versus some of those other names that you're talking about, which are up 200% and trading at much higher multiples. So there's also divergence there as well as we talk about the industry.
Keith, one sector that is potentially going to benefit the most from AI is industrials, and you recently downgraded them. Why?
Yeah, we downgraded them last week to neutral, so that's more of a market weight. And there's a couple different factors. I mean, one, going back to the fundamental side, the valuations for a brief period of time went to about a 25 PE. That was higher than actually the tech sector. But the difference is the overall earnings momentum is somewhat weaker for the sector. The tech earnings momentum is much stronger. And then the relative valuations became the highest level that we've seen in more than a decade. So we just saw expectations moved up quite a bit. And it's also a pretty disparate industry. It's not a pure play. I mean, you have defense on one side, you have more the industrial players on the other side. But overall, so again, more neutral. We still longer term, we've kept our longstanding overweight to tech, we're overweight communications, we're overweight energy. Those three sectors, the commonality is they have the strongest upward earnings revisions in the entire market.
Keith, how are you thinking about this market right now, given the fact that the Strait of Hormuz is still closed? We're 8 minutes into the start of the show. We barely talked about this conflict that exists, which is one of the biggest chokeholds in the world.
Yeah, it's pretty amazing. As you all, and I've spoken to experts in the field, I mean, I think if you would have told them that it was still closed by now and where oil prices would be, we would expect oil prices to be a lot higher. But overall, I think it goes back to this AI theme. because again, the higher energy prices is biting. I mentioned the consumer discretionary equal-weighted sector down 10% and the underperformance there. But if you look at the S&P 500, as we all know, it's 50% tech and tech adjacent. Look at small cap, the small cap indices. A lot of people are saying, hey, why are small caps holding up, relatively well in this environment where more geopolitical uncertainty, higher rates, which is not great for debt, but small cap tech up until recently was up over 40% for the year, trouncing large cap tech as well. So I think all in all, it's still definitely a concern. It also suggests we kind of consolidate. But one thing I want to just point out, when we looked at these big surges in markets over a 30-day period, like we've had for the S&P up until recently, where you were up more than 15%. After that, the forward returns over the next month, 3 months, kind of mixed. But as you look over the next 12 months, the markets have been up 14 out of 15 times with double-digit gains. So what does that tell us? That just tells us underlying momentum is a good longer-term sign, but again, maybe more due for a rest after such a big run off the lows.
Keith, let's talk about the bond market challenge just briefly. You've alluded to this, you're not alone. Clearly the equity market has the warm comfort blanket of very powerful earnings. I just wonder how insulated it is from this. If we can bring up the bond board and just look at 2s, 10s and 30s, there has been a reset higher in yields with 2s at 4%, 10s at around 4.60, 30s around 5%, Keith. How insulated is the equity market from this?
Yeah, I think this is where we have to also think about, which equity markets are we talking about? Because, we have, like I said, seen some damage on the consumer side. Materials stocks are down 6 or 7%. Industrials down about 4%. You're seeing international developed markets underperform, quite a bit as well. So you are getting hit. And the more this goes up, obviously, the more potential pain. But then the question I think about, this dominant AI theme, let's say, especially as these companies raise more debt, how much of a difference is it going to make for the AI theme if yields move up 50 basis points? We're going to see a slowdown in spending? Probably not. So I still think ultimately for the headline indices, it comes down to AI and tech. I think the higher yields definitely maybe compress the overall valuations for the market, but it's not a showstopper. I just think it's another reason why to expect more of a churn here near term after this kind of V-shaped recovery.
Hey, Keith, it's good to see you, as always. Thanks for catching up with us. Keith Lerner of Truist on this equity market. Let's talk about this bond market. So inflation very much in the driving seat at the moment off the back of what's happened in the Middle East. In the UK, downside surprise on CPI, enough to unlock this move at the front end of the UK curve. 2-year gilts this morning, yields low by 10 basis points. Across the curve, you're seeing yields come in. The action of fireworks further out along the curve, particularly on the 30-year maturity, and you see that worldwide. I'll go through some of the numbers for you. In the US, the 30-year yield, the highest level since 2007. This week in Germany, the highest level since 2011. In the UK, very close to the highest level since 1998. And in Japan, the highest level on record.
It's basically the entire world realizing that there's potentially going to be fiscal pain down the road. They're going to have to spend a lot more money when it comes to these governments. It's a very interesting moment because this week we're going to get a brand new Fed chair, and he is going to have to contend with that bond board.
Sworn in this coming Friday. Looking forward to it. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Good morning. President Donald Trump threatening Iran with a, quote, big hit if a deal is not reached soon. Trump's comments coming just a day after he claimed to call off another attack. Vice President J.D. Vance striking a more positive tone as well, saying progress is being made towards a deal. Those falling pre-market, the home improvement retailer reporting first quarter earnings that beat analyst estimates. Its fiscal year operating margin, though, fell short. Lowe's CEO Marvin Ellison is saying the company remains focused on a total home strategy in spite of a challenging housing macro environment. Global chip supply may be at risk after talks between Samsung and its largest labor union collapsed. Workers at the world's biggest memory chip maker are planning a work stoppage tomorrow. The Kospi fell on reports of the strike. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. More from Vonnie later on this hour. Up next on the programme, teeing up another big hit on Iran.
They come to the table, they're begging to make a deal. I hope we don't have to do the work, but we may have to give them another big hit.
Up next, we'll catch up with Catherine Thompson of the Cato Institute, live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Coming up in the next few hours, some earnings. These earnings target 6:30 Eastern Time. Later on, TJX at 7:30. A read on retail in America, and after the closing bell, Nvidia after the bell, the headline act a little bit later on this afternoon. Into that, your scores look like this. 3-day losing streak on the S&P over that period, down by about 2% on the benchmark. On the S&P this morning, futures bouncing back by 0.4%. On the Nasdaq, up by 0.7%. Helped out, no doubt, by the fact that Nvidia is positive in the pre-market. Bit of a change in fixed income, some nerves yesterday, settling down just a little bit. 2-year yields down by 3 basis points, 10s down by 3 also, 463.93, and your 30-year coming off the back of the biggest close we've seen, the highest close we've seen on a 30-year yield, going back to 2007, yields down by a single basis point, 516.48. That's the bond market picture. Let's turn to commodities. Crude, Brent down by some 2%, Brent 109, and WTI at around 102. Under surveillance this morning, teeing up another big hit on Iran.
So they called up. They had heard I made the decision. They said, sir, could you give us a couple of more days? I'm saying 2 or 3 days, maybe Friday, Saturday, Sunday, something, maybe early next week. I hope we don't have to do the work, but we may have to give them another big hit.
So here's the latest this morning. President Donald Trump warning of fresh strikes on Iran in the coming days as the White House pushes Tehran to return to the negotiating table. Joining us from Washington, Bloomberg's Tyler Kendall. Hey, Tyler.
Hey, John. Good morning. Well, President Trump says that he will only wait a, quote, limited amount of time for Iran to come to the negotiating table. As you heard, he outlined that could be 2 to 3 days or early next week, in his words, amid reporting that the president has been advised that potentially limited amount of strikes could help pressure Iran to reach a deal. Because at this point, the White House is maintaining that Iranian counter proposals have been insufficient, mainly over a lack of discussion over curbs on the country's nuclear program, though we know other big differences remain, including how Iran insists on full financial relief, payments for war damages, and that it has a role in controlling the Strait of Hormuz going forward. At this point, the White House is making clear that the threat of escalation is firmly on the table, but it's also probably worth mentioning that we heard from Iranian officials earlier this week who vowed to retaliate if the country is ultimately attacked again. At the moment, the White House is keeping up the economic pressure. Instead, yesterday, the Wall Street Journal reported that the U.S. had seized another Iranian-linked sanctioned oil tanker as it ramps up its efforts to crack down on the Iranian shadow fleet. John, Bloomberg News reported yesterday, according to people familiar with the matter, that as the Strait of Hormuz remains closed and the economic impacts compound, NATO is now looking at a potential mission to help secure the waterway if it isn't reopened by July. We should say, while several states have now indicated that they could be in favor of such mission, it doesn't have that unanimous support needed quite yet in order to deploy assets.
So it sounds like potentially NATO is going to come to the rescue in a sense. The president has been putting a lot of pressure on allies for months, Tyler. How soon potentially get some sort of concession from NATO or consensus from all the members to actually go to the Strait of Hormuz, potentially help the U.S. open it up?
Well, Amory, our reporting does indicate that July would be the deadline for these NATO member states to make some sort of decision on whether or not they will deploy assets to the Strait of Hormuz. As you well know, that does align with the annual NATO summit that is happening in Turkey this year. So perhaps that will be where we get a little bit more movement. This, of course, is a significant development since so far member states have been wary at best when it comes to President Trump's demands to help him secure the Strait of Hormuz. In fact, that has led to his threats that he could leave the alliance. Of course, easier said than done. We know that would take congressional approval, which at this point doesn't seem very likely. But it does highlight how the economic impacts have been compounding for these member states as they look to get more oil to the market. It's going to be something to watch because at the end of the day, we know that the White House has maintained that it doesn't need help with securing the strait, but we know that it is something that they would like to see.
Tyler Kendall with the latest in the nation's capital. Tyler, thank you. More from Tyler in the next hour. To build on this conversation, Catherine Thompson of the Cato Institute writing the US is teetering on a knife's edge of not only resumption of hostilities with Iran, but long-term entanglement in both this conflict and the region. Catherine joins us now for more. Catherine, welcome to the programme. Are we running out of options to maintain the status quo?
You know, I think we are. I think we're reaching that point. I don't think we're any closer to a deal than when the president was speaking about a week ago. And I think that, you know, in that time, particularly the foreign powers that are involved in this conversation, you know, on our side of these bilateral engagements, the UAE in particular has taken a more emboldened stance. This puts more foreign interests on our side of the table, where Iran is just contending with largely itself. And I think that this sets up a really dangerous dynamic going into conversations on a deal that now has a deadline of 2 to 3 days.
Well, Catherine, when it comes to this deal, I mean, the Wall Street Journal is reporting, but basically we all know that Iran's position on negotiations hasn't changed at all, as much as the vice president and the president say that they want to make a deal. If their positions haven't changed, is the United States willing to give up some major concessions at the negotiating table, or do you think the president will actually take the strikes?
I mean, I tend to think that given what we've seen from the president so far, that the strikes are very, very much the option that he's going to view as the best lever of pressure. The problem, as was pointed out in the previous segment, is the threat of Iranian retaliation. We know that that's the case. Of course, we know that, you know, the Iranians would plan to retaliate if they're attacked again. But the problem that this poses for the United States, who's in the midst of a munitions crisis, is that Iranian retaliation would likely come on U.S. bases and personnel throughout the rest of the region. That's going to require more of our most exquisite and expensive air defense platforms to support a defense of our own personnel should that retaliation come. And that's something that we can't afford to treat lightly on our side as a strategic consideration.
That's the retaliation. But what do you think the president will target if he's going to resume attacks?
That's hard to say, right? I mean, limited strikes, especially as was sort of outlined in the previous segment, could mean a lot of things. I mean, I don't know if that includes more energy infrastructure. I mean, I don't think it would include, leadership again or anything like that we saw toward the beginning of the war. But so it's hard to tell, like, what could be considered limited to sort of get the Iranians to the table that wouldn't, trigger, again, large scale retaliation that hurts our bases and our personnel in the region.
There seems to be two different negotiations going on, and Jonathan spoke about this earlier this week. There's a negotiations to open up the Strait of Hormuz, and then there's a real nuclear negotiation. When it comes to opening up the Strait of Hormuz, do you think the Trump administration has now convinced allies to come help?
I think that this is a tricky one, as you guys pointed out in the segment prior, right? NATO requires consensus to come to the table and to provide any support for out-of-area operations. The other, sticky point of this situation for the Trump administration is that basically the Trump administration spent the first year in office, berating the Europeans about doing out-of-area operations. They want the Europeans focus on conventional defense and deterrence of the continent, which is absolutely something that is needed to keep, NATO sustainable for the future. But that's in direct conflict with this ask of now NATO putting together an out-of-area operation, an out-of-area mission to go support the U.S. efforts in Iran. That's going to be a really, really heavy lift for consensus. And I think that we're quite far from it. I know we've got some time until the Ankara summit, but I think we're going to have a really hard time convincing some of those holdout NATO countries to come to our aid, because politically it's very, very toxic for them.
Catherine, it's good to see you. Thanks for the input. Catherine Thompson there of the Cato Institute. If it goes on that long, and we're talking about the very back end of this year, NATO involvement's not a choice, it's necessary. And it's not about coming to anyone's aid. It's about getting something done that needs to be done.
It's about going almost to your own aid. But the president has been pushing them, and then remember, they immediately reject it, and he said, well, actually, we don't need your help. But the problem is, the United States would need help, potentially, if they don't want to undertake this alone. But to your point, it's hurting their economies more. It's hurting the European economies and our allies' economies a lot more than, at the moment, the higher oil prices impacting the United States.
There's always something to worry about. The words of Steve Orth, the Federated, yesterday on this programme, if it can't happen, it won't. Which is quite an interesting mantra. If it's that bad that it can't happen, then it won't.
Well, if that's the case, then potentially what we could see is the United States lift sanctions on Iranian crude, which the Iranian press says was part of the negotiating deal until they get to the actual table, which the White House is basically stomping down. Or we could potentially see the United States give concessions, maybe end the blockade in order to try to get the Strait of Hormuz opened.
Everyone's trying to deal with this in their own way. Did you see the headlines coming out of the UK? Pushing maybe some of the grocery stores, the supermarkets, to cap food prices. That's the push right now in places like the UK.
Well, places like the UK are dealing with incredibly difficult moment because they're also dealing with a different energy complex than we are dealing with here in the United States. It's very challenging there when you look at how high petrol prices are.
Crude this morning, Brent down by about 2%. That's an improvement, but still trading near 110 at 109. Equity futures this morning near session highs, up by 0.4%, heading into the big earnings report later on this afternoon when we hear from NVIDIA. Before we get there, though, a couple of retail players in the mix, Target and TJX, worthy of attention. We'll get Target in just a moment. Full coverage of that. And this, up next, we'll catch up with Ines McPhee of Oxford Economics as the AI backlash builds over the weekend and into this week. Some very clumsy comments coming from one particular bank, and we'll talk about that bank in just a moment. From New York City this morning, you're watching Bloomberg TV.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Three-day losing streak on the S&P 500, the longest losing streak since the end of March. This morning, a bit of a bounce. We're up by some third of 1%, up 0.4% on the S&P 500. On the Nasdaq, up by 0.7, down almost 2% over the last 3 days on the S&P. That follows an 18% rally off the lows. Just a bit of context there. The rally has been really, really powerful. The correction, if we can even call it that, has been very, very small over the last 3 days. In the bond market, some major moves we need to talk about. New levels, a 30-year closing at the highest level since 2007. Yields down this morning by a basis point or two, 516.37. Front end of the curve gets interesting. From a political perspective, we're down about 3 basis points on twos. So the yield is trading above the policy rate over at the Federal Reserve, and we've talked about that repeatedly. Could this Fed really hike interest rates? That's difficult to internalise, at least before year-end, and we can spend some time on that. What's interesting about the political dimension going into this swearing-in ceremony on Friday of Kevin Walsh is just the president backing off a little bit from putting pressure from this institution to cut interest rates.
Twice this week, the president did that. Interview at Fortune magazine, he conceded that maybe that the Fed's going to have to look at the figures after the war is concluded, basically giving a nod to the fact that he understands that with higher energy prices, that's going to maybe mean higher inflation. And then this to the Washington Examiner yesterday, quote, "I'm going to let him do what he wants to do. He's a very talented guy. He's going to be fine. He's going to do a good job." That was what the president said when this reporter asked if he thinks Kevin Walsh will deliver a rate cut.
And let's see if he sticks to the script this coming Friday at the White House when those two are standing together. Looking at energy this morning, we're backing away. We're down by 2% on Brent, around 109. WTI around 102. On our radar this morning, results from Nvidia due after the closing bell. The much anticipated earnings set to signal the state of the AI economy, with investors awaiting the company's comments on ramping up chip production and fending off competition. Elsewhere, an important developing story. Samsung workers are set to strike after talks collapsed with its largest union, putting South Korea's economy and the global tech supply chain at risk. The company is the world's top memory chip maker and drives a quarter of the nation's exports. And finally, just dropping across the Bloomberg, Target shares rising in the pre-market, up by 0.5%. The retail giant's first quarter earnings topping estimates, delivering beats on comparable sales and gross margin. Target's forecast also coming in above expectations, calling for growth in net sales in every quarter this year.
So they've been working on a turnaround plan. It does seem to be that it's working. Remember, Jonathan, they had 3 years of weak sales. So this is welcome news. I also wonder how much, when we hear from the executives, maybe we can get an understanding of how much is this about Target's turnaround plan, or is it really also just a resilient U.S. consumer?
The environment versus execution. And I would say for that name, the problem for them hasn't been the environment, it's been execution. So you've got to give them a little bit of credit here. And we talked about this with regards to Walmart as well. Walmart's just executed so well as a company now over a series of years. It's difficult to look at this and say this is all about the backdrop, the environment, the backdrop for the consumer. We've heard about how the consumer feels about this economy. I'd give them a little bit of credit here. Target up by 2% at the pre-market.
Yeah, they're working on this turnaround plan. It actually is working. In the first quarter, they say they saw visits to stores were up 5%. But of course, it's a challenging environment then when you look at where they are in terms of the gap compared to the king, which is Walmart.
That's the economy right here, right now. Let's talk about the future U.S. economy. AI facing a massive week of backlash.
Today, we stand on this edge of another technological transformation. It will touch every profession, every classroom, every hospital. I know what many of you are feeling about that. I can hear you. There is a fear.
University graduates booing commencement speakers across the country when discussing the technology. Now, the Standard Chartered CEO walking back comments after saying AI could replace, quote, lower value human capital. The Oxford Economics CEO, Innes McPhee, pushing back on the negative AI narrative, writing the speed of adoption is critical and it's assumed to be orderly enough for new jobs to be created to absorb those lost. Innes joins us now for more. Innes, good morning. Good to see you.
Good morning.
Let's get into the pushback, the backlash we've got right now. What kind of labour market do you think we need to confront in the next several years?
Well, I think the near-term picture is not one of, mass unemployment and rising layoffs and things. That gets a lot of attention, but I think it's also important to note that if you look at, let's say, the information sector, you're also seeing higher hiring rates as well. So what that tells me is there's a lot of churn in the job market at the moment, but not a big net loss of jobs. So, for a lot of people, it's going to be about what are the skills that are needed to navigate this labour market over the next
What skills do you
months.
think will be needed? And do you think we face the same kind of thing that we had to face with globalisation, except this time it's white-collar workers and not blue-collar?
Well, I think when you look at AI adoption at the moment, what's actually being used at in the surveys, it is things like drafting, it's things like automating relatively simple tasks. And really, I think what will end up happening is that there's more emphasis on, kind of the more critical appraisal, the more insights, those sorts of factors. And that will be what's really critical for people to be able to demonstrate, because AI will be able to help with the sort of more day-to-day tasks.
What about the political economy? This is one area where I see the very far right, the Steve Bannons, and the very far lefts, like Senator Bernie Sanders, actually agree on what these companies should be doing because of the potential job losses they're going to mean for the economy.
Yeah. Well, I think, look, there's no doubt this is a huge structural change for the economy over the next few years. We've not yet seen the big productivity gains, but we are likely to see over the next couple of years, I think, a bit of a shift in that skills mix. And what we would expect is that you end up with, as you lower the prices of some of these tasks, actually demand goes up. It's what's called Stevens paradox. You start to see more demand coming through. But the phasing of these things, as ever with economics, we talk a lot about long and variable lags and things like that. Well, actually, in this context, that's going to be really important, because you're talking about, potentially a couple of years in the labour market where we have to navigate those shifting plates. So I think policy does have to play a role there.
That's political policy, but if we're seeing potentially shifting labour market and it's going to be bumpy, if we have higher unemployment because of AI, could Federal Reserve rate cuts or any central bank rate cuts actually solve that problem?
Well, I don't think it can solve the problem. As ever, monetary policy is going to be one of those things that actually just tries to help mitigate some of the impacts, offset some of them. But I don't think that's what we're seeing at the moment. We're seeing some churn. We eventually will see, AI adoption spread. We'll see the types of tasks that AI can help with sort of move up a little bit the value chain. And that will ultimately, maybe even mean a sort of disinflationary.
Tasks, do you think, to help current workers or tasks to eliminate current workers?
So I think it will be very much labour augmenting. It will help current workers. I think that's the sort of thing that over time you'll see real wage gains because productivity rises.
You sound constructive.
Yeah.
Oh, yeah.
You really do. Yeah, do you get much pushback when you make this pitch?
Well, it does get, some people agree with me and then others violently disagree with me. I think that if you go back a couple of months and we had this kind of AI dystopia narrative really take hold, and this kind of idea that we would end up with, the labour share really falling and that, we're ultimately going to see a fall in demand. But the thing that I say is, name another technology where that has happened. We have not seen historically a technology that has led to kind of lower demand. We obviously see resources moving around the economy, and that can be painful, and there'll be a role for policy within that.
This is a big picture question. What do you think the Industrial Revolution would have looked like in the age of social media? What do you think that would have looked like? Can you imagine what the pushback would have been like to that?
Yeah, well, I think that's one of the issues here, isn't it? That you've got this narrative where, it's possible for really people to focus in on just one lens of it. And I think, what we try to do is step back and have a broader take on, some areas of the economy are going to face real disruption. Others are going to pick up and move in ways that we don't.
Ultimately, as you know, though, there's a sequencing problem. At least up front, all we see is the higher costs and the risks of job loss associated with this technology. What happens next, I don't know. You're constructive, and I hope you're right. But in the near term, we've got a bit of an inflation problem already. Does this big push contribute to it?
It does, but I think in ways that probably people don't really understand. A lot of people focus on the investment side and think, okay, that's pushing up demand. Remember, there's a big import story that's associated with that. So the net impact on the economy, in aggregate terms, is only a few tenths from the big investment boom. Where I think it is having an impact, particularly on the consumer basket, is that the push towards higher memory, higher value-add chips is actually sort of crowding out, particularly in an environment where we're seeing some supply constraints via the Middle East situation. That's where we're crowding out a little bit those lower-end chips, which are, of course, in lots of consumer goods. And we think that's probably going to add, at peak, something like 0.3 to core PCE over the next couple of quarters.
Where have you got inflation peaking? At what number?
So we got 4% for headline PCE and sticking around 3 for a while in the core.
Can you cut with core around 3 if you're Kevin Walsh? Can you make that push?
Well, I think one of the things that he's been very clear on is, you know, the forward look, which I think is right, because remember, monetary policy is not going to affect much today. It's going to affect things in 2 years' time. His big idea, his big theme is that, of course, AI is going to be very disinflationary, and they need to look to that and respond to that. So I think that's the narrative that we'll see. It may wobble at times,
sure,
but I think in the near term we see them just staying pat. There's not much to be gained from cutting right now, just as you're seeing inflation peak.
He might find it difficult to get the rest of the committee on board with that view, looking ahead to the future.
That view might work in years' time, but what we just heard is that short term, it's going to be inflationary pressures, and it's very challenging to communicate that, I think, to give basically an excuse, a reason, whatever you think, to cut interest rates.
Ines, it's good to see you. Thanks for being here. Appreciate it. Thank you, sir. Ines McPhee there of Oxford Economics. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Chinese President Xi Jinping stepping up his calls to end the war in Iran. Xi calling for a comprehensive ceasefire, saying, quote, restarting war is even more unacceptable. The comments coming as Xi hosts Russian President Vladimir Putin in Beijing. Target and Lowe's reporting first quarter earnings that beat Wall Street estimates. The business lead of digital payments company Block telling Lisa Abramowitz the consumer appears strong.
Things seem to be quite resilient right now. We're not seeing any of this stress or consumer sentiment or what's happening with oil prices flow through to actual behavior.
And we'll get more of a sign with earnings from retailers including TJX and Elf Beauty later today. Meta began notifying thousands of staff they're being laid off. The Facebook parent is cutting around 8,000 positions globally in a restructuring aimed, it says, at improving efficiency and cost cutting. That's your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. More from Vonnie in about 30 minutes' time. Up next on the programme, awaiting NVIDIA's earnings test.
NVIDIA will print a good number, but not a great number. They're supply constrained. They're sold out for the year, and once you're sold out, how do you beat expectations?
Up next, we'll catch up with Angelo Zeno of CFRA from New York City. You're watching Bloomberg TV.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel. and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Next up on the earnings front, we get TJX at 7:30 Eastern Time. About 15 minutes ago, we heard from Target. Target better than expected up in the pre-market. We'll stay focused on retail for you throughout this morning. Later on this afternoon, you will hear from Nvidia after the close. That's the headline act. The Federal Reserve minutes will be interesting. 2 p.m. Eastern Time. Remember that dissent, that hawkish dissent to the easing bias in the statement. All complicated stuff. Very vague, this easing bias in the Federal Reserve statement. But regardless, some pushback from FOMC officials. We'll see if we get more pushback in the minutes themselves. Look out for that later on this afternoon. Noteworthy, Bloomberg Intelligence came out with a survey recently on Kevin Warsh entering the Federal Reserve. More dovish than Powell is the headline here. Over half of our survey respondents thought that he would be more dovish than Powell, while just 9% said he would have a more hawkish bent. The survey from Bloomberg Intelligence, noteworthy.
Definitely noteworthy, and obviously that's because of all the rhetoric surrounding Kevin Warsh and his statements, especially when he was, you could say, auditioning for the job. But this president, who certainly wants to see lower interest rates, but as we said earlier today, the president seems to be giving him some breathing room, given the environment we are in, telling the Washington Examiner that, you know, he's going to do the right thing, telling Fortune maybe he has to look at the figures after the war is over. It seems like Kevin Warsh, when it comes to the president's mind, is going to have some time to get his feet wet, and maybe that means we're not going to see an interest rate cut this year.
Here's the direct quote from the president. I'm going to let him do what he wants to do. He's a very talented guy. He's going to be fine. He's going to do a good job. The president of the United States on Kevin Warsh ahead of that swearing-in ceremony later on this week on Friday. If you're just joining us, welcome to the programme. Here's the state of things in financial markets. Equity futures firmer by 0.4% on the S&P, bouncing back from a 3-day losing streak, the longest daily losing streak since the end of March, which just tells you how great things have been on the bullish side over the last month to 6 weeks. On the Nasdaq, we're positive by 0.75% on Nasdaq futures. On the Russell, up by about 0.5%. Let's turn to the bond market. 2s, 10s, 30s. Yields shaping up as follows. Yields on a 30-year at the highest closing level going back to 2007 in yesterday's session. This morning pulling back just 2 basis points, 30s to 516. 2s still elevated around 4.1% on the 2-year, down this morning by some 3 basis points as well. More data through the week, of course, jobless claims coming up tomorrow morning. Quick check on crude, Brent and WTI pulling back a touch. Brent crude down to 108, a break of that level to the downside. We're down by 3%. Tension still building, blockade still in place, and when you speak to people about what's happening over there right now, we are running out of options to maintain the status quo.
That's right, because inventories are starting to be drawn down, and potentially in the next few weeks and months in certain parts of the world, they're going to hit tank bottoms, and then that's it. And then you're going to potentially see higher oil prices. I will say, with the market pulling back a little bit, you do see, it feels like, the bias and inclination of this president to really want to have a negotiation. He doesn't want to resume those strikes because earlier this week he told us that they were planned and he decided to call them off. Secondly, you're seeing reports here and there. Some tankers, like a South Korean tanker earlier this morning, some tankers are able to get through.
Brent Crude at 108. Watch this space. Later on this afternoon, the big one on the earnings front. Under surveillance this morning, awaiting NVIDIA's earnings test.
NVIDIA will print a good number, but not a great number. The stock has been sort of underperforming the sector all year long. I think that will continue. NVIDIA has grown so big and become so dominant that it's hard for it to sort of beat that. They're supply constrained. They're sold out for the year. And once you're sold out, how do you beat expectations?
So here's the latest this morning. Results from NVIDIA due out after the closing bell, offering a fresh read on the durability of the AI boom. Angelo Zeno of CFRA maintaining a strong buy and a 12-month price target of 270, writing, "This reflects our view of NVIDIA's expanding total addressable market, penetration into edge devices and software opportunities." Angelo joins us now for more. Angelo, welcome to the programme. I want to pick up on that line from a bear on this stock, the lone sell. He calls it an underperformer. We'll get into that in just a moment. But this line here, they're sold out for the year. And once you're sold out, how do you beat expectations? Angelo, what's your response to that?
Yeah, I mean, listen, I think, Jensen typically manages expectations extremely well, right? So I do think there is room for upside here. I think when you actually look at the $1 trillion backlog number that he provided back at GTC, expectations in terms of revenue here through the rest of this year and in calendar 27, we think there's actually, with potential upside as they offer, things like Grok and what have you to that pipeline, we actually think there's potentially 10 to 15% upside to the revenue number in calendar 27. Not as much maybe to calendar 26. Is the bar higher? Are the numbers significantly bigger than they have been in the past? Absolutely. But when you look at the valuation of this company, 19 times our 27 estimate, you don't necessarily need to blow the numbers out at this point anymore. What you need to do is to continue to show things being steady in nature. You need to potentially surprise maybe in certain aspects, maybe you announce a major buyback or something along those lines, given the greater cash flow that you're going to have here over the next 2 years. But I don't necessarily think you need to significantly beat street expectations at this point anymore.
Angelo, this was the blockbuster name. The earnings were massive and people were having viewing parties. Remember that over the last few years?
Yeah.
Feels like the buzz has come off this stock just a little bit. And if you look at the underperformance relative to the sector,
or at least the end of next year, CPUs, optics, it will probably even be more supply constrained as we go into 2027.
Okay, I think now the chart is good. ठीक है, visible है chart. I hope so. रिपीट कर देता हूँ. क्रूड नेचुरल गैस तो कुछ नहीं कर रहा है. नेचुरल गैस में मेजर रेजिस्टेंस काफ़ी दूर है. स्मॉलर टाइम फ्रेम पे कोई रेजिस्टेंस भी फॉर्म नहीं हो रहा है. क्रूड ऑयल में काफ़ी देर से कल से साइडवेज ही था. थोड़ा बहुत एक मोमेंटम आया है डाउन साइड पे. सेल किया हुआ तो होल्ड करना. पुल बैक आएगा तो वापस सेल कर सकते हैं इसमें. नीचे डायरेक्टली आएगा तो एक प्लान करेंगे 9500 के अराउंड फ्रेश बाइंग का. वहीं पर एक सपोर्ट है. ऊपर अब ये कंसोलिडेशन मॉर्निंग पे एक रेंज थी. रेंज के नीचे ब्रेकडाउन ऑलरेडी हो चुका है. तो अभी फिलहाल के लिए जब तक प्राइस अब 10,150 के ऊपर जाता नहीं है, रेजिस्टेंस ही बन गया ऊपर का. नीचे एक स्मॉल सा सपोर्ट 9,600 500 के अराउंड है. विल सी इफ प्राइस विल होल्ड दैट लेवल एज वेल. नेचुरल गैस में बाकी कुछ भी नहीं है अभी फिलहाल. परसों नेचुरल गैस की एक्सपायरी भी है, ध्यान रखना. नेचुरल गैस एक्सपायरी ऑन 22 मई ऑप्शन की. ठीक है, एक्सपायरी परसों है, साइडवेज अभी चला गया, ऑलमोस्ट 3 to 4 पॉइंट की रेंज में है नेचुरल गैस। लगता नहीं एक्सपायरी से पहले 330 325 के ऊपर सस्टेन करेगा। रिमूव कर दो, इसका भी कोई फायदा नहीं है। बाकी क्रूड ऑयल कोई बहुत ज़्यादा बेरिश तो नहीं हुआ है, अभी भी रेंज है 9500 से 10200 की अब। निफ्टी के अलावा सेंसेक्स दोनों ही रेंज में फंसे हुए हैं, काफ़ी टाइम हो गया। डेली टाइम फ्रेम पे देखोगे पिछले 6 to 7 वर्किंग सेशन से ऑलमोस्ट रेंज बाउंड ही है मार्केट, कोई डायरेक्शन नहीं पकड़ रहा है ना। क्रूड ऑयल मुझे लग रहा है शायद किसी बड़े इवेंट का इंतजार कर रहे हैं सभी लोग, अदरवाइज अभी तक तो कुछ बड़े मूव हो जाने चाहिए थे। लास्ट 7 डेज से कुछ भी नहीं हुआ है बड़ा मूव। फाइव थर्टी के बाद ही शायद नेचुरल गैस मूव करेगा, मुझे तो कुछ खास लग नहीं रहा करने लायक। रेजिस्टेंस भी काफ़ी दूर है अभी। MCX में तो वॉल्यूम ही नहीं है बिल्कुल भी नेचुरल गैस में।
We've got a small bounce this morning, live from New York City. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg surveillance starts right now. Your price action and scores look like this. Here's your bounce, up by a third of 1%, following 3 days of losses on the S&P 500. On the Nasdaq, up by 0.6. On a Russell, small caps, up by 0.4. In the bond market, new levels to look at. 2s, 10s, 30s. 2s, still north of 4%. 10s, still north of 460, 30, still close to levels we haven't seen since 2007, 516.37. Yields coming in. That's the good news this morning. We're down 3 basis points on 2s, on 10s, down 3 also. On 30s, down by 1 to 2. Your day ahead is looking like this, shaping up as follows. More retail earnings coming up a little bit later on this morning. You'll hear from TJX at 7:30 Eastern Time. That's 30 minutes away after the closing bell. A big report from NVIDIA, the major earnings report of the day ahead.
That's going to be the catalyst for this entire market, as the semiconductor trade obviously has had a bang-buster year, not just NVIDIA, as you've been talking about names like Intel and AMD, but really what we've seen when it comes to NVIDIA is not just beating enough, but beating at such a high level, clearing this high bar. And really for the market, it's going to be either the green light to continue this semiconductor AI trade, or potentially it's going to offer a reason for pause for individuals who have been saying it's getting a little frothy, we've overdone it.
It's had a nice rally off the low, off by something like 30% from the March 30 low that we've all been talking about at the end of March. But it's nothing like the rally we've seen elsewhere on the semi-index. Elsewhere within that index, you've got explosive moves, 3x the size of what we've seen in NVIDIA, in the likes of Intel, in the likes of AMD. That's going to be a story a little bit later. A story for here and now is the retail story. Target doing better in the pre-market, numbers better than expected, going into TJX in 28 minutes time, and had a Walmart a little bit later this week.
Yeah, so shares for Target have been up more than 25% this year, and we've been talking about what does this mean about the resilient health of the U.S. consumer, but you put it well. Actually, this has to do with Target, their turnaround story, and how desperately Target needed it as they're trying to catch up to Walmart. And this earnings report shows that it is working. And everyone is getting a little bit more optimistic between their turnaround plan and actually how much Target has risen, and also what they're doing in terms of just changes at the store. It seems to be working.
Target up in the pre-market by something like 2%. Also later on, we're also going to get Federal Reserve minutes. This is interesting. Bit of hawkish pushback coming from officials as Chairman Powell steps down as the chairman and Kevin Warsh steps in. And it's interesting that the president is just turning down the volume, dialing back the heat just a touch, going into the swearing-in ceremony on Friday with these comments to a reporter. I'm going to let him do what he wants to do. He's a talented guy, very talented. He's going to be fine. He's going to do a good job.
My question would be, is the president going to take this tone as well on Friday? And on Friday, is it just going to be a swearing in, or is he going to have an audience, and is he going to take questions? And then if he's asked a lot of questions about how he feels about interest rates, potentially, could this potentially change and we see a little bit more pressure on the new income?
As I said in the last hour, let's see if he sticks to the script a little bit later this week. Coming up this hour, we'll catch up with Mark Lehman of Citizens Commercial Bank, with stocks looking to snap a 3-day losing streak. Monica Guerra of Morgan Stanley, with President Donald Trump threatening to resume strikes on Iran, and Christian Keller of Barclays on the growing backlash to AI. We begin this hour with stocks edging higher on the heels of NVIDIA's earnings report. Mark Lehman of Citizens Commercial Bank writing, it's not just a company print, it's a real-time read on AI demand and the health of the entire ecosystem. Mark joins us now for more. Mark, welcome to the programme. Let's get the health check. How is the health of the entire ecosystem?
It's definitely healthy, Jonathan. It's headlines every single day. Obviously, we're 3 days from the trial of the century, I guess, and it came and went. But it's still the most important story in the marketplace outside of oil, and we're going to learn a lot today.
Outside of markets, Mark, AI's got a big PR problem. You would have seen the booze over the weekend, the clumsy comments coming from the bank CEO that we've covered extensively in the last 24 hours. You and I have had this conversation. Is that becoming a bigger and bigger issue, and how do they address this?
You know, we did talk about it, and it does not seem to have abated at all. Like you said, it was the bank CEO, it was some graduation speeches. They do have a PR problem, and they've hired the best in the world, and that hasn't actually helped. I think, unfortunately, as my kids would say, it is what it is, in a way. I think there are some issues as it relates to messaging. There are some issues as it relates to what's going on in corporate America. But this freight train is moving as fast as possible, and actually it's accelerating, and it's not going to slow down.
It's the policy story, though, Mark, on the horizon, and maybe I'm thinking a little bit too further out, a year, 2 years into 2028 and the next general, if the public are booing and they're pushing back and they can't get the message on track, I just wonder when the policy story starts to become a stock market problem.
Well, I analogized it to what happened 4 and 8 and 10 years ago when we had Mark raise his hand in front of Congress and all the internet people raise their hands in front of Congress and beg them to regulate them. And I remember watching Orrin Hatch and other people talk about the internet as if they didn't understand it. And unfortunately, I think we're going to see deja vu all over again, and that we don't have Congress really understanding what is actually going on every single day in corporate America. And you're right, the messaging in the general is going to be really, really important. But think about that 2 years from now, 2.5 years from now, in the big election in 2028. We do have one, obviously, in the fall. What's going to happen in the next 2.5 years is going to be, we're going to look back and say, oh my God, we knew this was coming, but it's actually more than we even thought then.
Well, Mark,
so that's what's going to happen.
Forget regulation. What about just a massive tax on these companies? What's the impact of that on the stock market?
I don't see it. I think there's going to be local jurisdictions that obviously make some big moves on that. We saw it overseas in Europe, if you remember what they did with Google and some other things. We saw that in the EU. I just don't see that here in the States. I think it's a big messaging issue. I think it's a big issue as it relates to corporate America, but I just don't see the wherewithal for Congress and the federal government getting involved.
John mentioned the Standard Chartered CEO, very clumsy language, talking about AI and displacement of employees and basically to just use AI instead. How do you talk about it?
Yeah, I don't see it as just wholesale displacement of employees. What we're seeing is the empowerment of employees, and we're seeing the ability for people to just do more with the kind of tools that we're creating. Citizens, we have this reimagine the bank here, and we're showing use cases that are very, very powerful for people. I think it does question how many people you're going to need to do that. But I remember when I started on Wall Street a long time ago, I was the first person to get a BlackBerry. I was the first person to get email broadly. And it sounds so archaic right now. But boy, I taught a lot of people back then what it was like and what power it was and how to not be afraid of it. And I think we're seeing that here at Citizens. So this, oh my God, everyone's going to be home using AI for their career. I just don't see it. I see the empowerment more than I see the problems as it relates to total wholesale changes in employment.
Well, Mark, that's the important distinction, empowerment or replacement. The BlackBerry was to help you. It was to empower you. It wasn't to replace you. And when we talk about agentic AI, typically we're talking about replacement and not empowerment. Are we getting it wrong?
Well, I think, as I always say, always and never are rarely true. I think everybody being replaced because of agentic, I think, is unlikely. I think that empowerment is really important. And you're right, Jonathan. The BlackBerry seems so archaic and novel, but back then it didn't. I will also say for the power of some of our young staff members and some of the people who really understand the power of this to really make important strides within our company and all companies around and show the power of it as opposed to the fear is really as important as anything.
I'm old school. I wish we never had the day where we started taking our work home with us, but that's another problem. Mike, let's talk about the opportunity. NVIDIA reporting after the closing bell. I've mentioned this a few times in the last hour. This used to be the blockbuster earnings report. Still is to some extent. Largest company on the planet, of course, but it's lost some of its glitter, I think, over the last month or so, because within the rally in chips, the explosive moves have been elsewhere, Mark. What do you think's changing?
I think it is still the most important company in the world. It shows because it really does power. It's the fuel for the AI and fuel for corporate America right now. I think part of it is just the bigger they are a little bit is sort of the messaging here. You've talked a little bit about the broadening of the chip market and what Intel and AMD have done. As it relates to Intel, the stock may have doubled in the last few months, but it's still relative to that market cap. That's a one-day move in NVIDIA. So I'm a little less worried that move is a NVIDIA underperforming. I do think it's the most important company. The bigger story, I think, Jonathan, is what's going on with the big AI companies and the share that's going on, the jockeying between Anthropic, OpenAI, and the others. There's plenty of market cap and there's plenty of investment still going on. That, to me, is still the biggest story, and NVIDIA is going to power all of them.
Follow the talent, Mark. I'm following the talent, and they seem to be going to one, not the other. What's gone wrong at OpenAI?
Well, I think like a lot of success stories, I think big management issues internally. Obviously, there's been some stories that we've all read about what's gone on inside of OpenAI. Anthropic has been really mighty in the last few months. They did, I think, in terms of PR and in terms of their quality of their chips. I'm sorry, their quality of their offering. They seem to have won. We saw that with the Iran war and some of the inner fighting that happened with the federal government. That news certainly has seemed to die down. Anthropic's done an incredible job, obviously, over the last year of their story, of their success, of their offering. It's second to none right now. I won't count OpenAI out by any stretch. It's an enormous market. There's too many winners that we can mention right here. But yes, things are every single day we hear a different story. But Anthropic has definitely carried the last few months.
Mark, it's good to see you. Thanks for dropping by and catching up with us. Thank you, sir. Mark Lehman there of Citizens Commercial Bank, heading into this earnings report later on after the close. Let's give an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. The European Union finalising the text of its long-delayed US trade deal after months of negotiations. The EU clearing a major hurdle to ratify the pact before President Donald Trump's threatened deadline to impose higher tariffs on autos July 4th. The World Health Organization convening a meeting of its emergency committee as it searches for vaccines to contain the widening Ebola outbreak. More than 500 suspected cases and 131 deaths have been reported in eastern Congo, while Uganda has confirmed 2 cases and 1 death. And Goldman Sachs is taking the lead role in the SpaceX IPO. Sources telling us here at Bloomberg. Morgan Stanley also listed as a lead bank. Elon Musk's company is seeking a valuation of more than $2 trillion. The filing is expected to be made public as soon as this afternoon. And that is your Bloomberg Brief. John.
Vonnie, thank you. It's a topic we've covered so many times. It's crazy how big these companies have got in private markets, and they're not alone. This has been a story of the last decade.
Massive, and everyone is excited to read this IPO prospectus. Potentially, we're going to get that today.
They're not alone. SpaceX and then maybe Anthropic, OpenAI, all in the mix over the next 12 months, the remainder of this year. Up next on the programme, threatening fresh strikes on Iran.
They come to the table, they're begging to make a deal. I hope we don't have to do the war, but we may have to give them another big hit.
Up next, we'll catch up with Monica Guerra of Morgan Stanley Wealth Management, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
We've had a three-day losing run. We're looking to unwind some of that going into earnings from Nvidia later on this afternoon. Equity futures bouncing back by about 1/3 on the S&P, and the Nasdaq up by 0.6, on the Russell up by 0.4. If you turn to fixed income, we'll start with Treasuries. Yields closing at the highest levels since 2007 at the very long end of the curve. 30s this morning down 2 basis points, 516.40 on 30s at the moment. I want to turn to the UK, where you see a big rally at the front end of the curve. The 2-year down by some 10 basis points. Earlier on this morning, inflation lower than expected in the United Kingdom, but they have still got a price problem, and the government's attempting to respond to that. So Keir Starmer, the British Prime Minister, noting just moments ago that they will be extending the fuel duty freeze due to the conflict in the Middle East.
It's still very expensive, though, even stopping that hike for when it comes to petrol prices. It's still incredibly challenging. I sent Guy Johnson a message asking how much is it right now. I remember when I lived there, it was more expensive in the United States, but actually how much is it right now? He says it's about 158p a liter. 50% of that is tax. He said in your language, $7.48 would be the price in the United States. So that would be the highest state gasoline we would see in the United States, higher than California.
A massive chunk of that is taxes.
How?
A massive chunk. And all we're talking about here is freezing an increase in the taxes. That's very, very different to just cutting the taxes.
And the conversation in the United States is we're going to cut the tax, not we're not going to extend it higher. The United Kingdom was actually, even at these current prices, we're planning to hike taxes more. This is why they have an incredibly difficult political problem.
That's the latest in the UK. Future stateside positive by about 1/3%. I want to turn to crude just briefly. Brent and WTI. Brent looking like this, still around 110 at the moment. Let's call it 108.60 at the moment this morning. We're down by about 2.4%. Under surveillance this morning, threatening fresh strikes on Iran.
So they called up. They had heard I made the decision. They said, sir, could you give us a couple of more days? I'm saying 2 or 3 days, maybe Friday, Saturday, Sunday, something, maybe early next week. I hope we don't have to do the war, but we may have to give them another big hit.
So here's the latest this morning. President Donald Trump warning of a return to hostilities in Iran, while Senate Republicans are signaling unease about continuing the war. Tyler Kendall has the latest. Hey, Tyler.
Hey, John. Well, last night we saw the Republican-led Senate advance a war powers resolution in a key procedural vote, marking the first time that this has happened amid a dozen or so attempts since the conflict began. Republican Senator Bill Cassidy of Louisiana was the latest Republican to cross party lines, vote with 3 other Republicans who had been in favor of this measure. Maybe not so surprising, since he just lost his primary election over the weekend after failing to secure President Trump's endorsement. We should say that this is largely symbolic. It's unclear if it will pass the full Senate, then it would need to pass the House, then it would end up on President Trump's desk, where he would very likely veto it, though it does mark a clear eroding of support when it comes to the conflict in Iran, as President Trump weighs additional military action. Just yesterday, he said that he will give Iran, quote, a limited amount of time to come to the negotiating table, amid reports that the president has been advised recently that a limited amount of strikes could pressure Iran to make a deal. We should mention that earlier this week, Iranian officials did say that they will harshly retaliate if the U.S. attacks again. But so far at this point, the White House has maintained that Iran's latest counter-proposals have been insufficient, mainly over a lack of discussion when it comes to potential curbs on the country's nuclear program. But, John, we know other differences still remain, including at least publicly, such as Iran's insistence on full financial relief, payments for war damages, and also that the country retain control over the Strait of Hormuz.
Tyler Kendall with the latest in the nation's capital. Tyler, thank you. Let's build on some of this. Monica Guerra of Morgan Stanley writing the following. The impact of the strait closure is showing up in economic data. It's likely to influence the midterm elections. Trump needs to find some off-ramps. Monica joins us now for more. Monica, welcome in. Good to see you.
Thanks for having me.
Good morning. Let's talk about the pressure here and start with the problem. Have we got an inflation problem in this country?
Yes, I would say so. You know, the latest print right at 3.8%. That is notable. We've been talking about inflation coming for such a long time now. It started with tariffs, didn't really show up. And then now with oil, that's the thing to tip us over the edge.
And look at how places like the UK are looking to remedy some of this. maybe they're not going to put up taxes. Great. People need more than that. What kind of remedies will exist in the US ahead of those midterms?
And there's a limited playbook that they have. They could do, a federal tax, freeze or pause. They could cut. But that only comes in at about a less than 20% savings, right, on the actual price. So when you do something like that, you want to have a big impact, and you want to do it right before the election. So doing it now isn't the time. It has a very short window. You could also start doing some, adjustments to the SPR, the Strategic Petroleum Reserve. You could actually, release more supply. But again, that also has a finite window where there's about a month or two where you get that relief, and then your oil prices go back up. So when they take those measures, you essentially have to time it with the election.
Will Democrats vote for that, given the fact that this is going to hurt Republicans, higher gasoline prices?
I mean, as far as Democrats, voting for it, this is what's interesting about that is that they're looking to also get ahead on the affordability narrative. So that's what they have to balance. How challenging does this get in the next CPI print? What does that look like? So we have to look at the forward impact, because you wouldn't get implementation until a September or October time period. So there's still time. If it gets worse, then you get Democrats, I think, to the table.
Do you think all of this potentially is going to push the president to make different decisions in Iran than he otherwise would have, looking at dealing with the regime?
I think at this stage, you're looking at a very hemmed-in administration, meaning that the choices are limited, and it doesn't matter at this point how drastic inflation becomes over the long run, because you're dealing with the same issue. We don't have a clear plan for exit, and any plan that we have is going to take additional defense spending, right? Defense investment in infrastructure in order to keep the strait open. So that is a given. And so for us, it's how quickly can they put those resources to work, and how can we work with our neighbors? And that's where the NATO piece comes in.
You can see how difficult they're finding it to maintain the status quo here. Obviously, they want the pressure on Iran. They want them to breach storage capacity, for that oil industry to have massive problems. But this is why we're seeing waivers here, waivers there, just to keep energy moving, to get it to where it needs to go, and it's getting harder and harder to maintain the status quo.
Yeah, the Treasury Secretary, basically, when he came in as the new Treasury Secretary, remember how much he talked about on this program that the Europeans are the ones that also need to help when it comes to sanctions on Russian crude, yet it's this Treasury Department that is extending a waiver for another 30 days for individuals to continue to buy Russian oil.
Monica, I wanted to talk about the Federal Reserve with you, if we can sort of carve out some time to do that. There's a swearing-in ceremony taking place on Friday with Kevin Walsh and the President. It's notable, Anne-Marie's talked about this the past few days, that it just appears the President's turning down the heat just a little bit on the institution as his guy walks in. What are you expecting from Kevin Walsh? What are you and the team looking for?
Well, for us, we think that he's going to continue to fulfill obligation just in the same way that, Powell would, maybe with different language. And I think that that's the important thing. I'm not our, Fed rate strategist, so I won't get into all the details. But as far as we're concerned, we think that we're going to continue to see normal operations, and that the big focus right now is going to be on the labor market. Does inflation actually cause weakness in the consumer? Then you get maybe an opportunity for Walsh to act. And that's where you could see those cuts in 2027. So still a longer lead up to that, but we don't think there's going to be a huge, reshaking of the House right away, and that the temperature is going to die down so that the new chair can get settled, get a grasp on the current state of affairs, and then follow the data, follow the labor market as to the next steps.
But ultimately, do you think he's a hawk or a dove?
At this stage, we think that he's in I don't want to say if he's a hawk or a dove, okay? Let me just address that directly.
It's only because what we've heard from him, we've heard both Kevin Warshes. We've heard a hawk of years ago and a dove when he was auditioning.
But this is what's so interesting about it, is that you have the political pressure, right, and the desire to fulfill the president's mandate, right, and goal of having lower interest rate, but also keeping the entire monetary system on track. And so those two things sometimes are in competition. So if you can find a way to do that and satisfy, both masters, then you have a really successful outcome. And I think that that's what he's looking for. He's looking for those opportunities to not let things get too hot, right, while still being able to fulfill the president's agenda.
I think we all wish him the best of luck. Monica, it's good to see you. Thank you.
Good to see you too.
Monica Guerra of Morgan Stanley Wealth Management, going into that swearing-in ceremony later on this week. That will take place on Friday between Kevin Walsh and the President of the United States. A lot of pressure on that institution at the moment. He wants to reform it. He wants to make some changes. I think a lot of people who follow that institution think those changes should be made, but the optics are going to be really difficult because some of the reforms, some of the changes, for instance, let's say PCE is not the right index for us anymore. We want to change that. OK, that is just going to look like he wants to change it because he wants to cut interest rates to please the person in the White House, even if that might not be the case.
Exactly. It's going to look like you're changing the goalpost just so you can get to the outcome that you want, because maybe there's been undue pressure on you to actually get this job. I will say, though, the Treasury Secretary has one point talked about maybe actually we should be targeting an inflation range, but said you cannot do that until you hit your 2% target, because this idea, you can't be changing the goalpost mid-game.
The good news this morning, yields pulling back by 2 or 3 basis points, back down to about 464 on 10s. Coming up next on the programme, we'll catch up with Christian Keller of Barclays on the growing backlash to AI across this nation. Live from New York City this morning. Good morning. You're watching Bloomberg TV.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
A better picture so far this morning, up by a third of 1% on the S&P 500. The S&P advancing by a third following a three-day losing streak. On the S&P 500, the longest such losing streak going back to the end of March. Of course, over that period, only down by 2% compared to a much, much bigger rally over the last 6 to 8 weeks. On the Nasdaq, up by 0.7. The main event a little bit later. Nvidia after the closing bell. Before we get there, earnings from retailers across this country reporting, including Target in the pre-market, high by 1.4%. Better numbers from them a little bit earlier on this morning. We'll get numbers from TJX in just a moment. We'll bring those headlines to you. I want to turn to the bond market. Let's just sit on this for a moment. 2s, 10s and 30s, and we'll start with the long end of the curve. And then we'll talk about the relationship between the front end and the long end. The long end of the curve yesterday, the highest closing level we've seen on a 30-year yield going back to 2007. We're seeing this worldwide. Germany, the highest level since 2011. More recently, in the last few weeks, the UK, the highest close since 1998. In Japan, the highest level on record. Lots of reasons for it. The energy shock driving inflation expectations. It's highlighting limited fiscal space in certain places, exposing leadership issues in others, the UK being one. They're not alone, of course, and increasing a lot of uncertainty about the outlook for interest rates. And it's the outlook for interest rates I want to spend some time on, and what the 2-year and Fed policy might mean further out along the curve, beyond 2s, out to 30s, and whether we could see a gap open up between the policy rate of the Federal Reserve and the very long end of the curve. So let me go back to that Bloomberg Intelligence survey and what we might expect from Kevin Walsh. This is their takeaway. Over half of our survey respondents think that he will be more dovish than Chairman Powell, while just 9% said he would have a more hawkish bent. In addition to that, in this survey, they also expect a steeper curve. For Kevin Walsh to drive a steeper curve. And the bear steepener is the most widely held steepener view. So what does that mean? That means you get a sell-off driven by the long end of the curve. Why? Because if you get Kevin Walsh, who's excessively dovish and attempts to force rate cuts when we don't need them, that dovish policy mistake could be seen with higher yields at the back end of the curve. I'm not saying that's happening right now. I'm just saying that's something to watch in the months to come.
What's so interesting about this Bloomberg Intelligence survey is that actually it's contrary to what we've seen in terms of market expectations. What we've seen is a lot of market expectations change direction, where the market is now pricing in potentially a hike at the end of this year, even though some analysts still have cuts priced in. What we've been seeing in terms of the inflation picture, because of higher fuel prices as well, a big key driver of that, individuals now saying he might have to hike, even though people think, well, no, we heard him be a little bit dovish in audition process. They think he's going to go in a dove. The president seems to be giving him room, I think, to do nothing for the rest of the year.
This bond market's looking for an anchor. And of course, if we address this, and this being crude, maybe we can make some improvements to this picture. Right now, crude is lower by 2%. We're down to about 109 on Brent. WTI around 102. The blockade continues. The status quo has its own problems, and we're running out of options to maintain that status quo. That seems to be the takeaway from our program so far this morning.
Absolutely. When it comes to the crude picture, though, you are seeing stories that could potentially mean a little bit softer in terms of prices. One, you have like a South Korean tanker trying to go through the strait. If that gets through, that would be a very good sign. You have a report from Bloomberg yesterday, our colleagues, talking about the fact that NATO, if the war continues by July, are willing to potentially, if they're able to get unanimous consensus, willing potentially to go help the United States force the strait open. And then what are you seeing from OFAC and the Treasury Department? Anywhere they can find barrels, they're willing to keep them on when it comes to supply.
Brent crude 109 this morning, and down by a little more than 2%. That's the price action cross asset. Let's get you some news on our radar this morning. Target, Lowe's and TJX all reporting earnings. Target rising after posting its best sales results in some 4 years, while TJX also higher on stronger than expected guidance. Lowe's, on the other hand, facing pressure after failing to raise its outlook, citing housing market challenges. Elsewhere, Vice President J.D. Vance defending President Trump, saying he does not make his own stock moves.
The president doesn't sit at the Oval Office on his computer on his Robinhood account buying and selling stocks. That's absurd. He's not making these stock trades himself.
Vance adding that he and President Trump are both supporters of banning members of Congress from trading stocks. And finally, President Donald Trump threatening to resume strikes on Iran in a push for a deal to end the war.
They come to the table, they're begging to make a deal, because they're begging to make a deal. I hope we don't have to do the war, but we may have to give them another big hit. We may have to give them another big hit. I'm not sure yet.
The president warning attacks could come in the next 2 to 3 days.
So he gave a timeline, 2 to 3 days, maybe Friday, Saturday, Sunday, something maybe early next week, a limited period of time. That's the window the president is basically giving the Iranians. You heard J.D. Vance, the vice president, in the briefing room yesterday say they want to make a deal as well, reiterating what the president said. But then you have reporting from the Wall Street Journal and just obvious reporting coming out of Iran state media is that the position negotiations in the U.S. hasn't changed. And right now, you brought this great point up throughout the week. There's really two parallel conversations happening. One, the United States is having with its partners and the regime to just try to open up the Strait of Hormuz. Then the second is a long-term negotiation when it comes to nuclear.
Was that a news conference on a building site yesterday?
Yeah.
Is that what that was?
It was a news conference.
A briefing of reporters around the ballroom.
He wanted to show off the ballroom, so in front of the construction site. Also brought in photos. I believe he also told the chef at the White House to have breakfast available. I think like bacon, egg, and cheese sandwiches. Yeah, I saw photos of that. Not sure who took them, but I saw photos of that. And then, of course, once the president is done, any questions, he always takes questions, and then it becomes about anything the reporters want to ask.
The food looked pretty good. I'll put it that way. I saw some of the pictures. Let's talk about a big story developing in this country. Let's turn to tech. The backlash building against the rise of AI.
The rise of artificial intelligence is the next industrial revolution.
Today, we stand on this edge of another technological transformation. I know what many of you are feeling about that. I can hear you. There is a fear.
College graduates booing commencement speeches embracing artificial intelligence. The Standard Chartered CEO, Bill Winters, looking to explain after saying the technology could replace, quote, lower value human capital. Christian Keller of Barclays remaining positive, writing the anxiety about machines replacing human workers has not played out. Despite the dramatic rise of automation, there has been no dramatic rise in unemployment. Christian joins us now for more. Christian, let's get into this. It's an important conversation. Do you think there's a big gap opening up between the narrative and the data?
Well, I think if we look at history, and you know, these are not entirely new developments. When we had big technologies, there's always the fear that would create a lot of unemployment. If you look at it over the past 80 years or so that we have data, you know, it just never played out. You know, it's, first of all, new technology automates, so it replaces jobs, but it also augments, and that often makes people more productive, and new jobs are being created. That is the story that we can document. You know, if you look at the occupation that we have now, since the 50s, every year there were new occupations people couldn't even think of beforehand. So that's why, at least in the immediate future, or even the midterm, until we get to that, maybe, you know, that singularity space where machines do everything, I think that is an overblown fear of mass unemployment from AI.
Christian, luckily you're at Barclays. If you're at Standard Chartered, we might be having a different conversation. Venkat would never use the kind of words that we used in the last 24 hours, but it's kind of awkward. These CEOs seem to be finding it really difficult to talk about this technology and how it will improve lives and not just replace jobs. Christian, what's the best approach, do you think, going forward to talk about what you think is on the horizon?
I think, first of all, it is about, you know, productivity increases. And that is what the market is betting on as well. And so far, if you look at research, a very, very large variation of forecasts. You know, there are some, including Nobel Prize laureates, say this is going to be negligible, 0.1 percentage point in labor productivity each year. There are other studies who are saying 3.5. So the question is, what is more likely? And what we've done recently is we looked at an additional angle. From just the AI, you know, that is being discussed right now, mainly digital, you know, a large language model. And what we are seeing is now that we are having, you know, physical AI, humanoid robotics. And we think that addition, that combination of the two, will make a huge difference because it increases the tasks that can be automated. And, you know, bear with me, you may think, well, that means more pressure on labor markets, but it also means that the productivity gains could be much higher. And we think that is a positive thing.
In your note, I want to pose this question to you. You say, is it hasta la vista moment for human workers? At some point, though, will we see firms have just a smaller footprint when it comes to employees?
Certain firms, yes. And in certain occupations, it will go down. But as I said, it's really about the new jobs that may be created that may happen from this. Think about it, the jobs we have today. Many of them, if you'd ask our grandparents, they couldn't have imagined, that you would have these type of jobs that we have today. So I think that is in a way what typically is missed in the debate. And that is really it. And if you have an expansion of the production frontier, it's hard to think that that's a negative thing. Now, I do believe that the tendency towards the income of an economy going towards capital rather than labor, that probably could increase. I mean, there's a lot of evidence for this. You could even have wages rise, but rise less than the overall economy grows. That means like the share that labor takes home versus the share that capital takes home can go down further. There are some issues with that. I think, about distributive policies, etc., taxing capital income. We're not there yet, but those can be solved. The underlying message is you increase the pie. And that, in principle, is a good thing for humans in general.
Yeah, Christian, that's what I wanted to pick up on. And I'm pleased you went there because we've been confronting those forces now for decades. The shift of income away from labour to capital. Can you walk us through, you just kind of touched on it just briefly, the kind of policy response you would anticipate as those forces pick up, if they pick up, in the next decade?
I think what you would see is, I think it's quite straightforward that ultimately if you say, look, capital is taking an increasing share of what the economy creates as income, you would have to tax that rather than labor. We have still systems across the Western world really that are very skewed towards taxing labor income. And that makes less and less sense if you have a world where, first of all, also many people, can benefit from it. I think what's important is that the capital income doesn't accrue only to very, very few people, but that is widespread. Then even people who may be seeing their labor income decrease, as long as they participate in the capital income improvements, that would then still be a net positive, even for those who are not maybe at the very top of that chain of where income goes.
Christian, what do you suppose that would mean for capitalism? Would that be a world with a bigger government, more services, more universal basic income? How do you see that playing out?
Look, there's always the end state, right? Where do you get at the final stage? And as I said, there's a lot of room to go. Where how far, not only AI, but also what we are particularly talking about in our study, humanoid robotics, how far they go and which stages they come. I believe in the short run that doesn't necessarily mean bigger government, but it means changing our taxation system. I think that seems very clear that you need to modernize it to a world where it's no longer labor is the main source of income.
Christian, thoughtful stuff, and forgive me for getting to the end of history several decades down the road. This was fun. Thank you, sir. Christian Keller there of Barclays on a new important note from them. Their research has been fantastic on the future of the labour force with this technology.
That ending point, though, and what this means for the political sphere is very interesting because this is going to be top of mind and into the midterm elections this year, but also really, as you mentioned earlier, for 2028. Bernie Sanders last year put out a note talking about how it means AI and all of this could mean 100 million job losses in the United States over the next decade. He wants a robot tax, and you're not just seeing it from him. It's also individuals on the right as well. This is one area of agreement.
Futures this morning up by a third of 1% on the S&P 500 with an update on stories worldwide with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The UK government set to delay a planned hike on motor fuel taxes that was due to take effect in September. Prime Minister Keir Starmer says he is extending the freeze through the end of the year after a surge in costs since the Iran war. It's one of the most highly anticipated financing deals of the year. Sources telling us here at Bloomberg, banks are preparing to sell $49 billion worth of debt to back Paramount's takeover of Warner Brothers Discovery. In sports, the Knicks off to a strong start in the Eastern Conference Finals after storming back to win Game 1. They were down 22 points in the fourth quarter before locking down defensively and coming back to force overtime. Jalen Brunson led all scorers with 38 points. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you very much. 22 points, 8 minutes on the clock. Looks done and dusted. You know, if I was there, and this is bad, I know, I go to bed very early, so forgive me. If I was there, I would have left. I would have walked out of MSG and that would have been a massive mistake.
I actually went to a Knicks game recently, and I left early because of the shift we have getting up. And thankfully, they were winning, and they were up, and it wasn't a big deal. But I would have totally regretted that. 7 minutes, 40 seconds on the clock, and you're down by 22 points, and you still win. Absolutely unbelievable. You know, I woke up in the middle of the night, and I checked the score, and we were losing, and I was just really upset. But then I woke up for good. Then I watched the whole fourth quarter on the way into work.
Crazy turnaround. Just unbelievable game. Up next on the programme, persistent consumer resilience.
Things seem to be quite resilient right now. We're not seeing any of this stress or consumer sentiment or what's happening with oil prices flow through to actual behavior.
Up next, we'll catch up with Jen Bartashis of Bloomberg Intelligence on the latest earnings this morning. Target out earlier and TJX too. Those two names in focus going into Walmart numbers later this week.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
We're doing better this morning, up by 1/3% on the S&P 500, higher by 0.6 on the Nasdaq, on the Russell, up by 0.5. Retail earnings from TJX, from Target have been good so far. We'll spend some time on that in just a moment. If you turn to the bond mod, we've had some real headwinds growing in the global bond market. 10-year yields up in 6 of the last 7 full trading days. Over that period, higher by around 25 basis points. We caught up with Barclays just yesterday, Ajay Rajadaksha, who said this: with debt rising faster than growth, worsening inflation profiles, no political will for fiscal reform, there is little reason to reach for the long end. He did not like this bond market at all.
Absolutely not. They don't want to touch it. And Barclays is even, some of their analysts are fearing that we can get to 5.5% on the 30-year potentially if this environment continues. A lot of this has to do with not just what's going on in the fiscal space already, where some of these governments are spending too much over the course of the years. What is happening right now when it comes to oil? How long can we live with 110 basically holding on to Brent? The fact of the matter is, maybe not that much longer when you think of NATO saying by July, we might have to also do something and go help the United States in the Strait of Hormuz because their economies are feeling it the worst.
Just on the bond market, that's Ajay's point. At this price, it doesn't get it done. He wants a yield closer to 5%, and right now we're around 464. And at times at the long end of the curve, particularly in places like Japan, the UK, it has just really felt unhinged. It feels like a bond market without an anchor. Will this be the anchor? Need a much bigger move than this. We're down 2% on Brent and on WTI this morning. Brent at 109, WTI around 102. Consumer squeeze continues. Response at the political level continues to build. It ain't enough. The pressure in the UK is the one to watch. They're freezing a fuel tax hike. They're also considering pushing supermarkets and grocery chains to cap food prices, which anyone who's closely followed economics and the history of economics knows that's not always a great idea.
Not always a great idea. And we saw that play out, remember, in the mayor race in New York, basically giving the current mayor, Mamdani, a little bit of a lesson on economics on how that actually does not work when you cap food prices. What I'm astonished with the United Kingdom, after Guy Johnson told me where petrol prices are right now, would mean north of $7 a gallon in the United States. How are they even considering the hike in September in the first place?
Let's talk about some of those retailers and the consumer squeeze. Under surveillance this morning, persistent consumer resilience.
Things seem to be quite resilient right now. Like we have seen an increase in spending at gas stations, but consumers seem to have absorbed that, and so we're not seeing any of this stress or consumer sentiment or what's happening with oil prices flow through to actual behavior. Despite some of the stresses and the headlines that you might read, things look pretty good.
So here's the latest this morning. Retail earnings ramping up with Target today. The retailer rising after posting its best comparable sales growth in 4 years. Jen Bartashis of Bloomberg Intelligence joins us now for more. Jen, welcome to the programme. We can talk about the backdrop, the consumer squeeze, the environment, Walmart on the horizon. Can we just spend some time on the turnaround at Target and execution? What do you think they're doing right at the moment?
Well, it really comes from a lot of investment that they've made in supply chain and efficiencies. And so when you think about it, although that's kind of the back end of the business, what it translates into is having the right things in the stores at the right times with shelves full. And that makes it easier for them to then run promotions and advertise and bring people back into the stores. And so I think a lot of the tactics that they've employed are turning out to drive some traffic growth, drive that improved result. But it's really stemming from those organizational and procedural changes that they're making at the heart of the organization.
What else do they need to do to catch up with competitors like Walmart?
Well, I think one of the things that happened with Target is, they need to stay true to who Target is. And so I think it's a dangerous path to try to chase Walmart and best Walmart at what Walmart does well. Instead, I think Target needs to get back to that sense of what is it that consumers really love about Target, or Target as people used to be excited about, and focus on those areas and building their brand with the people that care about those products. And that's the direction that we see the management team taking, which is pretty encouraging.
I love that you say that, because that's what me and my cousins used to call it growing up. But they had a fun makeup section and all this exciting stuff in the health wellness space. We used to call it Target. Is that what they're leaning into right now? Is that where they're seeing sales increase?
Well, a lot of their sales are coming from household essentials and from food, which is really not surprising considering that people have sort of retreated to those essentials. But areas that have sparked some growth lately, they've always been strong in beauty. Apparel sales are improving. Hard lines, which is some of the home decor type of items, those sales are improving. And those are the things that are at the core of Target Essence. And so we're seeing that slowly turn. And again, that's helping support the results that we saw today.
Jen, you've seen Target, you've seen TJX. We get Walmart tomorrow. What are you expecting now?
For Walmart, they have been on a roll. They have been consistently pulling in more consumers into their ecosphere and holding them and capturing a greater share of their wallet and spending. The current backdrop is just very conducive for anybody playing in the value space. That includes TJX this morning. That includes Target. That includes Walmart. To continue to have the opportunity to gain share of wallet. And so, there's no reason to think that Walmart isn't also benefiting from those macro trends. We're expecting to see, consistent growth from Walmart that we've seen in recent quarters.
They're having a good year, that's for sure. Jen, it's good to see you. Jen Bartash there of Bloomberg Intelligence. The turnaround continues over at Target.
It continues. And actually, I was in a Target recently, and one thing that you do if you have the app, you can see what you want and what exact aisle it is on. Or you can have them deliver it to your car. You go into that exact aisle. You know where it is. You don't have to waste time looking around. That's sort of the push they're doing when it comes to technology that's actually been helping this company.
Walmart, the next stop. Target this morning, up by 1.4%. The next stop for this market, of course, Fed minutes later on this afternoon, then a big earnings report after the closing bell. You might have heard that Nvidia reports a little bit later on today. Into all of that, equity futures on the S&P 500 building and bouncing by about 1/3 of 1% on the S&P. An advance on the Nasdaq as well, following a 3-day run of losses on the benchmark on the S&P. This morning, the Nasdaq higher by 0.6. To turn to fixed income, lots of jitters, nerves about what's developing at the long end of the yield curve. 30s this morning coming back in by a single basis point, 516.48. 10s at 464. This move in crude won't hurt. Brent and WTI coming back down. WTI and Brent down by some 2% this morning. Brent crude at about 109. Coming up in the third hour of Bloomberg Surveillance, we'll catch up with David Kelly of JP Morgan Asset Management, Megan Welch of Brown Gibbons Lang & Company, Kathy Bostjantic of Nationwide, and Ben Reitzes of Melius Research from New York City. You're watching Bloomberg TV.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it. Wow. Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
This is not simply an AI-driven rally. It's a broad rally.
What we are seeing is the AI momentum continues to move forward.
Were it not for AI, this would be a very, very different story.
You asked me to pick a side right now, I would not own equities.
Just because you're not at 2000 bubble territory doesn't mean you're not in a bubble.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Interesting to hear those comments from Ajay Rajadaksha over at Barclays. This is someone who was super bullish at the end of March when this market hit a new low. Had a big rally off the back of that. Now, he doesn't like stocks and he doesn't like bonds either. And the situation in the Middle East has got him a little bit nervous.
When he came on originally and the Strait of Hormuz was closed and he was doubling down on equities and saying, we're going to see the S&P 500 take off. This train is going to continue because the AI trade. My eyes were coming out of my head because what I was talking to individuals on the ground and commodity experts were talking about how dire the issue was going to be for energy. And that's Ajay that showed up yesterday.
The power of earnings, and that's why he was bullish initially. It's not that he didn't think the situation in the Middle East didn't matter. He just didn't think it mattered yet. He thinks it matters now, with bonds breaking out and yields breaking out to new highs more recently. If you're just tuning into the programme, welcome to the programme, live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts with these scores right here. Equity futures on the S&P 500 bouncing back by 1/3%, following a 3-day losing streak, which amounted to a loss of about 2% on the benchmark. On the Nasdaq, up by 0.6, going into that major weighting for both the S&P and the Nasdaq. The number one rating on these stock indexes. We'll hear from Nvidia after the close. In the bond market, new levels on 30s, the highest close we've seen on a 30-year yield going back to 2007 this morning, down 2 basis points, 30s at 5.1585. After the close, Nvidia. Before we get there, Fed minutes. Now, typically, yeah, this can be a little bit snoozy. This gets more interesting given the pushback we've seen on the committee over the last few weeks.
Right, when it comes to those dissents, it's going to be interesting to go through some of these minutes. Also, ahead of a new Fed chair arriving, getting sworn in the end of this week on Friday with the President of the United States at the White House. Also politically very different. Haven't seen that happen, Jonathan, since the late 1980s with Alan Greenspan.
Fed minutes coming up a little bit later on this afternoon. Nvidia after the close. Coming up this hour, we'll catch up with David Kelly of JP Morgan Asset Management, with stocks looking to snap their longest slide since March. Megan Welch of Brown Gibbons Lang on the next phase of defence investing. And Ben Reitzes of Melius Research expecting a beat from Nvidia. We begin this hour with stocks bouncing back and bond yields near historic highs. David Kelly of JP Morgan Asset Management writing, it's a positive environment for US fixed income, international equities and some alternatives. A little more difficult for US stocks after 3 blockbuster years. David joins us now for more. David, welcome to the show.
It's good to be here.
Let's start with the bond market call. Yeah. Is it getting more interesting for you then? 10s, 30s, this back up in yields?
Yes, but I wouldn't overplay this. I think the Strait of Hormuz issue is going on longer than it should, because I think people have, maybe in the administration, have been wrong-footed by the fact that gasoline prices haven't gone up that much. I mean, I know we're at $4.55 this morning, but it's still not as high as it was in 2022. I don't think they realize that the reason for that is because we came into this year with bulging inventories, and that gave us a few months to work down those inventories. But now every week from here on out that the Strait stays closed, that inventory situation is going to get worse and worse and worse. And that's eventually they're going to cry uncle. And I think that, I think when you look at markets, it's important not to look at where we are today, but realize the administration will have no choice but to come to a deal with Iran by which oil flows from Iran and other Gulf states out of the Strait of Hormuz. There is no other solution to this. Now, we need to obviously we need to do something about the nuclear program. We tried to do that before, but ultimately that's where we're headed.
So you think this administration blinks first, not the regime?
Yes, because the the Iranians know that they've got an asymmetric threat. They can, with very little effort, stop oil coming out of the Gulf, and they know that every week that gasoline prices goes up, it's more pressure on the U.S. administration, more pressure on the global economy. So they'll have to, and the deal is, I mean, the Iranians don't have all the cards, but the deal is we're going to separate the Strait of Hormuz issue from the nuclear issue. We're going to get back to something like the agreement that we had, the
JCPOA.
Yeah, exactly. We'll go back to where we were. Yeah, go back to the. Yeah, of course I'm going to say it's better, but ultimately it's how do you control their nuclear program? What do you have to do to get them to back off? But that has to be separated from the Strait of Hormuz because the Iranians, that's going to be their bottom line, and eventually the administration will blink.
As an investor then, do you really care what the deal looks like? Do you just assume the energy story is going to be flowing by the end of the summer and just look past it?
There are plenty of risks out here, but that should be your base case, and that's right. And that's why I'm not too freaked out about the increase in long-term rates. I'm not that freaked out about seeing higher energy or long-term inflation priced into tips, because I just think a lot of this is a slight overreaction to clearly a dire situation in the Gulf right now, but one that really, it's only going to end one way.
So, David, just take that a step further. In markets at the moment, and the way things have been priced, in markets where we're pricing more hawkish policy responses, places like Europe, you taking advantage of maybe what you believe is a dislocation?
Possibly. I mean, I think the Europeans, and the British and the ECB have been sensible so far in not reacting to what is essentially an oil supply shock in raising rates. I hope they are sensible enough to keep with that, but maybe not. They are, by nature, more hawkish than the Federal Reserve. What I don't believe is, I do not believe this Federal Reserve is going to raise rates. I think it's kind of interesting. The new Fed chair, he's going to have his work cut out just to stop the rest of the committee trying to push for higher rates. So any rate cut is off the cards. But I think the Europeans probably are more likely to be hawkish for longer than the US, and that does ultimately mean, I think, the gap between US rates and international rates closes and the dollar comes down, although most of that may not occur till 2027.
I know there's a mandate issue here. There's a dual mandate in the States. There's a single mandate in European central banks. But it's kind of odd we're talking about a more hawkish policy response in Europe when the profile for growth is so much worse relative to the US.
Because they see the potential for inflation getting embedded through the labour market, and that is just what will not happen here. I mean, if you look at the wage growth that we saw in that April employment report, it was up a little bit from March, but it is close to the lowest level we've seen in 5 years. Despite this really tight labour market, the truth is American workers are so dispirited, they won't ask for a wage increase. And if you don't ask for a wage increase, you cannot get wage price spirals going. It just won't last.
I often ask you about this. Is there a union difference as well?
Oh, yeah.
Is that factor important?
Absolutely. I mean, part of its union is because less than 6% of the private sector in the United States is in a union. And obviously it's much higher than that in Europe and in the UK. But there are also institutional things. I mean, in a lot of Europe, there are cost of living adjustments automatically priced in to wage agreements because of increases in inflation. And that doesn't happen in the United States either. So, I think there's some argument that, wage growth might be a little stickier in Europe, but Europe does not need to collapse demand. I mean, their demand is weak enough as in Europe and the UK that they've got plenty of other problems to worry about.
David, where does this leave the Fed then? You don't think they're hiking in this environment?
No, I think they're going to work on their golf game for the rest of the year. What they're not going to do is they're not going to cut in June. And the only question is, I used to think the only question is it going to be 12-0 or 11-1? 11-1 would be fascinating because there has not been a single instance in all the history of the Federal Reserve of the Fed chair voting against the majority of the FOMC. And I don't think it's going to happen now. So I think it's probably going to be 12-0. The other question is there any Fed, particularly regional bank president, who might say, you know what, we should hike. I'm going to dissent in favour of a hike. At some stage in the next few months, you might see that. But overall, the majority of the FOMC is going to keep their heads down, try to get through 2026, see how the situation in the Gulf finally resolves itself, and then see what the trajectory and the economy and inflation is at that point.
Has the risk increased, though, for a Fed chair to dissent?
It has, because we'll have to see how Kevin Warsh approaches this, because he clearly gave the president the impression that he might be open to cutting rates. I don't actually think he is, but he gave him that impression. And so the question is, how does he now square this? But my guess is, he's a smart guy. His job now, the job of the Fed chair, is to try and find a consensus in the committee. It was interesting that Jay Powell talked about that a little bit in his last press conference. That's really the job of the Fed chair. Well, you're not going to form a consensus or build that consensus over the years if you start out by dissenting from all your colleagues on a rate cut.
We've redefined dovishness. It's just getting this Fed to do nothing through the summer.
Right.
That's the big goal now.
And I think one thing that Kevin Warsh has on his side is that the environment has changed from when he was auditioning and interviewing and in front of the Senate hearing. Now there is a higher inflation picture. Gas prices are higher. And seemingly the president does understand that based off these two interviews this week.
Crude's not at 60 anymore. It's got triple digits, and that's a massive change. Let's finish by talking about equities. Massive bounce from the end of March. Huge rally in the semis. Nvidia after the close a little bit later. Is your attention elsewhere beyond the US?
Well, I mean, it is interesting. The gap between the rest of the world is still beating the US in equities this year, but it's only down to about 200 basis points, so it's by less. I'd still want to overweight the rest of the world. I do think the rest of the world's cheaper than the US, but there's still this institutional bias in favor of the US equity market going higher. Things like the movement, money pouring into 401ks, stock buybacks, the difficulty getting money out because of capital gains. All this gives a natural upward bias to the US equity market, which is not present elsewhere. So I wouldn't bet against this US market either.
Changing that bias? Are we seeing some headwinds? I'm thinking about supply from some major IPOs. I'm thinking about less buybacks at some of the hyperscalers because they're investing so much money into their businesses.
A little bit, but it's then it's at some stage over the next few weeks, if I'm right and the administration blinks and there's some agreement, that's another reason to pop the champagne corks.
Culturally, it's so different. You travel the country, and you know what it's like in Europe. In Europe, there's a bias to worry. Absolutely. In America, there's a bias to invest and to buy.
Absolutely.
You just can't change a culture.
And I spent the first 20 years of my life in Europe, and Europeans look at the glass and it's half empty, and Americans look at the glass and it's 3/4 full.
And not much has changed.
No.
From an investing perspective. Anyway, David, it's good to see you. Thank you, sir.
Great to be here.
David Kelly there of JP Morgan Asset Management. Equity futures right now in the S&P firmer by 1/3% on the S&P 500 with an update on stories elsewhere this morning. Let's get to your Bloomberg brief with Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. A busy morning of retail earnings. Target rising in the pre-market after it posted its best sales result in 4 years. TJX also higher on stronger than expected guidance. Lowe's facing pressure, though, after failing to raise its outlook, citing housing market challenges. Live Golf starting to lay the groundwork for a potential U.S. bankruptcy filing. Sources telling us here at Bloomberg the league is currently looking for money after its main backer, the Saudi Public Investment Fund, pulled its funding. Global chip supply may be at risk. Talks between Samsung and its largest labour union collapsing ahead of a planned strike at the world's biggest memory chip maker. Workers are set to proceed with the stoppage tomorrow. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next on the programme, the Morning Calls. Plus, we'll catch up with Megan Welch of Brown Gibbons Lang & Company on the new era for investing in defence. That conversation just around the corner, live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Think about it, the jobs we have today. If you'd ask our grandparents, they couldn't have imagined, that you would have these type of jobs that we have today. If you have an expansion of the production frontier, it's hard to think that that's a negative thing. The underlying message is you increase the pie. And that, in principle, is a good thing for humans in general.
That was Christian Keller of Barclays joining the programme a little bit earlier on this morning. Given the backlash we've seen to AI, the boos over the weekend to commencement speeches at graduation ceremonies, it's quite something, and the very clumsy communication from one particular bank in focus over in the UK in the last couple of days. Equity futures right now, the S&P 500 firmer by 0.4%. We're bouncing back from a 3-day losing streak on the S&P, the longest daily stretch going back to the end of March. On the Nasdaq, up by 0.7, going into the heavyweight earnings report after the close. Nvidia just around the corner. In the bond market, some better news. 2s, 10s and 30s. If you're on this side of the trade, of course. Yields are down by 3 basis points on 10s, 463.53. 30s, the highest close since 07. Multi-decade highs on yields at the long end of the curve. Not just stateside, worldwide. 5:15 this morning.
Interesting what David Kelly said. It reminds me kind of what Steve Oth told us yesterday. If it's so bad, it won't happen. Meaning the U.S. is going to have to blink and potentially make sure that they do something at the negotiating table, some sort of concession, just to get the oil flowing again. That means ending the blockade and getting to some sort of agreement to get the Strait open.
Well, let's get you an update on what's happening with crude as well. Brent and WTI. Bit of a pullback today on Brent crude. Crude down by some 2% throughout most of this morning. 2.6% lower now at 108.40. I've repeated this throughout this morning. The takeaway from all of our conversations, this can't continue. And we're running out of options to maintain the so-called status quo.
Well, that's what's really challenging, and a lot of our guests continue to point to this, and David was great on it, this glut that we had going into this crisis. Now, guess what? All those reserves are being depleted, stockpiles are being drawn down, and this is where it can get the next few weeks and months incredibly challenging, especially for Asia Pacific and Europe.
Brent crude at 108. That's the price action. Let's get you some morning calls. First up, Piper Sandler cutting its price target on Home Depot and keeping an overweight rating, saying there's pent-up demand in the home improvement space. Your second call from Stifel, raising its price target on CrowdStrike to 660, saying the company's partners are bullish on growth expectations for the fiscal year. And finally, Wells Fargo trimming its price target on Meta to 765. The analysts still expecting improving cloud revenues and rising backlogs. The stock is up this morning by 0.25%. Let's talk about the situation in the Middle East. The US threatening to resume strikes on Iran if a deal to end the war isn't reached in the coming days. Iran warning today it would retaliate beyond the Middle East if the US or Israel restarts attacks. Joining us now for the latest on the ground is Becca Wasser of Bloomberg Economics. Becca, welcome to the programme. I often ask this question, what phase are we in? What phase do you think we're in right now? And how sustainable do you think it is?
Well, right now, the phase that we are in with the Iran war is a phase of purgatory. We're neither here nor there. We're not in open conflict, but there's also no peace either. And this phase is largely focusing on the Strait of Hormuz at the moment, where you've seen President Trump trying to take various actions, whether that is Project Freedom, the blockade, trying to break the logjam in the strait and have it reopen. But right now, I think, we are in sort of a nacho phase where there's not a chance Hormuz opens, which means there's either going to need to be some type of negotiated settlement, which means that President Trump is probably going to need to accept some concessions, or resume strikes, and neither of those are very good options.
Becca, Anne-Marie was talking about the administration just looking for barrels here, there and everywhere. Sanction waivers here, sanction waivers there. It does raise the question just how sustainable the current status quo actually is before we run out of these reserves. And these reserves have been aggressively drawn down since the end of February, the start of March. Becca, how sustainable do you think things are?
I don't think they're very sustainable. And That's just on the economic dimension. If you look at the military dimension, you have had U.S. forces in the Middle East deployed for several months, right? There was a strong buildup prior to the start of hostilities over 3 months ago. So there's also a U.S. readiness problem from the military standpoint, in addition to the global economic squeeze that we are feeling because of the situation in the Strait. And I don't think that's going to change anytime soon, in part because Iran knows that it has leverage now, and it is going to try and exert that control wherever possible. Even if there is a gradual easing in the Strait of Hormuz, they're still going to saber rattle on occasion to remind the United States and the global economy that they do have that leverage.
Becca, appreciate your time. Thanks for joining us. Becca Wasser there of Bloomberg Economics. We've had this question being asked a few times on this programme. What do we hit first? Tank bottoms in the West or tank tops in Iran? The blockade continues.
Blockade continues, and I think the Iranians are actually used to this and can find ways to squirrel away any barrel of oil. What is interesting, though, is the structural shift that might happen for this. Like Becca was just talking about, the Iranians know they have this leverage. Do you think they're just going to go away with the toll now and not actually use it? Of course not.
That's the latest on the Middle East. Let's build on this and talk about the defence sector. Megan Welch of Brown Gibbons Lang & Company writing, the next phase of defence investing is less about the weapon itself and more about the systems that keep forces prepared and operational every single day. Megan joins us here in New York. Megan, good morning. Good to see you.
Good morning. Thanks for having me.
Let's take that quote and just build on it a little bit more. What do you mean by that particular quote?
Yeah, I mean, I think so. The defense industry has become a real area of investment for both the public markets and the private markets. The critical funding tailwinds behind it, the increased defense spending across the board has really attracted investors. And it's less about like the F-35 or some of these large platforms. It's more about all the sustainment that goes around it. So all of these systems, the support services, et cetera, are areas where investors are seeing opportunities to be able to get access to the defense market without any of the risk associated with, programmatic delays or cost overruns.
When I often think of this particular sector, I think of very, very high barriers to entry. Do you have to bear that in mind when you think about some of these companies in private markets?
I mean, it just depends where in the sector you're looking to invest, but not really. I mean, there are ways to play defense and get access to this market without having to, go through multi-year training or multi-year investments and testing. So again, the services, the logistics are part of the O&M budget in the defense industry in the U.S. And that's an area that's pretty insulated from any kind of continuing resolution or defense budgetary disputes between the politics.
What about things like Project Maven at the DoD? Has that changed potentially what companies are going to be working with the Defense Department that aren't traditional or normal that we think of?
Yeah, absolutely. The defense procurement has been broken for decades. That is very well known, both in the defense industry, but also in Silicon Valley, the Valley of Death. There's been a real push in this administration, and you're laughing, I'm sure you've heard it 100 times, but there's a real push in this administration to change that up. It is a very large ship to turn with a very small rudder. To Trump and Hexeth's credit, they're doing a good job trying to do things like the Gauntlet program or Project Maven, but trying to get more dual-use technologies and commercial-use technologies into defense to accelerate where we are from a warfighter readiness perspective. It's just really hard because fundamentally the defense market itself is structured around annual funding budgets that don't really have multi-year procurement signals. And it's hard for commercial industry guys to be able to understand what does that look like in 3 to 5 years and how can I actually forecast my sales and forecast my supply chain to meet that.
One of the big stories at the DoD right now, and actually what we've heard from the likes of executives at Palantir, is what's going on in Iran will be the first really AI-driven war. When I think of that, I think of Anthropic, because obviously they're using Anthropic on their systems. At the same time, the Pentagon is saying it's a supply chain risk. How does that impact potentially what companies work with Anthropic and the DoD when you think about investing?
So AI is definitely playing a huge role, not only in things like Palantir, but also in robotics and unmanned systems. It's going to be a force multiplier and a real force structure going forward. TBD kind of how it plays out in terms of how Anthropic works with the DoD directly. There's a lot of risk associated with that from a cybersecurity basis and from a technology risk basis. But we're seeing more and more AI-enabled capabilities that allow us to increase our force structure and our presence that we wouldn't be able to do just fundamentally with boots on the ground.
What about the political risks of regulatory concerns? Because a lot of people don't like the idea of autonomous weapons.
Yeah, I mean, so autonomous weapons are, they're very much going to be the future of the warfare, right? So we saw what happened in Ukraine. When we look at where we're competing against Russia and China, we just don't have the bodies, the boots on the ground to be able to match them one for one. And it also takes a lot of risk out of loss of life, right? So you think about having the unmanned wingmen, right? So not having as many airmen in the air and having the risk of loss of life. There's a lot of benefits to unmanned systems, not just out of force multiplier, but to be able to take some of the risk away from loss of life.
Do you see the investment really only and what's potentially going on in this space, the advancements in the United States or elsewhere? Because I see a lot of work that Ukraine has done when it comes to drone warfare.
Yeah, Ukraine has been fantastic. It's been a great case study for the future of warfare. I jokingly say it's kind of like what the machine gun did for World War I. It's been a total change in how we go to war going forward. We are never going to go to war like we did in Iraq and Afghanistan. But yes, absolutely. And internationally, there's been more defense spending and defense investments that we've ever seen in the last 20 years, really since the peace dividend of the 90s. And Ukraine's been the leading, case study of that, of how to be able to use defense technology to be able to have it in a modern warfare conflict.
It's driven massive change in Europe and attitudes to investing in defense.
Yeah. Absolutely. Investing in defense in Europe, but also in terms of the technology, Ukrainians are the ones that know how to strike down these Shahadi drones. We're sometimes using Patriot missiles to do it. Right. They have their own anti-drone systems that are much cheaper.
And now going to the Ukrainians to learn some of those lessons. Megan, appreciate your time this morning.
Yeah,
Thank
absolutely.
you. Megan Welch there of Brown, Gibbons, Lang and Company on the future of defence investment. If you're just joining us, welcome. Later on, of course, Fed minutes. And we'll get those earnings you're all waiting for from NVIDIA in the here and now as we count you down to the opening bell about 1 hour and 5 minutes away. Equity futures near session highs by 0.4%, higher by 0.75% on the Nasdaq 100. Up next, we'll catch up with Kathy Boschantic of Nationwide with bond yields near historic highs and the Fed firmly on the sidelines, multi-decade highs on 30-year yields this week. In the last month, we've seen that in the UK, Germany, and all-time highs at the long end of the Japanese curve. More on that in just a moment. From New York City, you're watching Bloomberg TV.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a Big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Equities doing better than okay, bouncing back by 0.5%. The last 3 days down about 2%. So this is your bounce, just eating into those losses so far this morning. On the Nasdaq up by 0.8%. Had some earnings earlier on this morning. Target, heard from Lowe's, TJX. Retailers going into Walmart tomorrow. Target up by 2% in the pre-market, adding to a gain of about 30% on the year so far. The numbers from them this morning, the best sales growth in 4 years. The turnaround looks to be going quite well. Some evidence of it this morning.
Looks to be going quite well. And we heard from our own analyst about what Target is doing right, which is leaning into why people like to go there, things that people like to buy when they are at Target, and also just upgrading some of the technology around it. I was talking about earlier, I used this app over the weekend before I went to China. I had some stuff to go buy. It told me exactly what shelf and row an aisle all of the goods were going to be at. Made the whole thing a lot more easy.
Super helpful. That's the story at the single name level. Let's turn to the bond market. 2s, 10s and 30s. Lots of attention at the very long end of the yield curve on the 30-year yield, given the close yesterday, the highest we've seen in multiple decades, going back to 2007. Yields this morning down by a basis point, 516.50 on 30 so far this morning. Later on this afternoon, the attention will switch to the front end of the curve when we get these Federal Reserve minutes following that hawkish descent to the language in the statement at the Fed's last meeting. From there, there's just been a chorus of pushback to the easing bias from several Fed officials, so look out for that in the minutes a little bit later this afternoon. 2s around 4.1% ahead of Kevin Walsh's signing-in ceremony a little bit later this week.
I think everyone's excited for that signing-in ceremony because they want to see how the president talks about Kevin Walsh in the signing-in ceremony, because it's going to be at the White House. It's not going to be at the Federal Reserve. It is going to be at the White House for the first time, I believe, since 1987 it was, with Alan Greenspan. And basically, the president this week, in a number of interviews, 2 of them notably, in Fortune and Washington Examiner, pushed back on this idea that he wants to see Kevin Walsh come in and cut interest rates. Said he's going to do the right thing. Also gave a nod to what's going on in the war and the inflation picture and said maybe he'll have to look at the figures after the conflict is over.
The swearing-in ceremony later on this week. Let's talk about the Treasury market. Big move in yields, still holding near multi-decade highs due to inflation fears and some fiscal concerns building worldwide. Ira Jersey of Bloomberg Intelligence joins us now for more. Ira, welcome to the programme. I want to spend some time on your survey on Kevin Walsh a little bit later, but let's just start with the moves we've seen at the long end of the curve, not just in the US, in the UK, in Germany, in Japan. What do you think the dominant driver, Ira, is right now?
Yeah, it is what you just mentioned, John. It's that fiscal issues in a lot of the developed markets, right? And the U.S. is part of this, but we're not actually the worst actor when it comes to this. It's really Japan and the U.K. that have been, some of the bigger drivers, and they've been pushing. So it's a tail wagging the dog type of moves where you see these 10, 15 basis point moves in Japan or the U.K., and then you'll see 5 to 7 basis points in the U.S. and parts of Europe. So it is a global bond sell-off. This isn't unique just to the U.S., but obviously you take note when, as you said, we had a closing high on the 30-year yield yesterday for the worst in almost 20 years.
Ira, when you and I were first talking about these issues more than a decade ago, we were talking about the anchors of JGBs, of the bond market. Those anchors have gone. What is the anchor of the global bond market now?
Yeah, so for the long end of the yield curve, I think it has to be the end user and the real investor, and a lot of those, there still is a lot of demand for long duration assets globally, because we do have a very large, what we call liability driven investors. So these are pension funds, insurance companies, life insurance companies in particular at that long end of the curve. And they tend to like yields in U.S. dollars at around 5%, 5.25%. So I think one of the big questions here is, do we hold these types of levels? Do they come in and continue to buy and add duration in treasuries instead of doing what they have been doing, which is buying corporates at super tight spreads, but at yields that are 6-ish% or maybe even a little less? And so I think we're at the levels where risk management says, okay, look, yes, the U.S. has a pretty bad fiscal situation, but realistically, they're probably not going to default. It's more of an issue of, do they have to inflate their way out of this debt? I don't want to call it a crisis, but this massive amount of debt that the U.S. holds, and it's an area where pension funds and insurance companies can say, okay, look, we'll buy at 5.25% now or soon, and that has to be what arrests the market. I don't think the monetary authorities like the Fed are going to come in and be buying the long end just because we've sold off 40 basis points in the middle of a war.
Ira, your point on credit is important. Now, I hear this all the time. I'll say spreads are really tight. What do you like about corporates? They'll say all-in yield. But if all-in yield is high and credit spreads are tight, then the bigger bulk of that component of that spread, that interest rate, is the risk-free rate. And if I can get a risk-free, why wouldn't I just buy the risk-free rate if it makes up a bigger component of the overall all-in yield? What's the appetite for credit versus risk-free? Unless you think there is a risk there. And maybe that's the change, that people consider the sovereign to be increasingly more riskier than maybe some of these corporate credits at the moment.
Yeah, I don't think that that's really the case. Like, when I've talked to a lot of investors, it is how do we take the risk, and do we they're not really worried about the U.S. In particular, the U.S. defaulting, right? It's more will the U.S. have to run higher inflation, and if they run higher inflation, does that mean that we're going to have systemically higher bond yields? So that's the bigger concern for a lot of investors, not the U.S. not paying its bills. But to your point, I think that's the point I was trying to make is, as a percentage of all-in yield, Treasury yields now are much higher, and so that makes it more attractive to these liability-driven investors.
We're talking about the longer end of the curve. We started by talking about what the move we've seen in 30s, Ira. Let's tighten things up and talk about the front end of the curve and the policy rate. The survey you and the team did at Bloomberg Intelligence, Kevin Walsh is a known entity, but how he'll interpret this particular role at this particular time is largely unknown. Ira, what are investors saying in your survey about what they're expecting from Kevin Walsh relative to what we saw from Chairman Powell?
Yes, so a pretty big majority of investors, about 2/3 of them, have suggested that Kevin Walsh is going to be more dovish than Jay Powell. Now, that's not obvious to some people, including us, because in the past he has been a little bit more, I don't want to say middle of the road, but he's been willing to make some hawkish comments when the rest of the committee has been dovish. And just the opposite might be true as well, where he might say, okay, look, we need to cut interest rates because of reasons that I espouse, not necessarily the president, even though the rest of the committee is somewhat more reluctant to cut interest rates. I think the big takeaway from which I think was interesting from that survey, was that most respondents think, like up to 84%, I think the number was, if I recall well, that they could change the policy framework during his term. So that would say, maybe we go away from the PCE being the target, maybe we go away from the Fed funds rate being the monetary target, and we use SOFR or something else. And it could be that they get rid of or change the summary of economic projections pretty well in terms of how they express forward guidance. So all of those things are something that is probably somewhat more realistic than the Federal Reserve cutting interest rates in June or July amid inflation when Kevin Walsh finally takes office.
There's a lot on the table, that's for sure, for the incoming Fed chair. Ira, it's good to see you. Thank you, sir. Ira Jersey there of Bloomberg on a number of issues across the yield curve and in the fixed income income space at the moment. Kathy Bostjantic of Nationwide writing, rising inflation should embolden more of the FOMC to formally adopt a neutral bias at the next policy meeting. While new Fed Chair Kevin Warsh is likely to prefer lower rates over time, we expect an extended pause. Kathy joins us now for more. Kathy, welcome back to the programme. Just describe that June meeting, what you think it's going to look like alongside the SEP, because they've got to put out some forecasts as well.
Yeah, good morning, John. It certainly will be an interesting one, no doubt. But I think what you're seeing is the momentum, as you mentioned, is more Fed officials are saying, why do we have an easing bias in the face of high inflation, which, we think inflation, CPI is bound to go over 4% in April. So really hard to hold on to that. Moving to a neutral bias or risk, neutral assessment makes a lot more sense. So I think that should be rather easy. It will be interesting to see the updated SEP forecast, because in the ones in March, there were really no updates. In fact, if anything, if I remember correctly, they pushed up GDP growth a bit, which is surprising. So how do they recalibrate growth? Where do they see the risk there? How high do they see inflation by year end? And not just headline, I think core. I think what the bond market's really trying to suss out right now, is this just energy, and is it just headline and somewhat short term, or is it possibly bleeding over to core inflation?
Kathy, when it comes to potentially a dovish Kevin Warsh, is it dovish that the market expects rate cuts, or just that he convinces the committee to keep the easing bias?
So I think it's tough right now. I think he's inclined to argue for lower rates over time. I think he would really even find it difficult now to come in and argue that the Fed should, in the near term, be cutting rates. Maybe, possibly, there's an opening by year end. And I say that if we really see some resolution in the Middle East and gasoline prices come down and all the other energy prices, and particularly if core inflation is somewhere around 2.5%, that could give a little opening. He does prefer these trimmed mean inflation measures, depending what they look like from the Dallas Fed or Cleveland. Maybe that gives some opening to cut rates. But I think in the near term, even he will be kind of in more of a neutral stance at this point.
Like we saw from the Federal Reserve when it comes to the potential impact on inflation from tariffs, when it comes to the energy hit, shouldn't they be looking through this?
I think yes, and I think largely they do, although there's risk that, as I said, it spills over to core and other non-energy measures, and also inflation expectations. Right, that is kind of the golden goalpost in a sense for the Fed. If inflation expectations become dislodged, they worry that inflation, not just this year but even next year, could run higher. Right, it becomes a self-fulfilling prophecy. But what we know is with break-even rates for inflation in the bond market, they're very correlated with oil prices and energy. So our view is if you get some relief there, probably inflation expectations and even long-term bond yields come off the highs that we've seen here.
We're seeing some of that this morning, at least so far. Kathy, thank you. Kathy Bostjantic there of Nationwide on this bond market sell-off in the last few weeks. This morning, yields lower by 2 basis points at the long end, 5.16, 5.17 on 30s. Let's give an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Samsung and Google are unveiling new smart glasses with a launch planned later this year. Built with Warby Parker and Gentle Monster, the devices let users interact with Gemini by voice. Features include directions, calls, translations, and camera-based queries. Goldman Sachs taking the lead role in the SpaceX IPO. Sources telling us here at Bloomberg Morgan Stanley is also listed as a lead bank. Elon Musk's company is looking to raise as much as $75 billion and is seeking a valuation of more than $2 trillion. The Northeast heat wave continuing for a third straight day. Heat alerts in places in Boston, New York City and Philadelphia. Over a dozen daily record highs were set yesterday. A cold front, though, coming in by tomorrow will take temperatures down by 30 to 40 degrees. And that is your Bloomberg Brief. John.
Vonnie, thank you for the update. Not that last one, but thank you in general terms. Up next on the programme, setting you up for the day ahead. Plus, we'll touch base with Ben Rices of Melius Research with NVIDIA earnings on deck. We'll also speak to Ed Ludlow, who spoke to Jensen recently what he's expecting from these earnings after the closing bell.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Jensen typically manages expectations extremely well, right? So I do think there is room for upside here. What you need to do is to continue to show things being steady in nature. You need to potentially surprise maybe in certain aspects. I don't necessarily think you need to significantly beat street expectations.
That was Angelo Zeno of CFRA going into that big earnings report after the closing bell. Nvidia just around the corner as we count you down to that opening bell. That's not the only thing we're watching today. Here's your trading diary at 11 a.m. Eastern Time. The President speaking at the US Coast Guard Academy. Look out for that. Another commencement address. I imagine AI might not get a mention in this one.
Well, I'm hoping that his team tells him, the second you AI, be careful how you talk about it, because, Mr. President, you might get booed.
Yeah, 2 p.m., Federal Reserve minutes. Look out for that. After the market close, we'll get those earnings from Nvidia. Looking ahead to tomorrow, earnings from Walmart, another round of jobless claims, and PMI data to look forward to as well. On Friday, Kevin Walsh swearing in as Fed chair, the one to watch heading into the weekend. Equity futures right now, the S&P 500 firmer by 0.4%, a bounce on the Nasdaq as well. On the Nasdaq 100, higher by 0.75% as we await Nvidia earnings for a read on the outlook for AI. Bloomberg's Ed Ludlow joins us for more. Ed, welcome to the program, buddy. You caught up with Jensen recently. What was the read-through on the business at the moment?
Yeah, the same that it has been for some time, which is that
demand is vastly outpacing the industry's ability to supply, not just Nvidia's. And there is a real beat and raise expectation with an Nvidia print. Like, no one's going to really focus on the quarter gone. They will want some guidance on the future. So top line growth of 80%, EPS growth 85%, is impressive if they're able to deliver in that environment, some upside to that. But the thing that still needs to be reconciled for so many people is China. It needs to be reconciled, John, because over a period of January through present day, the commentary from Jensen Huang and Nvidia and the commentary from the president and the outcome of that trip to China has been inconsistent.
Does it really matter, though, Ed? Given that we know it doesn't make up any kind of big proportion of the underlying earnings from that company, does it matter?
Such a great question. It's psychological for lots of people, right? The base case assumption right now is there is zero revenues coming from China. And Nvidia has talked about the idea that they see it as a $50 billion per year opportunity. There was a time where China, not just for consumer electronics, smartphone, PC, data center as well, it was the absolutely most critical end market. The capital expenditure story of the hyperscalers in the United States and in the Western world has really changed that beyond the restriction of being able to do business with China. But still, people want to know. And, the thing is that Jensen Huang positions himself in the center of that story. And what needs to be reconciled is in March, he said they were ramping up supply chain so they could sell to China. And of course, you saw what the president said on Air Force One last Friday, I believe. It's inconsistent. So I'm just saying on the sell side, at least, their checklist has that in their questions.
It's a point well made. I'd appreciate it. Looking forward to the programme. Ed Ludlow coming up a little bit later on Bloomberg Technology alongside Caroline Hyde. Nvidia this morning, firmer buy close to 2%. Ben Rices of Medius Research with a buy rating on Nvidia and a 380 price target, writing, we expect a strong report with a meaningful beat and a raise. Ben joins us now for more. Ben, good morning. Good to see you.
Good morning. Great to be here.
Thank you for being here, sir. You've been dreaming of Jensen, according to your note, apparently. So tell us more. What was in the dream?
Well, I probably had PTSD from the stock underperforming for most of the year, at least the SMH, and by tens of points underperformance of the SMH this year. And I feel like there's a catch-up ready to be done here with Nvidia because their earnings are accelerating. And I do feel that the stock is priced as if they're going to have a meaningful deceleration. And I don't see it as meaningful as the stock is discounting. I think that it's trading probably under 20 times the real earnings power here by quite a bit. So I think that they need to reassure investors they can grow at least in line, if not better than CapEx at the hyperscalers. And I think they can do that.
Why has it lagged? Why have names like Intel and AMD had these explosive moves, and Nvidia, which has done well off the lows from March, I think up by something like 30%, but just nothing near the other parts of the market? What's been going on?
Well, when you're this big in Nvidia, 5 trillion plus, it's really hard to move money around. I kind of make a joke. You have to, if it was Europe, you'd have to put France on top of England, and it takes a little while. And when you're smaller, under a trillion, let's say, it's a lot easier to move capital around. And there's also been these acute shortages. So it's sort of like whack-a-mole in AI to the upside, where there's a certain shortage and then you go after that, and then another shortage, you go after that, and you go after that, and it's violent. So NVIDIA becomes a source of cash to invest in these acute shortages like semis, like memory, or pick your other optical, et cetera. So actually what happens is NVIDIA becomes a source of cash and then it underperforms. And then a night like tonight might be a catalyst for people to go, hey, wait a second, these guys actually have a pretty good business model, kind of know what they're doing, and they're going to grow pretty well. So maybe we should put a little more money back into the main horse that's driving this whole train. But I think NVIDIA is just fine, and I think it's natural to decelerate, but they still have much higher growth prospects than the stock is discounting, and eventually that works itself out.
Ed touched on it when it comes to the Chinese market. In your dream, does Beijing open up for Jensen?
No, it's a bonus. I think that the China thing is actually not a big deal tonight. I think nobody's expecting him to say he's going to sell in China. It would have been nice. It would have been nice. But the street doesn't want to put a great multiple on China either, because it's in, it's out. You don't know who the next president's going to be. You don't know one thing to the next with China. So I actually don't think it's that big a deal. I don't think anybody's expecting it. And it might come up tonight, but it's not something that we're going to put back in our model. It would be nice to have it, though. But I think the more important thing is the CapEx trend with the major hyperscalers and being able to at least grow in line with that. This year, CapEx among the major clouds is going to double. No one thought that going in. And if it can stay at like a 40% CAGR and these guys grow in line with that, these guys are going to do really well.
You say it's nice to have. Down the road, will China be need to have, must have?
It's potentially. I mean, it would be nice if the American technology stack ruled over there. I don't know how to say it nicer, but I just take it.
You sound like David Saxon when he was at the White House.
David says a lot of things that make sense, in my opinion. But it would be better if it was an American technology stack, I think, for the world. However, I do sympathize with some of the concerns that folks have. But I think that it's a race, and you have to understand that we have these hyperscalers here that have tons of wallet, and they have more wallet actually than the Chinese for now, and that's a plenty to really go expand this market. And labor's the TAM. Labor's trillions, and I think that there's a lot to go around, and China will have their share, and we'll have ours, and I think we're still well ahead. But
China has an entire
watching.
Government that subsidizes them and pushes them.
Yeah.
That we don't really have.
Yeah, right now, actually, we put out a piece today. The biggest risk, in our opinion, is backlash here. I don't want to get into the political merits, but in terms of a stock where you have to, we really in China, the great thing that they have going for them on their AI business is the government's going to just go unabated. And culturally, from what I read and see and talking to people, that there's a little bit more optimism about AI. Hey, let's embrace it and try to make our jobs better, that kind of thing, and use it for productivity. And we need to promote that here if stocks are going to continue to work.
The message is just not good. What do they need to change? We spent the morning on this. The message coming from some of these companies. What's the right message?
The right message, I still I want to make sure I say the right thing here. You never know who's listening. The right message probably is this technology is not going to stop, so we have to invest in it, and you have to embrace it. There's never been a better time to start a company, never been a better time to learn the technology and become that person in your office that can be the most productive, and that's what the message needs to be, and that it's going to free up time to do other jobs, other things to expand. There's going to be a boom in leisure, in medicine, and many things. But I think that there needs to be more AI optimism. And then with the data centers, there's sometimes misinformation. There's the ability to recycle water. There's an ability to put power production behind the meter using natural gas or some other fuel to actually make it so consumers in the local area don't feel a pinch and actually can even get subsidized. So we need to do a better job marketing these messages and change the narrative and not let it be a political touch point that we blame because we need an excuse.
It's become one, that's for sure. Ben, it's good to see you. Thank you, buddy.
Great to see you.
Thank you. Ben Wright is there of Medius Research. Coming up tomorrow, Peter Chia of Academy Securities, the BNY CFO, Dermot McDonough, and David Levitz of JP Morgan Asset Management. From New York City this morning, good morning. This was Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersetchi in Davos, Switzerland, and this is Bloomberg.
Futures higher as yields in oil fall. 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, NVIDIA earnings could determine whether the chip rally still has room to run or could reignite fears of a bubble.
And Goldman may take the leading role of the biggest IPO ever. SpaceX is set to file publicly as soon as today.
Plus, Target posted its biggest sales gain in 4 years, but shares fall as the retailer flags cost challenges.
A lot of retail earnings. The big one's going to be NVIDIA, though. Typically, though, when NVIDIA reports, it hasn't really in recent years and quarters acted as a catalyst for the entirety of the market because of the run-up it's had. It is trading up higher in the pre-market, 1.5%. It's aiming to keep the AI rally going, which has faltered in recent days. It has a high bar to meet with sales growth expectations above 80% year over year, Matt.
But it has moved. The stock has moved significantly, even though it's such a behemoth, right?
Yes.
$5.3 trillion company right now.
The swings it has in just one day are pretty remarkable.
Yeah, it'll be amazing to watch. That's after the bell today. Ahead of those NVIDIA results, we're looking at chip stocks that are higher, and Micron is gaining. Advanced Micro Devices is gaining. Qualcomm is gaining, on pace to break a 3-day losing streak, although they've had an incredible year, right? Micron has basically almost doubled year to date. I was looking at SanDisk earlier. It's up like 480% year to date. So a lot of these chip makers are just off to the races.
And its 12-month forward PE ratio is 7.3.
For Micron.
For Micron,
yeah.
After the most recent sell-off. Let's discuss earnings. Bloomberg Tech co-host Ed Ludlow is joining us. Ed, it's the big one. It's NVIDIA after the bell. I was just saying the bar is really high. So where exactly is that bar?
Yeah, the bar's really high, but with the expectation that, it doesn't really matter what happens in the quarter gone. They want Jensen Huang to give some guidance, right? So top line growth of 80%, EPS growth 85%, in an environment where the demand, as Jensen Huang told us on Monday, right, is vastly outpacing supply. That's the status quo. There are some overhangs on the stock, right? In most recently China, like what you guys were saying is so spot on. Through yesterday's close, in aggregate on the stocks, we were flirting with correction territory just from Friday, Monday, Tuesday.
Wow.
Because there wasn't really this net outcome from the president and his trip to China and Jensen going with him, we didn't have any certainty on that. But yeah, it's very elevated for sure.
The thing is, analysts expect them to beat and raise, right?
Always, yeah.
Which begs the question, why don't analysts just raise their estimates? But also, China could be, not for the reporting quarter, but for the outlook, a really important piece? Or is China actually a small piece for the outlook, Ed?
Yeah, it's more psychological than anything else. Like, the base case assumption right now is zero revenues from China, and NVIDIA's talked regularly about it being a $50 billion opportunity. But that's what I mean. That's the part that needs to be reconciled. Because at NVIDIA's own conference in March, Jensen Huang was on stage talking about the idea that because they had those licenses from the US and they saw an indication they would get orders from China, they ramped up the supply chain. But clearly it's up to China. And China right now's position, based on what the president said and based on what Jensen told me on Monday, is they want to protect their own domestic players. So it doesn't move the needle, really, in the modeling for the sell side. It's just this idea that Jensen Huang and NVIDIA is right at the heart of the broader China story.
So much for the $50 billion TAM.
Right.
Everyone was so pumped, Ed. I've been saying the entire time, for over a year, okay, so they can sell into China, but the Chinese government keeps telling companies not to buy these things, and everybody was poo-pooing, my negativity here. It turns out that parade has been rained on.
The thing is, there was a time where China was a critically important data center market, right, prior to the AI revolution. But there is an opportunity there, right? Tencent, Alibaba, Baidu are massive companies that can be seen as being like at hyperscale, with a similar data center footprint to those here in the United States. The opportunity is there. And they, as Jensen Huang would put it more academically, 50% of the world's AI research is being done out of China or by Chinese engineers and scientists. So that kind of is the why of why they want to be in it.
All right. Ed, thanks so much for joining us. Bloomberg Tech co-host Ed Ludlow. We're going to talk about SpaceX a little bit later, expecting more details on the IPO, or we'll talk about it right now, actually. Goldman Sachs said to be leading SpaceX's mega IPO, with the company expected to file publicly today. Bloomberg senior reporter Bailey Lipschultz has been covering this story for us. He joins us now. And Bailey, it's interesting, because they have the Starship launch. It was planned for yesterday, then to today. Now it's been moved to tomorrow. But it's so critically important, and the fact that they're going to have this public filing at the same time is pretty courageous.
It's pretty courageous, Matt. But I had been talking to bankers and investors over the last few days about this, and I've made that point to them, and their counterpoint is, well, at some point they're going to launch Starship. It doesn't matter if it's right before or right after the filing. It doesn't change the content of that S1 filing. And broadly speaking, if you were someone who can write, $5 to $10 billion check, and we're down in Starbase, Texas a few weeks ago, meeting with the management team, sitting in on the presentation with Elon Musk, it doesn't really matter as much to some of them as it relates to the exact timing and figuring this out when you look at just the kind of gargantuan lead that SpaceX has against any other peers in getting massive rockets into space.
Bailey, what might we learn with this filing that we don't already know yet with SpaceX and their plans to go public?
The biggest thing, Danny, when I talk to investors is, how is the lockup going to be structured? Will it be something like what we saw with Cerebras, where they're letting out a few million shares every day, depending on how the stock performs in the aftermarket? That's critically important. And if there's any color or update on allocation to retail, whether they name out the likes of a Robinhood or SoFi, if there's any type of detail on how they could, put shares into the accounts kind of more primarily for people who own Tesla stock or own the Tesla cars. There's a lot of things, just kind of those nuances are top of mind from investors' perspective, just given how much has already been kind of reported in the media from us and some of our competitors.
Well, we'll look for that filing as soon as today. Bailey, thank you so much. Bloomberg senior reporter Bailey Lipschultz. So pleased to say that joining us now is HSBC Chief Multi-Asset Strategist Max Kettner. Max, great to see you in the flesh. And look, you've been really forward in saying we are max bullish. and higher yields don't impact us because, well, one reason has been earnings are so strong, then how important is NVIDIA today to keep the good vibes earnings continuing on?
Yeah, I think it's very, very important. Like NVIDIA today, if that were to disappoint, I think that probably would put a lot of the AI and the CapEx story in question. But let's face it, when we look at the tech and AI story, and particularly now this earnings season, you look at within the tech sector, within the S&P, your earnings beat rate has been 100%. Which is
that right,
insane.
100%
it's
in
like
all of
100%. Like we've got every single company that beat earnings expectations. So it's kind of tough to be like sitting there like, oh, I think NVIDIA is going to be the mother of all downside surprises.
Max,
like,
do you sometimes
really?
question the work of the analysts
Never.
who make up these estimates?
I would never question myself.
I mean, if you are, a longtime analyst and you've seen a company beat whatever number you put out by 20% every single quarter, at some point, don't you say, hang on a second, let me add 20% to my estimate?
Yeah, but look, I think it also depends on the earnings guidance. I think, right, corporates are probably pretty good.
But you know they're guiding down.
That is true. Yeah,
right?
That is true. But, I always say, look, don't hate the play it, right? Don't hate the game. Like, that's what we deal
Max,
with.
if somebody beats you every single time with a drop shot, do you not go to net?
No, of course not. You stay all the way behind.
You stay on the baseline, right?
That's what you do. You
That's
stay
the way to
all
keep
the way
your
behind
job.
because, hey, this is, at the end of the day, this is how you work out.
Keep management of the companies happy, keep them talking to you with not, with
so
estimates that set the bar low. Putting that aside, the other thing we're talking about is this massive IPO filing we're likely to get. So you get SpaceX, which is going to be the biggest IPO ever. Well, we're also likely to get OpenAI and Anthropic this year. How is the market going to digest these mega IPOs? Is it a reason to be concerned? Is maybe we sell off other things and passive portfolios to make room for these big companies?
So I think there is two ways to look at it, right? The bearish side is the supply angle that you've just touched on, so that actually we need to free up some space, like we need to sell some Tesla to buy SpaceX, something like that. I think the more positive side is if one of those really does come in at 1 trillion or above 1 trillion, I mean, we're going to have a heck of an IPO. Like, imagine if you guys at Bloomberg are publishing those headlines and like, hey, look at this, 1 trillion IPO, and actually the stock is up on the first day. Happy days. I mean, that is a heck of a bullish headline if you think about it. So, it depends what narrative you want to spin, I think. And I think the supply, the supply story is a little bit overblown given how much money there still is on the sidelines. Remember 6 months ago, one of the dominating narratives around AI concerns first was, are we overspending on CapEx? We now realized, oh God, we're not, and we're actually short of chips. The second, probably more pressing narrative was funding concerns. Those guys, they're running out of net cash. They need to issue debt now. And where are going to get the money from? And particularly companies like Oracle, right? Oracle was all in the weeds of all these concerns. And then you had Oracle come out in February and say, look, we're going to raise $25 billion in debt, and you have $130 billion of orders. That just tells you how much money there is. When the number one sort of poster child, oh my God, this is the one where we're really concerned about. And they've got an order book of $130 billion. Why are we concerned about this? I think the supply story around, oh yeah, but we need to sell all this other stuff to just buy those IPOs, I think that's a little bit overblown.
By the way, rates don't matter, right? 4.6, 4.7% on the 10-year, 5 and change on the 30. Doesn't matter, right?
No, I think, look, from here onwards, if I had a blank sheet of paper and you said, right, I'm going to get, Matt Miller gives me $100 million of his immense wealth today to invest, I'd say, you know what? But actually, if you look at the ultimate terminal rate expectations as of today, which is sort of short end, right, front end expectations in 3 years' time. If you look at that, that's close to 4%. Effective Fed funds is at 363. So effectively, you're pricing 1.5 hikes 3 years out already. So what you would need to say, as of today, I think that's going to be 2.5, 3, 4 hikes. That's a bit much, right? 1.5 hikes kind of seems like, yeah, that could happen. That's a bit of a risk premium baked in there. But to go even higher, to be even more concerned from as we stand today, you're going to have to be a heck of a lot more hawkish from where we stand today. really doesn't stack up.
It's tough. Okay, Max, we're going to keep you with us. Max Kettner from HSBC, staying through the break. We are looking at markets that are, well, futures that are higher right now as rates come down a little. You can see the 10-year down 2 basis points and Brent crude off about $3. Let's get a look at some of the single stock stories we're following for you. Homebuilder Toll Brothers raising its full-year guidance as orders hit their highest in 2 years, and Toll is up 4% in the pre-market.
Then there was Cava, the fast casual Mediterranean slop bowl, raising its annual sales outlook as it saw a rebound in demand despite consumers getting cautious around budgets. By the way, I say that with love. I love a slop bowl.
Wow, 11%. VF Corp says its Vans direct-to-consumer business, I'm talking about the shoes made famous by Jeff Spicoli, has returned to growth for the first time in 4 years. Max is actually wearing some under the desk right now.
The checkered Vans.
I guarantee he owns a pair. Coming up, Target falls as executives warn about a tough second quarter. We got Romaine Bostic for you next. This is Bloomberg Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Let's get now to high interest. Look at what's making headlines around the world. Iran warns it would retaliate beyond the Middle East if the U.S. or Israel restart attacks on the Islamic Republic. The warning follows renewed threats from President Trump, who said the U.S. may have to give them another big hit if Tehran rejects American peace terms. When asked how long he would wait, he said 2 or 3 days, maybe Friday, Saturday, Sunday, something maybe early next week. So we'll watch for that. In the latest congressional primary results, President Trump's hand-picked candidate for Northern Kentucky, Ed Gallrein, defeats longtime Republican House member Thomas Massie. It's the clearest sign yet of Trump's grip over solid Republican states, as well as the massive influence of pro-Israel money in middle American races. There were tens of millions of dollars of Israeli-linked cash that fueled Gallrein's defeat and fought against Thomas Massie. And in terms of Standard Chartered, the CEO, Bill Withers, tries to reassure employees after backlash over his remarks suggesting AI could replace lower value human capital. In a memo to staff, Winters wrote, "I know this may be unsettling when reduced to simple headlines or a quote out of context." But of course, we gave you the full quote in context yesterday. We played the sound of it.
The quote was that they're trying to get rid of lower value human capital and replace it with like actual capital. But like that was the quote, so I don't know how you take that out of context.
Exactly.
Anyway.
He's welcome to come on the program and push back.
He often does join Bloomberg, and I hope he does soon. To the consumer story, which, let's be honest, is kind of related. Target, TJX, and Lowe's all reporting earnings this morning. Target had a good quarter. It raised its outlook, it had strong sales, but shares turned negative quickly once the earnings call began. Joining us now is Romaine Bostick, co-host of The Close. I mean, Romaine, it was a pretty quick turnaround. Is this just because their outlook is not as sunny?
Yeah, I mean, this is really the tale of two stories. What happened in the most recent quarter, the last 3 months, and what's actually happening in the here and now. In the most recent quarters, you're talking about the best comp sales growth in about 5 quarters, and quite frankly, one of the best performances they've had in about 4 years, 6%. A new CEO, he focused on baby toys, baby products, toys, as well as health products, and that boosted sales. Then the conference call started. James Lee, the CFO, started talking about gas prices, talking about the resiliency of the consumer, talking about tough comparisons for their fiscal second quarter, which is the quarter that ends in July. And you saw the shares go from up 4 or 5% in the pre-market to now down 4 or 5% in the pre-market. And that's going to be the story for a lot of retailers here. The first quarter, the first few months of this year probably did all right. What's up ahead for the second half? That's a big question mark.
Yeah, and TJ Maxx had a similar message that fuel costs are going to impact the outlook. Obviously, TJ Maxx, the stock has been on a tear over the last 5 years. It's up 140% total return, but it's starting to lag a little bit.
Yeah, TJ Maxx is an interesting story. I mean, they basically comp sales came in double what the street was looking for. We're talking about 6% growth. They actually tend to benefit, though, when you have economic downturns because they have sort of the low-income consumer that goes there for the discounts. The high-end consumer trades down to TJX, and they actually tend to improve margins historically during economic downturns because the way they source their goods, which is basically discounted merchandise from other brands that are struggling, they actually are able to pick up that merchandise at a better discount. So potentially they could actually see a big upside if we do get to an economic downturn.
By the way, Romaine, we're very much so looking forward to the close day. We are every day, but you have NVIDIA earnings. It's a big one.
It's going to be a big one here. No retail story there, not yet, unless Matt, you're out buying GPUs for your...
No, well, I mean, the retail story, I think, is, Max Kettner and this market investing in the demise of the consumer, right?
The demise of the consumer.
Low-value human capital is going to be the loser after AI, takes over.
Well, you heard it from Bill Withers, and have you seen all of the commencement speeches, all trying to sort of let them know? I've been to 2 commencement speeches over the last couple weeks. It's kind of interesting, the reaction by the audience relative to what the speakers are talking about with regards to the future.
I also think that's interesting because my theory is that all of the young adults graduating from college right now have had 2 years to do nothing but play around with AI. And they're all going to be much better at this than all of us ever were. Anyway, I'll end that rant. Romaine, really looking forward to the close today. That's Romaine Bostick, co-host of The Close. Catch him from 3 p.m. New York time. It's one you have to watch today, as you do every day, but they'll walk you through NVIDIA's earnings. Still at the desk is HSBC Chief Multi-Asset Strategist, Max Kettner. Max, it's something I was talking with Peter Orszag yesterday of Lazard, who basically had before said we're at this roadrunner moment where higher energy prices haven't yet impacted the global economy. And yesterday he said it's happening. Higher prices are now finally starting to impact us. You can kind of feel it in what Romaine was talking about with target earnings. Are we finally starting to see the impact of inflation more broadly?
I think on growth, we've got to be way more nuanced. I think it depends whether you are an open, a smaller economy. If you look at the likes of ASEAN, if you look at those smaller, open Asian economies, I think they're really struggling. Right? And we've seen that early on, that they've implemented those policies, fuel controls and so on. I think in Europe, we are starting to see it, definitely, right? We are starting to see some of the business surveys down, right? Business commentary also being a lot more concerned. I think consumer confidence, which is more correlated in Europe compared to actual spending, there we are seeing some influence already, right? And we are seeing that reflected also in consensus estimates for growth, right? For top-down growth, absolutely. I think in the US, it's much, much less the case, because let's remember what we're facing in the US is both for corporates and for consumers is an incredibly K-shaped economy that at the end of the day, for the numbers that we care about, I care about my Bloomberg terminal, give me that one retail sales number, give me that one PCE number, quarterly PCE number. What's that driven by? That's driven by the upper 10, 20%. It's not driven by the lower 20, 30% in terms of incomes. And they're doing absolutely fine because they're not really that exposed to what is happening with wages, what is happening with energy prices. They're exposed to the wealth effect. Equity's up now, that's helped, right? And look at the tax refunds. Tax refunds are running, you guys know that, they're running almost 20% ahead of last year. Most of that money goes to the upper 50%. So actually in the US, we have a lot of tailwinds for that one, what's really driving that one aggregate consumption number. And the other thing that I would add is, let's remember that when you look at things like weekly retail sales, like the Chicago Fed one or the like-for-like retail sales, we look at year over year. This time last year, we had a sugar rush of activity because of front-loaded activity because of tariffs. Remember that, right? Last year we had, oh God, everyone's trying to get ahead of tariffs. June and July, we had surprise indices coming off. We had a bit of a lull, right? Because this front-loaded activity was coming off a bit. I think there is a risk for the US, given those lower comps in the next 2-3 months, that actually growth will be looking even better because you've got good activity, but lower base effects in the next 2-3 months.
But Max, what about, so I'm looking at the S&P and the top companies by weighting. Obviously, NVIDIA doesn't, those sales are going to be great no matter what oil or jet fuel shortages there are in Asia and Europe. But Apple, Microsoft, Amazon, Google, I mean, these companies get revenue from overseas, right? It's even worse if you look at the Dow Jones Industrial Average. You've got Caterpillar there. You've got McDonald's. You've got Visa, American Express. These are companies that get revenue from overseas. So if Asia and Europe have a problem, does it eventually come back to U.S. indexes?
I think to a certain degree, maybe, yeah. Right, like for those, particularly for Europe, I think if there is some issues, particularly on the chip supply chain with Asia, right, coming and
Samsung.
particularly for something like Samsung with the strikes, yeah, that is, I think, a bit of an issue. Is that enough to make you bearish? I'd be doubting that, to be honest, because at the end of the day, like when you look at the S&P, I think there is going to be quite a few names that are struggling. But let's remember, if you look, for example, at the last the bottom half of the S&P, the last 250 names, that is 8% of market cap.
Yeah.
Right? So you've got 50% of the names accounting for less than a tenth of the market cap. So yeah, those companies, they're probably going to tell us, yeah, we're a bit struggling. But does it matter? Does that drive the indices? That's the K-shape, right? It's not only consumption that is K-shaped, it's also corporates that are K-shaped. And some of that stuff, right, I would say the more interesting and the more pressing issue probably is when people say, oh, there's no differentiation price tag. There is. You are seeing those guys, right? You are seeing those tech companies that are doing the capex. They are underperforming compared to your chips, your memory names. So it's not like, oh yeah, everything that's tech and everything that's Max 7 just goes up every day 3% and be happy. No, like we are seeing those names that are doing the capex, that are spending the money, they are underperforming quite dramatically compared to the ones that are receiving the money.
Does that mean you should also, considering it's this pillar really that's supporting the market, that you should either just not be buying, not touching, or even outright shorting consumer things, considering, I don't know, there's stories of earnings Romain was just talking about, issues with the labor market maybe into it. Reuters reporting this morning that they're cutting 17% of their jobs to streamline ops. It feels like something has turned in this labor market. There was a story that for some jobs at Deloitte and Zoom, they're cutting maternity and paternity benefits, which feels really crazy.
Only for the poorest workers, though. Right? Only for the workers who need it most.
Yeah, correct. I mean, only a minute here, Max, but it feels like something is turning, and maybe that's a reason to be bearish consumer-related names.
I mean, at the moment, because we do have that geopolitical uncertainty, yeah, maybe you want to stay out of those names, but also let's remember that the earnings season, we've got an almost 85% beat rate. Like this earnings season now, we've inflected higher, right? We have an inflection higher from a high base. This is the sort of earnings season that you normally see in 2009 or in 2020, right, 2021, after a recession from a low base. We've had an inflection higher from a high base. The one thing that's been lagging is price action. So I would say actually the next step is lean into a broad-based recovery, lean into those cyclical names. Look at transport, look at home builders, look at XRT at retail. All of that stuff has been actually lagging so far.
Okay.
I think that's the next trade.
Max, thank you so much for joining us. Such a pleasure to have you. HSBC's Max Kettner. World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are higher here as we await NVIDIA earnings. That's after the bell, right? But we do see yields coming down a little bit, oil prices coming down a little bit, and we dropped in the cash trade yesterday. So a bit of a bounce from there on the S&P 0.2, on the NASDAQ 0.5%. An IPO at the New York Stock Exchange. Lincoln International, mid-level investment bank, raising almost $500 million. I think $420 or so million in an IPO. So a lot of pats on the back there. Down at the NASDAQ, you've got Forbes ringing the bell, and there's no signage to explain why. And this guy is wearing a fedora, but we'll forgive him for that because they put out a list of the 50 top AI companies, and I'm excited to read it. Yeah. I have to say, I care. So maybe I'll buy it. It outweighs the fedora, but only a little bit. I might actually buy a copy of the paper magazine.
Whoa, when's the last time you've bought a magazine? Like, I can't even remember.
Really? I buy them a lot, yeah.
I mean, I pick up like a Business Week here in the office, but I'm not buying them.
The Economist, Road and Track, Car and Driver.
Can you get them all online? Why do you need the physical one?
Because I like to hold it. And if I'm on a plane, there's that point after takeoff and before landing when you can't use your phone, so.
Oh, they all got internet now. They all have Wi-Fi. Anyway, I'm looking at NVIDIA this morning. It's only up 0.5%. It was up more in the pre-market. It's going to have its earnings, of course, after the bell today. Can it keep the AI rally going? It has a high bar to meet. Sales growth expectations are above 80% year over year, and you tend to get some big swings priced into their earnings, post-day earnings session, Matt.
I'm looking at a headline here. James Murdoch buys New York Magazine. So he apparently wants that paper as well. Vox Media Podcast Network and Vox. So Murdoch making some moves. Target also posts its biggest sales gain in 4 years, but the shares, you can see, down 5.5%. As the retailer, Romain Bostic was just explaining to us, flags cost challenges in the current quarter. So it's not only oil that's become more expensive. Obviously, the price of gas. I filled up for $6.36 a gallon the other day. Put $110 worth of gas in my Challenger. Plastics, fertilizer, it's going to come through in food prices, so it's starting to hit, according to Target and TJ Maxx, the bottom line a bit. Joining us at the desk is Citi U.S. equity strategist Scott Cronert. And Scott, I guess those little inflation concerns, little yield concerns, not enough really to put a stop to this incredible rally. We closed still at 73.53 yesterday.
Yeah, I mean, look, we're bouncing, off of a pretty good move, I think, over the past couple of months. But look, let's be very clear about what we're looking at with the S&P 500. It's a bifurcated market. You have to make two market calls to essentially get the right perspective on this. You got half of the index that's trading off of the AI theme. I think that's pretty well identified at this point. Earnings there have been very strong.
Or like 10 companies?
Well, either way, okay, the market caps,
10
and the weights
is
come
half
down.
The index.
Well, as a very direct, it's probably even broader than that, okay,
yeah.
I guess would be the point. You get into some sectors, such as industrials, and trying to weave through which one's AI direct and which one's just sort of second or third derivative. We can debate that. But the point here is that you've got that half of the market that's beating to a pretty clear playbook. The beat and raise, the revisions, the positive trajectories are all very much in place. The other half of the index is actually trading much like you would expect if we told you that you're going to have an Iran conflict with higher oil prices, the inflation read-throughs, and now the interest rate bump. It's all trading much more in line with how we saw the second half of 22 unfold. Okay, so essentially the playbook from here is, okay, how do you think of these two components of the market from here? Our view is pretty straightforward. We think on the heels of the Q1 run that's driven this tech component, it probably needs to digest those gains. But it's premature to come back and call a coast as clear for the other half of the market. So that kind of keeps us a little bit close to the best short term, but it's with an underlying constructive view towards the balance of the year.
Is there any mechanism whatsoever that the other half of the market and its struggles impact your overall outlook for what equities do this year? Or is big tech and AI and the spending there just so dominant that it can continue to mask it?
So this is really interesting because we talk about this a lot internally with the team. It's like, well, okay, what's one of the antidotes to higher inflation concerns and higher interest rate concerns on valuation? Well, it's earnings growth, right? So the stronger the earnings growth, you offset what you think would be the valuation headwind of higher rates. So we've had that, right? But you get to a point where the lift gets harder and harder. So a 4.5% 10-year going to 460. If we get to 480 en route to 5, it's probably a little bit different storyline. You're going to have to acknowledge, particularly in the heels of the Q1 earnings strength, that part of the market needs to digest.
By the way, could that happen after NVIDIA earnings? Because we kind of have this lull in earnings post NVIDIA of like big things that could catalyze this market higher.
I mean, if I were to script this out perfectly, I think we back and fill into the end of the quarter, right? So we get the NVIDIA earnings. I expect that we're going to see a very solid result. I think these companies are very astute, and at the end of each quarter, they're leaving something in the tank for next quarter. So I think we've got that part pretty well identified. As far as that goes, though, it's going to be, in my mind, less and less about the actual amount of the upside and more about the persistence and visibility of the forward trajectories, right? So the way we're thinking about the NASDAQ right now is that, and the AI build-out, is that you're probably pricing in a good chunk of what earnings expectations should be for 26 and 27. Not sure we're pricing in 28, 29. So the persistence of the CapEx tailwind and the spending around this ultimately is what becomes mission critical. We think we keep coming back to that. We want these periods of pullbacks to buy into that.
At what point do higher prices and higher rates actually hit this market, though? I mean, at some point, after putting in $100 to the tank of my Challenger and spending God knows how many hundreds of dollars at Costco for groceries, I'm not going to be able to pay my $20 a month for OpenAI's ChatGPT, right?
Right. So those all become issues that we're going to have to contend with, and that's where you fall back on, okay, what's the duration of the conflict? At what point do you begin to unleash some of the supply that's waiting to come on the other side of the Iran conflict? And that's the big imponderable. That's what we're all contending with right now. It's really interesting, though, on the consumer component. We were looking at this. We wrote about it over the weekend. You look at consumer discretionary, and the earnings revisions have been persistently negative for over a year now. But this isn't a new phenomenon. We've been navigating an increasingly complex situation around the consumer. Yes, we got wealth effect helping the higher end, and we know that the lower end is being encumbered by any number of forces, higher oil prices, inflation, and so forth. So at some point, you do need to get a line of sight towards end of the Iran conflict and oil prices. And so, heck, I'm watching the oil futures curve more than I have in quite some time. And what we really want to see is conviction that you're seeing 100-plus crude on this path down to sort of a $70, plus or minus level. We're not there yet. We're not there yet. So that becomes the key point here. And that's why, honestly, I think a lot of my peers have been raising targets for the S&P. I'm not inclined to do that just yet.
It does feel like we keep moving the goalposts, and, not you, Scott, but the analyst community as a whole saying, okay, the worst case scenario is that the Strait of Hormuz gets shut. It gets shut. The worst case scenario is that it lasts 3 months. I mean, now here we are in May, and now it's this language of, well, maybe we can handle it. So what is the timeline in which it becomes a concern?
Yeah, so it's really a good conversation. For the past 2 months, we've been using this frog in the boiling pot of water analogy, where nobody really has the conviction or the visibility to really project it. So you keep waiting. You keep waiting. The longer you wait, the more the pot boils, and essentially you really have an issue. So we know that that's out there, but we are starting to handicap it. And so what I would just say in that, I think we look at the U.S. as best house in the global neighborhood around oil dependence or independence, if you will. And we look at big tech as arm's length from this issue. So we still think that within the U.S. stock market, we've got some areas that kind of keep us arm's length from the issue. At some point, though, it does become enough of an issue that we have to recognize it. But here's the trick from my seat. Let's say it extends another 3 months, and then you get the relief from oil prices. Well, what's happening is that at that point, you're going to want to buy and own that part of the market that's been most negatively impacted. And then that begins to set up for a springboard effect down the broadening path. So all of this is timing, right? So that's where we're kind of, fairly smug. We got a 7,700 year-end target. We're not changing that right now. I think we probably get a little bit of a digestion phase here. But as we get further into the year, you begin to get a line of sight to where higher for longer oil prices is an issue that builds up to a point where then when it does release or relief, then you're going to get a snap back the other way. So it still kind of sets us up in our view for a pretty decent risk-on circumstance as the year unfolds.
Okay, Scott, you're going to stick with us. Scott Kroner of Citi. First, though, let's get a check on these equity markets. About 10 minutes into your cash equity trading day, and we are higher, snapping 3 consecutive days of losses where we dropped about 2%. We're only up 0.2%. Breath is somewhat even, but if you are buying into the AI narrative, a pretty good day for you. We have a lot of the chip makers rebounding. Intel, AMD, Micron at the top of the pile in terms of points that they are adding. NVIDIA kind of creeping into the top 10 before their earnings after the bell. So again, a lot of chip makers. TJX, they reported earnings. On the downside, you do have some companies that reported earnings. I was looking for Target. There it is. Target down 3.4%. So you also have a lot of other consumer names having a tough day. Costco, Lowe's, Intuit. According to Reuters, they're cutting 17% of their staff and refocusing on AI. Usually that's been good for companies when they announce job cuts, but for Intuit, that's not translating into any sort of gain for them. If you look into the sectors, utilities is really high, but it's all of the power companies. So you can make the argument that's also an AI rebounding. Companies like Dominion Energy, all of these things that are powering data centers. Infotech, I pointed out, NVIDIA's up along with the other AI chip names. So most of the sectors are up. The only losers are staples, financials, and materials. Again, some of those consumer-related names. Costco is down, for example, on fears of higher costs and maybe weakness into the future, as Target was pointing out, Matt.
All right, excellent roundup there. When we come back, we're going to get an excellent analyst. Mandeep Singh joins the conversation around the impact of NVIDIA's earnings. Earnings report coming out, obviously, after the bell. We're going to focus in on it and keep Scott Kroner from Citi here with us as well. This is Bloomberg Open Interest.
is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi, but Peru use fresh fish, make the called the ceviche, cooked with the lemon juice. You never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combine to Japanese style and another country food, then make noble style.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
"15 minutes into your trading day, let's get you some top calls. What the sell side is saying this morning. First up, we have one on Etsy, upgraded to a buy. From neutral at already following earnings, analysts see opportunity in its turnaround efforts, similar to what eBay did last year. And as far as we know, GameStop is not trying to buy them too. Etsy shares up only 0.5%. Next up, Newell Brands downgraded to underweight from equal weight at Morgan Stanley. Analysts say that the company behind Rubbermaid and Sharpie face cost pressures amid the Iran war. And finally, Cigna cut to a hold from a buy at Deutsche Bank. The analysts say that the health insurer faces uncertainty as it transitions a part of its insurance portfolio. Shares that were up 2%. Is this Cigna? That doesn't look like Cigna. Surely not.
CIA
Energetica
de Minas Gerais.
That can't be right.
I don't think that's Cigna.
I don't think that's correct. Anyway, Deutsche Bank has got Cigna at.
Yeah, no, Cigna, the ticker is CI, and the stock is currently up 0.2%. So just a tenth of that move. NVIDIA's earnings are set to test whether the AI stock rally still has fuel or is nearing the breaking point. Let's discuss expectations and impact on the broader market. We have back at the desk with us Citi U.S. equity strategist Scott Cronert, as well as via satellite, Bloomberg Intelligence, global head of tech coverage, Mandeep Singh. So, Mandeep, you have yet to weigh in on this with us. Obviously, analysts are expecting them to beat and raise. Can they meet that expectation? Are we still seeing, pricing power and a growing TAM?
Yeah, look, Google yesterday gave a data point. Their token consumption has grown almost 7x in the past 12 months. And we know Google TPUs is about 30% of the accelerator market. NVIDIA is almost 70%. And from that perspective, when a market is growing 7x, Even if NVIDIA doubles the supply this year, you can see, the demand far exceeds the supply of all these accelerators. And so from that perspective, with all the memory shortage and power constraints, this market continues to grow, very nicely. And I think that will be reflected in NVIDIA's results.
This is the thing, Scott, to bring you in is NVIDIA, Micron, all of these AI-related companies are seeing earnings grow so rapidly, even though they've run up massively too. Micron is still trading at something like a 7 times 12-month forward earnings. So how do you distinguish whether you're nervous about the big run-up or whether you look at these stocks and say, hey, they're really cheap and still trading at a bargain?
Yeah, for me, it always comes down to time frames. And we like to pull out PEG ratios when we're trying to get our heads around this. And PEG ratios aren't necessarily predictive, but they are very explanatory. Right now, when you look at the NASDAQ 100, which is going to include a lot of these, you're looking at a PEG ratio that's the lowest literally it's been since 2012, okay? So essentially, what does that tell us? That tells us that there's a cyclical expectation that's still being built into the price action whereby, yeah, we're discounting what you think earnings are going to be this year or maybe next, but I don't think it yet allows for the persistence of this CapEx-related playbook to take us out to the end of the decade. So again, that's the back and fill around the strong quarters, but then the power ahead, the surge ahead is still that this picks and shovels play presumably has a long way to go, and it's not yet fully reflected in the valuations.
That's right. So the term power makes me think of, and picks and shovels, really the bottlenecks here. So what are the other bottlenecks, Mandeep, in terms of NVIDIA's earnings report? Like what will we learn that they need, or what are their biggest constraints?
I mean, look, we know Anthropic has done far better over the past few months than OpenAI. And when I look at NVIDIA's exposure, it probably is more skewed towards OpenAI and, Meta and those frontier labs compared to Anthropic, where Anthropic has so far relied mostly on Google and Amazon for their training and inferencing. And so from that perspective, the shift in model providers and, Anthropic gaining the lead and obviously Google token consumption being off the charts kind of goes to show maybe, NVIDIA may have some pressure in terms of their model exposure. But like I said, when a market is growing that fast, I mean, NVIDIA has a lock on the TSMC supply, and that is where everyone will still continue to buy NVIDIA's chips, regardless of what is going in the model race.
Hey, Mandeep, just quickly, to Scott's point before about some of these chip makers, should we stop thinking about them in the cyclical way that we typically do for this cohort?
I mean, not until we close this 7x demand. So we know what the demand level is, and we know how fast the capacity is ramping up. Until that narrows, I think there is still a decent runway, but we know once we are close to equilibrium, the semi stocks would have probably moved by that point. So that's what I'm on the lookout for, is the gap between right now, the capacity is expanding, maybe 2 times, and the demand is almost 7 times. And that's where you want that narrowing of that gap between supply and demand to figure out when this will end.
Scott?
Yeah, so I mean, we're used to this differentiation within the semiconductor component, right? So the flash memory and related companies, historically, they've been viewed as, let's call it, more cyclical. And commodities, if you will. And the moment you begin to see pricing pressure move and demand increase, the expanded capacity, and that begins to get you to the end of the cycle. The issue, and one of the tricks here, is going to be, okay, do you get that historic level of cyclicality, or do you find that there's a new continuum here, right? Where, yeah, granted, Mandeep is right. At some point, the spending surge is behind. You're going to get some flattening or some rolling over. But again, timelines here, does that take us all the way back down to the throes of a traditional cyclical downturn? Or is there a different level of stability that unfolds? If that's the case, then you can argue for higher through cycle valuations, which would say that a lot of the semis that are still trading as if it's a cyclical phenomenon still have room to re-rate.
It's been so interesting. Scott, thank you so much for joining us this morning. Really appreciate your time. That's Citi U.S. equity strategist Scott Kroner and Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh. Mandeep, thank you very much. Now, we discussed the high bar for NVIDIA earnings next hour with Goldman Sachs analyst Jim Snyder. That's in hour 2 of Bloomberg Open Interest. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. Let's check on what's going on in terms of stocks here. 25 minutes into the session, we're looking at gains on the S&P 500 to 73.78. The NASDAQ up back over 29,000. It was briefly after those two indexes came down yesterday on rates concerns, higher rates, on oil concerns, higher oil. We're seeing those two things turn around now. So you can see here's the long bond just down a little more than 1 basis point, still at 517, but we have the 10-year also down, really rates down across the curve, and crude down. Brent crude at 108.79. We also have NVIDIA as really a focal point of this market today, even though earnings don't come out until after the closing bell. So NVIDIA shares not doing a lot, up about 1/3%, but it's a $5.3 trillion company. Google down just about 1/4%. Intel gaining 5.5%. The chips are doing well today. So Intel, Micron, and really across the chip sector, you have gains that could break a 3-day losing streak. I think Ed Ludlow was pointing out that since Friday, the SOX index is close to correction territory. So it's been an insane move, but that on top of crazy climbs as well. Target now down 7.33%. Earnings impressed the street. The shares were up in the pre-market, but then the CEO on a conference call said cost pressures are going to start to hit. So now Target is down. TJ Maxx is up. And we just had Romaine Bostic from the Close On pointing out that, in tough times, people trade down to TJ Maxx. So it could be a beneficiary. Coming up in the next hour, Indriani Day on a narrow market breadth this earnings season. Plus, the CEO of Hasbro joins us on the cost pressures related to its toy business. The market thinks they're sufficient, and the shares are down 9%. This is Bloomberg Open Interest.
AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend in the investment is real.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
From ABC News, I'm Sherry Preston. We've just gotten word that former Congressman Barney Frank has died. Frank was a fixture in Massachusetts Democratic politics for decades, a veteran House member and a gay rights advocate. He was 86 years old. Republicans on Capitol Hill are reacting to news that the Justice Department will this afternoon announce an indictment against former Cuban leader Raul Castro in connection with the shooting down of a plane carrying aid to migrants back in the 1990s. This is Florida Congresswoman Maria Salazar.
Today is a glorious day for those Cubans who had to leave their homeland unwillingly, the people that we represent in the city of Miami, only because of the cruelty and the wickedness of a group of gangsters, the Castro family.
3 Americans were killed in the shoot-down of that plane. On his way to deliver the commencement address at Coast Guard graduation this morning, President Trump talked about his endorsement of Texas Attorney General Ken Paxton over incumbent John Cornyn in the Senate runoff next week.
I did. They'll be all right with it. They want to win. I know how to win.
The candidate Trump picked to run against Kentucky Republican Congressman Thomas Massie did win over Massie, who was one of the few Republicans to push for the full release of the Epstein files. Could the Ebola outbreak affect the World Cup, especially in the state of Texas?
The outbreak is centered in Uganda and the Democratic Republic of Congo. And Congo's national soccer team is set to play World Cup matches in Houston in June. At the Centers for Disease Control and Prevention,
we're actively working with FIFA, ensuring that travelers and the American public remain safe.
Satish Pillai heads the CDC's Ebola response. The Congolese team has canceled plans to practice in areas of the country where the illness has been detected before coming to the U.S. to play less than a month from now. Jim Ryan, ABC News, Dallas.
Checking the markets, the Dow is up 20 points this hour, the S&P up 23. You're listening to ABC News. We're learning more about the teenage gunman who killed those 3 people at the Islamic Center of San Diego on Monday.
The FBI says the 2 teens met online, were radicalized together, and shared what agents call a broad hatred of different races and religions and anger over being rejected by women. Back in San Diego, the focus is on the lives lost. The daughter of security guard Amin Abdullah, who sacrificed his life to protect the kids in that school.
He stood against any form of hate. He took his job seriously to protect everyone here. He would want our community to stand together as one.
Remembered her father.
ABC's Sophie Flay. Americans are on the move ahead of Memorial Day. Here's ABC's Alex Perez in the Midwest.
Right now here in Chicago, traffic is moving, but brace yourself for congestion. One company that tracks these things says we can expect to see the heaviest traffic in Denver, New York, Washington, D.C., Boston, and Los Angeles. Wherever you are, the worst times to get on the road this holiday weekend will be Thursday from noon to 9 p.m., Friday from 11 a.m. to 8 p.m., Saturday from noon to 5.
Turnaround for Target, the retailer announcing that its net sales rose 6% year over year following a string of weak sales numbers. Single Gen Z women are outpacing men when it comes to buying a home. They accounted for 35% of all home buyers in their generation compared to 18% for men, according to the National Association of Realtors. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are also streaming live on YouTube and at Bloomberg.com. Scarlett Fu, Paul Sweeney, this is the Bloomberg Intelligence Program. We've got some red and green on the screen. We'll get to that in just a moment. Tyler Kendall's going to lead us off here, Bloomberg Washington correspondent. Get the latest political stories coming out of Washington, D.C. as the president heads up to the Coast Guard Academy for the commencement address. Ed Ludlow, B-Tech co-anchor on some of the top tech stories. I see Meta beginning its layoffs there. We got NVIDIA earnings after the close. That's big, so we'll get a little preview there. Anna Rathbun, CEO and founder of Grenadilla Advisory, get us her thoughts on the markets. And Matt Sheltonhelm, Bloomberg Intelligence media litigation analyst, on this fight between Elon Musk and the OpenAI issues. There's a whole lot of stuff going on there in the world of AI, Elon Musk and some others as well. So we'll get the breakdown there. But right now, let's go to John Tucker and get a Bloomberg Business Flash.
All right, guys, this Bloomberg Business Flash brought to you by IBKR. Will the Fed raise rates by 25 basis points in June of 2026? Trade your predictions alongside your stocks and options at ibkr.com/predictions. Last trading day is June 17th. Mixed market right now. 9 of the 11 major industry groups in the S&P 500 are higher. Utilities right now are the top performer. I guess that's because people are cranking up the AC. I don't know. Intel, best performing stock in the S&P 500 right now. It is up close to 6% as we see a rally in chip stocks. And NVIDIA rising just about 0.4% ahead of the chip makers' first quarter earnings, of course, after the close. Wall Street forecasting sales going to rise 79% from a year ago to $79 billion. Now at Target, the shares are lower right now, down over 7%. It's a forward-looking mechanism. The markets here, executives at Target warning of tougher comps and more cost challenges ahead. With the Treasury yields hovering around multi-year highs, Keith Lerner at Truist Advisory says, you know what, the resilience of the stock market is going to get tested.
When you think about why markets have actually been somewhat more resilient relative to these headlines, you know, AI is a common theme for large caps, for small caps, for emerging markets as well. And we think that theme is intact, but also probably likely due for a little bit of a rest here.
S&P 500 up 16, up 0.2%, 7370 on the index. The Dow 54 points lower. The Nasdaq Composite Index is up 114 points. Brent crude 2% lower at 109.04 a barrel. Intuit also reporting after the close. And ahead of that, we're learning from this Reuters report, they're cutting 17% of their staff. So that works out to 3,000 workers. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
John Tucker, thank you so much. We appreciate that. Scarlett, Phil, and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on that YouTube thing, also at Bloomberg.com/video. That's where you'll find us here. As John was saying, we got red and green on the screen here. Let's see what some of the movers are doing today in the market. We're joined by Avalon Purnell, equities reporter for Bloomberg News. Avalon, what are you looking at today?
Well, we have to start off with Kava Group. That's ticker Kava, currently up about 4.3%, though earlier it jumped as much as 14%. That's after the Mediterranean restaurant chain defied downturn fears and raised its annual sales outlook. It also reported comparable sales for the first quarter that beat expectations. Kava partially has reasonable prices in the launch of its pomegranate glazed salmon to thank for the positive results. Morgan Stanley was writing that the results should support the stock and that it counts the rollout of that salmon as one of the focal points of the print.
Never eaten there. Have you?
Oh, you haven't?
I have, yeah.
Yes, I love it for the airport.
The
I
what?
feel like that's my go-to airport food.
Oh, is it? Okay.
Yeah.
All right.
It feels healthy, especially if you're at the airport.
How much should one of those things cost?
Well, most of the chicken and falafel bowls are less than $12.
Oh,
the salmon, on the other hand, you're looking at
falafel bowl.
15 plus.
Yeah, you're getting John Tucker a falafel bowl. No questions asked there.
No, I'll go for that.
All right, second on your list, Aviel.
Lowe's, that's ticker Low, currently dipping about 3.2% to hit its lowest intraday level since June. That's after the home improvement retailer reported a slight miss in comparable sales and operating margin. Management also said that it's expecting near-term pressure from higher transportation costs on the earning call, which, as could be expected, isn't really making investors that happy. Barclays writing that while sales trends remain stable, they do expect a fairly muted stock reaction as the weather-related slowdown in April may have hit the company a little bit more than expected.
TJX. I hear it's a place to go. You can get some really cool things at a good price. Is that right?
You are absolutely right. That's the owner of TJ Maxx and Marshalls, currently climbing about 5.1% for its biggest intraday leap since August. And that's after it raised its full year sales outlook as cautious shoppers continue to spend more money in its discount chains. Jeffrey's writing that the beat and raise quarter reinforces continuing strength in off-price companies. And it's also worth noting that TJX says that its full year outlook now assumes higher fuel costs for the rest of the year. And as we already mentioned, that's something that we're keeping an eye on for all of these consumer stocks, but it's making it one of the top performers on the S&P 500 today.
All right, good stuff. Avalon Purnell, thank you so much. She is one of our equities reporters. And of course, for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. That is available on Apple Podcasts, Spotify, or anywhere you listen. Where are we at here with this U.S. war in Iran?
I kind of feel like I think the president's comfortable right where we are. I don't think he feels the need to move in any direction. I was just listening to some of the comments today before he left for the Coast Guard Academy. Mm-hmm. He seems pretty comfortable right where kind of we are. And
but there's a lot of threats being lobbed around.
There are. And we had Paul Sankey, one of the best oil analysts on the street, come in here and say this morning, hey, get ready for $6 gas at the pump.
Oh boy, that's going to be a new high, not new high, but a new low for consumers when it comes to that new high for oil prices and gas prices. All right, let's check in with Tyler Kendall. She is our Washington correspondent to walk us through what we know about the war in Iran, because now Iran is threatening to retaliate beyond the Middle East if there's a resumption of the attacks on Iran. Where are we at with things?
Well, Scarlett, as you mentioned, there's been a fresh round of threats from both sides. We have this now renewed risk coming from Iranian state media via the IRGC, which said in part, quote, if aggression against Iran is repeated, the regional war that has been promised will be this time extended beyond the region. That's considered to be an escalation when it comes to the rhetoric, as Iran has continued to retaliate within the region. Earlier this week, the UAE confirming that a power plant had been hit and that Saudi Arabia intercepted multiple projectiles that had entered into its airspace. The broader backdrop here is that President Trump has threatened that escalation from the U.S. side is very much on the table. And as Paul mentioned, we heard from him speaking to reporters as he headed out earlier today. And in part, he said that he was in no hurry when it comes to striking a deal with Iran. But just yesterday, he threatened that we could see a big strike, and he is only giving the country, quote, limited amount of time to come to the table for a deal amid what has been reporting that President Trump has been advised that some limited strikes may be enough to pressure Iran to reach a deal. Because at this point, the White House maintains that Iran's counter proposals are insufficient, mainly due to a lack of conversation around potential curbs on the country's nuclear program. But Paul and Scarlett, we know other big disagreements remain, including Iran's insistence for full financial relief, that there be payments for war damages, and that Iran retains control or at least a role in governing the Strait of Hormuz going forward, considered to be a non-starter for the U.S. as the U.S. maintains its own naval blockade. I'll quickly mention the Wall Street Journal reporting from yesterday that the U.S. seized another sanctioned Iranian-linked oil tanker as they try to crack down when it comes to the economic pressure and the Iranian-linked shadow fleet.
Is anything scheduled, Tyler, in terms of negotiations between the two sides, the three sides, maybe including Israel, I don't know, in Pakistan? Is there anything scheduled? It just feels like we're at a new normal of this is life.
That's a really good point, Paul. At this point, negotiations are continuing via phone, via Pakistani mediators. This White House has been very complimentary when it comes to Pakistan's role in this, and it is our understanding that Special Envoy Steve Witkoff, alongside the president's son-in-law Jared Kushner, also Vice President J.D. Vance, and Secretary of State Marco Rubio are those U.S. officials that are leading the U.S. side when it comes to negotiations. But at this point, no update on if we will see another round of in-person, face-to-face talks, because so far the U.S. has maintained that there hasn't been enough progress when it comes to the proposals. The latest reporting from last week was that perhaps the sides were moving closer to some sort of phased deal, where first we would see a reopening of the Strait of Hormuz, a lifting of the U.S. naval blockade, to give some time to negotiate the more complicated issues, such as Iran's nuclear program. But at this point, it appears that those efforts have stalled, as now President Trump says that military escalation could be on the table in order to change what at this point has become a status quo.
Tyler, I also want to get your thoughts on what's going on in China with President Xi Jinping and his Russian counterpart Vladimir Putin meeting. This comes shortly after President Trump and President Xi had met as well. Can you just compare and contrast what's being done between Russia and China versus what happened between the U.S. and China?
A pretty remarkable side-by-side if you actually compare these greetings. A lot of the pomp and circumstance, if you will, looks very similar, though China and Russia are really highlighting what they say is a strong bilateral relationship, and off the bat put out some 40 agreements they say that the two sides have signed related to trade, technology, even the building of railway infrastructure. Compare that to what seemed to be a little bit more of a difficult time to get concrete negotiations and agreements from President Trump's visit to Beijing. It underscores how these two countries are very closely linked, as Chinese state media does confirm that the two leaders did discuss the conflict in the Middle East. Of course, Iran and China, both big backers China and Russia, big backers of Iran, but both have a vested interest in perhaps seeing the Strait of Hormuz reopened, considering that the majority of oil flows do go towards Beijing. It'll be interesting to watch as more countries become perhaps more vocal when it comes to an end in the war. We got this statement out from the Chinese president earlier today, urging a, quote, comprehensive ceasefire as imperative. Restarting the war is even more unacceptable, he said. Paul and Scarlett, yesterday on this program, we had broke that people familiar with the matter said that NATO allies are looking at getting engaged potentially to help reopen the Strait of Hormuz. So we're seeing a lot more weigh in on some solutions to end the conflict.
All right, very good. Tyler, thank you so much for your reporting. We really appreciate it. Tyler Kendall, Bloomberg Washington correspondent. She's down in our Washington D.C. studio getting the latest on Iran. And it just feels like we've kind of settled into we being, I don't know, the market or just kind of the overall.
Well, the stock market stopped paying attention long ago.
Yes, or the zeitgeist, as Tom Keene would say, is just kind of settled into this is kind of where we are.
Yeah.
And oil is going to be sitting up here at these elevated levels. And people seem to be kind of reacting and just kind of dealing with it.
I mean, the idea, of course, and this is something Mike McGlone has brought up over and over again, is that oil prices will come down because the president will do something or say something to make that happen before the midterm elections.
Yeah, I don't know. He just, the president doesn't seem, again, just judging by his comments this morning, I didn't sense that he sensed any urgency to kind of get a resolution here.
ओए गाइस, ये क्रूड ऑयल में सेलिंग का ट्रेड बुक करना, ठीक है? यहाँ से एक बाइंग एक्सपेक्ट करेंगे नेचुरल गैस में कुछ नहीं चल रहा, नेचुरल गैस के सपोर्ट रेजिस्टेंस दूर हैं, कुछ कर नहीं सकते, वॉलेटिलिटी है, थोड़ा थोड़ा ध्यान रखना। क्रूड ऑयल में सेलिंग में निकल जाना, बाइंग में अभी इन्वेंट्री के बाद जाएंगे फिर अब, ठीक है, इन्वेंट्री आने वाली है। क्रूड ऑयल की फोरकास्ट देखोगे, लास्ट टाइम -4.3 था, इस बार -2.5 है लास्ट टाइम से, थोड़ा सा ज़्यादा एक्सपेक्ट कर रहे हैं, तो ज़्यादा आया तो इट विल बी बेरिस फॉर क्रूड ऑयल प्राइस, तो ऐसा ना हो नीचे का सपोर्ट और ब्रेक कर दे। तो इन्वेंट्री बेरिस फोरकास्ट के अकॉर्डिंग तो यही है, देखते हैं क्या आती है इन्वेंट्री, 10 मिनट है। सेलिंग में निकलना चाहें तो निकल सकते हैं क्रूड ऑयल में, ठीक है, काफ़ी लेट मोमेंटम आया है, बट जस्ट बिफोर द इन्वेंट्री मूव आ गया तो वेल एंड गुड।
My opinion. I'm right now at 99% in Israel. I could run for prime minister, so maybe after I do this, I'll go to Israel, run for prime minister. I had a poll this morning. I'm 99%, so that's good. But my opinion, I'm right now.
दस मिनट इन्वेंट्री में। नेचुरल गैस पता नहीं क्या कर रहा है, आज तो पूरा ही वॉलेटाइल है। थोड़ा हायर टाइम फ्रेम पे देखोगे, थोड़ा प्रॉफिट बुकिंग एक्सपेक्टेड थी, आ गई है, लग रहा है 1-2 दिन और लगाएगा रेजिस्टेंस तक जाने में। 7 minute left inventory, crude oil. Remember there is 3 crude oil inventory will be there, crude oil inventory, gasoline inventory and EIA data. All three are very important and we can, consider crude oil inventory combining all these three inventories together. कि मुझे लग रहा है नेचुरल गैस अगर 296.5 के ऊपर क्लोज हुआ तो थोड़ा सा और अपसाइड जा सकता है, वैसे तो रेंज के अंदर ही है। एक पॉसिबिलिटी लग रही थी 292 तक जरूर जाएगा, अटक गया बीच में ये भी। सो दिस 15 मिनट कैंडल क्लोजिंग इज इंपॉर्टेंट, देखते हैं कहाँ पर जाती है क्लोजिंग बेसिस पे। नेचुरल गैस भी लग रहा है 290 की जर्नी करने वाला है। टू 96.5 के ऊपर क्लोजिंग आनी चाहिए थी, नहीं आ रही है। आती है तो होल्ड करेगा, नहीं आती है तो शायद 50-50 चांसेस रहेंगे इस लेवल पे नेचुरल गैस के, मे बी मोर फॉल पॉसिबल। ओके 1 मिनट लेफ्ट इन क्रूड ऑयल इन्वेंट्री। आज एफओएमसी मिनट्स भी रिलीज होंगे, उनको भी देखेंगे हमारा मार्केट क्लोजिंग होने के बाद। इन्वेंट्री आ गई है क्रूड ऑयल की। फ्लैट ओपन है कैंडल, तो कैंडल इज ऑलमोस्ट फ्लैट ओपन। क्रूड ऑयल की खुद की इन्वेंट्री पॉजिटिव है, बाकी की दो इन्वेंट्री बेयरिश है। तीन में से दो इन्वेंट्री बेयरिश है प्राइस के लिए, एक बुलिश है। तो ओवरऑल हम कहेंगे क्रूड ऑयल इन्वेंट्री इज बेयरिश फॉर क्रूड ऑयल प्राइस। ठीक है, सिर्फ इसको मत लेना, दो और इन्वेंट्री भी आती है। तो क्रूड ऑयल की इन्वेंट्री बुलिश फॉर द प्राइस, बाकी की दो इन्वेंट्री जो है गैसोलीन इन्वेंट्री एंड ईआई का डेटा, दोज आर बेयरिश फॉर प्राइस। So overall crude oil inventory is bearish for crude oil price. तो इन्वेंट्री बेरिश है, देखते हैं कितना और नीचे जाता है। ठीक है, एज एक्सपेक्टेड नेचुरल गैस कंटिन्यू फॉलिंग। इस इन्वेंट्री तो बेरिश है, नीचे सपोर्ट है क्रूड में। देखिए इन्वेंट्री थोड़ा सा बेरिश आई है, बट ये सपोर्ट ठीक ही है। लाइक इसके नीचे तो कोई सपोर्ट भी नहीं दिख रहा। थोड़ा कम क्वांटिटी से प्लान करते हैं, ज़्यादा बड़ी क्वांटिटी हम नहीं लेंगे। सो गो विद अ स्मॉल क्वांटिटी, डोंट टेक हैवी रिस्क, हैवी क्वांटिटी रिस्क इन दिस ट्रेड इन क्रूड ऑयल। ठीक है, इन्वेंट्री बेरिश ही आई है अगेन, बट इट इज़ अ सपोर्ट। सेलिंग का टारगेट हो चुका है ऑलमोस्ट, इसमें निकलना। बाइंग में क्वांटिटी थोड़ी कम रखना, एसएल जाएगा तो होल्ड नहीं करेंगे। अप्रॉक्सीमेटली 100 पॉइंट का एसएल लेना ही पड़ेगा, इससे कम तो नहीं ले सकते जब तक 9500 के ऊपर है। यहाँ से बाइंग देखना पड़ेगा कितना स्ट्रांगली आती है, अगर ज़्यादा कुछ बड़ा मोमेंटम नहीं किया, क्योंकि यहाँ पर पहले भी एक बार बाइंग मार्केट कर चुका है, काफ़ी बड़ा हाई क्रिएट किया, लास्ट स्विंग का हाई उसी का है। सेकेंड टाइम है, लोअर स्विंग क्रिएट किया तो फिर वीक हो जाएगा लेवल भी।
Scarlett was just mentioning, yields are coming in here. The 10-year Treasury yield's coming in about 4.5 basis
It's like
points.
a tentative risk on as NVIDIA gets ready to report earnings after the close. The stock is higher for the first time in about 4 days. Certainly not recouping all of its losses, but that is the setup as we get into these earnings.
Yeah, I'm not going to pay attention to NVIDIA's earnings, but a lot of people will be, like Tim Stenovic and his colleague.
They'll be breaking it down.
Exactly.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages are higher. We're headed for the first gain in 4 days. Chip stocks rallying. Intel, best performing stock in the S&P 500. And right now, that is up over 8%. The company behind TJ Maxx and Marshall's climbing over 5.5%. They delivered stronger profit and revenue for the first quarter than expected. Investors looking for clues on whether the tech-led surge recently has more room to run. NVIDIA right now up 1.5%. They're going to set the tone for the markets when they report after the close. Jay Goldberg at Seaport Group. He's kind of lukewarm on the company.
Just to be clear, I think NVIDIA is a good company. They have good products. I think highly of Jensen, but they've just gotten so big. It's hard for them to excite expectations the way they used to.
Right now, the S&P 500, 43 points higher. The Dow up 263 points. The Nasdaq Composite Index up 231 points. The 10-year yield 4 basis points lower, still at 4.62. The long bond, 5.15. It is down right now 3 basis points. Brent crude down 3.8%, 107.09. Mercedes-Benz unveiling an electric sports car, and since it's electric, it doesn't make any noise, so they're going to simulate gear shifts and reproduce the soundtrack of a V8 engine, trying to win over some
Matt Miller
car enthusiasts. But it's fake. When you pump in the sound.
No, thank you.
I don't get it. But top speed, 186, and can go from 0 to 62 in 2.1 seconds.
Which you all have to do.
Well,
you need to go to 0 to 60.
Very useful when you're coming into the city at the Lincoln Tunnel in the morning. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, JT.
Please don't speed.
No, I don't do that. I do tailgate sometimes, so I have to work on that.
Oh, Scarlett.
That's bad.
I know.
Bad.
I'm working on that.
The 2-second rule. That's that guy's, right, John?
Yeah.
Right? Yeah, the 2-second rule. So
Just hold off at every point and wait 2 seconds.
No, just when you the good distance between the car in front of you is
it's 2 seconds.
When it passes a landmark, say 1001, 1002, then you pass
I tend to count faster than the average person. That's my problem. But I'll work on that as well.
Driving with Scarlett.
Yeah. All right. Yes. We are an AI-obsessed market in every way, whether it's talking about companies that are making some changes to staffing because of spending due to AI, or awaiting NVIDIA's results, or watching a legal case involving OpenAI and Elon Musk. And it's really that one that I want to pick up on, because that's been going on for a couple of weeks, and it's really captured a lot of people's attention. Paul Sweeney, two billionaires duking it out, and it looks like Elon Musk lost, and he says he's going to appeal. I want to get a better understanding of what this lawsuit means and what it allows for. Matthew Schettenhelm is our media litigation analyst at Bloomberg Intelligence. He is joining us right now from Washington, D.C. So is it as simple as, Matthew, Elon Musk lost, Sam Altman won, so now OpenAI can go public?
I think that's the big takeaway from this. It's not completely over yet. As you said, Elon Musk has vowed to appeal this decision on Monday. But at this stage, things are looking much better for OpenAI. This was a pretty serious case because it had advanced this far. The judge had let it clear, a motion to dismiss, a motion for summary judgment, let it go all the way to trial. And Musk was seeking pretty severe remedies against OpenAI, not just over $100 billion in potential damages, but limits on the company's ability to seek private investor returns. Musk wanted the company to be limited to serve the good of the world first and foremost, and effectively that would cap private investor returns. Doesn't really work for an AI company. So Musk losing this with this jury decision that the judge adopted on Monday is a big step forward for OpenAI in avoiding this overhang.
Elon Musk says he's going to appeal. I know you have opinions on how successful appeals may be. What do you think in this case?
Yeah, so I think it's going to be an uphill battle for Musk at this point. Most appeals fail. And here, this appeal would go to the Ninth Circuit Court of Appeals. And Musk would be limited to arguing that the jury and then the judge got it wrong on the statute of limitations. The jury said Musk filed this suit too late, and there's a 3-year statute of limitations for breach of charitable trust claims. Typically, appeals courts look at legal questions. Was the judge right on that 3-year test as being the controlling law? Where appeals courts have trouble and have limited ability to intervene is factual questions. And here, a jury took up the factual questions of what did Musk know and when did he know it? And getting into the nitty-gritty of that, their conclusion that he should have sued earlier because he knew about any alleged wrongdoing earlier, that's going to be a tough thing for 3 appellate judges to second guess because they tend to defer on factual questions. So I would think Musk is a pretty significant underdog as this case goes to appeal.
So what did Elon Musk get out of this trial, this case?
Well,
does he come out ahead in any way?
He put a lot of pressure on OpenAI. I think some have argued that Sam Altman, he had a very difficult cross-examination, and maybe there were questions raised about his truthfulness. Some may view, and some may suggest, hey, maybe OpenAI isn't as pleasing a place for investment going forward based on that leadership. I think this was certainly motivated, arguably, by Musk's desire to compete with this company since he's no longer tied to it. And you could argue that maybe this, cast some dirt at the company in a way that may have set it back slightly. But I more likely than not, I think Musk losing this case is the big takeaway. I think that's a big win for OpenAI. And unless he can overturn that, I think OpenAI moves ahead. And I don't think Musk gets all that much at the end of the day.
So at the heart of this, though, was whether OpenAI should be, I guess, a kind of for the public trust, or is it a profit-making institution? Where does that whole concept stand now, the whole argument? Because, again, we may see OpenAI try to go public here.
Exactly. So the argument was a very unique one, that this was a breach of a charitable trust, that OpenAI basically created a charitable trust when it started as a nonprofit seeking to benefit the world. And Musk's claim was that by moving to a for-profit model, that breached that charitable trust, and that OpenAI couldn't move ahead to seek private investor returns because of how it started up. What Musk never really had, though, was any sort of written documentation. There's no trust agreement that says that. What there was sort of pieced together conversations and corporate filings and things like that to try to make that argument. So it was never a real airtight case on Musk's part. And so what this frees OpenAI to do is to go ahead to have a for-profit component. It still has the charity. It still has the not-for-profit, but it also has a secondary piece, the for-profit model, which fuels the business, brings in the money needed for an AI company to work. And so now that business model can proceed full speed ahead with this case out of the way.
All right, good stuff. Really appreciate your joining us today. Matthew Schentenhelm is our media litigation analyst at Bloomberg Intelligence, joining us from Washington, D.C. I feel like a lot of people were watching this, but for reasons that had little to do with the eventual IPO. It was more just a clash of personalities between Elon Musk and Sam Altman.
Yeah, exactly. And, they were once partners, not so anymore. But it really was, as Matt was suggesting, kind of about the future, the life of this company. And now, presumably with this litigation risk behind them, they can go to pursue some more growth strategy, which for them possibly includes an IPO.
Right. I mean, along with Elon Musk's own SpaceX, which merged with XAI and Anthropic. It feels like Anthropic has really overtaken OpenAI as like the hot new AI company that everyone's anticipating, maybe because it didn't have this legal overhang.
Yeah, I've got my little AI downloads here on my phone.
And are you using them?
I've got ChatGPT, Grok, and I got Reddit in there just because I didn't know where to put it. So that's kind of, I learned Reddit the same day I learned about ChatGPT. So there we go. We got them all together. So
all right, we're going to check in on your progress later on.
Yep. I'm all fired up on this AI stuff. S&P up 45 points, 0.6%. The NASDAQ up 230 points. That's 0.9%. The Russell, the small cappers, really outperforming today, up 1.82%. for the Russell 2000. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Looking at Target reported earnings, strongest sales gain in years, but they're a little cautionary, I think, in their guidance here. The stock's down 6% here today, although it's up 22% year to date. Jen Bartasha, she covers this part of the retail space for Bloomberg Intelligence. She joins us from the BI offices in Princeton, New Jersey. Jen, talk to us about Target. What did they report? What's their outlook?
Yeah, hi, Paul. So Target had a really good first quarter, much better than most people expected. And I think that it really is a reflection that some of the tactics they're putting in place as part of their turnaround are taking hold and that consumers are responding. But as you kind of sort of implied in your introduction, they really didn't nudge much with regards to their guidance in response to a strong fiscal first quarter. And so I think people are looking at that as a very conservative outlook for the rest of the year.
The comp sales for the quarter that ended was pretty eye-opening, up 5.6%. That was the biggest increase since the end of 2021 and also 3 times the average analyst estimate. Is this more than just easy comparisons?
Well, in part, Scarlett, it's easy comparisons, but we also had other things like the tax refund season. There were some good tax refunds out there that people were spending. There were a few of those sort of tailwinds. And so when you strip that out, it's really about, how much of this is sustainable going forward. And because the company didn't really adjust much of their guidance for the balance of the year, it really implies that that pace of same-store sales is going to drop way off starting in second quarter. Still positive, but in the very, very low single-digit range.
Right. Could this be a case of Target managing expectations to lower the bar so much that it becomes an easy beat later on?
I think that it's not necessarily trying to really underestimate, but I think there is a level of conservatism there. And that's just really based out of the track record that they've had. When they go too soon in raising guidance, they get held with their feet to the fire. And then if they, for some reason, don't meet that, the stock gets hit even harder. And so I think that there's that level of prudence in there of saying it's only one quarter, there's 4 quarters in a year, 3 more to go. You know, let's see where we go. Now, if we get to second quarter and they have strong results and they don't make an adjustment, then I would say that they're definitely sort of under promising so they can over deliver.
Talk to us about this, the turnaround. What is Target trying to do, and are they making any headway there?
Yeah, so you know, a lot of the issues with Target, you know, they sort of lost their way with what they used to deliver in that sense of like Target and the joy and the discovery. And so they're going back into sort of key topics and key categories where they think that they can be differentiated. So things like baby, things like beauty, areas of health and wellness where they think that they can have a competitive advantage and bring people back into stores. So they've been changing their assortment, changing what's in the stores. And at the same time, I think what's maybe underappreciated is the amount of work they've done with their back house operations in terms of supply chain to really improve availability of products in the stores. There's nothing worse than a bad experience when you go in looking for something and it just isn't even there. So those are the kinds of like small wins that Target is starting to see that is helping to build a little bit of momentum.
Yeah, the comparison between Target and Walmart always seemed to be that Target appealed to the aspirational shopper in a way that Walmart hadn't quite mastered. Have those roles reversed? I mean, Walmart, we keep hearing about how there's a lot of customers trading down to Walmart now.
Yeah, I would say Walmart has definitely invested in recent years in categories where Target had always been a leader. Apparel is a really good example of that. So, you know, Walmart has gone from being content of just being a fashion basics, where you go to buy your socks and your underwear, to being a little bit more fashion forward. And they have seen their apparel sales improving. So there's definitely more competition for Target in areas where they used to have a historical advantage. But we'll see whether this new refresh is going to be enough to overcome anything that they've lost.
Jen, you talk to a lot of these retail companies. What are they saying about the inflation we're seeing out there in the economy, particularly at the gas pump?
Yeah, it's a great question, Paul. And you know, there are some reports out there that say that we haven't seen consumers have a huge reaction yet to the higher gas prices. When we look back historically, it's usually when gas prices are at a high level for a sustained period of time that you start to see consumer behavior shift. And that shift really takes place into going fewer stops, fewer retailers, maximizing your trips, that sort of thing. It's still a little early to see that much of a consumer reaction to high gas prices, which is why we haven't really seen that flow through in results yet. But the longer gas prices stay higher, the more that actually is an advantage to companies like Walmart and Target that have that broad assortment where people can make one stop and shop in multiple categories.
Or TJX, which is my favorite go-to place for all these things.
I know.
You know, anytime you can get a deal, I'm there.
Yep.
Jen Partashis, thank you so much. Jen Partashis, of course, covering Target for us. She's our senior analyst for retail staples and packaged foods. And Target definitely sells a lot of that, but it's always been trying to be more than just, you know, your grocery store.
It feels like, I don't know, it feels like they've got everything. Walmart's got everything. I mean, where else do you need to go, it just seems like. But,
do they have an app the same way that Walmart does? Because Walmart's put a lot of money into their app.
And their digital sales are double digits I feel like Walmart's done a phenomenal job competing against Amazon.com. I mean, I never would have thought that in the beginning, but
I have some recommendations on how they can improve. But you know,
okay.
I'll speak to the guys there in charge.
All right, good to know. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment with stocks trading higher, yields down, oil down, and Bitcoin higher. There you go. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Wednesday morning and happy NVIDIA earnings day as well.
Big after the close.
After the close. We'll be all over that. This is Bloomberg Intelligence. We are broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. Also, we are streaming live on YouTube as well. Paul Sweeney, Scarlett Fu, and John Tucker here with you. And to help you get through the next hour, we're going to bring in Mary Ross Gilbert. She is our senior equity analyst covering retail on TJX's earnings. A lot of people seeking out these off-price discounters, off-price retailers, and TJ Maxx certainly benefiting from that. Drew Redding, our U.S. home building analyst, will recap Lowe's earnings as well. We already heard from Home Depot. High borrowing costs, high housing prices is definitely damping some enthusiasm for these home improvement retailers. Michael Cugino is a president and portfolio manager at Permanent Portfolio Family of Funds to give us his sense of the markets and where we go from here. Oil prices lower today. Bond yields also lower as well after a very dramatic sell-off that began last week. And Kunjan Sobhani, our senior semiconductor analyst, will give us a preview of NVIDIA's results due out after the close. First, let's head over to John Tucker, who's got a Bloomberg Business Flash.
All right, let's start off with, risk on. All the major averages higher right now. 7 of the 11 major industry groups in the S&P 500 are up. Tech among the better performers. The Philadelphia Stock Exchange Semiconductor Index up 3.6%. Now ahead of NVIDIA's earnings after the close. Intel, actually the best performing stock right now in the S&P 500. Kava raising its annual sales forecast. Those shares, they are up 6.3%. And we also have word that Samsung has reached a deal with its labor unions that averts what had threatened to be a crippling strike at the memory chip maker, the biggest memory chip maker. As for yields, you mentioned that, Scarlett, they backed off, but still near multi-year highs. And Rayan Mitrione at the Callan family office says the higher treasury yields are going to continue to impact investors' risk appetite.
If we do continue to have this uncertainty out there, I do think yields can stay elevated, and that could create more volatility in the equity markets going forward.
Well, right now, the S&P 500, 57 points higher, 74.10 on the index. The Dow up 341 points. The NASDAQ Composite Index is up 284 points. Crude oil is lower. Brent is down 4% at 106.50 a barrel. The two-year yield down 5, close to 6 basis points, but still above 4.06%. The 10s at 4.59, so that's down 7 basis points right now. Harvard University, the faculty there voting to cap the proportion of A grades in undergraduate courses. So starting in the fall of 2027, no more than 20% of a class plus 4 additional students can receive an A, and students overwhelmingly.
But I think that's just A, right? A minuses are not capped? Because I'd read about this. A minuses are not capped. Paul is rolling his eyes at me already.
A solid gentlemanly C is no problem there.
I didn't get too many A's when I went to Harvard on the Hackensack. But,
there were a few of them. Pause.
Yeah. So, fond memories. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
How was it at Cornell? I mean, did you feel like there was great inflation?
No, there was
I
not
never even thought of that.
But I wasn't an engineer, so I mean, I was in humanities. I just wrote papers all day long. But yeah, there was no great inflation at all at Cornell.
Very good. Yeah, I never thought about it. But anyway, again, nothing wrong with the gentleman's C. I'll tell you that right now.
George W. Bush would agree with you.
Yes, exactly right. Nothing wrong being in the middle of the bell curve. So there you go. John Tucker, thank you so much. Appreciate that. Scarlett
Harvard
Paul
on the
Sweeney.
Hackensack.
That's Fantastic. We're in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube. All right, we got some green on the screen as John was just reporting. Let's take a look at some of the stocks on the move today. We can do that with Tatiana Darrier, strategist for Markets Live at Bloomberg News. Tatiana, what are you looking at today?
Well, we have to start with NVIDIA, right? The name we are all watching today. Shares were fluctuating earlier, but are strongly higher right now. But go to the Markets Live blog and you will see that the track record is really mixed for this company. We have all the data on the terminal, and it shows that for the past 3 quarters, shares have actually fallen after blowout results. And that's because expectations are so high for this company, right? And especially after it already lifted its outlook in March. That should not be overlooked because the company lifted its outlook, near-term outlook, from $500 billion to $1 trillion through the end of 2027. That's the number everyone will be looking at if there are any changes there. And buy-side expectations in the past have been in the range of 2 + 2. That means beat your guidance by 2, beat your numbers by $2 billion, and then beat the forecast by $2 billion. So these are sort of, the lines between the numbers that you need to watch to understand the share reaction of the stock and of the market itself.
Crazy. All right, so we will be all over that. In fact, Carol Master and Tim Sinovic will be all over that.
Carol's on assignment.
Oh, she is,
yes.
so she's not doing it today.
Right, so we're going to have Emily Graffeo along with Tim Sinovic.
Excellent. All right, looking forward to that. Next up on your list, I'm getting hungry here, and this is a good one for that.
First of all, let's ask, have you eaten a kava?
Well, no. I was actually about to ask you guys if you have. It sounds very familiar.
I have, but I don't think I've had anything that people typically have, which is the bowls. I think I just got the bread once.
Okay. All right.
Yeah,
I'm going to try it because they're all over the city here, so I'll try it.
We are not part of their crowds, but people are dining there more and more. Existing customers are returning more, and more new customers are coming through the door. The company has reported up about 6% now after raising its annual sales outlook after a robust first quarter where comparable sales surpassed analyst estimates compared by Bloomberg. And this stands out against the warnings that we've seen from restaurant analysts and executives, not least from McDonald's, just last week, saying that the spike in gas prices and just generally the inflationary pressures that we're seeing from the Iran war could crimp discretionary spending. I mean, it's all there in the economic data as well, with real incomes turning negative. Well, that doesn't seem to be a problem for this particular company, which stands out, sort of defying the crunch in consumer budgets that has weighed on the industry.
All right. How about Lowe's?
Lowe's, well, this one's not as optimistic, with shares lower by about 0.5% now, was down more earlier. The home improvement retailer reported a slight miss in comparable sales and operating margin, but a small beat in adjusted EPS. This sort of mirrors what we've seen from Home Depot yesterday, which reported a shortfall in one of its key sales metrics. But overall, there seemed to be some reassurance that the company reaffirmed its guidance despite talking about all this pressure. CFO saying that they're already seeing oil cost pressure, plastic, and resin prices, and despite that, they managed to stick to their forecast. And I mean, even Home Depot yesterday managed to erase that loss. So it looks to be one of those days when the rising tide in market is just lifting all boats.
Good stuff. Thank you so much. Tatiana Darrier, strategist for Markets Live here at Bloomberg. If you want to check out her work, you can type MLiveGo on the Bloomberg terminal. And for more conversations like this, subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market, available wherever you get your podcasts. Let's talk about TJX, the owner of TJ Maxx. And in the UK, I think it's TK Maxx.
Is that right?
Yeah, I don't know why they changed a letter there, but Mary Ross Gilbert probably knows. She is our senior equity analyst covering retail. And TJX this morning came out with good earnings, hiking its sales outlook, a real contrast to Target. But Mary, this is a very different company because this is a off-price retailer as opposed to Target, which has its own brands and doesn't claim to be off-price.
That's exactly right, Scarlett. Really, the big difference here also is on the execution side. TJX is known for executing seamlessly. So they also guide conservatively, and you expect them to beat every time. And they also surpass analyst estimates because analyst estimates are usually a tad above the guidance that the company provides. So yeah, there was a lot of strength in the quarter, and I think both TJX and also Target benefited from higher tax refunds in the quarter. And it does appear that Target is improving their execution, but they're also cycling a 3-year stacked comp sales decline of 7.4%, whereas TJX is cycling a 3-year stacked comp sales increase of over 9%. Ooh. Again, the difference in the execution and the appeal of off-price, and especially now that consumers are having to cope with higher gas prices.
Yeah.
And then as earlier in your just recent broadcast there, you were talking about how the implications for that are raising costs of some products, and also, we could get freight. Right now, we're not seeing that because there's been some hedging in place. For example, with Target, that was one of the benefits in their margin in the quarter was on the freight side, freight hedging.
Mary, is there anything that TJX isn't doing well? You mentioned execution has been flawless, but that's kind of what investors expect from this company. What could it be doing better? Where is it perhaps leaving money on the table?
Yeah, that's a good question, Scarlett. It seems, I can't see where they're really leaving money on the table at this juncture. And if anything, what we continue to see every single quarter is the availability of excess merchandise. And this is across brands that spend, that span the appeal from consumers at the very low end to consumers at the very high end. So we're continuing to see a lot more luxury merchandise. It looked like in some of these shopping hauls that were posted, there's a lot of product from Celine, Gucci, Yves Saint Laurent. I mean, it's amazing how much out there in luxury, and we're seeing that luxury is off right now. And so now you can get it at discounted prices in the off-price channel, at least with TJX and their runway model.
What's the growth strategy for a company like TJX? Is it more stores? Is it driving digital growth? Is it raising, average selling price? What's kind of the growth story for a company like TJX?
Yeah, so Paul, that's a good question. For them, it's really continuing to expand. So that is opening up new stores, and they are opening up more newer stores this year. I think they have on target over 100. But they're also expanding internationally, which is why they have these joint ventures in the Middle East. And they just entered Spain this year, so that's a new market for them. And then, of course, they also have an investment in Mexico. So they're sticking with the off-price channel, but expanding around the globe. And part of the reason why they're doing that is because they have seasoned executives that want to take on more responsibility, and this is a way to do it. Right. So they continue to see a long runway, not only in North America. For example, they're expecting to open somewhere around, I think it's like 7,000 stores. So they still have about 1,738 to go. So they have a big runway still.
Okay.
And by the way, they keep moving that target.
Right.
As they see more and more opportunities.
Mary, thanks so much for joining us. Appreciate it. Mary Ross Gilbert, Senior Equity Analyst covering the retail space for Bloomberg Intelligence. She's based out there in LA. All right, folks, our next segment is sponsored by John Tucker and all the do-it-yourself people out there. Drew Redding joins us here, Bloomberg Intelligence home building analyst. Lowe's reported some numbers there, Drew. Are those crazy people that actually do the work on their own homes, are they still buying stuff? The video for...
It was a largely inline quarter for Lowe's. 0.6% comp on same-store sales. They maintained their full year guidance, calling for flat to 2% growth, which I think was encouraging. So I think the underlying trends in the business are relatively stable, but I think it still reflects a number of challenges out there. The most important being what we're seeing in the housing market. Turnover still weak, about 20% below normalized levels. We haven't seen that meaningful lift in spring demand that we were hoping for. And now we have rates back up to 6.75% on housing, at least in the near term. At the same time, we've got consumer uncertainty, whether people are concerned about the outlook for economic growth, the outlook for employment. Now we have these geopolitical tensions. So all these are kind of weighing on that DIY consumer. And where we're seeing it, most importantly, is in a pullback in spending in those bigger ticket discretionary categories.
So for companies like Lowe's and Home Depot, they kind of have to wait out this cycle. They have to wait for things to improve, and that's a cyclical headwind that they, really have no control over. Where they do have control over is to create more productivity, create more efficiencies. What is Lowe's doing on that front?
Yeah, so you make a great point. Is they really can't battle what's happening in the housing market, but what they have been doing is investing for when the market eventually turns. And where we've seen it from both retailers is really on the pro side. So Lowe's has done a lot of investments, in crafting kind of a portfolio of products that pros really demand. They've worked hard on building out a loyalty program. They've done 2 pretty significant acquisitions of LBM and ADG, which will give them exposure not only to kind of the larger pro, where there's somewhat of an untapped addressable market for both of those retailers, but it'll also give them exposure to the home building space, which is an area that they have historically had no exposure. Now, as we've discussed before, the new home market is under similar pressure. We're seeing housing starts actually contract. But as you mentioned, it's really about positioning themselves for the next leg of growth when the housing market and the consumer starts to come back.
Existing home sales bumping along around 4 million per year. Where should that number be in a healthy market?
Yeah, so we've been there for a couple years. We're about 20% or so below normalized levels. So we should be, somewhere around the 5 million mark. I think the fact that we've been bumping along these levels with all of the different challenges that we've had, from rates to economic uncertainty to geopolitical uncertainty, tells us that we're at a bottom. We think that we can grow existing home sales low single digits in 2026 as more inventory starts to come onto the market. That's likely to come at the expense of home prices, which, as we know, are up over 50% over the last several years. So, for the home improvement retailers, the headwind associated with the existing home market has started to fade, but it just hasn't emerged yet as a catalyst for growth.
All right, good stuff. Drew, thank you so much. Drew Redding is our U.S. home building analyst, giving us a recap here of Lowe's earnings. On the heels of Home Depot's earnings, I guess it's not too big of a surprise, and Lowe's stock actually little changed at the moment. What do you observe to be the difference between Lowe's and Home Depot?
You're asking the wrong person, but I know we have somebody in the studio who
John
can do
Tucker. Do you go to Lowe's?
I do both. Lowe's is, I find more women at Lowe's.
Well,
that's why Paul and I hang out there.
Well, I don't like the dusty floors at Home Depot. There's sawdust everywhere. I'm not into that.
Well,
Lowe's
what do you
is
expect?
a more pleasant experience.
Okay.
So I'm fulfilling your stereotype right here.
I have people, John.
Yeah, no, I don't have people yet. I haven't reached that stage.
All right, very good. S&P 500 up 70 points. That's 1%.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with a Bloomberg Business Flash. We're being brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Let me start off with oil. The oil inventories, crude inventories, including strategic reserves, plunging by a record 17.8 million barrels last week. You have record exports starting to erode the domestic supply cushions here in the U.S. America, of course, has emerged as the major supplier to the world as the war leaves top buyers in Asia and Europe without access to Middle Eastern barrels. So there you go. Investors are going to be looking for indications about the growth outlook from NVIDIA, which can confirm that the semiconductor rally has more room to run ahead of their earnings. NVIDIA right now, those shares are up close to 2%. And target shares falling about 6%. Executives warning the second quarter comparisons are the hardest of the year, so that could suggest a sales slowdown for the period. And Meta Platforms alerting thousands of employees today that they're being laid off. Staff being encouraged to work from home while the company cuts roughly 8,000 roles globally. S&P 500 right now up 70 points, up just about 1%, 74.24 in the index. The Dow up 460 points. The Nasdaq Composite Index up 348 points. That is a rise of 1.4%. And Brent Crude, the international benchmark, that right now is down over 5%, 105.38 a barrel. Two-year yield down 8 basis points, still above 4 though, 4.03%. The benchmark down 9 basis points, the 10-year 4.57, and the long bond down 7 basis points. That's at 5.10. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
So that thing where Meta is making everyone work from home today while they tell people whether they've been reassigned or are losing their jobs, is that to prevent people from hanging out and commiserating together?
They just don't want them around? I don't know. Yeah, commiserating. I've done a few commiserating things in my career.
They're just like, if you're going to talk about it, you could do it on your own time.
Right.
Well, I mean, no one's going to be focused today.
No.
It's brutal way to find out.
Yep.
So good luck to folks in Silicon Valley. And I mean, this is not just in Silicon Valley. It's kind of across the board here.
This is globally, yeah.
Yeah. I mean, executives are definitely, they've turned the corner. They're no longer warm and fuzzy, as Matt Boyle has written about. They are much more straightforward, and some would even say ruthless about making sure that they are building and reinforcing a performance culture at the office. Let's go now to what this means for markets, because the earnings story this past quarter has been remarkable, and that's what's been driving equities higher. Michael Cugino is president in San Francisco, a lot of where this kind of performance culture is happening. Michael, earnings look good. They continue to look good, and it feels like management is determined to make sure that they continue to grow at these levels. Is there reason to worry that the comparisons get more and more difficult over time?
Yeah, good morning. Yes, there is. And I agree, earnings have been strong. They've been a great foundation for stocks, and it's why stocks have, bled higher so far this year. Although there are some risks to the economy in that story. You guys mentioned the oil data in your last segment. Keep in mind that a lot of the world has been using oil that was previously out of the Gulf. It was on boats. It was getting into refineries. It was going to its ultimate location and being used by consumers. That's no longer happening. You cite the decline in the Strategic Petroleum Reserve. And where's the new oil going?